Yeah, this is going to be interesting. There you have it. The two leaders have met today and had that press conference. More on that ahead. But a quick take on what, of course, the U.S. market setup is looking like. The India implied as well. Let's pull up the India implied before we get to the U.S. market setup, actually, just for a second, because that's going to be interesting to see. Another 54 points up after a rock and roll day yesterday.
Oh, no doubt.
What a day. What a day at the end of it. I mean, the first FII buying, Alex, in 23 trading sessions. Yeah. Don't get out the party hats yet, because it could be an aberration.
It wasn't a very large number.
The net buying was about 800 odd crores. But my point is, let's wait and see.
Yeah.
Let's wait and see what's happening. All right. Meanwhile, U.S. markets, so much to unpack for you this morning. Big day on numbers. You've had so many numbers coming in. Titan, we have to talk about all of that. But first, the U.S. market check. U.S. markets continued their uptick because of that pause in tariffs. So in regular trade, you had all three indices in the green. Stock futures are in the red right now, and stock futures did take a hit because of Alphabet's earnings, which came in post-market hours. In fact, the Alphabet stock dropped about 8% in that post-market trade. The company has seen a 9% miss on cloud revenue, and increased spends on AI have disappointed. Although if they were not spending on AI, that would have been a disappointment as well. So one way or the other, Alphabet in trouble. So U.S. treasuries have slid as geopolitical concerns are rising. The 10-year at 5.4. China has imposed a 10% retaliatory tariff on the U.S., remember. And that's going to be a bit of a concern. 4.51% is the rate for the 10-year yield. Crude has rebounded post-reports, and this is a Reuters report, that Trump plans to pressure Iran to drop exports. Brent is now above the $76 mark. Chinese markets have resumed trade after the lunar holiday. Asian markets have risen in opening trade. Shanghai down about 0.5%. The opening was good, but they seem to have reversed that. The Hang Seng down 1.5%. India still with its implied in the green right now. So it's going to be an interesting morning to watch. But I have to take you through what Trump has said. He has said Palestinians want to go back to Gaza as they have no alternative. Gaza now a demolition site, which is very dangerous and precarious. They instead can occupy all of a beautiful area with homes and safety, and they can live out their lives in peace and harmony instead of having to go back and do it again. The U.S. will take over the Gaza Strip. These are just some of the things he's saying. And we will do a job with it too. We'll own it and be responsible for dismantling all of the dangerous unexploded bombs and other weapons on the site. Level the site and get rid of the destroyed buildings. Just some of the things that Trump is saying this morning. He wants to create an economic development that will supply unlimited numbers of jobs and housing for the people of the area. Just listen in to what he says.
The only reason the Palestinians want to go back to Gaza is they have no alternative. It's right now a demolition site. This is just a demolition site. Virtually every building is down. They're living under fallen concrete that's very dangerous and very precarious. They instead can occupy all of a beautiful area with homes and safety, and they can live out their lives in peace and harmony instead of having to go back and do it again. The U.S. will take over the Gaza Strip, and we will do a job with it, too. We'll own it and be responsible for dismantling all of the dangerous unexploded bombs and other weapons on the site, level the site and get rid of the destroyed buildings, level it out, create an economic development that will supply unlimited numbers of jobs and housing for the people of the area. Do a real job. Do something different. Just can't go back. If you go back, it's going to end up the same way it has for 100 years.
You know, I don't know if this is going to be the solution that finally works, but it's interesting. Arvind Sanger, managing partner at Geosphere Capital, joining us this morning. Arvind, very good morning to you from where we're sitting, of course. Okay, let's start with, I think, what's the biggest talking point this morning as well. What U.S. President Trump is proposing on Gaza. Is this finally what's going to bring world peace and get him that Nobel?
I don't think so. I think it sounds extremely unrealistic. It sounds like Trump, the real estate developer, trying to sell housing rather than Trump, the president, trying to solve a problem. So I think sometimes, Trump shoots from the hip without understanding the issues involved. And this is, some people's homeland. They're not going to leave it because President Trump says. And I don't think the U.S. is going to want to get involved in the middle of this and become a redevelopment country. So I think this is going to soon be debunked. But I think the main takeaway from today that is going to, in my opinion, sustain is the fact that pressure on Iran is ratcheting up. That'll mean more sanctions on Iranian oil exports. It also means a threat that Israel might end up attacking and bombing Iran's nuclear facilities. So I think that's going to be the one takeaway that you can't, assume is not going to sustain. I think this whole Gaza, U.S. moving in my opinion, is not going to sustain.
Upside, hi, Arvind, Alex here as well, morning or evening where you are. But upside risks to crude then, or do you think that the market is more or less sanguine? We haven't seen too much of a reaction and Brent continues to be at around $76 to the barrel.
Well, I think the market is we're waiting to see how effective sanctions will be because of the fact that Iran has built a network of gray market vessels which are, owned by Iranians or by third parties, which are going to be hopefully for them be able to skirt sanctions. Hopefully for the U.S. They will find a way to stop it. But I think that that's a little bit of a wait and watch. And the other assumption on the market's part is that if Iran oil is sanctioned, Saudi has had to keep its oil off the market to make room for growth elsewhere. And Saudis have enough surplus capacity along with other OPEC countries that there is no question of the market being too tight. It'll just be swapping Saudi, UAE, and other OPEC countries' barrels for Iranian barrels.
Arvind, the other aspect, of course, is tariffs. And that for me was a pretty big headline as well yesterday, where you talked about the imposition of tariffs by the US on China, 10%. That was matched by China, but those tariffs come into play on the 10th of February, which gives enough time for the two sides to meet and talk, or to at least have a phone call. That phone call was supposed to take place overnight, but it did not take place, is the report that I read. What are the possibilities of a trade deal coming to pass here?
I'm not sure, because I don't think this is the real big one. This is about fentanyl. This is about opioid, deaths in the U.S. This is not about the key fundamental issue which U.S. is still going to confront and Trump is still going to confront China on, which is the big trade deficit and the big strategic competition between China and U.S. So I would say this is the appetizer. Well, how that plays out may or may not be interesting, but the main course is still to come. And that may come in a couple of months, it'll come in 3 months, maybe sooner. But I would not assume that whatever happens here is the last we will hear of US-China trade tensions.
The other point, and I think we'll shift focus, we can talk about what Trump is doing in geopolitics all day long, but we'll shift focus a bit to the Indian markets. And Arvind, what's interesting is we've had a great day at the markets yesterday with the first FII buy number in 23 trading sessions. So FIIs have turned buyers for the first time since Jan 2nd, when they bought 1,507 crore rupees net in terms of inflows. For 4th Feb, that buy figure was at 809 crores. The total FII selling in 2025 so far has been over 91,000 crores, nearly 92,000 crores in 2024, and in 3 lakh crores in all of 2024, of course. So just trying to understand, Arvind, then we don't want to preempt at any point by saying that, this is a turning tide. But if the trade war is right now restricted to US and China, as it is at this point, they've paused the tariffs on Mexico and on Canada, what does it mean from an India perspective?
Well, don't forget, EU is next. So I don't think the tariff wars are over and are going to be just restricted to China. But I think the India story is really one of Indian growth and Indian valuations. So I think the growth questions remain. But with the budget, maybe we get a little bit more of a consumption-led led recovery. And I think, more importantly, in my opinion, valuations have gotten back to levels where one can find, and we certainly are finding, some reasonably valued companies in various sectors of the market. And so I think that what we forget is that valuations had turned quite expensive, and growth had started to slow down when the October selling started amongst FIIs. And I think now that valuations have gotten attractive, or at least reasonable, I would not be surprised if February is a very different month than what January was. I'm not going to say that there's going to be a huge turnaround in FI buying, but I think the bulk of the selling in terms of those things may be behind us, but that presupposes that the India growth story is going to slowly start to recover from what has been a disappointing 6 months in terms of overall economic growth and earnings growth.
Perspective though, and the reason I'm asking this next question is that the conversations, at least here, seem to have been changed just a tad bit over the past couple of days, right? So you're saying that while infrastructure thrust remains, it's not like the amount that is expected to be spent in the new year is a small number. It's still over 11 lakh crore rupees. At the same time, there's a bolstering of consumption through the tax breaks that were given. So what I was speaking to a fund manager yesterday, and what he was saying was that while you had a thrust on infrastructure and defense or certain other manufacturing activities before, now you have consumption that is has been brought on par with the rest. And so that's another leg of growth. Is that how you are seeing it as well?
Yes, I think that, look, India is 65% a service economy. So service economy is driven more by consumption. It is not a capex-led fixed asset investment economy. So for a broader economic recovery, you do need the consumption side to kick in. And I think that that certainly could help, balance what has been a very lopsided infrastructure or bust kind of a recovery over the last few years. And I think if that takes hold, then it kind of broadens out the outlook for India recovery. And again, it's not going to be a V-shaped recovery, but at least it starts to get better slowly from here.
All right, thank you so much for that, Arvind. I think it's the point becomes very important, Alex, in view of the kind of market that we had yesterday. Your important levels have been surpassed very easily. You're above the 23,700 mark. Watch out for key consumption plays today. Asian Paints had an interesting uptick, but I don't know why, because the numbers, if you look at it carefully, weren't that great.
Yeah.
And some of their commentary is dismal. I mean, Morgan Stanley today in a note saying that they have seen the worst growth in sales since 1997.
Yeah, and a couple of those brokerages not pulling punches, and there's a sell on. I can't remember which one of the two large ones.
Morgan Stanley.
Morgan Stanley.
The Titan has reported overnight. Keep an eye on Titan. Their conference call begins in a short while from now. We're going to be on top of that and give you all of the updates from the conference call as well. So these are some of the consumption plays that you need to look out for. OMCs is going to be on the radar as well. And
speaking of consumption, yesterday you had Trent that took a battering in trade yesterday. Pull that up, because it's something that people were scratching their heads about. This is a company that posts results not too long from now, and in fact it is something that you should keep on your radar. But let's talk about what happened in trade yesterday. We've already taken you through the FII buy figure. Just a reminder, that is the first buy figure on a net basis after 23 sessions, and domestic institutions turned net seller after 34 sessions. So that's quite a shift in what we've seen in the recent past. The Nifty 50 gaining 378 points and had the best session since January the 2nd. Heavyweights, Reliance Industries, HDFC Bank and several others have contributed the most. 40 constituents of the Nifty 50 gaining in a trade yesterday, and the broader markets keeping pace and gaining ground as well. The Nifty Mid-Cap 150 Index gaining about 1.4%, the Nifty Small-Cap 250 gaining about 1.1%, and the sectors that were beaten down earlier in the week, the likes of the Energy Index or the Oil and Gas Index, all of that making a comeback. But the one that you should focus on is the Nifty Bank. Pull up the intraday chart for the Nifty Bank and you will realize that this was in fact the X factor, gaining nearly 2%, and you had the PSU banks also that rebounded from an earlier setback. Globally, some relief, of course, has paid out on account of the delay in tariff imposition on Canada as well as on Mexico. But here in India, what I was speaking about earlier with Arvind, the fact that there is a buzz about the consumption play once again. And we've not spoken about the fact that capex is out of the window. It still exists. And so that is something that the market seems to be digesting right now. A couple of key movers from the broader gauge that you should focus on. We've spoken about Trent already on the downside. Triveni Turbine, Ajanta Pharma, Imami, Easy Trip Planners all losing ground. But on the winners, you had a few that have been beaten down in the recent past that are making a comeback. Kalyan Jewellers was a big gainer on the NSE 500. You have Aegis Logistics, Techno Electric, Nuvama, Jindal Saw, and I've also added ABB to the list because after its results, it gained quite handsomely and then it lost ground very substantially. It has recovered quite substantially yesterday, gaining as much as 7%.
So you are going to see a lot of focus on maybe PSUs. I'm just wondering if the rally yesterday is going to be something that you see as a continuation, simply because look at some of the infra plays as well, which were getting beaten down so badly. L&T, I just want to pull up, and I know you spoke about some of these, I just want to pull up L&T from yesterday. Because remember the whole fear of capital expenditure by the government being underwhelming. Yes, it was not as big a figure as was expected, but it's still a 10% increase. Once the details of the budget have come into focus, the street has perhaps also understood that there's going to be no let-up there per se. And you saw an L&T, for example, come up 5%. I wonder if you're going to see that as a continuation in trade today. But let me start with some of the stocks on my radar today. And I think we have to start with Titan. So this is an interesting one. I've given it a thumbs up after all things considered, and it's a nuanced thumbs up, let me put it that way, on a Titan today. The consolidated jewelry margins at 11% are back to the guided range after being 10.5% in the first half of FY25. That's the biggest reason why Titan is a thumbs up this morning. Studded jewelry grew by 21%, which eases the concern of lab grown, and overall margins and revenue were in line, but EBITDA and PAT were a miss, no doubt about it. So that's the nuanced portion about looking at a Titan. Commentary for Titan becomes very, very crucial right now. And this is something you'll hear from the management in a short while from now, that earnings call expected to start. Revenue for Titan, let me come to the core numbers, up 25.24% this quarter at 17,740 crores versus 14,164 crores. But the estimates that had come in were at 17,476 crores. So the revenues is definitely a beat. EBITDA up 6.96% at 1,674 crores, a tad lower than estimates at 1,704 crores. Margins at 9.43% versus 11.04% was down 161 basis points. The estimate was 9.8%. In fact, why don't we just go across to the call on right now. Let's listen in to the management of Titan addressing the media post their Q3 earnings. I think is the single most important conversation Street wants to hear this morning.
You know, dollar terms in terms of GC or EBIT is something that we are very happy with. Gold coins, particularly in Q3, which is normally very high in that festive quarter, but this time it was even further, perhaps reflective of the high gold interest in gold as an investment instrument, given the way gold prices have been going. So that's one big factor. This is beyond the custom duty one-time, impacts of in the quarter. The second big factor that is playing out is there is a certain dilution in the GC percentages for studded, largely because of this unprecedented rise in gold price. I had explained this earlier in a previous call, maybe previous couple of calls, I think, that when the relative weight of gold versus diamonds in the studded product category by itself changes thanks to the price rise in gold, given the differential margins we earn on gold or stones, there is an impact of this gold price on the overall GC studded percentages. As a consequence, with spiraling gold prices, there is likely to be some impact on the line item level GC studded, and therefore that also shows up. So these are the two main factors which have played up in Q3, and we believe, this could continue to play. It's very difficult to predict given the way gold prices have been swinging upward, even in the month of Jan and Feb, thanks to whatever is happening in the US, and then the dollar is going up. So there's a lot of volatility, and therefore one can't rule out GC dilution. But we have been trying to make up some of it through other initiatives. Some of those take time to catch up, whether it is on material cost or also on overhead management. But yeah, therefore, long story short, I think we can expect to be anchored around the current levels of EBIT margins, and for an annualized basis between 11 to 11.5 is what I think we are likely to realistically achieve. The absolute growth in profit and absolute growth in EBIT and GC is something that we constantly target, and we should look at that perhaps more than just the percentage.
No, understand. That's very clear. And maybe just follow up on that, on the...
So maybe, do you want Suparna to answer your other question before that?
Yeah, sure.
Yeah, so your question was that would the mainstream, the middle end of the market of watches, would it be growing? So we are seeing, of course, very good growth in the premium segment. In our premium brands like Edge, Nebula, Xylus, we have seen more than 50% growth. But I'm also happy to note that we are seeing very good growth in brands like Fast Track and Sonata, which are in the more affordable space. And in Q3, for example, we've seen 33% growth in Fast Track and 24% growth in Sonata, which is about a lot of product and restaging and new products. So the product strategy is working well in terms of the value and the fashion offered at those price points. Titan, which is the flagship brand, and Raga continue a very good growth. So unlike maybe a year and a half back when we were seeing good growth in the premium, but the economy ranges were not performing well, now we are seeing both the engines, premium continuing to do very well, and even our more affordable brands are doing better.
Thank you. That's very clear. Thanks, Suparna. And just one follow-up on Ajoy. So the diamond prices on their own wouldn't have come off, right? I mean, or on diamond specifically. I mean, I understand the gold mix going up and the price of gold going up, bringing it down to 6%.
No, we have not seen that. Yeah, whatever has happened has happened in big stones, that too at the wholesale price level. So we are not seeing any diamond price dilution per se.
No, that's very clear. Thank you.
Thank you.
Thank you. The next question comes from the line of Abneesh Roy from Nuvama Wealth. Please go ahead.
Yeah, thanks. My first question is on the emerging business. Ideally, for any company, emerging business should be the fastest growth. Unfortunately, for you, it seems to be the slowest growth. And we have seen only one store addition in Taneira, and Taneira growth is flat. So is Taneira the only reason behind slow growth? And in Taneira, do you need to go back to the drawing board in terms of pricing, design, etc.? And would you go slow till you figure out what's happening there? Because in marriage season, ideally, Taneira should have seen a good growth.
Hi, Abneesh. Thank you for that question. This is Ambuj here. Yeah. So you're right. Taneira's sales growth was flattish, but if you look at our retail growth, we grew by 30%, and our buy growth was 38%. The reason why it looks flattish is because last year we had opened 7 L3 stores during Q3, and whereas this year we opened only 1 L3, and we also allowed for some inventory correction in some L3 stores. Having said that, we have also introduced a lot of new products at accessible price points across saris and non-sari segment, which was received very well by our customers, both existing and new, and that actually brought down our AUCP. But it delivered the required buyer growth. Though I think we could have done better if we had gotten more new buyers. So that's what we are working on right now. We opened only 1 store in this quarter, but we are continuing to we'll continue to open stores. But now we are focusing more on metros and tier 1 cities and not going to smaller towns. So there has been a small change in our strategy, and we would like to populate more stores in the existing and operational cities.
All right, that was excerpts of the conference call which is going on right now. Ajoy Chawla speaking there. You will see all the updates of the call on our ticker while we take a very short break. On the other side, we come back with the other stocks on our watch list this morning, the trade setup, and so much more. Stay tuned.
चला पटकन पटकन.
Hello and welcome to NDTV Profit.
The blessings of Ma Lakshmi that Prime Minister spoke about, will they shine on the middle class and the taxpayer?
The market will not be disappointed.
Finance Minister Nirmala Sitharaman with the Bahi Khata, they're getting ready to go in and present the budget.
I present the budget for 25-26 that there will be no income tax payable up to income of 12 lakh rupees.
ये बजट जो है बहुत ही आर है. इसका मतलब ये हुआ कि रिफॉर्मिस्ट भी है, रिस्पॉन्सिबल भी है और रिवॉल्यूशनरी भी है.
जब मैं था तब हरित
You're watching India Market Open. Quick look at the implied before we get on with all the stocks on our list this morning and tell you what's on NDTV Profits watch list. 55 points up is what the markets are penciling in. We talked about Titan, first stock on my list before we got into this break. Thumbs up there, and positive commentary from the management also coming in. All of those updates will be on your screen as well. Tata Power, of course, is the next stock, and that's a thumbs down. The Q3 review has shown a miss in revenue, EBITDA and profit though are a beat. So miss on revenue, EBITDA and profit are a beat. One-offs there have led to that number. Revenues are up 5% at 15,391 crores versus 14,651 crores, lower than estimates of 16,692 crores. EBITDA is up 38.68% at 3,352, but the estimate was 3,079, so a beat over there. Margins at 21.78% versus 16.5%. Estimates were 18.4%. So a miss there. Net profit up 8.15% at 1,030, estimate was 971. What has helped the earnings? Revenue growth has been driven by T&D, transmission and distribution. Margins have been helped by stock in trade uptick to 418 crores versus 305 crores a year ago. Bottom line has also been aided by 35% lower tax expenses. In terms of capacity details, total operational capacity was at 15.56 gigawatts, over 10 gigawatts of clean and green capacity under construction. The operational transmission lines at 4,633 circuit kilometers. A couple of notes out this morning. BofA says they've maintained an underperform on Tata Power. They've cut their target price to 350 from 363, which is a downside compared to the current market price. They say earnings miss on lower other income and JV profits. See delays in solar capacity addition versus target. T&D execution is on track. Cautious on PSP cap is what they are saying, those additions. CLSA, on the other hand, has maintained an underperform with a target price of 350 from 363. They say weak Q3, surprise loss at Tata Projects, and a weak renewable energy independent power producer business. Only bright spot was the RE-EPC business, which did well due to India's solar module import ban and a decline in cell prices. They've maintained an underperform rating despite recent fall in the stock price. So that's a thumbs down for you. Might see it was up about 2% yesterday. You might see some pressure today. PC Jewelers, though, I mean, that's a turnaround story, really. PC Jewelers already 5% up yesterday, but look at the numbers that have come in overnight, and which is why a thumbs up and an unequivocal thumbs up for them. Revenue is up 16x at 639 crores versus 40 crores. EBITDA at 112 crores positive versus an EBITDA loss of 73 crores year on year. Margins at 17.5%. Net profit at 148 crores versus loss of 198 crores. So growth has been seen despite advertisement expenses going down. They've witnessed a strong jewelry demand owing to festive and wedding season. Company had already executed a settlement agreement with consortium banks on 30th September. During the third quarter, the company has also discharged and paid part of the cash consideration that it had to pay. Their preferential issue of fully convertible warrants amounting to about 2,702 crore rupees was also completed. This is everything that the management is saying. They say they're moving ahead on the path of growth and profitability. So study in contrast, if you just look at it very, very specifically from what has been happening in the wedding season, because we just heard the Titan earnings call, Alex, where the management was talking about how Taneira was flat despite a wedding season. PC Jewelers seems to have done fairly well in that key period.
Definitely, and it's actually ramped up in terms of the stock price very dramatically from the lows that it plumbed. And it's at currently 15 or thereabouts. So Street looking at very closely. I have Lemon Tree on the top of my list, and this is also actually, if you think about it, a consumption play. A lot of people are thinking, and I'm talking about investors and analysts, are thinking that with the money that people get per month next year, and we're talking about 1,10,000 at the upper end of the tax slabs, that amount, of course, remember, is going to be available per month. It's not available as a lump sum. And so the idea is that you have more money to spend per month. It could lead to people going out and exploring. Lemon Tree Hotels, by the way, had a great Q3. Revenue up about 22% or thereabouts, coming in at 355 crore, in line with expectations. EBITDA increasing as much as 30%. The interesting point is on the margins. They've actually done better than even the Street had penciled in, or analysts had penciled in. They're expected to expand to 50.4. It has actually come in at 51.9%. The PAT number is 76.5% higher and also in line with expectations. But a thumbs up and very strong quarter. Remember, it is a strong quarter. It's supposed to be a strong quarter for the hospitality space. The second company on my list is a very interesting one. Hindustan Oil Exploration. Look at the numbers here. The revenue is up as much as 56%. The EBITDA has increased to 83.6 crore rupees from 36.9 crore rupees. The margins have come in very substantially higher at 53.6%, and the PAT number is at In fact, 43.3 crore rupees compared with 10.8 crore. I was pulling up a few interviews that we'd done in the past, and we did an interview with the management in August of last year, where they spoke about the idea or the plan to increase EBITDA to 1,500 to 2,000 crore rupees by the financial year ending March 2028. That's 3 financial years from now. If they have to do that, and if you talk about the overall run rate, 83.6 crore rupees in one quarter, that's about 340 odd crore rupees in a year, you would have to double and double again. So at about, what, 18 times or 19 times trailing price to earnings, this is a company that you should definitely keep on your radar. JK Tyre is a disappointment, and it is in fact a thumbs down. The revenue is just about flat. The EBITDA is down as much as 43%. Significant pressure on the margins. It's contracted to the point of 8.6% compared with 14.9%. Likely raw material pressure coming through and inability to pass on in prices. And the PAT, as a result of which, is down as much as 77% to 51 crore rupees.
Guys, since we were talking about PC Jewelers, I want to make a mention of just a couple of points. Firstly, that we do know that it was embroiled in a very large insider trading case about a few years ago. There are still a lot of governance issues, but more importantly, this is still a 14-15 rupees stock. Its overall market capitalization is about 8,000 crores, which is not a very large one, and its promoter holdings just stands at around 43%, which means that considering about another 35-40 odd percent is out there with the shareholding at large, this is still very susceptible to a lot of volatility. I'm not going to go ahead and say manipulation, because that will be very speculative, but it is still a very, very vulnerable stock. So while the numbers are looking good at the moment, and sure, the company is coming out of a lot of its governance concerns over the last few years, we must remember that it is still nearly a penny stock, and its market capitalization is not very large, especially given its outstanding number of shares, and its free float is also a significantly large number. That's just something that we need to bear in mind when dealing with PC
Very, very important point. Tread with caution. So remember, our thumbs up, thumbs down is how we look at the numbers. Yeah. It's about how we're looking at their financial results. Now, if you need to buy the stock or not buy the stock is a decision you need to make. You need to speak to your financial advisor. You need to put into consideration a lot of other factors. So fair point, makes complete sense. But since you're here, let's get to you on the trade setup and the kind of push yesterday. I mean, FIIs turned up, not vast quantities, of course. They're not the ones who floated the market up yesterday. But is that sort of trend looking like it will continue? Implied open looking decent this morning.
Yeah. So look, yesterday was a day where some things changed. A few things changed for the positive. Firstly, a very, very basic parameter on the 200 DMA on the Nifty was taken out, and we eventually closed above that mark.
23,600 was that?
23,600 and thereabout. But we are seeing a sharp bout of short covering for a lot of these companies in the broader markets too, which is another indication of at least the pain in the near term, well, seems to be behind us. And I'm just talking about the near term, or perhaps for the next few weeks, we likely could see a change. But for now, there were a lot of stocks which did see a significant amount of short covering coming through. And that is the other indication that at least selling for now has abated. Of course, the FII number does aid, given the fact that it's an inflow after 23-24 odd sessions. So that's, of course, a big, big positive as well. Should we continue to see strength, even if it's a little bit of strength, or should we continue to see consolidation around these levels as far as the markets are concerned? Well, this might just trigger a fresh round of longs into Indian markets. So there's always that much of a possibility, and the probability of that happening over the next few weeks has increased given yesterday's move and short covering. Speaking of short covering, let's talk about the futures and options space, and let's pull up what's happening in the Nifty futures. So as you can see, the Nifty moved up sharply, and there was a decline in open interest. So clearly a case of short covering, and this is earlier on in the February series. Let's consider the Bank Nifty as well. A 12% drop in your open interest, even as this particular index also advances by around 1%, 1.5%. So again, another day of trade where another secure, index where we saw about a short covering coming through. Now is a time where you start seeing a little bit more put writing coming through as far as the Nifty is concerned. sure, we will see a little bit of, well, I would say, a hurdle as far as the Nifty goes on around the 24,000 mark, but we're not too far away from there. And if we do, in fact, take out the 24,000 mark, which is about 1.5% away from current market levels, you never know, we could see a little bit more buying return. So overall, this is as far as the indices are concerned. A very quick look at the stocks too, as I was mentioning, a lot of longs coming back into the system, as you can see on your screen there. Kalyan Jewellers, Berger Paints, something like Adani Power as well. Among stocks which are unwinding, let's pull that list up as well. We do have, short covering largely in ICICI Bank, as well as Bajaj Finserv and thereabout. But on the whole, a lot of these parameters have changed for the positive, yesterday.
It takes a brave person to go out and call a bottom, but Jefferies did that last week. They said 7th is when it will bottom,
right.
Or before the 7th, if there are no major negatives.
Yeah. Sajid called it last week.
He's a brave man, I know that.
Sajid, we do a YouTube live show every afternoon, and Sajid called it last week, but I don't know. I don't know yet if this is the bottom. And if you don't get that 25 basis points cut in on
the 7th,
Friday, if you get a 25 basis point cut and it's not also along with more liquidity measures, if you have both of the above and the tone is hawkish, we don't know this governor yet. We're waiting to hear from him. So I would say it's still
hold
out
your
there.
horses.
I would say hold your horses.
And even if we do get a 25 basis points cut, does that mean there's going to be a continuation? Are there going to be more cuts? Because just 25 basis points now and nothing for the next 6-7 months.
But Agam, the base case is for 50 basis points in this current, in this next cycle.
That's everyone else's base case.
Yes.
We have to hear, hear from the man who has to actually implement it.
Absolutely.
Which is why I think the commentary and that speech, and you always listen to that speech very, very closely, Alex. This time, even closer than we usually do. Okay, OMC is in focus. That's the other set of companies that we want to talk about this morning. Goldman Sachs is very bullish on OMCs. They've upgraded IOC, HPC and BPCL's ratings. Somit tells us why. Somit, this is interesting from the point of view that when people saw the budget and then they saw that the OMCs are being stuck with all of those LPG subsidies, there was a very different view on it. What is Goldman Sachs saying?
Well, yes, Goldman Sachs has upgraded the entire OMC counter, be it IOCL, HPCL and BPCL. Now, the main crux behind this upgrade is firstly, they are saying that the sharp fall in the share prices, that is factoring in completely the no LPG compensation that OMCs have not got. And apart from that, it is also factoring in the lower crude oil discounts that they are getting currently from Russia. So, the reason why Goldman Sachs has upgraded is because of the sharp fall in the share prices of all the three oil marketing companies. Apart from that, they are also saying that upside for crude oil prices is largely capped, and they're expecting crude oil to remain at around $75 per barrel level. And when it comes to gross refining margins, they're expecting gross refining margins to also remain stable. Apart from that, they're also saying that that there could be a sharp recovery in the free cash flow of the oil marketing companies in FY26, and as per the brokerage, that is the key driver for the share price. That could be the key driver for the share price going forward. Now, for IOCL, they have upgraded the rating to neutral from a sell rating and have hiked the target price marginally to around 110 rupees. They are saying that the stock has largely underperformed and risk reward appears to be balanced at this moment, hence a neutral rating. When it comes to BPCL, they have upgraded the rating to buy from neutral and have marginally cut the target price to 360. They are saying that the company, despite the capital expenditure that is expected to happen going forward, the company could generate around 10% of its free cash flow yield into FY26. And but when it comes to HPCL, it's not only an upgrade but also a target price hike of around 400 rupees from earlier target price of around 370, and they're expecting HPCL's EBITDA to grow at a CAGR of nearly 40% over FY25 to FY27. So largely this upgrade is on the back of the sharp fall that we have seen in the share prices of all the three oil marketing companies.
All right, thanks for that, Somit. Let's take a look at what's on our watch list this morning before we get to our commentary. PC Jeweller sales up 16%, reports profits against loss. Please remember Agam's disclaimer with it that look at the antecedents of the stock before anything else. But yeah, the numbers are good. That's why it's green on your screen. Tata Power, profit beat, margin expands. I mean, my view is that it's a thumbs down, but okay, we have different views in this newsroom. Torrent Power, profit beat as fuel costs fail. and fall. RVNL has an order worth 404 crores. Apollo Microsystems profits up 83%.
Okay, next up we have Azad Engineering. It's a strong quarter, also on expected lines, a 42% rise in profitability. And Lupin gets a US FDA nod as well for one of its drugs. On the downside, we're keeping an eye on Triveni Engineering. Profits from the sugar biz have declined. And we also have Metropolis, where the Q3 numbers are okay. They have, they're largely steady, but they have missed street expectations, which is why this stock could potentially be under pressure. Of course, we'll be talking to the management a little later on as well.
All right. And that's a very small snapshot, of course, of the stock that we have on the watch list. But we've discussed so much more already. And we are going to be discussing more before the start of trade. Mayuresh Joshi is joining us this morning, Head of Research at MarketSmith India. Mayuresh, good morning, and thanks so much as always for taking the time. We've got so much to ask you about this morning, but let me ask you about Titan. What did you make of the numbers? If anything, this was a neutral because it met expectations, but there are a few question marks about velocity of sales.
Morning, Alex. Absolutely, bang on the dot. And therefore, I think the underperformance that Titan has probably delivered because the core business, that is the jewelry business, has not probably lived up to its mark. Obviously, I think the expectations that the management has now put forth, what probably comes through in the next few quarters is going to be extremely critical. And two more important components. One, in terms of the wedding jewelry part, in terms of their overall product portfolio, as well as expectations in terms of the studded jewelry part. Because I think both these components are higher margin businesses. And obviously, I think augur well in terms of the overall expectations as far as the earnings are expected to play out. Having said that, the budget implications in terms of imported jewelry actually having a lower customs duty, how does that play out with bigger brands expected to come in? Do they not? Over the next few months, might also probably be a little bit more of a competitive intensity as far as Titan is concerned. So I think in line with expectations that have been put forth as far as numbers are concerned, I think if they're able to perform better than what the street believes, at least in the next quarter, improve their product mix and show that on numbers, I think there is a huge chance of re-rating at that point of time. But till that point of time, I think it might still remain a market.
Mayuresh, staying with this particular sector, Kalyan Jewellers, of course, made a whole lot of clarifications over the past few weeks. It came off considerably from its peaks, and now it does seem like we're seeing a very, very sharp bout of short covering. But if you leave the technicals aside at this point in time, what are you making of this particular company as well, keeping in mind we're expecting a little bit of contraction in its EBITDA margins as indicated by the management themselves, but growth remains, or rather it will continue to be as strong as what we have seen so far?
Morning, Argam. I think that seems to be the case because I think if you look at the delivered numbers so far, they have been delivering in terms of top line. The expectations in terms of store expansion are happening at a decent pace as well. And though I think the net debt to EBITDA, along with the annualized ROCs, if you compute that, are a little bit on the lower side compared to what they probably delivered a few quarters back. The expectation is that the tailwinds that this industry has probably got are probably favoring stocks like Kalyan or a PC Jeweler. Again, I think it's too much in news for a lot of elements that have been put out in social media. So again, my whole take is that a little bit sideways as far as jewelry counters are concerned. And whether Tamanna agrees or not, I think the best way to own gold is through a gold ETF.
I have no love for jewelry, Mayuresh. None at all, if that's what you are asking. I have an SGB which I'm wondering if it's a bad idea.
No, it's a great idea.
Because they don't do it. Yeah. I have no love for jewelry.
Because you got it when it was available. It's no longer available.
No. I have no love for jewelry. I'm thinking of getting rid of everything I have.
So the bottom line, Tamanna, is that as a part of the portfolio, I think you should have some gold. I think gold ETF is the best.
Not jeweler, not jewelry.
Not jewelry. Not jewelry.
I've been selling this idea to my wife for a while. She's agreed, thankfully.
Yeah, no, it's no point. But then that's a personal choice. I mean, not saying this to anyone else, and definitely not to all of the jewelry companies out there. They'll be listening to this and saying that what is this point of view? Anyway, Sudeep, very good morning. I don't know if all that glitters is gold, but I want to come to you on how you see the indices. What a smart move yesterday, Nifty, Bank Nifty. और दम है क्या?
Absolutely, Tamanna. Good morning. Good morning to everyone. Tamanna, see, it was a smart move. Now, what has happened is right from that 23,000 mark, 23,200 mark, in between those 200 points, when there was a consolidation in the last week, it was ahead of budget. Now, budget is gone. Even the Trump tariff tantrums which were happening, they were like Canada, Mexico. Now that also has been deferred by a month, and now people are thinking that at least they are now coming to the table and discussing things out. So it might not be as ugly as it was expected. So that is the reason this is the sigh of relief. But just to add to this reversal point, FII long short ratio till about a day before yesterday was around 10% on a low base. Now, yesterday it has improved to 16-17%. That means that steadily some long positions are being added. Even in the cash markets, they were buyers for the first time, God knows after how many days. So these are initial green shoots that we are witnessing. But my sense is that we should not go too overboard, take the market from a stock specific angle, because even if you see yesterday, Nifty was moving, few large caps were moving, but there were a lot of mid caps that were not ready to move. So we'll have to take it stock specific. Coming to Nifty levels, 23,550, 23,580 will now act as an important support. Trail your long positions with that trailing stop loss of 23,550. On the upside, 23,950, 24,050 zones could be retested where there is some significant call writing visible. From the Bank Nifty perspective, 49,800, 49,750 zone will now act as an important support zone. This was the index that was outperforming in the last 2 days. It started, it gave first signs. So I feel that some additional weightage should be there in banking stocks. So till 49,700 holds, Bank Nifty could continue its move up to 50,500, 50,750 zone on the upside.
Okay, stocks this morning, Sudeep?
There are a couple of stocks that are there on my radar. First is Cholamandalam Investment. Now here we have seen a smart recovery from lower levels, right from 1250, 1270 zone. The stock has recovered way back above 1375, 1380 zone. And in this process, what it has done is it has even taken out its swing resistance, which was created in the second week of December, closer to 1360 levels. Now it's some kind of a multiple bottom that it's already formed, and now the stock is ready to move on the upside and could outperform within the NBFC space. Also, we have seen Bajaj Finance, Muthoot Finance, all these financial names move. So what we are expecting is that this stock could continue moving up to 1450, 1470 zone on the upside, and the stop loss on the downside could be 1366. The second stock that is on my radar is Chambal Fertilizer. Now, surprisingly, this stock, being a mid-cap stock, quite high beta name, did not crumble under pressure in the last 4 to 5 months, where a lot of mid-caps saw a correction of 30 to 50% apiece. So here we've seen the stock had already crossed its previous all-time high of March 2022. Which was closer to 530, 540 in June 2024. And in the last 6 months, 7 months, we are seeing the stock consolidate between 480 and 540. So that is a decent consolidation that is already there. And we feel now it's the right time that the stock breaks out, and the volumes that are being built up in the last few days are signaling that. So we feel taking a smaller risk here, keeping a stop loss of 500, we could buy this with a target of 540, 550 on the upside.
All right, so those are some interesting picks. And if I'm not mistaken, Sudeep, you've mentioned Chola Investment the last time we spoke as well. Am I wrong?
we had discussed about that, and we were quite bullish in the last discussion also in all these NBFC names. Last time we had the trading recommendation. The idea was on Bajaj Finance, which already has outperformed. So I did not want to repeat that name again. And within the same space, now this looks ready for one round of outperformance.
Okay, and a number of people keeping that on their watch list this morning and even over the course of the week. Let's take a look at the other earnings. We've spoken about several that came through already, and we will go to Mayuresh on what he makes of some of those. But Varsha joining in to round off the list, so to speak, as much as we possibly can. Varsha, morning.
Good morning, Alex. Three stocks which are on my list on the back of earnings. Let me start with Metropolis Healthcare, wherein though there was a growth in the numbers, but they did not meet the estimates. So revenue growth was led by increased contribution from the True Health, which is their bundle services and specialty segments. True Health revenue grew 25% year on year, and the contribution has increased from 14% to 17% in Q3. Their B2C revenue grew 15%, which contributes 55% to the overall revenue, and B2B revenue grew 10% year on year. Next on my list is JB Chemicals and Pharmaceuticals, wherein good set of numbers. They did meet the estimates. The revenue growth was led by domestic business, which was up 22%, which contributes almost 59% of the total revenue, and international business grew only 4%, but the CDMO business, which is a key highlighting factor for the company, grew 33%, and Q4 FY25 order book for CDMO looks strong according to the management, and domestic and CDMO business constitutes almost 70% of the overall revenue. And if you see the margins, so margins were flat at 26.4%, but this was led by the operating efficiencies that the company had. Last on my list is Azad Engineering, wherein good set of numbers. So revenue increased up 35%, margins were at 36% versus 37% last year, but net profit was up 42%. Now if you see, though revenue increased only 35%, there's good uptick in net profit, which was led by lower interest and of course lower tax outgo.
Thanks, Varsha, for that. Chandan Taparia is joining us this morning, Head of Technical and Derivatives Research at MOFSL. Morning, Chandan. And how are you seeing the setup at the start today? Are you as bullish as Sudeep is, and certainly several other people are?
Good morning. Thanks for having me. So Nifty made exit bottom near a key level of 22,800 zone, and after that we witnessed a decent recovery. 2-3 data point I want to discuss before talking about the market view. First, the FI's long short ratio recently gone to 9 to 10%. And we have noticed that 6 to 7 times in last 2.5-3 years, whenever the ratio comes to such lower levels below 10, market and ratios both tends to turn higher. So because of that, I'm expecting the ongoing momentum to extend towards 24,444. Apart from that, the market has taken support at the lower band of the rising channel or rising or falling flay, and surpass is falling supply trend line. So by combining all the data set, I'm expecting some recovery. So as of now, with support of 23,500, we are expecting index to head towards 24,000 to 24,200. But final bounce back target for this entire leg will be 24,444. Apart from that, if I talk about the Bank Nifty index, couple of months back, it was finding support at 50,000 marks. It gave the breakdown just a couple of weeks back. But again, it's near to the 50,000 marks. So both the indices, Nifty and Bank Nifty, are now hovering slightly higher than its 200-day and 50-day exponential moving average, and surpassing the previous support zone, which earlier used to act as a hurdle. So by all these data setup, we are expecting some more recovery in the market from current levels.
Chandan, thanks so much for that. We will come back to you for stocks in just a bit, but we have to slip into a quick break. We'll be back before you know it. Do stay tuned, and on the other side, we'll bring you the details of market open.
चला पटकन पटकन.
Hello and welcome to NDTV Profit.
The blessings of Ma Lakshmi the Prime Minister spoke about, will they shine on the middle class and the taxpayer?
The market will not be disappointed.
Finance Minister Nirmala Sitharaman with the Bahi Khata. They're getting ready to go in and present the budget. Welcome back. We're just about a minute away from the pre-open session. I'm going to pull up the implied very, very quickly for you. 57 points up. Chandan, you're already fairly bullish on the Nifty, Bank Nifty, but what are your top stock calls this morning?
Yeah, thank you so much, Tamanna. So looking at the market, yes, already we are expecting some more recovery. Bank Nifty hold of 50,000 can give some short covering trigger. So first trading idea is buy on Axis Bank. This stock has bottomed out after the profit booking of last couple of months. Negated is lower top, lower bottom with bullish crossover on the mechanical indicator. In fact, a consolidation breakout of last 13 days also gives the positive strength. So with support of 990, we can see an up move towards 1050 to 1065 in Axis Bank. Second trading area, that is buy on GNFC. Stock has bottomed out. Consolidation breakout is seen after the long 28 days. Holding well above 570, surpasses falling supply trend line with crossover of 50-day exponential moving average. So with support of 562, we are expecting GNFC to head towards 705 kind of levels.
Let's pull up Axis Bank as well, because I think we weren't able to show it as the pre-open rates hit. Axis Bank stop loss 990, target of 1065 on the stock is already 1020, and the first rates have also hit. Chandan, just quickly, your take on Titan. I want to see how Titan has opened, but let's get Chandan Taparia's take on Titan on the charts.
Yeah, in fact, positive on the gold and silver both, and gold is likely to glitter and shine more, I believe. So Titan and selective gems and jewelry stock will be in focus. At the current zone, I believe 3500 could act as a major support to drive the recent rally towards 3750 to 3800 in Titan.
Buy right now at 3599?
Yes, can go for.
Okay, so Titan is a buy according to him. Sudeep, your view on Titan, let me add in Asian Paints. Asian Paints yesterday spiking. Though, I mean, frankly, the numbers were, and the commentary was fairly negative. Nevertheless, the stock did spike. Let's see how Asian Paints is opened this morning and your take on an Asian Paints, 3.5% down. I mean, perhaps you saw a bit of short covering coming in towards the end on Asian Paints that could have resulted in the spike. I mean, Morgan Stanley coming out and saying today that this is the worst sale since 1997. Asian Paints 3.5% down. But are you seeing any potential in an Asian Paints, Sudeep, and the Titan view?
Starting with Asian Paints, Tamanna, the stock had cracked down in December 2024 post consolidation closer to this 2450, 2470 zone. And below that, it then retested all the lows that we've already seen now. What happened is that yesterday, while there was a short covering move, it did not fructify, it did not go above 2420, 2430 zone, which was the prior support below which it broke down. So my sense is with this today's gap down opening closer to 20 to 70, 80, avoid bottom fishing. I feel, it might be a quality stock and it has been a quality stock over the last several decades. But this next few quarters is not for this stock, and at least I feel this down move could continue closer to 2100 or 2050 levels also could be retested. Now coming to Titan, here what we see is that the stock had a decent consolidation in the since November till date now between this 3350, 3500 mark. It had fairly consolidated for this so many months, and now we feel that it's breaking out on the upside. The weekly charts indicate that post this consolidation, it is ready to move closer to 3700, 3800. The numbers might be a bit on the softer side, but I guess all is in the price. And now it's a forward-looking story from here with respect to consumption being boosted, with respect to gold prices being moving up. So there could be some positive sentiments for this name or jewelry names in the coming few weeks.
All right, so the view on Asian Paints and Titan on the technical indicators. Let's talk about the fundamentals though. And Mayuresh, we have had the numbers through. We saw the stock reaction yesterday and a surprise rise in the stock price towards the end of the session. It's bearing the brunt of some selling at the start. We'll see where it settles. But what do you make of the con call? Because it's not like anything dramatically has changed. Of course, the outlook on the decorative paint seems to be the one positive, but it's not really looking very pretty.
And Mayuresh, if I can add to that, Asian Paints is one stock which is on everyone's portfolios. So under these circumstances, would you perhaps recommend, shedding some weight, reducing your holding there, increase your holding depending on what you're making of it?
No, so Argam, again, I think the underperformance might continue, I think, for two reasons. One, I think in terms of expectations, how volume growth is expected to play out in lieu of competition, that might remain a little bit sticky. Obviously, the other element also is the product mix itself. So I think the higher paints, the distempers and the enamels that you're talking about, which are higher priced, they have definitely come under some sort of a pressure as far as pricing is concerned. And therefore, the overall construct that you probably get in terms of operating leverage with more volumes and better pricing is absolutely not playing out for the industry as a whole, and specifically for Asian Paints. Again, let's not forget, I think out of the entire repainting cost that probably comes through, the labor cost, which was one of the cheapest a few years back, has started inching higher as well. And that probably also eats up into how the quotes and the tenders are probably put through when the final quotation probably happens. Therefore, my own expectation is that the underperformance tag might just continue with this.
Okay. On to the big brokerage call of the day. We've got Motilal Oswal on Acme Solar, in fact, which is initiated a buy rating on the company with a target price of 330. Harsh joining in to tell you more about that. Harsh, what are they saying and what is the implied upside?
Yeah, implied upside very, very strong, 59%, which Motilal Oswal is really suggesting, 330 being the target price. Now, what does Acme Solar do? One, it's a focused play on renewable energy and, of course, new age energy. It has a diversified portfolio. Looking at a 7 odd gigawatt portfolio, and I'm talking about all round, one operational, under construction, as well as pipeline, all three of those combined. Solar, wind, hybrid, as well as firm and dispatchable renewable energy is what Acme Solar focuses on. Now, in terms of how much capacity it has currently, around 2.5 gigawatts, so 4.4 gigawatts is going to be built all the way to FY29. They've also signed another, they've signed out of this 4.4 gigawatts, they've signed around 2 gigawatts worth of PPAs, which accounts for 100% of FY26 capacity and 83% of FY27 capacity. So you're pretty much maxed out when it comes to capacities all the way through FY27. There's good visibility. And what Motilal Oswal calls this is, it's orders in the bag. So you've got PPAs which are signed and revenue which likely or ideally ought to get recognized altogether. And therefore, they are building in for estimates all the way up to FY28. Also, they are suggesting that Acme Solar is doing higher IRR projects, more complex projects to preserve that IRR number. New order wins, the financial year to date is roughly 1.9 gigawatts. So even in terms of order traction, it's quite strong. They are penciling in a 52% EBITDA CAGR from FY24 to 27. And they believe that operational capacity will surge 3x over FY24 to 27. They're assigning this an EV to EBITDA multiple of 11 times versus what the street is attributing at around 15 times for other industry players. Something like a Tata Power's renewable arm, NTPC's renewable arm is valued at 14 times EV EBITDA. So they're discounting this and they believe that therefore valuations too are reasonable. Adjusting for net debt, they're arriving at that target price of 330, which is a 59% upside from here.
Okay, Acme Solar buzzing this morning. Quick look at some of the other buzzers in early trade and non-buzzers, I would say. Asian Paints taking a bit of a knock, so that's catching my eye. After that upside yesterday, the kind of commentary which has come in is truly not positive, and we'll get you a more detailed report on that. But other than that, look at a Torrent Power this morning, 3.5% up. Numbers were actually pretty decent. Lemon Tree, expected to be good this quarter, was on our watch list and has done well. A Godrej Property is not looking half bad. They're set on path to surpass their target for FY25 in terms of total sales. That stock up 2.5%. We told you about OMCs this morning, HPCL up about 2.5% as well. The uptick in RVNL I find interesting as well, considering how poor Railways has done recently. So these are some of the big movers you're seeing. The pre-open session now has ended. The Nifty in the green. Sudeep, I want to get a take on you on anything you've spotted which is interesting in the pre-open session. And let's see if you have a view on Torrent Power specifically.
One stock which is right now just trying to come back on its feet after a stupendous last year is Polycab. Now, if you see here, Polycab in the last several, it had a lot of shocks now, going down to, say, lower levels of 5,500, 5,600 along with the other mid-caps. Now, we are seeing some kind of a stability which is coming back here around 6,000, 6,030. And we feel that the first levels that could come here could be around 6,200, 6,230 zone. And from there, a fresh move could begin. So this move could continue up to 6,200, 6,230. Which was the other stock you were just referring to?
I asked you about Torrent Power.
Yeah. So Torrent Power also, if you see here, the stock is into some kind of a negative momentum over the last several weeks. Lower top, lower bottoms formation is visible, and now of stiff resistance is being formed closer to 1460, 1470 levels. So position, rather than just taking it from a mid-term perspective to a short-term perspective, I feel the position will be that 1460, 1470 zone will act as a
interrupt you, Sudeep, because we can't really make out what you're saying. I don't want to continue too far with that. We'll come back to you when we fix the line. I do want to very, very quickly, I don't want to spend too much time on this, Mayuresh, because it's 2,500, 2,600 crore market capitalization, but it caught my eye. HOEC, Hindustan Oil Exploration Company. Do you have a view on this? The numbers looked fabulous. And I'm just wondering whether there is a potential upside here based on the expectation that the EBITDA is expected to hit 1,500 to 2,000 crore rupees by FY28.
That's a high possibility, Alex. And I think the kind of expansionary plans that HOEC has on its books and on its plate seem to be plausible. Obviously, I think the kind of dynamics that we are talking about in terms of external environment, on how the pricing environment might be, might remain a little bit volatile. But overall, I think if you're probably looking at the production numbers over the next few quarters and years, it should be steady state. It should have a compounded growth. I mean, on a steady state basis, as far as the overall pricing environment is concerned, my own sense is that there will be a compounded growth as far as earnings is concerned. So, yeah, I think there seems to be an optimistic case for HOEC.
Okay, Chandan, just very quickly on some of the banking names. Bank Nifty also looking decent after that pre-open session. What's the call on Bank Nifty? Look at a Union Bank, PNB, Bank of Baroda, all looking interesting today.
Yeah, so Bank Nifty managed to close above 50,000 and that could add some more short covering trigger after a long time. Consolidation breakout is also on the momentum. So can take the Bank Nifty up by 500 to 700 points. And finally, we have target of 51,500 in this leg in Bank Nifty. Looking at your selective names, Union Bank, PNB. First, I want to say here that Axis Bank already we have recommended in private bank, and Union Bank, PNB, all these counter might see the bargain buying. So looking at the selective name, let me look at the price behavior of Indian Bank. With support of 530, it can head towards 558 kind of levels. And Union Bank also can see some recovery, which can take the price towards 122.
Indian Bank is a buy right now at these levels?
Yes, can go for 122 target, which is 4 to 6% upside from current level.
Okay, 122 is the target on a Union Bank. I'm just wondering, Chandan, if you've looked at a BPCL this morning.
Yeah, so oil marketing companies on radar recently bottomed out. For last trading session, it formed a strong bullish candle, turning from its oversold territory with negation of lower top, lower bottom. So major trend is slightly bearish, but short-term trend is turning upwards. Because of that, trigger could be on upside with support of 250. We are expecting a bounce towards 275, 278 in the counter.
If you want to complete the statement that you were making.
Yeah, so like oil marketing companies could see on a...
Sudeep, he was making a point on Torrent Power. You want to complete that, Sudeep?
Yeah, very well. See, Torrent Power, if you see, the stock is in a consistent downtrend over the last several months now. And although it's opening up 3.5% today, but I would not be a buyer at current levels. I'll wait for this 1450, 1460 levels to cross, because that was that zone of the breakdown and the prior price action. A lot of price action has happened at that point. So I would essentially wait for this 1460, 1470 to cross and then take a medium term view from here on.
Chandan, a quick word on something like a Dixon Technologies. What are you making of it?
So Dixon, it has seen a profit booking in last 2 months and now turning from key support zone. Major trend was the positive, so we will go with buy on decline stance even after the short-term structure of the counter. We have noticed that multiple attempts were there to hold 14,200, 300 marks. So 14,300 can be utilized as a major support for a recovery towards 15,800 in the counter.
Okay, so that's the word on Dixon, but what's going to be in focus this morning? Watch out for consumption plays, watch out for Asian Paints on the downside, watch out for Titan in the pre-open session looking slightly negative. Watch out for banks, watch out for public sector banks this morning. That's going to be the big call. Sudeep, if you can hear me, your top public sector bank call if you have one.
The top public sector stock that we feel in terms of banking would be Bank of Baroda from a medium-term perspective. The short to medium-term charts look positive, but extreme short-term charts, I feel it's still consolidating with a negative bias. So from a medium-term perspective, this is a good zone to add if the view is for 6 to 12 months.
Okay, 6 to 12 months at Bank of Baroda, says Sudeep Shah. All right, let's look at the first rates coming in. The implied showed us about a 50-60 point uptick on open, and that's exactly what you've gotten. The Nifty not quite zooming after the kind of roaring close it had yesterday. But remember, both Nifty IT and Bank Nifty up. And that really will show you some solace. The Bank Nifty also up in the green right now, but Nifty IT is the one in focus once again. IT stocks have been one way or the other, despite a lot of negative commentary, coming out and actually performing. Let me pull up the heat map for you very quickly to show you what is moving on the Nifty this morning. Where are the big movers? Well, we told you, watch out for OMCs. That Goldman Sachs report is going to have it in focus. BPCL there, 3% up right now. Slight uptick in crude prices because of all the concerns on Iran, etc. That could be, impacting an ONGC right now. But an IndusInd Bank, after those numbers, doing pretty decently. Metals showing a rebound compared to yesterday's trade, 1.5% up, and it's the IT majors who continue to bring it in. Look at a Wipro this morning, pretty decent. But the focus, I would say, on BFSI, even a Shriram Finance not doing badly at all. On the losing side, Asian Paints, it's a realization, perhaps a late realization, that the commentary and the numbers won't create what you saw yesterday, a 5% spike just as soon as the numbers were announced, perhaps about of short covering. Nestle also, all the consumption names really in pain today. A Titan as well. Management has come out with pretty decent commentary. They're saying that the studded jewelry mix is not bad, so no impact of lab-grown diamonds. They've also talked about uncertainty in terms of gold prices. No one really knows where it's going yet. Maybe that's what's got the street a little negative on Titan. It's all about commentary right now. 1.5% down on Titan. Nestle also down in a bit of pain today as a starter consumer. I saw Britannia and HUL in that line as well. So you have consumption bearing the brunt of it, OMCs and I would say banking stocks really in the mood today. That's where all the interest is, as well as IT.
Absolutely, and the broader markets, at least 5 seconds back, were looking good. Let's pull that up and see where they are right now. In fact, let's look at the mid-cap index and the small-cap index to see where things are. And in fact, you have gains of about 0.5% or so for the mid-cap index. Let's also pull up the small-cap index more so. So today you have more action in the broader markets. Let's of course see how that sustains through the day. Remember, we've been seeing quite a bit of chop and churn, apart from yesterday where you saw a very substantial up move through most of the session. But let's talk about the various sectors. And you have energy, once again, that's making a bit of a comeback. Oil and gas, remember, these are sectors that got beaten down at the start of the week. They are bouncing back at this juncture. The PSU banking pack also doing reasonably well. The Nifty Bank not doing too badly at this juncture. FMCG once again at the bottom of the list and not doing particularly well in trade today. But let's talk about a couple of stocks, and this is what I'm focusing on at the start is positive earnings, and quite a few numbers coming through that are either a beat or a strong performance and a meeting of expectations. Let's start with Tata Power, and this was a thumbs up because of its performance on the EBITDA on the margins front. It is in fact reacting positively at this juncture, though it was a miss on the revenues, remember that. Lemon Tree was on my list. It's not doing too much, but it was a strong number, so certainly something to watch and trade. I'd be curious about what Mayuresh has to say about this. We'll go to him in just a bit. HOEC looking very strong at this juncture, and those numbers look particularly good. Remember, the trajectory is onwards and upwards from this point, from an EBITDA of about 400 crore or thereabouts for this current financial year, all the way up to 1,500 to 2,000 crore in 3 financial years. The next one, PC Jeweler, Torrent Power, Azad Engineering, these are all that have been in focus. Azad Engineering being the one stock that is not doing particularly well in trade today, but it was a thumbs up on the earnings front. Let's see if that changes through the course of the day. But Torrent Power, we spoke about this. PC Jeweler also, along with all the caveats that Agam spoke about at the start. In case you missed it, you should go back and take a look at that. But the numbers were particularly handsome for the third quarter. Lupin and RVNL, this is something that we're talking about in terms of updates. Lupin, because there's a US FTA win, but I'll come to that in a bit. Order win boost for RVNL, 400 odd crore order, and that is something that always causes the stock to react. Lupin has gotten US FTA approval for a drug that they had, not doing too much in trade today. Again, something to watch through the session. Disappointments now, and just a couple on the list. You have Triveni Engineering and Metropolis. Metropolis is actually bucking it, taking it on the chin and saying it's fine. It's up about 2% at this juncture. Triveni Engineering, however, is not doing particularly well. I missed out Niva Bupa. It was up in the pre-open session doing particularly well, but it's settled down a tad bit, and it's up only about 1.3%, but a strong performance for this company as well in the third quarter.
Okay, so let's get in Mayuresh back in. Mayuresh, the last 2 years have seen a sharp, strong recovery in tariffs for the entire hotel industry. The question now is that, are we reaching a point at which there won't be as strong a recovery, or rather as strong a growth in tariffs for the hotels as that we have been used to? Based on that, what are valuations looking like, and are there still interesting opportunities in this particular sector?
Margam, I think if you probably just have a construct down on what Indian Hotels said for the sector as a whole, and they pulled out the numbers for 2030, even on an EV/EBITDA basis, I think they look fairly priced with the assumptions of how the revenue trajectory, the margin trajectory is expected to be. However, I think if you probably look at the overall construct in terms of the number of available rooms, specifically for the organized sector, I think there's a long way to go. I was reading through a few reports, and I think as tourism probably picks up pace more in the coming few quarters and years, I think a large part of that pie will go to the organized players. Now, the smart strategy that a large part of these bigger players are doing is that they're getting into the managed spaces. So I think the manager of the franchised rooms is something that they're probably getting into. The management fees are decent. They don't need to go through a significant amount of capex to probably build their own inventory, their own hotels, manage those rooms itself. And the management of the rooms on a franchise basis actually helps them in reducing costs to a large extent and not build up leverage on their balance sheet as well. That is what Indian Hotels is trying to do to a large extent. That is what Lemon Tree has probably done. If you do type the number of rooms that Lemon Tree has, I think it's an appropriate mix between what they own, what they've leased at around 5,700 odd rooms, and what they have franchised at around 4,500 odd rooms. And this is typically depicted in terms of stable margins coming through. The revenue per available room is inching higher. And as tourism picks up on all counts, whether it's leisure, whether it's religious tourism, and the mode that they're probably going through, I think the numbers might stand out and might be relatively better as well. So again, valuations fair, but anybody holding on to an Indian hotel or a Lemon Tree, a Taj
Mayuresh, since you're so bullish on the tourism space and hotels, what is your top hotel call right now? And remember, we have an ITC Hotels also in the mix.
Oh, absolutely. So I think, again, I was just finishing my point. I think Indian Hotels, Taj GBK, Lemon Tree, somebody holds that. One should continue.
Okay. All right, so I want to address, Kalyan Jewellers, because towards the end of the session, at one point in time, it was up as much as 15%. Chandan, this question is for you. From 800 all the way to around 430 odd levels, and now it is currently at around 560. But a lot of that short covering has taken place over in the last two to three sessions. The question now is, what do you do? Are we expecting consolidation now that the short cover is behind us? Can we expect more strength, or do you want to wait for more cues before you place your bets here?
I think wait and watch will be the good idea in name, which turned highly volatile in last 25 days. It witnessed a corrective move from 795 to 420, then again recovery to 570. So the beta of the counter is increased higher. The stock has turned volatile. As of now, if you ask me, the level 600 zone is the key zone. So if it bounces, it can go and take hurdle near 600. So can play the range between 500 to 600. Wait and watch will be the most advisable to look at the current volatile market scenario of the counter.
Look what else is buzzing this morning. Capital markets play back in action. Angel One 361 WAM. Pick up Motilal Oswal also. All of them buzzing in trade today. I'm not sure if there's any specific news coming in fundamentally. And I won't ask Chandan about Motilal Oswal, but okay. Sudeep, on the capital markets play has been out of favor for a bit, but you did see numbers coming in from NSE yesterday as well. Maybe the hit on the futures and options rules changing is behind this entire space?
Yes, see, the numbers yesterday suggested so, and now a lot of things are being discounted. So what I feel is that from the current levels, if I have to pick up any one capital market stock, it would be BSE, Bombay Stock Exchange. The reason is the kind of outperformance it has shown, and it has stood to gain post all these regulations. Now, the kind of momentum that this stock is having, the kind of outperformance that this is displaying, I feel the stock looks good for 5,900, 6,000 zone once again. And every attempt of a recovery in these names, BSE stands to gain and outperforms. So CDSL camps all are good in terms of fundamentals, but the price action is not suggesting any sharper recovery. But yes, BSE looks good out of all these names.
All right. So this is one spot to look at. Mayuresh, I'm wondering if you would see with any kind of interest, if you would look at with any kind of interest some of the railway names. Look at Titagarh this morning and RVNL. There's an order win news also on RVNL. But most battered and badgered, right? Last couple of days. Yesterday was an outlier. Would you see the capex play as an opportunity right now that there is some clarity and deeper understanding that it wasn't as bad in the budget as people thought?
Oh, absolutely. And just to clarify that point, I think if you add to the grants part, 11.2 actually becomes 15.48 in terms of total allocation, which is 17% higher than 13.18 for the last budget. So it's a 17% rise in terms of the capex spend. Having said that, I think the allocation towards defense and railways and roads has been significant enough. And you can probably expect a fair share of orders to probably start coming through for the entire railway infrastructure, whether it's laying down tracks, security system, metro coaches, bogies, etc. And therefore, I think the space will buzz back. The orders will start coming through as we head into the next few months and quarters. And the execution for these orders, Tamanna, have been put down in terms of timeline. So they have to execute within the given timeline, which means that the kind of revenue translation that happens because of a better asset turn and better margins and a better working capital requirement might actually positively play out in terms of numbers. So I'm not negatively construing railway stocks and the allocation thereof. I think selectively, I think they become very, very good plays here. Texpaco has a decent order book. They've turned around their balance sheet a year and a half back. Titagarh has a decent order book as well. And therefore, I think selectively, these stocks might continue doing well based on earnings expectations.
One of the stocks that was on my list at the start, which was a thumbs down, is reacting negatively. It is JK Tyre. It is down about 3%. A sharp contraction in the margins that was reported in the quarter, and as a result of which the PAT number has come in substantially lower. Mayuresh, quick view on this one. What do you see playing out? Is this pressure on the raw materials that is pushing these companies, an inability to pass on prices, and would you have a pick in this space despite what is happening?
Wait out, and you're absolutely right. I think raw material prices have been extremely volatile, to say the least. Obviously, I think if you look at the construct for tire makers, I think vulcanized rubber becomes an important integral part, how crude derivatives behave, which have remained range bound, becomes a very, very integral part as well. And then there are those small components in terms of nylon tire fiber, etc. So I think crude derivatives is the main ingredient, which is almost 19-20% in terms of the tire cost. And therefore, I think how crude prices behave will largely depend on the inflationary aspect in terms of how much to pass through or not. The second aspect, obviously, is how is demand shaping up? And if expectations are to be believed, if demand remains a little bit stable at this juncture, I think the business from OEMs might actually be a little bit on the sidelines and soft as we speak. Obviously, to compensate that, the replacement market becomes an appropriate mechanism where pricing remains in their favor and where there is a push-through that can probably take place. Again, you have to look at the construct, Alex, in terms of which players are supplying to what. So CV players, PV players, what is the replacement market share? My own sense is that these players should bounce back very, very smartly as we head to the first half of the next match.
Okay. Okay. All right. Thank you so much, Mayuresh, Chandan and Sudeep. Absolute pleasure speaking with you this morning. Market's looking okay. Come off its highs right now. Sensex now mildly in the red, Nifty struggling there. I mean, IT is the strongest story this morning. What's definitely not a strong story is the consumption space. Asian Paints, Titan, Nestle, all getting beaten down, reacting to their earnings, brokerage calls, and I would say more importantly what the management is saying. Mahima has been tracking this very, very closely over the last 24 hours. Mahima is giving us a wrap. Let's start with all three major players.
Right, Tamanna. So I'll start with Titan. While the numbers looked good, the studded mix also improved, but the management commentary coming in is kind of the reason why the stock is seeing the fall. First of all, the first highlight from the con call was that the dilution in margins could take place in studded due to unprecedented rise in gold prices, which is why we're seeing the downtick in stock. And they've said that jewelry EBIT margins on a standalone basis will remain in the guided range of 11 to 11.5%. But after that, when Ajay Chawla was asked, he said that 11% is the stopping point after which the margins won't fall. In terms of prioritizing growth over margins, management has said that they'll definitely prioritize growth. And there have been developments in US that have kind of created noise around the gold prices, is what the management said. The first 3 weeks of January went well, but the fourth week of January saw this. And it's difficult to predict how Q4 will go because of the rising gold prices. And in terms of the gold on lease rates, they have gone up due to US tariff announcements, and supply and demand will kind of determine how gold lease prices go up going forward. Lab-grown diamonds, they've said that they've not seen an impact in the studded mix, but the management also said that they will identify certain markets where lab-grown diamond demand is really picking up and keep a close track of that as well. The next one is Nestle. Nestle has given a guidance that their out-of-home consumption is expected to double by 2030, and contribution to sales for new products is expected at 10%. In terms of outlook, food inflation continues to hurt consumption, high prices persist on select agri-commodities, and slowdown in growth is something that they've been seeing and will continue going forward as well. Rural is outpacing urban, which has been the story in the past 2 quarters as well. Growth metrics is now shifting from its current curve to a more favorable trajectory ahead, is what the management said. The next is Asian Paints. Asian Paints has given a pretty bearish commentary, which is why we're seeing the downtick in the stock. Volume growth was at 1.6%, but value growth for them this time was negative 1.7%. They've said that they saw weak festive demand and slowdown in urban centers, and what they've said is that going forward, price hikes hangover will be carried forward in Q4 as well. Stress in urban areas to continue going forward is what the management has said, and rural is however expected to continue to recover gradually. They expect some softening in the raw material prices, and their EBITDA margin guidance is maintained at 18 to 20%. Some shuffling of markets with respect to the competition coming in has happened, but it has not affected much and it's not significant. However, he also mentioned, Amit Singhal also mentioned that Grasim has scaled up in terms of touch points, but they are yet to see the impact in terms of value proposition. And they've given a guidance that they aim to have a single-digit volume growth going forward as well. So this is the overall roundup of what happened with Nestle, Asian Paints as well as Titan.
Let's get a roundup, and all three in pain. All three in pain right now, despite the kind of euphoria we saw once the tax cuts were announced in the budget. The broad idea seems to be, or the broad belief seems to be, that some of that money saved will go into discretionary spends, which could go towards these companies. But despite that, what the management is saying is not sounding good, perhaps. Amnish Agarwal, Director Research Institutional Equities at PL Capital, joining us today. Amnish, very good morning to you, and thank you so much for speaking with us on the show on what I think is a hot button topic this morning as far as markets open is concerned. What was your takeaway when you listened to all of these managements? And I'm going to start with Titan because that's the latest that came in this morning.
You see, Titan's commentary was quite positive as far as demand is concerned. You know, whether it is jewelry, whether it is your watches, there are, I think, no issues on demand. And as the discretionary income goes up with the taxes coming down in the few quarters, I think that on the demand side, there doesn't seem to be an issue. But I think if you look at, say, on the margin side, if you look at particularly jewelry, maybe a year or two back, 12 to 13% used to be the normal range of the EBIT margin, which is now 11 and a half. And I think more or less it is now getting settled in that range. So I would say that it is, if you look at, say, last month or so, Titan is perhaps one of the very few stocks in the consumption space which has actually bucked the trend. If you look at, say, even last one quarter, the stock is actually up from the lows which it had made after the 2Q results. So I think it is just a normal sort of a thing. I think nothing negative in the Titan. And I think if you look at, say, slightly medium to longer term, I think the call on the Titan still continues to remain on the positive side only.
Just one follow-up on Titan, Amnish. So are you listening to the commentary, seeing the numbers, looking at their margin mix improving? Studded has not been impacted by lab-grown diamonds. They're saying, let's see what happens with gold. Would you be constructive on a Titan right now with all of the information in place?
Titan, we had a buy rating. Now we will have to rework our numbers if there are any changes. But directionally, we still remain positive on this name.
Right. Amnish, Hiral on this side, what are you penciling in with regards to your FY26 jewelry margins? Because that's where the street is looking at clarity. And do you think the continued gold inflation would actually imply a year-on-year flattish margin growth?
You see, incidentally, I think at the end of the Q2 also, while there was cut in the numbers of street, we were already penciling in 11.3, 11.4% kind of an EBIT margins. So even now, as we speak, I think there will not be any significant difference because our margins were already on the, you can say, conservative side, maybe 10, 20 pips here or there, no big difference is going to come. And as far as your gold prices is concerned, the gold prices are moving up in a very secular manner. If you look at, say, past 2 years, 3 years kind of a trend, and I see no change coming in there. If you pencil in the fact that that there was a cut in the duty which happened in India, then the gold prices would have been still higher than what the levels that we are witnessing today. So I believe that there is no reason to be, I would say, negative in Titan. No big change is going to come as far as your numbers are concerned. And I think gold price is not something which has deterred the consumers over the year from buying jewelry. And in the current environment where more geopolitical uncertainty will be there, I think more and more consumers will go to buying gold, not only for adornment, but also as a store for value.
Right. Amnish, moving from a Titan to a Asian Paints, what's your first read of it? Because the stock has been under pressure today. We've seen a volume growth of 1.6%, but the value growth has been negative at around 1.7%. Does this mean there is going to be further pricing pressure taking into consideration the new players that are coming in?
You see, it's not only the pricing pressure, it is the function of your sales mix also. For example, how much putty you are selling, how much waterproofing material you are selling, and even in paints, if you are selling more of the economy or the mass segment, then your mix is going to be on the negative side. And if you look at the current scenario, actually their realization growth is -9. Now, the prices are unlikely to move up. The competitive intensity still remains. So I think they will also benefit from pickup in the discretionary spending, but the paint industry is witnessing the kind of competition it has never witnessed in the past. because we had even MNCs entering this space, but no one had allocated say more than 2, 3, 400 crore rupees. But now you have got a player who has allocated say 10,000 crores to start with. So I think paint as an industry is in a flux. I don't rule out sideways sort of a situation for quite some time. The margins have very limited scope to fall from here unless until you see more pricing pressure or some sort of a trade intervention which might be required from time to time. But having said that, single digit volume growth guidance with no big uptick likely in margin leaves you with flattish to negative kind of a profit growth. So which makes the stock, I think, more than fairly valued at the conjuncture.
In the competition point has been sort of playing out, Amnish, from the last couple of quarters. On balance, if there's someone who wants to ride on the space, is Asian Paints now no longer a top pick very clearly? What's the pecking order?
You see, we have a reduced rating on this stock right from, I think, 3,400 rupees. And it's not only Asian Paints. At this point of time, I will not be constructive on any of the paint names because the kind of changes which are happening in the industry, I think they could be long lasting and there could be much more than what we have seen as of now.
Let's move on to a Nestle now before we get you an overview on the space, just because we picked up these three pieces. Management commentary was actually quite positive on the long-term India goal, etc. But there seems to be a continued concern on the numbers. What was your take?
You see, all the big FMCG names, for example, Nestle has, say, grown volumes at, say, 8-9% CAGR. Can it get back there 2 quarters down the line? The answer is yes. Can it grow profits by 15% or 12% CAGR? Looks highly unlikely. But yes, they are towards the end of their expansion. But more important is 30% of your sales comes from infant nutrition, and that is one segment which won't grow by more than 3 to 5%. So I think the commentary was not negative, but Nestle is currently also in a management transition. And if you look at the multiples, if you look at the entire context, long term looks positive. So we have a positive view on the stock from the current price. But having said that, like some of the other consumer names, one will have to be patient with Nestle to make money because you are witnessing a lot of inflation, whether it is cocoa, whether it is coffee, or some of the other raw materials. So the outlook is positive, but patience is a key over here.
Right. Amnish, last question coming to you. So taking into consideration the boost that everyone was expecting, exactly the question what Tamanna started with on the back of the budget, do you think this is the time to buy FMCG companies, or would you say that it's still time to be on the sidelines, wait and watch for some time and then start probably picking a few of them?
The tax benefits are definitely going to be positive for the consumption space, and I believe it will more be for the discretionary segment and might not be for some of the, you can say, large staple names. But having said that, everyone, including us, is estimating that next year growth rates are going to be far more. So how much incremental can come over and above being currently talked about is something which will be the key factor to watch out for from the current context. But having said that, I would say that the consumer behavior in India is changing. People today are more attuned to some of the, you can say, newer segments, discretionary segments and all. So, and as, for example, Nestle yesterday said that going the core is key. So the core in some of these, for some of these companies is, you can say, highly penetrated, where the growth rates won't be very high. So I think the benefits is going to come, but it's not like that the tax rates have been announced and say next week we are going to have higher growth rates. It is going to take a quarter or two for that to percolate down in terms of numbers. I would say more towards 2Q of next year, we will start witnessing some impact of that. So one can start looking at, say, some of the consumer names, but one will have to be very, very selective. But because it is not going to be very, very broad based that everything just goes up, demand across segments goes up. I don't think it's going to be a story of that sort.
Okay, so just what is the top consumption play if you want to take into account these discretionary spends that will increase then? And interested in knowing your view. Do you think people are going to spend more on ordering from Zomato, Swiggy? There was one take I got yesterday that people will buy more real estate. Wondering what you think.
You see, it is going to be quite widespread. For example, some part might come in the, you can say, consumer staples on the discretionary side. Some bit might come to jewelry, might happen to QSRs. Your apparel is another segment which might gain. Consumer durables, that will also gain. Then your building material and real estate will also be there. And above all, the segment which is rocking in the country is tourism. Okay, tourism, which includes hotels, which includes your airlines. So I think the impact is going to be very widespread. Even financial, say, even some, you can say, your financial, your banks will benefit, your AMCs will benefit. You see, very difficult to imagine today what the consumer is going to do, but the impact is going to be very deep and significant. And it's not as simple that your income goes up in the hands of the consumers and one will just go out or maybe say start eating Maggi more often or start brushing twice a day or using staple products. I think that is something which is not going to be the way. It's going to be much deeper, much wider, and in many more categories.
Right. So that's with regards to where, consumption discretionary will be at center stage versus your FMCG names. That's what Amnish is alluding to. Thank you so much for joining us on the show and sharing the views overall. But clearly you have Tamanna, Titan, which is under pressure. Probably with the kind of run-up that we saw post the budget as well, there is some bit of profit booking as well that's coming in with regards to FMCG majors. Nestle under pressure. I mean, paint industry, it's interesting because no one is seeing any green shoots even with the kind of competition that's coming in, right?
Yeah.
And the spends which might go up from a consumer perspective. So that's going to be a tricky situation.
So between the three that you've mentioned, I think Titan actually off its lows right now. And maybe will show a bit of recovery because the positive commentary from the management might help on that end, and we'll try and get that up for you. Asian Paints, the worst off of the three because of the whole segment, and the competition has just begun to creep in. They're going to have to spend more and more just to keep abreast and afloat. Nestle, in terms of that large FMCG uptick, very little is expected. All right, let's move track. India level CNG registrations have increased 34% YOY to 1.44 lakh vehicles, implying a penetration increase from 16% to 19% year on year. Swami joins in with more, telling us why city gas distributors should be in focus today.
Well, as per the Vahan data, what we're understanding is that in the month of January, the state-owned city gas distribution companies, or the areas that is managed by state-owned city gas distribution companies, has seen a significant jump when it comes to CNG vehicles. Now, all over India, if you look at the number, has increased by nearly 34% on a YY basis, which implies that the CNG penetration has increased to nearly 19% of the 16% number that we had seen last year. Now, for Gujarat Gas, if you look at the CNG registration number has increased by nearly 30%. For IGL, it has increased by, for Gujarat Gas, it has increased by 33%, for IGL by around 30%, and for Mahanagar Gas, we have seen a strong jump of nearly 43% on a YY basis. Now, seasonally, if you look at this January month, it is usually a strong number that usually comes out, but what analysts are indicating is that even after factoring in this seasonality, this month, the number which has come in is pretty much strong. In fact, we also need to keep in mind that all the city gas distribution companies except for IGL had taken a price hike in CNG prices to factor in the lower APM gas allocation. So despite this price hike that has been taken, we are seeing a strong CNG adoption in the country, which means that the price hike has been completely absorbed without a volume hit, which is the most important part here, which means that volume growth would continue for the city gas distribution companies. Now, Gujarat Gas and Mahanagar Gas have already taken a price hike, while Indraprastha Gas is yet to take a price hike, at least in the Delhi region. Apart from the Delhi region, they had taken a price hike of around 3 to 4 rupees, but Delhi contributes the main volume for the company, which is nearly 70% of the volumes come in from Delhi. So they are yet to take a price hike in Delhi, and most likely this price hike could be announced post the election results come in. So keep an eye out for IGL, given the fact that price hike is yet to be announced, and CNG volume numbers are pretty much strong. So the company might take a price hike going forward.
Okay, Samit, we also reported this morning, and you did that report on the Goldman Sachs note on OMCs, and we've seen how markets have opened and the impact on OMCs. We're talking about IOC, HPCL and BPCL, among others. Let's recap that, because it's important to tell our viewers who may have missed that report this morning on why Goldman Sachs is so bullish. We've already seen a run-up in stocks.
Well, the main crux behind this upgrade that has come in for IOCL, BPCL and HPCL is the fact that we had seen a sharp fall in the share prices of all the three oil marketing companies after the LPG compensation did not come in the budget announcement. So what Goldman Sachs is saying now is that this is pretty much priced in. Along with this, the lower crude discounts that we're seeing from Russia is also factored in the share prices, and hence this upgrade has come in from them. Now, they have upgraded the rating on IOCL to neutral from a sell rating and have hiked the target price marginally to 110 rupees. They are saying that IOCL has underperformed its other peers, and now the risk reward appears to be pretty much balanced, and hence they have upgraded the rating on IOCL to neutral. For BPCL, they have upgraded the rating to buy from neutral and have cut the target price marginally to 360 rupees. For BPCL, they are saying that capital expenditure is still undergoing for the company. However, the free cash flow yield would come in at around 10%, which is still below compared to what other peers would report, like HPCL. For HPCL specifically, they have upgraded the rating to buy and have hiked the target price to 400. Now, one of the major reasons why they have increased the target price is that because they're expecting the company's EBITDA to grow at a CAGR of nearly 40% over FY25 to FY27. And for all the three oil marketing companies, they're also bullish given the fact that they're expecting free cash flow to increase in FY26 and FY27. And as per Goldman Sachs, that is the main trigger for the share price rally for OMCs to come in going forward. And hence they are bullish on the oil marketing companies.
Right. Thank you, Somit, for getting us the details. But clearly, OMCs are on a tear. How long will this party last for them is something we need to wait and watch and see. But moving from there on, Happiest Minds, that's a stock that is in focus as well in today's day of trade. Now, clearly, it's the BFSI segment that has seen growth. Healthcare is seeing some bit of a slowdown as well. That stock is down almost 1.4%. What's interesting over here is in terms of the guidance that the management had given for FY25, they had said around 30 to 35% constant currency growth in terms of the top line. Now, clearly, when we spoke to the management as well, what they've indicated is that they're trying to meet the 30% revenue growth guidance. So that's going to be interesting, Tamanna, because if they are not able to meet that 30%, they will be missing the revenue growth guidance at the lower end as well. Let's quickly hear out what the management had to say as well.
We have shown a year-over-year growth of about 28%. In rupee terms, it's about close to 30%. And in dollar terms, constant currency, about close to 1%. So yes, the street may have been expecting slightly better numbers on the constant currency growth, which we have shown at about 1%. But the fact of the matter is here, this time we had a fair bit of furloughs and holidays hitting us this quarter. After the acquisitions, we have grown deeper into BFSI as a segment, and we are seeing that BFSI has pretty weak Q3, or the October, November, December quarter tends to be weak given the way the holiday structures, the statutory leaves, and those things happen. So we are coming to grips with that, but despite all of that, we took some revenue enhancement measures, and we've been able to grow at about 1% in dollar terms. All the other metrics of EBITDA, or be it operating margin, we have performed ahead of what typical expectations were, and EBITDA number is at 22.1% for the 9-month period, which is ahead of the guidance that we gave for 20 to 22%. So in all, revenue for the 9-month period and for the 3-month period, we are very close to the forecast that we had given to the market, which was 30 to 35%, and then we subsequently corrected saying 30% is what we are going to target, and we are reasonably close to that. Next quarter, looking a little into the next quarter, we have closed this acquisition of customers and customer relationships of GADS Technologies in the Middle East market. We are looking to consolidate that, and that's almost 100% BFSI and infrastructure application services, application maintenance business. We are looking to grow into those accounts, cross-sell, upsell, and consolidate that starting immediately, almost immediately, because some of them are our existing customers, and we also have a reasonably good presence in the Middle East. So the consolidation benefits should see trickling in quite early. So we are looking at that and the organic growth in Q4 put together, trying to, the attempt will be to make sure that we try to reach the 30% number or hit that to the extent possible.
Right. That's an interesting one because in the previous quarter as well, when we were looking at the 30 to 35% year-on-year constant currency growth for FY25, the ask rate in terms of the second half of FY25 was around 5.2%, right? This quarter, if you see in terms of the number, it's still on the lower side. Do you think you will be able to make up for that number even to achieve the 30% guidance?
Yeah, so we did two things. One is we tempered the 30 to 35 to 30% because, we thought we will be able to consolidate the acquired companies from the beginning of the quarter. For various reasons, it slipped and we could only get about 40 days of revenues from both companies. And that's a significant number. So taking that into account, we said, let's not go too far away from what we have said, but let's keep 30 as the guideline number, the forecast number, because I was very clear that not to use the word guidance, maybe semantics, but I was sure that we should, these numbers have to come together and it was too early, but we said we'll now try to achieve the 30% number. Compared to the 30% number, we are at about 25%. And if you look at it, Q2 and Q3, both these quarters, we have done 28% QOQ. So yes, we have missed the 30% by about 2%. And the attempt is to make sure that we try to cover up for the gap to the best extent possible. But in transparency, I think touching 30 may be slightly difficult, but we will be there in terms of 27-28% in constant currency.
Right. And in terms of the EBITDA guidance, I mean, it's 20 to 22% with other income. Current one, we are at around 21.7. It was interesting to see how in the previous quarter we were somewhere in that 28-29% kind of a range. Did this quarter actually see any impact on the back of wage hikes in the leadership team? Because that was something that we were watching out for.
I would take the reference of the previous year. We were at about 24.2% in the same quarter. 9-month period, 24.7. You bring out a very interesting point. One is, we have made investments into generative AI, GBS business, which is at about 24 crores, running at about 26 to 30% utilization. So I have said this in the last quarter itself, that in the first half of the year, we have made investments of about 1.5 million, approximately about 1.5 million. If you consider that similar kind of an investment going into Q3, it would be about 2 to 2.25 million. You add the new sales engine that we have added. That's something that we did, and that's an additional cost of about close to $250,000. The verticalization of the business, while it's supposed to give us a lot of impetus, it also adds some bit of costs. But keeping that aside, and the investment that we have to make into Artha Banking to make sure that it makes sense for the Indian markets and the other US markets that where we are going to take it into, we have made close to $2.5 to $2.6 million of investments in the financials up to the 9-month period of FY25. And just for that, and we are back to the 23-24% EBITDA, Hiral. So it is investments that we are making. It's a startup. GBS is a startup within Happiest Minds. Artha Banking is the non-linear growth platform that we have acquired from Pure Software and we are taking to new markets. The new sales engine is an overlay cost that we have taken to go deeper into existing relationships and get those new customers into which we can sell our services and offerings. So these investments take a little bit of time, but from a P&L standpoint, you can't deflate these costs and match them with the revenues. We are getting hit on that account. That plus the compensation increase, which has been fairer than most of the other peers and market participants, has had an impact on our financials.
Okay, so with regards to segments that will lead you to achieve your guidance, what are you banking on? Because CV as a segment has been slightly muted, not only for you, but across the industry, right? People have been banking on the BFSI space right now. What is going to be your strategy?
just look at our performance in Q3 as well, Hiral, you'll see that BFSI has really led the way. And so I would say that, and given the leverage we get from pure software Aureus, the capabilities, the customer base, and the Artha banking platform, I would say BFSI would be an area that we would be looking at to really help us accelerate our revenues. Another vertical or segment that has really come up well in the last year and a half is healthcare. We started reporting healthcare just a year back. And if you see, it's already around 14-15% of our revenues. And if you see on a year-on-year basis, we've demonstrated pretty good growth. A lot of interesting trends in this segment around bioinformatics, around newer type of medical devices, confluence of software and hardware in terms of various types of medical devices. And these are areas that, and overlay of analytics. So these are areas that are of strength to us. We have hardware practice, we have a very strong analytics AI practice, and healthcare vertical. That I would say is the second vertical that we would be looking at. And high tech, we're beginning to see some signs of, at least for us, if you see again, high tech has done well. And I think some of the strategies that we've been implementing of also targeting well-funded late-stage companies along with the larger tech players is beginning to show some dividends. So I would say these are three segments that we will be looking at helping us out during the quarter and probably into next year as well.
And with regards to the 500 crores that you did raise in July 2023 via QIP, how is the utilization on that front? Has it been for the acquisitions as well as on the Gen AI side? And if so, what's the kind of ramp-up plan that you have, and are you expecting large deals there?
The 500 crores that we had raised was for a combination of acquisition and meeting certain working capital and other requirements. So we are on target to meet those utilization targets set for us. But overall cash standpoint, we have deployed close to 800 crores in the acquisitions that we have made and the earnouts of the previous acquisitions. We are close to what 700 to 800 crores have been deployed. Despite that kind of an outflow, we still continue to carry about free cash balance of upwards of 500 crores. This I'm netting off, some of the overdrafts and received loans. But we are carrying about 500 crores in our books. That's a reasonable amount of cash balance for a company of our size. That's what we believe. But we should be able to, manage smaller acquisitions like the recent one which we did of the gas business in Middle East. Those are possible from our cash chest as well as our internal accruals. But if you want to do larger ones and acquisitions of, let's say, more than $50 million in size, we will have to look at options to raise capital or debt to fund those.
Okay. So from here on, growth will be driven inorganically or organically?
We drive. We don't split our growth on the basis of organic and inorganic. It's the strategy is to add capabilities, competencies. Like we said, we have added to our verticals through the last 4 acquisitions. Pure Software was largely, BFSI, healthcare, high tech. Aureus was largely BFSI and healthcare, whereas Macmillan was into edutech, and the most recent one, which we disclosed of consolidation of the Middle East business, is into BFSI and infrastructure business. So if you look at it, it's both fuel for further growth and consolidation of our existing capabilities and ability to sell it to those new customers. So, without splitting it, it will be a combination of both organic and inorganic.
Okay. And with regards to the synergies that you're seeing from Pure Software Technologies, what will that look like?
So if you look at the 3 verticals that Pure Software has customers in, one is in BFSI, more so in banking and financial services. Second is healthcare, and then they have some customers in the retail and high tech space. The two areas that we are seeing a huge leverage or synergy is in healthcare and in BFS. And in BFS, the Artha banking platform that we have is something that our sales team is taking to in India into some of the banks, and we are in advanced stage of discussion with a couple of banks out here. There's a good leverage that we're getting. We're also looking at how do we use some of the components of Artha in the insurance space, which is a subsegment that Aureus is very strong in. At the same time, Pure Software has been leveraging some of our GenAI, IMSS, and analytics capabilities. If you see a couple of the wins that we've reported in our press release, they talk about a GenAI use case for one of PureSoft's BFS customer. We also talk about IMSS, a deal that we've done for a healthcare customer of PureSoft. And with Aureus, again, we have similar leverage that's happening because our healthcare capabilities is something that they're taking to a couple of customers that they have in the healthcare space. And at the same time, for a couple of our insurance prospects, we've been able to leverage some of the senior domain experts that Aureus has in establishing our credibility. So I think overall, the synergies are really working out well, and we feel very excited.
Thank you. I mean, so that's the management in terms of happiest minds. Clearly, there are pressure points, but in terms of the guidance, that is going to be crucial. Constant currency, 27-28% is what they are, reducing their expectations to versus a 30%. And before that, the range was around 30 to 35%. And that's what is putting the stock under pressure. But coming back to a Titan, let's just quickly pull up that stock on the screens, because clearly, in spite of analysts being positive on the counter, stock is down around 3.5%, and it's mainly the margin worries that have continued to persist. In fact, let's listen in to the management of Titan addressing media post the Q3 con call.
So we started very well in the first few weeks of January, first 2-3 weeks, and then suddenly after many exciting developments in the international, especially US, has created a lot of excitement on gold price again and dollar. So it's actually very difficult to predict how Q4 will go, because the next few weeks and how much is posturing, how much is real. Then the gold moved from London market to COMEX because of anticipated tariffs. Suddenly now there was gold shortage in the market last 1 week, and then gold metal loan price, interest rates are also fluid. Banks themselves don't know what to do. So this is a little bit of noise. Difficult to predict how this quarter will go. It started off well, then it kind of hovered somewhere, and right now I think a lot of customers are also thinking, let's see where this gold price stabilizes. But if it doesn't come down or at all, then people may think it's better to buy right now rather than wait.
So that's the management of Titan, clearly indicating in terms of what's in store from here on. But what's interesting from here on is that they have said that the development in terms of the US market, that is what is actually creating that excitement with regards to gold prices. And it's difficult to predict how the fourth quarter is going to roll out from here on. So yes, there is some bit of uncertainty even with regards to H2 FY25. But let's quickly slip into a short break. On the other side, Praveer Sinha, CEO and MD at Tata Power, will join us to decode their Q3 earnings. Please stay tuned.
चला पटकन पटकन.
Hello and welcome to NDTV Profit.
The blessings of Ma Lakshmi that Prime Minister spoke about, will they shine on the middle class and the taxpayer?
The market will not be disappointed.
Finance Minister Minister Nirmala Sitharaman with the Bahi Khata. They're getting ready to go in and present the budget.
I present the budget for 25-26. That there will be no income tax payable up to income of 12 lakh rupees.
ये बजट जो है बहुत ही आर है। इसका मतलब ये हुआ कि रिफॉर्मिस्ट भी है, रिस्पॉन्सिबल भी है और रिवॉल्यूशनरी भी है।
जब मैं था तब हरि नहीं, जब हरि है मैं नाही, प्रेम गली अति साकरी, जामे दो न समाए।
This is another level. This is another level.
This is how a special Saturday session should end.
First of all, they're looking at, how to sort of reduce the number of slabs which is there in custom, which is like 12 or 13 slab, and how to bring it down.
Quick market check. Bank Nifty staying steady, about 0.5% up today. But if you look at the Nifty, definitely off its highs, in negative territory now. Bank Nifty is a story. Nifty IT is the story that we're seeing this morning. And we have our focus squarely on the results. We're going to be speaking with Tata Power in a few minutes from now. But before that, take a look at this very interesting conversation on the NDTV network with Bill Gates, where he highlights how India's government is benefiting from impressive talent in the tech industry.
It was my life. And, I knew the customers enjoyed it. We were listening to them and adding features for them. And, so it would have been ironic if, we hadn't been able to continue.
Everything you do or you did at that stage was with the vision of the computer becoming smaller, becoming less expensive, and the evolution of the chip actually expanding greatly. Things wouldn't be the same had that not happened, right?
That's right. I mean, if Moore's law, this exponential improvement, hadn't continued, then you can't do graphics interface and Windows and and they have to make the computer faster. They have to make the storage much better, called hard disks, and they have to make the communications better, all this optic fiber stuff. So there's people performing miracles that allow software today to, be gigantic and way. It would be too slow without that improvement.
Yeah. And in terms of the goal of Microsoft, and you're right, in terms of what you wanted to do, Paul and I were totally aligned on the vision to create the leading PC software maker. The goal was like a prize we could glimpse on the other side of a river, but it was clear to me by the end of 76 that the ambition to be the first to get there, to be the fastest, to build the best, is what drove you, right? Why was speed so important? Were there other competitors?
Well, at first there weren't, because we were significant in the first, and the other companies that came along, they would write one piece of software, like a word processor or an early spreadsheet. Our concept was very horizontal. We were going to be the best at hiring software people. We're going to write the best software tools for debugging. And we are going to write every kind of software for this personal computer. Spreadsheets, databases, every computer language. And actually, it's all these single point competitors literally for over a decade until Google comes along.
Yeah.
And although they start with search, they very quickly morph to just hire lots of smart people and do lots of software. And so they were the first where they thought about being a software factory.
Yeah.
There were some fine companies, products like Visicorp with a spreadsheet, Lotus with 1, 2, 3, WordPerfect, WordPro, most of these names, a lot of people haven't heard of nowadays. But there were a lot of very good single product software companies, but we were able to outrun them. And my sense of, let's not slow down probably helped us stay ahead and, even take those single product categories and take a leading position.
Did you ever visualize a scenario back in the late 70s that we'd be in an era of AI sometime in the future?
Yes, the question of what can software do that humans can't, and what can humans do that software can't? Anybody who works on this stuff, even before I'm born, Alan Turing raises the question of will computers be able to fool humans by talking in a very deep way? And so this idea of, okay, can you translate? Can you look at a picture and recognize it? Can you listen to a stream of speech and recognize it? There were lots of people working on that, but the progress was embarrassingly slow until about 12 years ago, when this neural net technique that had sort of been toiling in obscurity, but when the scale of computation allowed people like Hinton and others to bring this, then we start to make more progress than was expected. And then now, we still don't have reading and writing, but then these large language models that, when I finally see, it's only about 3 years ago still, when I finally see GPT-4, I'm just blown away, because I've been thinking, hey, it's still going to take a while. And I consider that demo with Sam Altman, Greg Brockman, the OpenAI people, as impactful to me in terms of what's coming as my sitting at Xerox PARC, which had one of the first graphical interface machines, and an amazing person that I later hired, Charles Simoni, showing me how he had done a graphics word processor. So AI, has always been the obsession, and now it's really happening.
That entire exclusive conversation on all our platforms and our social media platforms as well. But the big exclusive on NDTV Profit right now, India may liberalize Forex rules on equity investment. Very, very important messaging for foreign investors and foreign flows coming in. Shrimi joining with all the details.
Yeah, so government is considering, a clutch of changes to its Forex rules, which is FEMA, to attract more foreign investment is what government officials tells NDTV Profit. So how they're going to do it is what we are given to understand, that they're looking at easing the rules for non-debt instruments like equity, mutual funds, real estate, etc., which could potentially make it easier for foreign investors to invest in these sectors. So what they are considering at this point of time is to reclassify foreign direct investment to foreign portfolio investment. Now, remember, FDIs are mostly into the unlisted space. So when it gets listed, for instance, how will they get a treatment, reclassification to be foreign portfolio investment is what they are working at this point of time. And MOVE is seen as a kind of step to make investment opportunities more flexible and attractive to all these FDIs and be on par with FPIs is what government officials telling us. So remember, in November, the government already allowed FPIs to convert their investment to FDIs after they acquiring or exceeding 10% stake in a company. So, furthering that move, they are also looking at the FDI to make it possible for if they are shifting to FPIs. Apart from that, the sources tells us that this move is a part of ongoing exercise to make foreign Forex rule to be better aligned with the current economic situation. And for that, Finance Ministry and other financial regulators are in talks to bring a proper legislative changes to the FEMA rules with a timeline of about 6 months. And this will help definitely to further streamline the procedure and all, processes and compliance for foreign investment, better. So in a nutshell, these potential changes could simplify the process and offer greater flexibility for foreign investors in the coming months. And this is a kind of push to ease FEMA regulation to show a clear intent to boost foreign capital inflows in the country.
Okay, so no, Shrimi, I just want to contextualize this because yesterday you had the first FPI buy figure for equity markets in 23 trading sessions. There is also a whole context of how global funds have been exiting India, and not because of domestic concerns, but because of what's happening globally. Should we be seeing this in the context of India trying to make even equity and investments in India more attractive to global investors?
Yeah, definitely. So what the restrictions between the FPIs and FDI, that FPI is definitely for the equity markets and coming through the SEBI. You know, there has to be SEBI registration for FPIs to enter the markets, capital markets. For FDIs, they are mostly into unlisted space. They come through all those, restrictions are there for FDIs and a sectoral wise restriction that how many percentage can you take in the Indian company. Now, what they're thinking and the suggestion they're working on that how sort of FDIs who are, are in listed space. And for example, that unlisted companies is wish to list in the stock market. So instead of exiting that unlisted company, whether they can continue it as a FPI, which is currently as FDI. So that thought process is there, and definitely if you make the transition smooth and make the alteration and flexibility to foreign investor, of course they will come more and try to sort of explore equity market. That's the intent.
Okay, thank you for that, Shrimi. A big move over there, and I think those signals become crucial, Hiral, considering, and having said that, even for the last 6 months, you've seen Nifty in that volatile range. Even with FPI outflows, the inflows from domestic investors have been fine. But if you do have a reversal of trend over here, it becomes very important. Like we said, we're not counting one day's figure as a trend over there.
You mentioned about the DIIs as well, the ownership that they have in the market, the gap between the DIIs, the domestic investors and the foreign investors absolutely has been very narrow. In fact, at the end of December, the DII share was almost 17% versus FPIs, which were at 17.2, right? So yes, the importance of FIs is there, but whatever support we've got so far has come in from the DIIs. So the trend reversal that you're talking about, an absolute positive, because that's what will help the markets scale new highs there.
Just a quick look at some of these real big buzzers this morning. I want to pull up Motilal Oswal for you. About 10% up right now, across the 10% mark. And Angel One, nearly 6% up. Let's look at what 360 is doing. This entire space with a very interesting buzz. City Gas Distributors is the other one you need to look out for, and we gave you the Vahan data, which shows a big uptick in vehicles using CNG, IGL up about 6%. So a lot of movers this morning, even as key indices remain completely flat. So this is a stock pickers market, and focus of course on earnings. In fact, Varsha is joining us with earning highlights of Metropolis Healthcare, JB Chemicals and Azad Engineering.
Thank you, Tamanna. So let me start with Metropolis. We're in good set of numbers, but yes, it did miss estimates, but let's see what the numbers say. If you see the revenue growth, which was led by increased contribution from True Health and specialty segments. Now True Health is their wellness program. The revenue for True Health grew 25% and the contribution has been increased from 14% to 17%, while B2C revenue, if you see, that grew 15%, which contributes almost 55%, and B2B grew 10% year on year. Then on my list is JB Chemicals, again good set of numbers. If you see the revenue growth, which was led by domestic business, which grew 22% and contributes 59% of the overall revenue. International business, however, just grew 4%, but the highlighting factor here is CDMO, which grew 33%, and Q4 FY25 order book is strong for CDMO, and domestic and CDMO business contributes almost 70% to the overall revenue. Last on my list is Azad Engineering, very good set of numbers. Revenue was up 35%, margins were at 36% versus 37% last year. But if you see, though revenue grew 35%, net profit was up 43%. Now this was on the back of lower finance cost and lower tax outgo.
Okay, Tata Power in focus. Let's talk a bit about Tata Power. Q3 earnings saw a beat on profit estimates, margin and uptick. Overall, Interesting set of numbers as well. We saw slight miss on revenues. Praveer Sinha joining us for more on this. Dr. Sinha, thank you so much for speaking with us. But before I get to Praveer Sinha, let me just go across to Somit to get us a sense of why, Somit, and this is interesting, optically the numbers don't look half bad, but brokerages aren't so excited.
Well, yes, the stock is up around 2%, but brokerages are not too much enthused about the Tata Power's number. Firstly, if you look at Kotak Securities, they have maintained their sell rating with a target price of around 330 rupees on Tata Power, and they're saying that the earnings were boosted by non-recurring numbers that had aided the net profit number. Especially, there's a regulatory boost of around 300 crore rupees coming in from the Mundra power plant, and the effective tax rate was also lower on a YOY basis. They're also saying that the Tata Power solar business saw a reversal of revenues of around 630 crore rupees, which aided the margins to around 14.34% as against 5% that we had seen in the last year. They are also saying that the Tata Power's pipeline of 5 gigawatt of renewable asset in addition to its external order book will likely drive the headline growth, and that is the only positive that they're looking in when it comes to Tata Power. Bank of America has also maintained the underperform rating with the target price. They have also cut the target price to 350 from 363. They are saying that the third quarter earnings were a miss on account of lower other income and JV profits. They are seeing delays in solar capacity addition versus what the company had targeted earlier. However, they are saying that the transmission distribution execution is on track, but they are cautious when it comes to pump storage plant going forward. When it comes to CLSA, they have also maintained the underperform rating on Tata Power, and they are saying that the third quarter was a weak. In fact, there was a surprise loss when it comes to Tata Projects and the weak renewable energy independent power producer business. They are saying that the only bright spot when it comes to Tata Power numbers were the renewable EPC business, which did well due to solar module import ban and a decline in cell prices.
Okay, thank you so much for that setup, Somit. Dr. Praveer Sinha, CEO and MD Tata Power with us. Dr. Sinha, a pleasure as always to speak with you here on NDTV Profit. Thank you so much for your time. I'm going to jump right to it because I know you've done a whole set of interviews this morning. So let me come to, I think, what investors would want to know right now in this live telecast, that the numbers look good because of a couple of one-offs, including regulatory measures. For example, duties on imports from China on certain components, etc. Do you see these numbers that you've presented this quarter as sustainable?
Good morning, Tamanna. Always a pleasure to be on your show. I think our performance this quarter is very good, considering that majority of our profit has come from our core business. It's not because of duties or taxes or anything, but because all our businesses have done exceedingly well in this quarter. And that is why not only our PAT has gone up, but our EBITDA has gone up. So I think what we need to look at it is that our core businesses have started kicking in, and the impact of that is coming in our EBITDA as well as in PAT. Earlier, many of our non-core businesses used to give a benefit. I would say that the four big things that has happened is that our manufacturing in the solar module and cell plant has now stabilized. It's doing exceedingly well. Last quarter, we had a revenue in manufacturing of nearly 1,300 crores and EBITDA of 226 and a PAT of. Now, if you see many of the players who are just in standalone manufacturing, it's much better than any one of them. In fact, the speed at which we have set up the plant, it's not only an Indian standard, but it's a global standard. And the type of technology that we have used, the type of robotics, the type of automation, many of the analysts have gone and seen that, and they all tell me that this is possibly the best in our country and also meets the global standards.
Dr. Sinha, I will interrupt over here. We are running slightly short on time, but my quick question to you is, if you have to look at FY30, you're targeting a 2.5 times your FY24 PAT. Do you think that the growth that you're looking at is going to be completely back-ended with renewable energy because fully contributing only by FY28?
It's not only renewable. Renewable will play a very, very important role because nearly 60% of our capex goes there. but we will also be growing in our transmission business, in our distribution business, and in our pumped hydro and hydro business. The work in the pumped hydro has started. The work in the hydro plant in Bhutan has started last month itself. So I think we are very much on track, and I don't think there are many players in the sector who have been able to start the work at the speed at which we are going. The work on the second pumped hydro of 1800 megawatt will also start in this year. We are going through the process of various clearances. The work on the second hydro in Bhutan will also start in this year. So I think in terms of speed, we are possibly one of the fastest in this sector. And notwithstanding the fact that there are huge challenges sometimes in getting land and the evacuation and all that, which is not in our control. So I think we have a very strong pipeline, and what we have demonstrated in 21 quarters of consistent performance, you will continue to see that in future also, and much better and much higher increase in PAT and EBITDA numbers. So I think we have surprised everyone consistently, and we will continue to surprise in future too.
A very strong positive commentary coming in. May I just ask Dr. Sinha, the margins that you've clocked this time, 21.78%, is that sustainable, taking into account what we've seen with Mundra this time round? I mean, wondering how to look at this, because parts of the street looking at this as a one-off, as a windfall. Do you see these benefits extending into Q4?
Absolutely, because as I mentioned to you, we have now done huge amount of capex, and it is the impact of the capital expenditure that today all our businesses have started doing much bigger and much better. Mundra was a problem, but under Section 11 today it is cost neutral and continues to operate in Section 11 because of the huge demand of power in the country. And Mundra issue has become much smaller today than what it was 5 years back. So I think we need to move on and say that how our existing businesses is becoming much larger in terms of their contribution for the profit and EBITDA and margins, and that this will only improve because we are doing very good quality investments, and they will give much higher returns going forward.
Right. Dr. Sinha, what's the update with regards to nuclear energy? You are looking at a foray into this segment. How far are you with regards to this space? What's the kind of capex that it will require, and what's the funding plan?
I think it's too early to talk about capex and the funding plan, because we have only heard from the finance minister that there will be an amendment to the Nuclear Act, and also we need to understand what are the policy support that will be provided by the government. So we need to wait and watch and see that how this will pan out. But what we can tell you is that we are very positive about it. We've done a lot of work in last 2 years, and going forward, we will play a very important role once the sector opens up.
Thank you so much, Dr. Sinha, for speaking with us. We actually have so much to speak with you, including, budget allocations, impact, outlook for rooftop solar. But I think we'll have to schedule a slightly longer and more detailed conversation with that, and we look forward to the possibility of that. But
absolutely, pleasure, Tamanna, and look forward to catching up again.
Absolutely. Dr. Praveer Sinha there on Tata Power. The streets looked at the numbers positively. Brokerages have some questions in mind. We've managed to ask some of them, but of course a detailed chat in the offing. With that, it's a wrap on India Markets Open, but Ask Profit up next. Stay tuned.
चला पटकन पटकन.
Hello and welcome to NDTV Profit.
The blessings of Ma Lakshmi that Prime Minister spoke about, will they shine on the middle class and the taxpayer?
market will not be disappointed.
Finance Minister Nirmala Sitharaman with the Bahi Khata. They're getting ready to go in and present the budget.
I present the budget for 25-26. That there will be no income tax payable up to income of 12 lakh rupees.
ये बजट जो है बहुत ही RRR है। इसका मतलब ये हुआ कि रिफॉर्मिस्ट भी है, रिस्पॉन्सिबल भी है और रिवॉल्यूशनरी भी है।
जब मैं था तब हरि नहीं, जब हरि है मैं नाही, प्रेम गली अति साकरी, जामे दो न समाए।
This is another level. This is another level.
This is how a special Saturday session should end.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Mahima Vajrajani. We'll take you through the next 1 hour of trade. And as we speak, the equity markets, at least the benchmarks, are a little chop and churn right now. They're treading water after yesterday's big move. But the broader markets is where the action is. Gains of over 1% each for the mid-cap and the small-cap index. And the Nifty Bank as well, holding on. It's gaining about 0.4% right now and trading comfortably above 50,000. So that's certainly something that you want to watch very closely. This, remember, was the X factor yesterday. It gained close to 2% and lent quite a bit of strength. But of course, the equity market is something that you should track. But the other very interesting thing that's happening today in India is that Sam Altman, and you will recognize this name, Sam Altman, who is the founder of OpenAI and who has led these conversations about generative AI through the last year and a half, is in fact in India. And in fact, we've got an image, if we can pull that image up and showcase it. He is going to be speaking today, and we've got Rishabh. If we can get Rishabh on the phone line, we should do that as well. But he said he's going to tell you what this is all about, of course. Let's pull that image up if we can get it. We will soon get you that image. But he's going to be speaking to reporters. Is an event planned today, and there's so much conversation about the implications of OpenAI. You saw the introduction of DeepSeek not too long back, and that sent waves around the world. Why was that? Because you had the generation of a large language model by a Chinese startup that was apparently cheaper to set up than OpenAI has been, and a few other of the peers that are from the West. I'm talking about large language models, and that drew into question some of the capabilities that have been generated so far by these US companies, by NVIDIA in the form of the graphics cards that it's become so famous for, that will support this kind of large language model, and that will support the kind of artificial intelligence that will make all of our jobs and your jobs easier. Certainly a big conversation to have this morning, and we will bring you updates over the course of the day. Of course, the other aspect that we're talking about today has to do with results, and we've got Titan that we're focusing on at the start. And Mahima, we've got the management joining in right now.
Absolutely, Alex. Before we welcome Mrs. C.K. Venkataramanan, who's the MD of Titan. Just a quick a roundup of how Titan Q3 has panned out. Revenue was up 25%, EBITDA was up 7% for the company. Margins came in at 9.4%, and net profit was down by around 0.5%. This was because of the custom duty overhang, which is done by this quarter. With that, let's welcome in Mrs. C.K. Venkatraman, who's joining us now. Welcome to the show, Mr. Venkatraman. My first question to you is, in your con call, you did mention, along with Ajay Chawla, that dilution in margin could take place due to studded mix as well as the unprecedented rise in gold prices. But you've also said that it will remain within the range of 11 to 11.5%. But I want to understand that, with respect to the margins, do you expect them to go below that 11% range by any chance in case the gold prices rise continuously in the next few quarters as well?
No, it would be our strong attempt to not let it fall below 11%, as Ajoy also mentioned on the call, because we have multiple levers available to us at our scale to make sure that that doesn't happen.
Okay.
It's just that when the gold price rises and keeps rising like this, it's too complicated to explain to a lay viewer, but it affects the gross margins of diamond jewelry as well, because of which, and the share of diamonds and gold changes and all that, but not below 11% in any case.
With respect to the emerging business, we did not see an uptick in terms of Taneira sales, despite this being a festive season. What has led to that? Because festive season, we were expecting a good growth there, but emerging business overall has grown by only 5%. And you also said that there has only been an addition of one store this quarter. What has led to that? And going forward, do you expect the share of emerging business to improve? Because that is the area where you're focusing right now.
See, the challenge that we have is our main business, which is 80% plus, continues to grow at this rate. And therefore, because of its share being so high and it continuing to grow at, if I add the global part of jewelry, which is Tanishq outside India, the growth rate is even more. And therefore, any emerging business has to grow at many times that for the needle to move on its share. So that's a generic problem with the nature of the portfolio that we have. Having said that, certainly we need to do rather better on the emerging business growth. And while there is a certain perspective of why Taneira appears not to have done so well in quarter three, because there was a buy and sell channel called L3, which did very well in quarter three of FY24, and we have contained the expansion of the network in order to consolidate and grow at a same store level. So this angle is depressing the actual performance of Taneira in the current quarter. Not that it is satisfying by itself, but it is better than what it appears. We need to do a lot of better work. We haven't got our act right, honestly, on getting enough customers to come to the stores of Taneira. Even though when they come in, they're bowled over by what Taneira has to offer. So it's our challenge and task to get lots more people to become aware of what Taneira is. Work has begun, and we are hoping to see results in the next few months.
Hi, Mr. Venkataraman. Alex joining in. I'm just wondering what that work entails. Is it going to be marketing spend that is going to push people into or pull people into the doors?
Not just spend. Actually, the story of Taneira needs to be told in a comprehensive manner to those who don't know. They may be aware of a brand called Taneira, but what all Taneira actually is still to be built. And that's what we've just begun a campaign a couple of weeks back. We're hoping that will do some. So it's actually brand building and building the desire to pull customers to the stores. When they come in, they're really bowled over by what we have to offer.
Right. Mr. Venkataraman, with respect to the lab-grown diamonds, Mr. Chawla did mention that lab-grown diamonds is not impacting your studded mix because lab-grown diamonds is present in the pocket which is below 1 lakh rupees. But as per my survey, I've seen that this year, even with respect to wedding sales, the big ticket price jewelries have also been sold with lab-grown diamonds. Do you see this impacting, maybe not this quarter, but let's say 3 or 4 quarters down the line, will that impact your real diamond sales?
What you are saying and what Ajoy said are perhaps simultaneously right, in the sense that somebody buying an expensive necklace could well also look at lab grown as an option, as a substitute and all that, which is what you are referring to. What Ajoy is saying is on ground what we are hearing, and what we are hearing is mostly in the sub 1 lakh. So both are simultaneously right, perhaps. we are very much aware of the power of the lab-grown diamonds as a category, their ability to offer, substitute potential to various types of customer segments, and we will reveal, what we plan to do in this at the right, time. We are not worried about it. We see it as an opportunity. At the moment, the risk that they represent, as you're calling out, is not visible for us. It may be visible for some other brands in some other, segments.
Venkatraman, one last question. With respect to your watch and wearable segment, we've seen a good growth in terms of value as well as volume, but margins have taken a significant hit. Why is that, and do you expect them to improve going forward? And if yes, what will be the levers?
Actually, the wearables business category has been under pressure, and it has shown on Titan Company as well. And gross margins have been under pressure because of deep customer discounts of the category, and what we have to do, obsolescence is not an easy thing to control and all that. So we expect the gross margin in the wearables business to substantially improve in calendar 25 as well as FY26, and and sales growth also to sort of come back. And through that, we expect to deliver a better gross margin consolidated for the watches and wearables business, and through that, a better overall EBIT margin for the watches and wearables division.
International business, Mr. Venkatraman, is the bright spot, forget the pun, 64% growth. I'm just wondering what the strategy is here. At this juncture, it's not contributing a very large amount to the top line, but will that change dramatically going forward? What's the strategy in terms of store addition? What pockets are you focused on?
We're focused on the Gulf Cooperation Council countries, Singapore, and the US. That's our current focus. And the share of that international business is relatively small because of the very large jewelry business in India. But if you compare the international jewelry business with the other parts of Titan Company in India, that share is dramatically altering because of the year-on-year growth rates that we are seeing there. And I'm sure that will continue to do well for the next many years. And if that growth rate continues for 5-7 years, surely the share of the IBD to total will also change in a marked manner.
Thank you so much, Mr. Venkatraman, for joining us this morning. Enjoyed our conversation and for the perspective also. Thank you so much.
Thank you. Bye-bye.
All right, let's cut across to the fireside chat that I'd mentioned earlier. INB Minister Ashwini Vaishnav speaking with OpenAI Chief Executive Officer Sam Altman. Listen in.
Really help us solve these population scale problems, because most of the problems we face, Sam, are problems where you have to look at a multiple of billion, so which is like very common. So then how do we solve these population scale problems? That's where our focus, of course, is on all the three layers, and within the applications in healthcare, in education, in agriculture, in weather forecasting, in disaster management, in transportation, multiple different things we are working. And I request the entire startup community to come up with very unique solutions, and we'll be open. We are very soon starting a kind of open competition for it, open empanelment competition kind of thing. So that will be huge. So many problems can be solved, and why don't we use this latest technology that we have for solving these problems, right? You guys are good with that? Would love to do.
Some more energy, guys, come on. Amazing. Just building on that, Sam, I'd like to come to you, talking about population scale problems, as the minister said. Again, India is very well placed for that, and our mission really is, artificial general intelligence for all of humanity. And so I'm really curious to understand from you, how can the models and the tools that we are constantly releasing play that equalizer role and be able to really fulfill in healthcare, education, at really significant ways?
Finally, for the first time, I think the models that are on the near-term horizon
the models that we'll release in the coming months are over the threshold of being good enough to really address these problems. And now people just have to go build the solutions. So you already see, and you see this actually a lot with deep research in the last couple of days. People say it did this amazing thing for diagnosing a disease or helping me with my research to, try to cure a disease. Education, you've already seen now with previous models where people say it did amazing tutoring results. So I think the underlying innate technology is just right on the threshold, and we'll get there with the next models. But now people have got to go off and build all these services. So someone in this room hopefully will figure out what the AI tutor of the future looks like, and that'll be a population scale thing, and it'll think what that would do if every kid on Earth, this year got an AI tutor that was provided like a better education or helped to provide a better education than anybody could get last year. Think what it would mean if we could have like an AI medical diagnosis system that was better than anyone could get last year. Think what it could mean if scientists could go cure every disease faster. And so, we've been waiting for this moment for a long time. I think we're gonna deliver something that can help with it, and now people have to go build with it.
Absolutely, and I think the recent launch of the research was just incredible, right? And I think everyone's been tracking it closely. We want to be able to use it. Do you have any advice specifically if we were to use that to solve, very complex problems like cancer and large diseases that we suffer? Do you have any sort of guidance on what's the right way to start experimenting?
So we're very much still in the research assistant phase of this. This can help someone review the existing literature and find some connections, but this is not an innovator yet. This is, I don't think we're yet at the technological level where any of us should expect these models to go cure cancer on their own. We will get there, I think.
Yes.
But for now, this can I think this can help researchers be much more productive in what they do.
Absolutely. I also just want to ask you, what would India has an aspiration to have a voice and be in, the top global countries contributing towards AI. What do you think, what is your advice, as we think about and as we have so on stage, what do you think we should do to really have that global voice that we want to be and leaders actually in India?
I mean, it seems to me like it's working.
Yeah.
I'm not sure you need to do anything differently.
That's already a compliment to what Sir is already doing and getting out. I also want to ask you, sir, a quick question. You must be using AI in your daily life, and I'm not going to ask you what is your favorite platform because that we already know. But I'm very curious to know how is OpenAI models adding efficiency and productivity to you in your daily life?
Bad question to ask. On this platform, obviously, I'll say it's very good. No, of course, jokes apart, OpenAI really makes life significantly easier. Writing notes, getting all that stuff out, it becomes very easy. And I was just curious, what would your research project mean for quite a lot of people? And how can we make that transition smoother? How can we make more difference in their lives, as we were discussing just before coming to the stage? As in the large number of people who do a little bit of basic research and bring out reports.
So this is a very unscientific guess, but my vibes-based guess is that deep research can do a single-digit percentage of all of the economically valuable tasks in the world and almost none of the complete jobs. But that's okay, because you can just use it to be more efficient. So if you are a scientist trying to cure some disease, deep research is surely not going to go cure that disease on its own. But if you can farm out the tasks that took you a lot of time but were lower value, if you can say, help me with this literature review, help me figure out how to order these supplies, help me figure out what steps I need for this experiment, and you learn to work that way, maybe you can be twice as efficient. And if you can double the efficiency of every scientist on Earth with the tool we have today, which I believe might be possible. It's not going to do the really brilliant insights, but if it can take away a lot of the lower level work, it's going to take the world a while to get used to that. I think people have compared the launch of deep research to the launch of ChatGPT, so we had chatbots and now we go to these agents, and it's like a magical thing. You're like, oh, I didn't think AI could go do this thing for me. I didn't think I could go do a multi-day task, and now I can. But it took a while for the world to figure out how to use ChatGPT. Not that long, like months, not years. And I think it's going to take months, not years, to figure out how people become really productive with deep research.
Yeah.
Security is another concern, and also there are concerns about national security. Sam, what do you think? How should we be working on these items?
He's taking my job now.
I think these models are on the precipice of being incredible at software engineering, and that'll be great for a lot of things. I think software engineering by the end of 2025 looks very different than software engineering at the beginning of 2025 does. But it will have huge impacts, good and bad, for cybersecurity, and we've got to get ahead on the good.
For sure. No, sir, please.
That's what that guy is saying, time's up. I just wanted to make the best use of every second that I have with you, Sam. And thanks a lot for coming to India. We are super excited that you have come here. And really, this entire team, entire startup community is so excited, so supercharged. But guys, I cannot see that energy. Show it, man. Come on. That's the way. That's our India today, right?
Thank you very much for having me today, and really excited to do a lot more together.
Yeah, absolutely. Looking forward, sir. Thank you so much for all.
All right. So you see that the IB minister is exhorting the startups in that room to cheer, and they did very vociferously. A lot that is going to take place in this space, and a lot of companies, perhaps even us here in the newsroom, we're going to be able to use artificial intelligence and generative AI like we never did before. If you actually think about it, there were people that said at the introduction of the internet that it was just a passing fad, and well, look where we are right now. Let's slip in a very quick break, but on the other side, we'll talk about all of your questions. I know we're late on this, but we will take a lot of them, so do stay tuned.
चला चला पटकन पटकन.
Hello and welcome to NDTV Profit.
The blessings of Ma Lakshmi that Prime Minister spoke about, will they shine on the middle class and the taxpayer?
The market will not be disappointed.
Finance Minister Nirmala Sitharaman with the Bahi Khata, they're getting ready to go in and present the budget.
I present the budget for 25-26 that there will be no income tax payable up to income of 12 lakh rupees.
ये बजट जो है बहुत ही RRR है. इसका मतलब ये हुआ कि रिफॉर्मिस्ट भी है, रिस्पॉन्सिबल भी है और रिवॉल्यूशनरी भी है.
जब मैं था तब हरी नहीं, जब हरी है मैं नाही. प्रेम गली अति साकरी, जामे दो न समाए.
This is another level. This is another level.
This is how a special Saturday session should end.
Government is considering to increase the custom duty on the imported finished goods ranging from consumer electronics to medical devices.
And to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20%.
Sources tell NDTV Profit that budget is expected to propose the draft of the new income tax bill. In fact, the draft bill is expected to find a mention in the FM speech on February 1st.
I also propose to introduce the new income tax bill next week.
First of all, they're looking at, how to sort of reduce the number of slabs which is there in custom, which is like 12 or 13 slab, and how to bring it down to 5 or 6.
As a part of comprehensive review of customs rate structure announced in July 2024 budget, I propose to 1. Remove 7 tariff rates. This is over and above the 7 tariff rates removed in 23-24 budget. After this, there will be only 8 remaining tariff rates, including 0 rate.
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects.
This entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind President?
Welcome back. You're watching Ask Profit, and we're continuing to talk about earnings. And Metropolis Healthcare was a stock in focus on account of its Q3 earnings. Let me take you through the headline numbers. The revenue increased by about 11% or thereabouts, came in at 323 crore rupees, and the margin was flat at 22.3%. EBITDA growth is about 11%, and the PAT growth is about 15.5%. But there's a lot more to look at below the hood, and in fact, to talk about those numbers, we've got Surendram Chemenkotil, who's the Chief Executive Officer of Metropolis Healthcare, joining in. Hi, sir. Thanks so much for taking the time. First, and this is something that was pointed out by my research analyst, she's looked at the volume impact in Q3 in the acute segment, which is normally a soft quarter as we understand it. What is the expectation for volume growth in that particular segment?
Good morning to you, and good morning to all your viewers. Yes, I mean, if you look at the overall results, we have clocked about 11% revenue growth and a 15% margin growth. Now, another good quarter for us in terms of performance, definitely. The volumes normally in quarter three, we normally see a decline in volume because of it's not a illness quarter per se. Festivities and good weather, etc., is what happens in quarter three. Particularly the acute illness comes down in quarter three. That's why you are seeing a slight dip in the volumes in quarter three. But once it comes into quarter four and then onwards, the volumes get better, and we are definitely looking for a 6 to 7% volume growth in the coming quarters.
On the revenue as well, so you've clocked an 11% increase in the revenue. As you pointed out, in that quarter, there's festive season and generally cheer, right? So I'm just wondering about the full year guidance, Mr. Surendram. Is there going to be the 13 to 15% that you have guided for? Are you going to achieve that? And towards what end of the band do you think is more likely?
So on a YTD basis, if you look at 3-quarter performance, we have done 12.5%. And we should see a similar trend or a better trend in quarter four as well. So we should come closer to the, the guidance that we have given, by the time we close this year.
Mr. Surendra, Mahima also joining in. I wanted to understand that you recently acquired Core Diagnostics, and the acquisition of this might lead to some margin dilution. Do you expect that to happen? And if yes, what range will your margins end at by FY25? And going forward, what's the margin outlook for FY26?
Yeah, yes, Mahima. The core diagnostic acquisition integration is in the final. I mean, the whole acquisition in the final stages. Maybe about 4 to 6 months, 4 to 6 weeks from now, we should, start the integration process. Once the acquisition is completed. Well, I mean, in the year one, definitely there will be a little bit of margin erosion because core operates at a relatively much lower margin than what we do. And what our expectation is that in 3 years' time, core diagnostic business get into Metropolis levels of margin. So definitely the first 2 years, a slight margin dilution will be there in overall group level. But I think at third year, we should get back to overall revenues getting much better with the core acquisition and also the margins coming back to the company levels.
Got it. With respect to the volume versus pricing growth, one of your competitor came out and said that they will be focusing on the volume growth and won't take price hikes. Is that the strategy that you will also be adopting, or will you see some price hikes at the cost of volumes?
See, we have always been focusing on the volume growth. That's not new to us. And, whether we state it or not stated, volume growth always been. And we are one of those, leaders in the volume growth. If you look at it, the last year we ended with about more than 7% volume growth. And this year at a YTD level, we are running at a 6% volume growth. The volume growth will continue to be our driver. But that doesn't mean that we will not look at the pricing opportunities. Now, we have rolled out micro marketing strategies, rather than looking at the pricing at a national level, along with pricing, distribution, logistics, and the support system, etc. We are looking at every micro market level. So wherever there's an opportunity for us to take the prices up in the micro marketing strategy, we will take the prices up. And wherever we need to do a price adjustments, in terms of being competitive in the market, we'll also do some price adjustments, even if it has to. That means that we have to, bring down the price in certain markets. So for us, it's going to be a very dynamic kind of a scenario. Based on each market, we will take our call.
Mr. Chairman Kottal, thank you so much for joining us, for speaking to us this morning. Pleasure speaking with you.
Thank you. Thank you very much.
All right, let's bring in the guest that we had originally slated for Ask Profit, Rajesh Agarwal, Vaishali Parekh. I must begin by welcoming you, of course, and saying good morning, but also apologies for keeping you waiting, and thank you so much for your patience. I appreciate it truly. Let me start very quickly, though, Vaishali, with a very quick view on how you're seeing the benchmarks, right? So you have the Nifty 50, which is more or less treading water at this juncture. Not too much action in the Bank Nifty either. Do you see that will pick up pace in the second half? Would you advocate caution at this juncture still?
Very good morning, Alex, and very good morning, Rajesh, and all the viewers. Yes, so actually, we have been seeing since quite some time, Bank Nifty was giving an indication that it's showing sign of stability, and Bank Nifty was the one to take the lead. Now, yesterday's move, we saw Nifty moving past 23,650 levels, which was a tough hurdle. And today also there is follow-up upward move. So now we would say that yes, 23,350 would act as a near-term support, and gradually we can go towards 24,200. Now, Bank Nifty can take a breather, allowed to do so, because right from 48,000 as support, we are already on the 50,000 zone. So hard to tell for the day as to how it would be. But yes, it's a positive bias because you see frontline banking stocks have already got into momentum.
Okay. All right. Let's start with the questions then. And Mahima, I'm going to take the first question from Raghu, who's writing in from Bengaluru, asking about PC Jeweler. And it's an interesting question to ask. Let's pull up the chart and see where it's currently trading. It is at upper circuit. And I want to know what Rajesh has to say, because this particular viewer has taken a call to buy 4,000 shares of PC Jeweler at a price of 2 rupees 10 paise, when things were not looking too good for this company. Rajesh, there were a few concerns about corporate governance about this company, and we marked this at the start during India Market Open as well. What would you suggest for somebody who's bought at that level, though? Multifold growth.
Good morning, Alex. Good morning, Mahima. Good morning, Vaishali. this kind of purchase, I would say, is fully speculative. It's like hero or zero, which option players call. Yeah, either it's zero or it becomes a hero. So that is what exactly happened. Corporate governance issue. We are still very concerned. We are not very convinced about the things in PC Jeweler as such. Numbers are also not that exciting. And fundamentally, I would say to avoid these kind of stocks. But still, when you have taken this kind of call from a very low level, what I would suggest is sell that much quantity so that your capital comes out and write the rest.
That's the view coming in with respect to PC Jewelers. The next question that we have is on Star Health. Vinay from Hyderabad has bought 285 shares at 510 a piece, and he's holding them at a loss right now. So he's sitting on a loss of over 19,000 odd rupees. He wants to know what's the view with respect to the stock from a 1 year point of view. Since he's been holding for quite some time now, Rajesh, I'll stick with you for this one. Star Health, fundamentally, how does it look?
See, the numbers this quarter were under pressure. Margins were under pressure. It didn't perform as expected. But still going forward from the fourth quarter onwards, when it's time for people to think about Mediclaim and all, I think the volumes would take up and the margins would improve. At this point of time, it's a hold from a side, but by any chance it comes to around 470, 475 odd levels, then one can think of getting out.
All right, let's take the next one. And I've promised that I will take Geeta's question. She's asking about Transformers and Rectifiers Limited. And she's bought at levels of 889. The stock is, if I'm not mistaken, up and about today. Let's pull up the intraday chart. It is, in fact, at an upper circuit, if I'm not mistaken. The question is for a very long term, though. So therefore, Rajesh, I'm coming back to you. What she's pointing out is that despite their results, they have actually bagged a largest order in the past couple of days, a few days, and perhaps there's a reaction to that. Would you say that it's a good hold for the next 6 years? There were questions about valuations which might have become a little stretched, but would you hold on?
See, at this point of time, I would hold on, not because of the recent orders, but I believe they have announced of corporate action also, like maybe going forward some bonus and all. So numbers have been good, but you have to be very cautious on this because the volumes are very low and any kind of significant selling might keep the stock in a downside circuit also. But at this point of time, keep a target of 870 odd rupees and carry on.
That's the view coming in on Transformers and Rectifiers. Hold is the view from Rajesh. The next counter that we have is Adani Ports. Sarath from Kerala has this question. He wants to buy Adani Ports from a 3 months perspective. Vaishali, I'll come to you on this one. 3 months on the charts, Adani Ports is the right buy?
No, I would say so, yes, of course, because the stock has been beaten down, and I would say purely with a strict disciplined trading, I would say keep a stop loss of 1100 or maybe 1080. And I think the way the stock is showing signs of reversal, this can go towards 1180 to 1200. So disciplined trading with stop loss, shorter term time frame is 1100, and since it's a positional trade, I would say keep a stop loss of 1080.
1080 is a stop loss. All right. And the standard disclaimer, of course, you're watching NDTV Profit, which is part of the NDTV group and owned by the Adani group. We just discussed Adani Ports. All right. I know we have a caller, but let's quickly address this. I spoke about Equitas, apologies, Equitas Small Finance Bank, but actually the question was for ESAF Small Finance Bank earlier in the week, and so I'm rectifying that today. Basil Kurian, writing in from Saudi Riyadh, he's bought ESAF Bank at a price of, I believe, 67.39. He's got 1,400, and so he's incurring a loss right now. It's practically halved. What should he do for the next 6 months? Vaishali, I'll come to you on this one. ESAF Small Finance Bank.
Yes, so right now I think it's at 35 rupees, but there is nothing really happening in the stock. So now that if he wants to hold, keep a stop loss of 32. And let's see if this stock goes above 38. I guess it could go further towards 42 levels. So that's the way you can hold the stock.
All right, that's the view coming in on Equitas Small Finance Bank.
ESAF.
Oh, it's ESAF, okay. Yeah. ESAF Small Finance Bank. The next caller is lined up for us. Nihar from Bengaluru is calling in. Nihar, a very good morning. I believe you have a query on ITC. Nihar, I can hear you. Yes, go ahead with the query. Go ahead with the query. Yes, I can hear you, Nihar.
Actually, I bought the shares of 115 at an average of 395 after the demerger.
Okay.
I want to know the long-term view. What will be the
Did you buy ITC or ITC Hotels?
ITC.
Okay, understood. What do you want to know?
I want to know the long-term view of the stock.
Okay. Any specific reason as to why you bought it post the demerger?
Because ITC has a portfolio on various segments like tech, cigarette and FMCG.
Right.
So ITC is one of the Nifty 50 stock as well.
Right.
So I want to know the long-term view.
Okay, got it, Nihar. Rajesh, I'll come to you on this one. ITC post demerger is when he's bought the shares. Is it a good long-term hold?
Of course, it's a good long-term hold. One can even buy this stock. Company has been doing very well. Not only the tobacco front, but even the FMCG is doing well. They're moving into dairy, cash positive balance sheet, debt free, having strong portfolio brand. And the best part is from the last 2-3 budget, there is no tinkering of syntax, what you call syntax on this tobacco business of this. On all parameters, the stock is a good long-term hold, even giving good dividends. One can even buy at these levels.
And don't miss the grin on Rajesh's face when he speaks about ITC. And this is how you should look at companies, right? You should be absolutely positive about them. Let's talk about Roshan's question. Roshan is calling us from Chennai. Roshan, what would you want to know?
Yeah, hi. I have purchased JP Power 6 months back at 20 rupees. So quantity of 2,600. So I'm at a loss of 12,000 rupees now. So should I can I hold it for some more time, or should I sell it?
Okay, what was the thinking when you bought Jayaprakash Power Ventures? Was it based on the business?
Yeah, based on the business and based on some experts' advice, I have purchased it.
Based on, sorry, what is the second thing that you said?
Expert advice.
Expert advice, okay.
Yeah.
Okay, and what was the time period that you intended to hold for, Roshan?
I can hold it for 6 more months, 6 or 1 year.
Okay.
Not a problem.
Vaishali, he's lost ground and 20 rupees was his buy price. The stock is currently trading at 15 rupees. What would you suggest that he do?
I guess the stock is already beaten down, and now that he's holding in and holding with a loss, I would say the stock is showing signs of reversal. So keep a stop loss of 1450, and gradually I think I see the stock going towards 1650. So from there on we can have a relook. If we see further momentum setting in, it can go towards 18 as well. So I would go step by step in the stock.
Got it. That's the view coming in on JP Power. The next question that we have is on South Indian Bank. Niva from Chennai wants to know whether it's the right time to enter from a longer term perspective. She wants to know the levels to enter and the target price from a longer term perspective. Rajesh, I'll come to you on this one. South Indian Bank is the counter. What's your view?
It's a very stable bank, giving good numbers quarter on quarter. Dividend is also good, but the problem is from the long period of time there have been nothing on the market cap front. So there are better choices available in the market. If you're looking at small cap or a mid cap banking names, maybe a Bank of Maharashtra or a PNB would be a better choice rather than going for South Indian Bank.
Which was the bank that we just spoke? South Indian Bank. Because we've got the next question, which is also on a bank, and Shrikant wants to know about Union Bank, which he's acquired 975 quantity of. 119 is the average price of acquisition. The stock is currently trading very close to that level. He's looking for the short to medium term outlook on this and whether or not there's another opportunity that he should consider as opposed to this. Vaishali, on the charts, what would you suggest? The stock is up and about in trade today, 4.5%.
Agreed. So actually, even the PSU sector, overall full banking sector had been beaten. And now today we are seeing some good strength coming in. So I would say continue holding as far as Union Bank is concerned. Short-term target, I would say, well, keep a stop loss of 114 and look for a target of 128. But besides that, if you are asking me, Kotak Bank is showing a lot of promise. Axis Bank, fair value. ICICI. So, well, I think he should have a balance of all these stocks in the portfolio.
Okay, we have our next caller lined up. Murli from Bengaluru is calling in. A very good morning to you, Mr. Murli. How can we help you?
Good morning to you. My question is to Mr. Rajesh.
Okay.
I'm holding 200 shares of Encure Pharma, the recent listing.
Right.
Bought at 1355.
Okay.
Now it is around 1247.
Right.
So I'm incurring a huge loss.
Got it.
Can I add more? I'm willing to wait for 1 year.
Okay, add more. Rajesh, is that the right thing to do at the current levels for Emcure Pharma?
See, we believe that there would be organic growth in this company in the second half of the year. They have put up new research and development facilities in Gujarat. The numbers have been improving. I think one can continue to hold. Adding at this point of time would not be advised unless until one more quarter of numbers is there. But yes, it's a hold from our side.
Okay. Hold on Emcure Pharma. So Rajesh, you had suggested a hold on G Vernova TND, but we've got a viewer who's bought at very elevated levels, I think over 1,000, in fact closer to 1,200 if I'm not mistaken. Is it still a hold?
Which one you said?
GE Vernova TND. Oh no, we didn't take. We actually took transformers and rectifiers. Sorry, my mistake. GE Vernova TND, transmission distribution. Would you hold if you bought levels of 1,200?
See, considering the power scenario in our country and the way the focus of government on power and all, I think all the power distribution and transmission companies are going to do well, and these companies are being ancillary to the entire sector, are going to do well in long term. Maybe in the short term you are finding some M2M losses, but for long term, yes, it's a hold from our side.
All right, so that's the view coming in on GVTND. The next question that we have is from Ramesh. It's a very generic question, but a very important one. Rajesh, I'll come to you on this one. He's asking that he wants to make a portfolio worth of 25 lakh rupees. So he has 25 lakh rupees that he wants to invest in right now. And he wants to know whether 30 to 40 companies is the right amount of companies to invest in with a 25 lakhs portfolio, and if not that, how many companies should he stick to, and if you have the picks as well for him?
See, Maima, it's a very tricky question. Depends on person to person, but on my opinion, I would say maximum 10 to 15 companies would be ideal size of a portfolio, because anything more than that, it would be difficult to manage. You won't be able to keep track of your buying prices, any movements coming there, any news coming there. So it's better to keep such number of companies that you can track on a regular basis. And in my opinion, 10 to 15 is the optimum size.
Okay, you know what, I'm going to address this because Rajan has made a fair point. A lot of you tune in to watch this program to get your questions answered, but unfortunately we have to address breaking news or management commentary, and it's not something that we choose to do because we don't want to address your question. We just have to do that, but we'll try and take as many of your questions as possible, Rajan. It's taken. We'll try and avoid this as far as possible. The next question is on CAMS, and Chandan Jain from Hubli wants to know whether it can be bought at the current market price or would you wait for a dip. Vaishali, on the charts, what's the best time to buy this? This stock is buzzing in trade today.
Yes, so I think we've already seen a good run up. So I would say just wait for a little bit of a dip, and then, or you can accumulate, because once the stock gets into a strong trend, maybe, you don't get a chance, but I would say keep 3,400 as support levels and start accumulating at every dip.
Coal India is the next counter. I believe Meetika has bought in Coal India at 418 a piece. She's not mentioned the quantity, but she wants to know will it rise going ahead or not. She's not mentioned the time frame as well. Vaishali, I'll come to you on this one. Coal India on the charts.
So I would say long-term trend is very much intact. I mean, if you see at the weekly and the monthly, I think these are all good opportunities. So I would say take 370, 365, 370 as a strong support band. And one can average out also if it's been bought at higher levels, and look for a target of 410, 420.
Okay. Is it time for the rapid fire segment? Okay, so we have one more. Zomato, can it be added? Vishakha wants to know. She's already, she's got it from the primary market, so she's gotten it from IPO levels. But would you add more at this juncture is the question. Rajesh, fundamental view on Zomato, would you buy?
No. That's the one-liner, I would say. The numbers have been good, no doubt on that. This quarter, the numbers have been under pressure. It's been growing. They are talking about 2,000 dark stores. Previously, it was 2026. Now it's 2025. So that expenses would again be there. And the valuations, they are trading at a 3-digit P. That's huge. Competition is coming up, not only from Swiggy, but if you look at Zepto and Amazon, everybody is coming into Q-commerce. So competition is high, valuations are high. It's better to avoid.
All right, it is now time to hit the rapid fire segment. This is where we take as many questions as possible over the course of 2 minutes. The first question is on State Bank of India. We've got Kantibai who's asking this. 835 is the buy price. Would you hold or exit? Vaishali on the charts?
Add.
Good entry point for Keynes Technology. This is a question from Vamsidhar, who's from Andhra Pradesh. Vaishali, your view?
Keynes Technology, well, just a minute. I would say hold with a stop loss of 4,300.
Okay, Lemon Tree, I'm coming back to you on this one, Vaishali. We've got a viewer who has bought at levels of 136. Would you hold for the short term?
For the short term, book at 153, 155.
Okay, Craftsman Automation is the counter. The person bought 10 shares at 1,500 a piece. Can he wait for 1 year or not? Rajesh, if you have a view on this one.
Continue to hold.
Okay, Orient Green Power, 8,000 shares bought by Navya at a price of 16.3. Would you hold on to this or would you exit, Vaishali?
Hold with a stop loss of 15 rupees and wait for a bounce.
All right. Aditya Birla Capital is the next counter. Hariom from Karnal, Haryana wants to have a view on this. Should he keep holding it or sell at the current levels? Your view, Vaishali?
I think market is on a bounce, so I think should continue holding.
Prakash wants to know about Suzlon. I do not know the buy price, but he's incurring a loss. Rajesh, would you hold or exit?
Exit on upsides.
Okay, Engineers India is the next counter, bought an average price of 237 by Rasha. She's holding 1250 shares. Should she keep holding it or average at the current levels? Vaishali, your view?
He or she is bought at a very high level. I think average it out.
Okay, coming back to you, Vaishali, Titagar is the name of the counter. Railway stocks are buzzing in trade today. Is it a good time to buy this one today?
Yes.
Okay, Satish from Bangalore wants your view, Rajesh, on Canara Bank. He's bought it at 105 and should he sell or buy further?
You can buy further.
Okay. All right. That brings us to the end of this edition of the Ask Profit program. Thank you so much, Vaishali, Rajesh, for joining us today. And a pleasure as always speaking with you. All right. Like I said, that brings us to the end of this edition, curtailed edition of Ask Profit. We tried to take as many questions as possible. We will be back tomorrow to take more. But there's lots more lined up over the course of the day. So from Mahima and myself and the team that put the show together, thank you so much for watching. Do stay tuned. This is NDTV Profit.
चला चला पटकन पटकन.
Hello and welcome to NDTV Profit.
The blessings of Ma Lakshmi that Prime Minister spoke about, will they shine on the middle class and the taxpayer?
The market will not be disappointed.
Finance Minister Nirmala Sitharaman
with the Bahi Khada. They're getting ready to go in and present the budget.
I present the budget for 25-26. That there will be no income tax payable up to income of 12 lakh rupees.
ये बजट जो है बहुत ही आर है। इसका मतलब ये हुआ कि रिफॉर्मिस्ट भी है, रिस्पॉन्सिबल भी है और रिवॉल्यूशनरी भी है।
जब मैं था तब हरी नहीं, जब हरी है मैं नाही, प्रेम गली अति साकरी जामे दो न समाए।
This is another level. This is another level.
This is how a special Saturday session should end.
This entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light. Hello and welcome to KYC, a show designed to give regular investors powerful, actionable insights into fundamentals of a single NSE-listed company every single day. Today, we are talking about Happiest Minds. This is an IT company that has been in focus, of course, on the back of earnings. But in general, we thought it'd be a good idea to take a look at this particular mid-cap IT company, which has, of course, been around for a few years now. What does Happiest Minds do? Well, it is an IT consulting and digital transformation company, and it actually looks at digital transformation. By that, we mean they help businesses modernize their technology and processes, and they often use cloud computing, data analytics, as well as AI. Moreover, it does IT consulting. It does get a good amount of its revenues from consulting as far as IT is concerned. In terms of the technology solutions that it provides, a lot of that will include something like application development and maintenance, cloud services, data analytics, cybersecurity, infrastructure management as well. In fact, in simpler terms, Happiest Minds helps companies use technology to improve their operations better and serve their customers and grow their business. So let's take a look at how the split of business comes through. Majority of its revenues comes from product and digital engineering, about half of, in fact, the revenues coming in. The digital business solutions will contribute to a little over another quarter, nearly a third actually. Infra management and others also contribute to the balance of the business. With that, let's take a look at the metrics that we usually address. And as usual, we do take a look at the income statement, the balance sheet, return ratios based on the income statement and the balance sheet. We talk about the cash flows as well. And moving beyond just the financial statements, we also take a look at the shareholding pattern, how the stock has done, what the street is making of it, and of course, valuations at the moment. But to take us through a lot of these insights, I am also joined by Rucha, who's going to help us to wade through this whole process. So Rucha, welcome to the show. Let's talk about the income statement. What are your observations here?
Definitely, Agam, thank you so much. Revenue is at about 1,600 crore rupees for FY24, posting a 3-year CAGR of about 28%. This is not a bad number. EBIT margin over here is at 21% as of FY24, posting a 13% 3-year CAGR. So what we can see over here is that that revenue 20% CAGR is not really translated to the 13% CAGR, whereas net profit over here is at 15% CAGR over the last 3 years. So not bad numbers, but disappointment in terms of revenue translating into margin is why we've given this one a neutral rating.
All right, so neutral as far as your income statement is concerned. While Rucha has mentioned that it has seen strong revenue growth, we are looking at operational metrics in terms of profitability to be not the best. In fact, for a company of this size, we've seen better profit metrics. So let's move on and talk about the balance sheet. Of course, this one is on a very strong footing. But, as is the case, usually IT companies have a pretty good balance sheet because of, very many reasons. But the shareholder equity stands at around 30 crores. It has a gross debt of around a little less than 1,100 crores. But as against that, the company also has cash reserves of around 1,260 odd crores. So all in all, it's a debt-free company. And because of the fact that it has such a large cash reserve, again, it's something that, works in favor of the company moving in, which is why we'll give this one a thumbs up. But how are cash flows looking, Rucha?
Yes, so Agam, as you rightly mentioned, generally IT companies are cash-rich companies, and so is the case with Happiest Minds as well. The cash flow from operations stands at about 190 crore rupees as of FY24. And if we look at the kind of conversion ratio, 65% of EBITDA converting into cash flow is what we can see. So not a bad number in terms of cash, hence we've given a thumbs up. But what are the return ratios looking like, Agam?
So return ratios do look good. It's an IT company. Naturally, your return on equity and return on capital will be over 20%. And in terms of Capital Minds, it's no different. The only issue here is that the return ratios are on the decline. So from 31% back in FY22. These return ratios are coming off considerably now at 22%. If it goes below the mark of 20%, then that's when, it could be a little bit of an issue. But for now, considering, we have a relatively steady state, as long as the return ratios are not below 21%, that's going to, of course, be a positive. But let's move on and talk about the other aspects as well. And if we actually move beyond the financial statements, we can perhaps also take a look at how things are panning out as far as shareholding is concerned. So let's pull that up too. In fact, Rucha can take us through that.
You're right, Agam. So promoter and promoter group holding, as we can see over here, is 44%. So around 54% of free float is not a bad number. But you're like splitting that into FIs and DIs. FIs currently hold about 5.3%. As we can see, the pink color mark over here is the FI ratio, and around 6% is for domestic institutions. So not bit of a positive surprise over here, but 54% free float is not a negative as well. So we've overall given this one a neutral rating.
Right. Well, so neutral rating for, the shareholding pattern for the company. And at the moment, we're looking at promoter holding at around 44%, which may not necessarily be the highest as compared to many of the other IT companies. But let's talk about street credentials. And in terms of the kind of returns that we've seen for Happiest Minds, it's not been the best. And I'll tell you why. What's really happened through this course correction over the last 4 months is that the IT sector in general has held its own. But as against that, we're seeing Happiest Minds correct 8%. And in fact, in the last 1 year, we've seen a correction of around 17%. So in terms of price action, it's not been a favorable one. One might argue that, at that point in time, valuations were looking very, very, heady. Which is why we've seen a little bit of correction. That said, in terms of returns, not the best. So we'll give this one a thumbs down. But let's talk about street coverage then, Rucha. What is the street looking like?
So definitely, Agam, in terms of analyst recommendations on Bloomberg, there are 4 buy calls, 2 hold calls, and none sell calls. And the consensus target price implies a return potential of about 14%. But mind you, this recommendation is before the kind of third quarter update which analysts might come by tomorrow. So this is, this kind of bullish stance from analysts does not include the third quarter earnings. So that's a heads up over here. So overall, a thumbs up with 14% positive return potential, even after the company has underperformed in last 6 to 12 months. But naturally, valuation will be one of the issues which most of the companies in this kind of market are facing. So let's pull that up. And we see that Happiest Minds is trading at around 34 times its FY26 consensus EPS. This one is slightly on a higher bar. But if you look at the peers, we have both the sides. We have an Emphasis trading lower than 33.5% at around 28 times. 33.5 times. Coforge trading at 40 times. So largely Happiest Minds is in the middle of the acceptable valuation band, not very expensive, not very cheap. Hence we've given this one a neutral rating.
Okay, so there's an interesting thing out here about the valuations for Emphasis as well as Coforge. Firstly, in terms of public shareholding for Emphasis, it's only about 4% in terms of outstanding. Well, if you look at promoter holding, FI holding, DIIs, all of them taken together, well over 95% has been held just by promoters as well as FIs and DIs. That's as far as Emphasis is concerned. And for Coforge, if you look at how things are panning out, again, the free float won't be much if you consider the way things are panning out between FIs and DIIs. In fact, about less than 10% is held by the public at large. The balance, 90% is held by FIs and DIIs. The reason why I want to make a mention of this is that there is a scarcity premium both in case of Emphasis as well as Coforge, which is why there could be a little bit of a fluctuation with respect to price to earnings, a slightly higher price to earnings being assigned to them. On the other hand, if you look at Happiest Minds, 43% is out there with the shareholding, with the public. So that's where you're not going to have as much a scarcity premium. So clearly, that's the reason why we're looking at a discount. Of course, the other aspect that comes into play will also be the expected growth here on, which is why you'll see those price to earnings valuations at this point in time. Let's talk about the overall, picture in terms of your overall ratings for this particular company and take a look at how things have fared as far as all the parameters that we wanted to address have come through. So it's been, a neutral stance for income statement, but a thumbs up for balance sheet, cash flows, as well as return ratios. And moving on, we have a thumbs down for street credentials, but besides that, a thumbs up for street coverage, valuations, picture, and shareholding, looking at a neutral stance. Moving on. The total rating, that comes down to around 5.5 out of 8. That's as far as Happiest Minds is concerned. But let's before we get the management in, let's consider a little bit or in terms of a handful of other factors that we want to address. And in the medium-term guidance, Rucha, what can you tell us here?
Yeah, Agam. So this is the medium-term guidance in terms of constant currency revenue growth. The company mentioned about 30 to 35% of constant currency revenue growth guidance in the second quarter. But when we had a conversation with the management this morning, they said that 30% would likely be a little difficult kind of range to achieve, and hence they would likely settle at around 27 to 28, which largely what they are currently at. In terms of EBITDA guidance, they have guided about 20 to 22%. Including other income. So this kind of stance is what they largely say. Now, let's talk about what kind of third quarter earnings did they report yesterday. In terms of revenue, it was up about 2%. Margin came in at 13.7% versus 13.2%, slightly below estimates. But if you can have a look at the stock is currently tanking about 1.4% down. So this clearly says that the third quarter earnings were not up to the expectations of the street. Moving on to constant currency growth registered this year, well, 28% year-on-year growth is what they have achieved in this quarter. Another important update which I want to highlight is the kind of acquisition that Happiest Minds had announced in April last year, that is April 2024. They had announced acquisition of PureSoft Technologies for a consideration of 779 crore rupees. Now, PureSoft Technologies is a digital engineering and transformation services solutions provider. The kind of synergies that Happiest Minds is likely to achieve is in the space of BFSI, banking and financial services, from which currently Happiest Minds gains a majority of its revenue. And another segment in which they are looking forward to have their more footprints is the healthcare sector. Healthcare sector largely posted kind of muted growth this time, but the management is likely seeing green shoots over here as well. And of course, BFSI is growing not only for Happiest Minds but for other IT companies as well. And lastly, well, in terms of geographical presence synergies, the company will get nearshore presence in Mexico, Singapore, Malaysia and Africa. So a lot of things in terms of inorganic expansion is what these guys are doing, Agam.
All right. Well, thanks for that, Rucha. And, in fact, let's get across to the management. My colleague Hira spoke to the management of the company, Happiest Minds, about their quarter gone by and, of course, the growth ahead. Listen in.
We have shown a year-over-year growth of about 28%. In rupee terms, it's about close to 30%. And in dollar terms, constant currency, about close to 1%. So yes, the street may have been expecting slightly better numbers on the constant currency growth, which we have shown at about 1%. But the fact of the matter is here, this time we had a fair bit of furloughs and holidays hitting us this quarter. After the acquisitions, we have grown deeper into BFSI as a segment, and we are seeing that BFSI has pretty weak Q3, or the October, November, December quarter tends to be weak given the way the holiday structures, the statutory leaves and those things happen. So we are coming to grips with that, but despite all of that, we took some revenue enhancement measures and we have been able to grow at about 1% in dollar terms. All the other metrics of EBITDA or be it operating margin, we have performed ahead of what typical expectations were, and EBITDA number is at 22.1% for the 9-month period, which is ahead of the guidance that we gave for 20 to 22%. So in all, revenue for the 9-month period and for the 3-month period, we are very close to the forecast that we had given to the market, which was 30 to 35%, and then we subsequently corrected saying 30% is what we are going to target, and we are reasonably close to that. Next quarter, looking a little into the next quarter, we have closed this acquisition of customers and customer relationships of GABS Technologies in the Middle East market. We are looking to consolidate that, and that's almost 100% BFSI and infrastructure application services, application maintenance business. We are looking to grow into those accounts, cross-sell, upsell, and consolidate that starting immediately, almost immediately, because some of them are our existing customers, and we also have a reasonably good presence in the Middle East. So the consolidation benefits should see trickling in quite early. So we are looking at that and the organic growth in Q4 put together trying to, the attempt will be to make sure that we try to reach the 30% number or hit that to the extent possible.
Right. That's an interesting one, because in the previous quarter as well, when we were looking at the 30 to 35% year-on-year constant currency growth for FY25, the ask rate in terms of the second half of FY25 was around 5.2%, right? This quarter, if you see in terms of the number, it's still on the lower side. Do you think you will be able to make up for that number, even to achieve the 30% guidance?
Yeah, so that we did two things. One is we tempered the 30 to 35 to 30% because, we thought we will be able to consolidate the acquired companies from the beginning of the quarter. For various reasons, it slipped and we could only get about 40 days of revenues from both companies. And that's a significant number. So taking that into account, we said, let's not go too far away from what we have said, but let's keep 30 as the guideline number, the forecast number, because I was very clear that not to use the word guidance, maybe semantics, but I was sure that we should, these numbers have to come together, and it was too early. But we said we'll now try to achieve the 30% number. Compared to the 30% number, we are at about 25%. And if you look at it, Q2 and Q3, both these quarters, we have done 28% QOQ. So yes, we have missed the 30% by about 2%. And the attempt is to make sure that we try to cover up for the gap to the best extent possible. But in transparency, I think touching 30 may be slightly difficult, but we will be there in terms of 27-28% in constant currency.
Right. And in terms of the EBITDA guidance, I mean, it's 20 to 22% with other income. Current one, we are at around 21.7. It was interesting to see how in the previous quarter we were somewhere in that 28-29% kind of a range. Did this quarter actually see any impact on the back of wage hikes in the leadership team? Because that was something that we were watching out for.
I would take the reference of the previous year. We were at about 24.2% in the same quarter. 9-month period, 24.7. You bring out a very interesting point. One is, we have made investments into generative AI, GBS business, which is at about 24 crores, running at about 26 to 30% utilization. So I have said this in the last quarter itself, that in the first half of the year, we have made investments of about 1.5 million, approximately about 1.5 million. If you consider that similar kind of an investment going into Q3, it would be about 2 to 2.25 million. You add the new sales engine that we have added. That's something that we did, and that's an additional cost of about close to $250,000. The verticalization of the business, while it's supposed to give us a lot of impetus, it also adds some bit of costs. But keeping that aside, and the investment that we have to make into Artha Banking to make sure that it makes sense for the Indian markets and the other US markets that where we are going to take it into, we have made close to $2.5 to $2.6 million of investments in the financials up to the 9-month period of FY25. And just for that, and we are back to the 23-24% EBITDA, Hiral. So it's just investments that we are making. It's a startup. GBS is a startup within Happiest Minds. Artha Banking is the non-linear growth platform that we have acquired from Pure Software, and we are taking to newer markets. The new sales engine is an overlay cost that we have taken to go deeper into existing relationships and get those new customers into which we can sell our services and offerings. So these investments take a little bit of time, but from a P&L standpoint, you can't defray these costs and match them with the revenues. We are getting hit on that account. That plus the compensation increase, which has been fairer than most of the other peers and market participants, has had an impact on our financials.
Okay, so with regards to segments that will lead you to achieve your guidance, what are you banking on? Because CV as a segment has been slightly muted, not only for you, but across the industry, right? People have been banking on the BFSI space right now. What is going to be your strategy?
Just look at our performance in Q3 as well, Hiral. you'll see that BFSI has really led the way. And so I would say that, and given the leverage we get from pure software Aureus, the capabilities, the customer base, and the Artha banking platform, I would say BFSI would be an area that we would be looking at to really help us accelerate our revenues. Another vertical or segment that has really come up well in the last year and a half is healthcare. We started reporting healthcare just a year back. And if you see, it's already around 14-15% of our revenues. And if you see on a year-on-year basis, we've demonstrated pretty good growth. A lot of interesting trends in this segment around bioinformatics, around newer type of medical devices, confluence of software and hardware in terms of various types of medical devices. And these are areas that, and overlay of analytics. So these are areas that are of strength to us. We have hardware practice, we have a very strong analytics AI practice, and healthcare vertical. That I would say is the second vertical that we would be looking at. And high tech, we're beginning to see some signs of, at least for us, if you see again, high tech has done well. And I think some of the strategies that we've been implementing of also targeting well-funded late-stage companies along with the larger tech players is beginning to show some dividends. So I would say these are three segments that we will be looking at helping us out during the quarter and probably into next year as well.
And with regards to the 500 crores that you did raise in July 2023 via QIP, how is the utilization on that front? Has it been for the acquisitions as well as on the Gen AI side? And if so, what's the kind of ramp-up plan that you have, and are you expecting large deals there?
The 500 crores that we had raised was for a combination of acquisition and meeting certain working capital and other requirements. So we are on target to meet those utilization targets set for us. But overall cash standpoint, we have deployed close to 800 crores in the acquisitions that we have made and the earnouts of the previous acquisitions. We are close to about 700 to 800 crores have been deployed. Despite that kind of an outflow, we still continue to carry about free cash balance of upwards of 500 crores. This I'm netting off, some of the overdrafts and received loans. But we are carrying about 500 crores in our books. That's a reasonable amount of cash balance for a company of our size. That's what we believe. But we should be able to, manage smaller acquisitions like the recent one which we did of the gas business in Middle East. Those are possible from our cash chest as well as our internal accruals. But if we want to do larger ones and acquisitions of, let's say, more than $50 million in size, we will have to look at options to raise capital or debt to fund those.
Okay, so from here on, growth will be driven inorganically or organically?
We drive. We don't split our growth on the basis of organic and inorganic. It's the strategy is to add capabilities, competencies. Like we said, we have added to our verticals through the last 4 acquisitions. Pure software was largely, BFSI, healthcare, high tech. Aureus was largely BFSI and healthcare, whereas Macmillan was into edutech, and the most recent one, which we disclosed of consolidation of the Middle East business, is into BFSI and infrastructure business. So if you look at it, it's both fuel for further growth and consolidation of our existing capabilities and ability to sell it to those new customers. So, without splitting it, it will be a combination of both organic and inorganic.
Okay.
Well, that was the management of Happiest Minds telling us about the quarter gone by and what kind of growth we can expect going forward. But on that note, it's a wrap on this edition of KYC. Stay tuned to NDTV Profit.
चला पटकन पटकन.
Hello
Hello and welcome to NDTV Profit.
The blessings of Ma Lakshmi that Prime Minister spoke about, will they shine on the middle class and the taxpayer?
The market will not be disappointed.
Finance Minister Nirmala Sitharaman with the Bahi Khata, they're getting ready to go in and present the budget.
I present the budget for 25-26 that there will be no income tax payable up to income of 12 lakh rupees.
ये बजट जो है बहुत ही आर है। इसका मतलब ये हुआ कि रिफॉर्मिस्ट भी है, रिस्पॉन्सिबल भी है और रिवॉल्यूशनरी भी है।
जब मैं था तब हरी नहीं, जब हरी है मैं नाही, प्रेम गली अति साकरी, जामे दो न समाए।
This is another level. This is another level.
This is how a special Saturday session should end.
The new tax regime for individual, in fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invested? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The new tax regime for individual, in fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Sources tell NDTV Profit that budget is expected to propose the draft of the new income tax bill. In fact, the draft bill is expected to find a mention in the FM speech on February 1st.
I also propose to introduce the new income tax bill next week.
All they're looking at, how to sort of reduce the number of slabs which is there in custom, which is like 12 or 13 slab, and how to bring it down to 5 or 6.
As a part of comprehensive review of customs rate structure,
Welcome, you're watching NDTV Profit. I'm Mahima Vajrajani. Asian Paints is in focus after its Q3 earnings, where revenue was down 6%. Margins did take a slide from 22.6 to 19.1. And to discuss as to how the quarter gone by and how things are shaping up in the paint sector, we're joined by Mr. Amit Singhal, who's the MD and CEO of Asian Paints, who's joining us now. Welcome to NDTV Profit, Mr. Singhal. Always pleasure speaking with you. My first question to you is that with respect to how the quarter has gone by, was it as per what you had expected, or you had expected slightly better considering the festive season? And what's the road ahead?
So overall, our expectation was much higher, given the fact that we had the one part of the festive month in terms of October this quarter. However, it was a shorter Diwali for us this year, and the festive season was also short. We did not kind of see that kind of a response coming in the month of October, and all the seasonal markets were affected in the month of October very strongly. Moreover, what we saw was a muted demand especially across the urban centers. The demand has been fairly low in terms of what we are seeing. There is also seen some down trading in terms of what we are seeing. On the other hand, I think the rural centers performed much better as compared to the urban centers overall. The industrial sales was also overall good in protective and powder coating segments. Our project segment did well, especially the areas of where government spending is involved, where capex is overall involved to that extent. And I think these were the factors which boosted up the overall performance for the quarter to that extent. But largely, I think there was a disappointment from the point of view of the festive season and the urban centers not really batting. As we move ahead, possibly we would definitely see a little bit of a more surge from a rural demand point of view. We've had good monsoons, and we see that the agrarian economy will start kicking in terms of looking at both quarter 4 and quarter 1 in terms of going ahead to that extent. What we also see is that the government spending will be on an upswing to that extent. So we will have more money in terms of infrastructure projects and other things in terms of where the spending would be more. Similarly, the areas of factories spends in terms of what will happen is good. So I think that would be a good area to kind of really look at. Industrial growth would continue in the protective powder coating segment. Auto might see a cyclical downtrend to some extent in terms of what possibly might happen. But on the whole, we would say that quarter 4 should be better than quarter 3 in terms of the overall demand. I don't see much change or a little change with respect to the urban centers demand coming up to that extent. And therefore, I think we are a little bit cautious about how quarter 4 we are looking at possibly single digit volume growth there.
Got it.
The single digit volume growth there.
Got it. Mr. Singhal, Q4 you might remain cautious, but going ahead, I want to understand from a painting sector overall. We've seen that the entire year, the 9 months gone by, plus you saying that we will remain, cautious with respect to Q4 as well, has been subdued in terms of the painting sector. When do you expect a recovery? Is there a structural change which is going to take place, or do you expect the same kind of trajectory in FY26 as well?
So overall, this year has been very different from so many years, more because of, I think, the overall demand conditions have been fairly muted. We've not seen possibly a year like that, in the last 2 decades or so to that extent. And therefore, what we feel is that it's not something which is just a competitive effect or it's happening because of any other big structural change. I think it's just the overall consumption in terms of which is there. Some possibly consumption trends have been very different to that extent. As we kind of look forward, I think it will take some time before the demand really comes back in its full form and shape to that extent. And therefore, I think going ahead, possibly, I think the areas of projects, industrial would kind of still go much better than the core retail home segment in terms of what we see to that extent. And looking at this, possibly, I think it will take a couple of quarters before we start really seeing much better demand conditions in terms of going forward.
Got it. In terms of, the quarter 3, we've seen that a good double-digit growth came in for decoratives. We saw that your international business also did very well. What's the overall volume versus value growth been like?
So overall, if you look at from the point of view of a coatings business, overall, we would have seen a volume of about 1.7 and we would have seen a value of about 6%. As far as global is concerned, we saw a value growth of about almost 5% in the global revenues in terms of what we see overall to that extent. So I think that's been the overall value volume across various businesses. In terms of industrial, we saw, a value growth which was closer to about 6% in one of the businesses and about nearly at base in the other business. Overall, the volume growth there have been much better, almost in terms of closer to about double digits there.
Got it. With respect to the new latex paints that you've recently launched, the market share you mentioned in your con call is roughly 7 to 9% right now, and that can go ahead. And because there's a lot of market to tap with respect to when it comes to new latex paints. I want to understand as to how much of a contribution to revenue it is right now, and what are you expecting going ahead? Because I believe that margins in the new latex paints are better.
So overall, more from a point of view of, the bottom of the pyramid is where we are kind of looking at placing this product, and we have seen a good response this year. As I said, that the potential of the segment is very, very large in terms of looking forward it. When you look at from a volume perspective, the contribution of this segment is pretty high. From a value segment, it is a little bit lower to that extent, given the fact that it's an economy product overall to that extent. But definitely, I think what we see is that if you are able to make a big dent from a point of view of overall the bottom of the pyramid segment, it will definitely give us a good boost from a point of view of volumes.
Got it. Mr. Singhal, with respect to competition, you said that there is some shuffling with respect to, market share that keeps happening overall, but it's not significant. And you also said that, your competition has increased their touch points, but the value proposition is also not significant. But do you expect that with increasing touch points that they are, kind of aiming at, there will be significant change coming into place when it comes to market share for FY26, or let's say 2 years down the line by FY27?
See, it's a large market, almost about 80,000 crores is the size of this market. And given the fact that there are, large number of players now in the market, okay, I think every player will try to kind of retain their share to that extent. So I don't think so it is very easy for any player to kind of come and garner very large volumes to that there, or a large share in the market in the near future immediately to that extent. So possibly, I think the shares would kind of remain in single digits in terms of what we see to that extent. I think very difficult for someone to achieve more than 10% share in a 2 to 3 year time frame.
Got it. Mr. Singhal, with respect to, what we've been observing in the cement space, we've seen that a lot of small cement players have kind of consolidated and merged into the bigger one. Do you see that panning out in paints as well? Because one of your small competitors has also kind of come out and said that they might be looking for certain opportunities, and if they get the right price, they might even go ahead and kind of sell their business.
So overall, see, in any business, when there are large players which are there, there is bound to be some consolidation which is going to take place. And as we go forward, we are already seeing consolidation of one of the players kind of really selling out today in the market to that extent. So I think it is but natural that as we kind of go forward, we will see some form of consolidation, some form of newer players happening. And I think that is going to be a phenomena which we will kind of see in the next 2 to 3 years to 5 years, in terms of looking at that some players will kind of merge, some players will emerge as new to that extent. And I think it's going to be an exciting market as we kind of see ahead.
Absolutely. And Mr. Singhal, one last question. So considering that you being the biggest player amongst, all the paint players in the industry, will you be also looking for acquiring the smaller ones going ahead?
See, overall, we are very clear that, any kind of acquisition or a merger would be only if it kind of makes sense from a point of view of our portfolio, from our product thinking and trajectory to that extent. So anything which kind of really comes up, which is interesting, which really adds to the overall business and is something which kind of gives us strength from a point of view of either technology or markets to that extent, that is always welcome. So we would always kind of look at any complementary strengths in terms of what we can do with any merger or acquisition as we kind of go forward.
Well, that's the CEO of Asian Paints talking about how the quarter has gone by and what the outlook is like. Of course, competition seems to be quite strong even now. But, let's quickly switch focus. Let's look at where markets are at. Let's pull up the Nifty 50 index, and what we're seeing there is we've given up some of the early morning gains, and we're sitting on currently
just about the flat line. Absolute flat line is where we are at, just off the lows of the day. Let's also look at how the breadth is shaping up for the day. Let's pull up the advanced decline and let's get the intraday chart for advanced decline to give us better perspective, because currently the advanced decline is skewed towards the advances because broader markets seem to be doing very well for themselves. But you're looking at overall all through the day as well, the breadth has looked fairly robust in that sense. There you go. And that kind of reflects, even though on the benchmark it's not reflecting, but overall you're looking at a very solid breadth across the board. The Nifty mid cap 150 is up over 1%. The Nifty small cap 250 is up over 1.5%. So you're seeing good traction on both of those indices. Let's look at contributors. Come back to the benchmark. Look at contributors on the Nifty 50. And there you go. Those are some contributors. Nothing meaningful on either side, as you can see, and therefore you're seeing the kind of flattish move on the index that you are. No big movers on the Nifty 50 index. And I'll just read out a few names which are really doing decently well. 2.8% up on an Apollo Hospitals and ITC Hotels exiting very soon, but 2.5% higher on that one. BPCL is doing well for itself, 2.5% higher on that one as well. And Hindalco and BEL also gaining over 2% each, along with a Trent. So those are some cues on the Nifty 50 gainers. The losers, Asian Paints, Titan, Nestle, no surprises on either of those counts, and we'll get more perspective. We'll have Mahima coming in and giving us some perspective with regard to at least a Titan. But let me go across to Anushi now. Apollo Microsystems, Anushi. Let's pull up the stock as well. Try and zero in on how the stock is doing. But Anushi, over to you with regard to Apollo.
Right, Harsh. So very strong set of numbers that we are looking for Apollo Microsystem in general. Now they've reported a 63% of a revenue growth. EBITDA has seen about a 58.1% of a growth. And if we look at the margins, they have more or less broadly remained in the similar range. We're looking at some basis points of a difference, 25.6% versus 26.3%. Net profit, however, saw about a 84% of a jump to 18 crore this quarter. Now, as to the FY25 guidance is concerned, the company has given a guidance of 40 to 45% of a revenue growth in FY25. But taking into account the first 3 quarters, this seems more on the conservative side, as we are looking at a revenue growth of 63%, and even though in the previous 2 quarters the company had reported very strong growth numbers as well. Do note that the company aims to achieve 1,000 crore of a revenue figure by FY27. So this 40 to 45 to 50% of growth that we are looking is expected to continue for the upcoming fiscals as well. As far as where the order book was concerned, in the first half we had not seen a significant growth in where the order books were, but the management had remained very confident and optimistic on that by FY25 end that they'll close up with a very large order book in place. So they expect a healthy growth coming from defense PSUs as well as private defense companies as well. As far as where the margins are concerned, it is going to be remaining in the similar range as to what the fiscal is, that is 22% to 24% in line. So overall, a good set of numbers that we are looking at looking for Apollo Microsystems, and that's why the stock is in focus today.
Much for that, Anushi. Let's actually also try and zoom in on a Trent. Also, let's zoom in on a Titan. Let's pull some of those up. Well, Trent is up 2% after that fall yesterday. Titan is down another 2.5%. So some pressure coming through. And Titan actually announced numbers as well for Q3, and it's reflected around a 25% rise in revenue, but a fall in profit after tax. Mahima's here to break down the numbers and give us some bit of perspective on what's played out this quarter. Mahima.
The revenue growth came at about 26 odd %, and PAT was a miss because of a one-off which ends this quarter, is what the management has said, is because of the custom duty change. Now, in terms of the consolidated jewelry margin, they are at 11%, and this is back to the guided range that the management had said, which is between 11 to 11.5%, and this was 10.5 in the first half of FY25, which is why the stock might see an uptick today. The studded jewelry mix also grew grew by 21%, which eases the concern of lab-grown diamonds for Titan as well as the overall margins overhang. And revenue is in line, but EBITDA is a slight miss in terms of Titan. In terms of numbers, revenue is up around 25%, EBITDA up 7%. Margins at overall margins I'm talking about is at around 9.5 versus that of 11%. And net profit is down around 0.5%. In terms of segmental performance, jewelry grew by 26%, watches and wearables grew by 15%, eye care grew by 16%. Emerging business has seen a slight growth of around 5%, which has been growing in double digits prior to this. International jewelry did very well for the company, grew by 64%, and CaratLane grew by 27%. In terms of what brokerages are saying, brokerages have maintained their outperformance stance and overweight stance on the counter. Macquarie has maintained outperformance with a target price of 4150. What they're saying is that jewelry margin is in line. Watch margins are slightly weak, which is why the overall margins have gone down. They await clarity on FY26 jewelry margin and whether continued gold inflation implies YY flattish margin or not. Morgan Stanley has also maintained overweight with a target price of 3876, and what they're saying is that there is a slight miss according to them on jewelry margins, but CaratLane margins have risen sharply. So this is the overall view of how Q3 has panned out for Titan.
Well, that's on Titan. The other one which is buzzing in trade and how, Vijaya Diagnostic. You had an Investec note coming earlier today morning, upgraded the stock to a buy. Target price up from 660 rupees to 1265 rupees, if I'm not wrong. Varsha's here to break it down for us.
Yes, thank you, Harsh. So yes, as you rightly said, so the Investec has upgraded to buy from hold and even raise the target price. Now the Vijaya Diagnostics, if you see, the organic growth has accelerated to 20%, led by market expansion and quick ramp up of new centers. Now this is a massive outperformance over pathology players growing at low double digits. One reason is that, and they also believe that Vijaya's strong net cash position of almost 2 billion will place it more of many inorganic acquisition that they want to do it. And company has been expanding into new markets such as Pune, Kolkata, Bangalore, reducing the geographic concentration risk that it earlier had. And lastly, the upgrade of Investec. So they believe that they expect the continuous outperformance given by Vijaya Diagnostic on the back of strong execution will have it more effect going further as well.
Okay. So that's of course on Vijaya Diagnostic. The stock is up 8.6% on the back of that note. Extremely sharp surge with regard to how the stock is performing in trade today. Let's also pull up Tata Power, because Tata Power announced their quarterly earnings with an 8% increase in PAT. So revenue missed estimates by a bit. Mihika is here to give us more perspective with regard to the earnings. How did they shape up, Mihika?
We have Tata Power in focus because of its Q3 results. Now, while revenue was a miss because of a 5% uptake to 15,391 crores, we have EBITDA and profit beating estimates. EBITDA was up 38.68% to over 3,350 crores versus the estimate of 3,000 crores, while margins did see an expansion of 528 basis points to 21.78%. And lastly, net profit was up 8% to 1,030 crores. Now, what helped revenues? Well, revenue growth was mainly driven by the transmission and distribution segment, and the margins was helped by a stock in trade uptick of 418.23 crores versus 305 crores a year ago, and the bottom line was aided by 35% lower tax expenses as a whole. In terms of Tata Power's capacity details, well, total operational capacity is at 15.56 gigawatts. Over 10 gigawatts of clean and green capacity is currently under construction, and operational transmission lines stand at over 4,630 circuit kilometers. In terms of the key segment-wise updates, well, solar utility scale EPC order book is at 13,556 crores, while the solar rooftop business segment order book is up 21% on a quarter-on-quarter basis to 827 crores. In terms of its solar manufacturing business, well, the entire 4 gigawatt cell line in Tamil Nadu is now fully operational, and the remainder 300 megawatt TOPCon cell line is expected to be commissioned in Q4 of FY25. Q3 revenues of the solar manufacturing business stood at 1,300 crores with net profit at 112 crores, and over 2.4 gigawatts of modules have been produced in the 9 months of FY25. And lastly, 2/3 of the Tata Power's under construction transmission projects are set to be commissioned in 2025, is what the company has said. This totals 1,653 circuit kilometers, which will commission between March and December in 2025. And the expected revenues of these 4 projects is pegged at 848 crores.
Okay, so those are some insights with regard to Tata Steel's numbers. But we'll switch focus from listed to unlisted and onto an NDTV Profit exclusive. My colleague Rishabh Bhatnagar spoke to Unacademy CEO Gaurav Munjal on the opportunity of AI in India and more. Listen in to a slice of that.
I'm really excited to see the government get involved in AI. In fact, the steps the government is also taking to encourage more people to build foundational models is great. And I think Sam being in India, I saw the developer community, they were super happy. Yeah. I think India should definitely win the apps layer, application layer. I think we have great talent. I met a bunch of founders who are building AI education apps. We in fact are building our AI own education app called AI-Learn, which we launched for the US market, which is one of our fastest growing products. So I think we should definitely win the entire application layer. And a lot of people have also started now building foundational models, Sarvam AI, Krutrim AI. I think we'll get there. I think I'm very bullish and confident. Because if you see the Y Combinator list also, there are a lot of Indian founders in US building AI products. So I think a lot of Indian founders in India will also start doing the same.
Gaurav, one controversial question was who's doing better on the AI front, Bangalore or Delhi NCR?
I'm always a fan of Bangalore. I think people should not be in Delhi or Mumbai to build a startup. They should move to Bangalore. Because see, that's where the ecosystem or network effects are. In fact, if I want to party on a weekend, Delhi or Mumbai are better. But from a network effects point of view, the density of engineering talent, in fact, a friend of from IIT, a friend who went to IIT, I asked him the other day, and he said most of my batchmates are in Bangalore now. So I think the talent density, the VC density is super high. And yeah, I would urge everyone to move to Bangalore and build companies there.
Okay, so that's of course an interesting chat, but we'll switch to another one. The Indian government may liberalize foreign exchange rules for the non-debt instruments, equity, mutual funds and real estate. The move could potentially offer more operational and administrative flexibility, simplifying the process for foreign investors, government sources told NDTV Profit. Now, Shrimi joins in with all of the details that she's been learning about this. Shrimi.
With an intent to provide greater flexibility and boost foreign capital flows in India, government is, looking at liberalizing laws for foreign exchange in the non-debt instrument like equities, mutual funds and real estate. What we've been given to understand that government is kind of looking at the possibility of whether foreign direct investment could be reclassified to foreign portfolio investment if the company is getting listed. At present, there is no such, framework where the FDI can, transition to FPI in case of companies getting listed in future. So that possibility government is sort of exploring and considering. In fact, there are a lot of discussion happening in terms of easing the operational and the administrative compliance issue which foreign investors face at this point of time. So in a nutshell, the government is sort of trying to, make the entire framework in a way which could help sort of foreign investor to enter into Indian market, both in listed and unlisted space. Remember, in November, RBI has already put out, operational framework where they kind of allow FPIs to convert into FDIs if the ownership is exceeding 10%. So in line with that, government is looking at to replicate the same thing with the FDIs as well. And the government is of view that they have been relaxing the rules of Forex since July 2024, where we have seen some teething issue with related to cross-border swaps and in fact overseas investment, and that have been eased. And in line with that and with the similar intent, they are looking to further ease the Forex rules in another 6 months, and we would see some legislative changes there in the Foreign Exchange Management Act.
All right, that's all that we have on markets at 12 today. From myself, everyone who puts the show together, thanks so much for watching. And stay tuned to NDTV Profit, because more action right up on the other side.
चला चला पटकन पटकन.
Hello and welcome to NDTV Profit.
The blessings of Ma Lakshmi that Prime Minister spoke about, will they shine on the middle class and the taxpayer?
The market will not be disappointed.
Finance Minister Nirmala Sitharaman with the Bahi Khata, they're getting ready to go in and present the budget.
I present the budget for 25-26 that there will be no income tax payable up to income of 12 lakh rupees.
ये बजट जो है बहुत ही आर है. इसका मतलब ये हुआ कि रिफॉर्मिस्ट भी है, रिस्पॉन्सिबल भी है और रिवॉल्यूशनरी भी है.
जब मैं था तब हरि नहीं, जब हरि है मैं नाही. प्रेम गली अति साकरी, जामे दो न समाए.
This is another level. This is another level.
This is how a special Saturday session should end.
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Sources tell NDTV Profit that budget is expected to propose the draft of the new income tax bill. In fact, the draft bill is expected to find a mention in the FM speech on February 1st.
I also propose to introduce the new income tax bill next week.
They're looking at, how to sort of reduce the number of slabs which is there in custom, which is like 12 or 13 slab, and how to bring it down to 5 or 6.
As a part of comprehensive review of customs rate structure announced in July 2024 budget, I propose to 1. Remove 7 tariff rates. This is over and above the 7 tariff rates removed in 23-24 budget. After this, there will be only 8 remaining tariff rates, including zero rate.
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects.
Is considering to increase the custom duty on the imported finished goods ranging from consumer electronics to medical devices.
And to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20%.
This entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Hello and welcome to Profit Buzzers. I am Puneet Zaveri and with me is Hiral Dadia, and we bring you the next hour of key updates to the market as well as some of the themes that you should focus on in today's trade. Well, let's first look at how the markets are doing, because Nifty is absolutely flat in trade right now, just about 2 to 3 percentage points. There you go, just 3 to 5 points is what it's happening. And let's also look at the key contributors as well, both on the upside as well as the downside for the Nifty 50 today. And it's, while the session has been something that's started off mildly in the green, it's been a very choppy day for the trade. Let's quickly look at the key top contributors for the Nifty 50 on the screen right now, and you will see some of the big movers for Nifty 50. There you go, HDFC Bank, while on the positive side, has been doing very well. Something like a Titan, despite reporting a decent set of numbers, is currently in the red. We're also seeing Asian Paints also down in the red by just about 7 points, but definitely on the negative side. And something like an ICICI Bank and Infosys also doing something very positively in this aspect. Let's also quickly look at the sectoral index as well and see which are the key sectors that are contributing on the positive side. And you're seeing a lot of contribution coming in from media as well. We are expected to have PVR numbers in this week, so something to watch out for. Nifty Metal also in the positives, while PSU Bank has made a good recovery in today's trading session. Some pressure on realty and FMCG as well as consumption stocks today, while the auto sector is absolutely flat. But Hiral, what are some of the key themes in the broader market as well as the mid cap and the small cap outperformance and losers?
Absolutely. Broader markets is going to be interesting because a lot of stock specific action is what you're seeing. But if you see the mid cap 150 gains of little over 1% coming in there, and if you can pull up the small cap index as well, it's going to be interesting to see the kind of gains. There you go, at the day's highest levels with gains of nearly 1.7% on that front. If we can have the individual stocks in terms of the mid cap and the small cap index and see what's moving, that's the heat map of BSE 500. Motilal Oswal, smart moves on that one. CAMS and Angel one. So that's one of the themes that actually is playing out in terms of where brokerage houses are concerned. Jubilant, again, a 9 to 10% up move. Eris Life, Global Health. So Pharma is also playing out pretty well in today's session. Supreme Petro is another one which is doing well. What's not working? Fine Organics is trading under pressure. Thermax is down in trade. Soba, Westlife Food, Sheila Foams, Phoenix Mills trading under pressure, and a Prestige Estate which is down and about in trade. You have a Vakrangi as well, which is seeing cuts of nearly 5% coming in there in today's session. Apart from that, MTNL, 18% up move coming in on a MTNL in today's session. If you see that chart, it's interesting to see what's happening on that front. Motilal Oswal, we already spoke about as well. Eris is another one which is seeing some smart moves, and you have a LIC, but that's a traded fund, so no major moves over there. But that's the kind of action that we've been picking up as far as the broader markets are concerned, and there is some bit of outperformance in today's session. But moving on, you have a Godrej Properties. Let's quickly pull up that counter on the screens and see what the stock is doing in trade. A 970 crore number in terms of the revenue versus a 330 crore, so almost tripled on the top line front. Profits as well, if you see 163 crores versus a 62 crores, and the margin number is coming at 2.84%. The stock is down 2.5% trading at the day's lowest levels. In fact, my colleague Tamanna spoke to the management as well. That's the MD and CEO Gaurav Pandey. Let's quickly listen into that conversation in terms of what the growth plans are ahead and what's happening.
Yeah, a good problem to have. Let's see how this quarter goes. When we started the year, FY24 was the base, right? And a lot of people don't know that amongst all the large companies, which means 10,000 crore sales and above, in FY24, Godrej Properties was the fastest growing company across any sector. So when we were starting with the guidance on a very high base, for many people, 27,000 crores look very daunting, and indeed it's quite challenging to do that. But thanks to the extreme grit of the teams, today we've reached a situation that it seems very likely we'll hit the guidance, and with some reasonable probability, if launches come on track, because it's a very launch-driven quarter, we exceed the guidance. But yeah, quite an exciting story thus far.
Yeah. So you've achieved 71% booking value of your guidance of 27,000 crores. You seem like you're set to achieve that, as you mentioned, in this quarter and perhaps surpass it. You've achieved 67% cash collections guidance of 15,000 crores, 79% of deliveries guidance, and you've surpassed your business development guidance. How is FY25 looking to add up? And if I take this to Q4 FY26, what is the picture looking at then?
I think, if you look at from the business strategy perspective, I think there is a, clear consolidation play happening in favor of Godrej Properties. We're the only developer which is truly pan-India. We've been in various geographies for 15, 20 years, from north to south to west to east. And I think we're leveraging the cycle with extreme finesse and detail. From a pure how we look forward to ending the year in FY25, I think we will meet or cross most of our guidance, and I think there's a great amount of aggression and ambition in the teams that are set in. Little ahead of time from an FY26 point of view, because it will depend on how we see the market once we wrap up the quarter, how we see all the launches for the next year planned. So I would have a better situation post the year-end closure, like between April and May, when we sort of do synthesis of the strategy for the next year. I think that's when we'll come up with a guidance. But fair to say that the cycle is looking very exciting for us. If you look at last calendar year, because those are the clear numbers available, we did 28,800 crores of sales, which was like a 69% Y-on-Y growth to the previous calendar year. Yes, there is a very exciting period of opportunity that we are seeing, but I think it will be mature to say that one step at a time.
Sure. Okay, no, fair enough. So let's come back to Q3 then. In Q3, the area sold is down 6% to 4.07 million square feet. Your pre-sales have also dipped by about 5%, marginally, I would say, to 5,446 crores. Is this due to the launch schedule in Q3? Can you give us some idea there?
Yeah, actually, you're absolutely right. So there's a marginal drop because we were targeting 2 launches in Q3. One was in Sector 44, Noida, and the other was in Hyderabad. The approvals came very late into the quarter, and we thought it will be sensible to bring them into Q4. Because from a optics point of view, it's a marginal degrowth, but the opportunity is quite massive in both these launches. So yes, that's the main logic. But if you see from a 9 months perspective, we've done about 19,200 plus crore, close to like 50% Y-on-Y growth. So it's more of a quarterly shift from Q3 to Q4, which is giving us a great head start in Q4.
Sure, but having said that, you have a high base for Q4 as well. I think you did about 9,500 crores last year. So looking at that high base and this kind of bunched up situation, how is Q4 looking for you right now?
Actually, if you were to add, a great way of putting up the question was, if you added up, you beat the guidance. Yeah. So yes, let's see how it goes. But yeah, initial signs are very encouraging. Tamanna, right now we hit Hyderabad market already as we speak. I had slight conservatism because any new market city, you want to get the product market fit really well. This project is named Godrej Madison Avenue. It's becoming a sort of a rave in the city. In Noida, we've just hitting the market with the launch in Central Noida, Sector 44, and getting some exciting response over there. And yes, there are some very advanced stage of approvals in many other cities because we've got a pretty back-to-back launches planned up for this quarter. So yeah, it depends on frankly how much we are able to quickly churn the approvals and get them onto the launch calendar. But yeah, with degree of reasonable probability, I would say yes, guidance seems very likely with a sort of an upward bias. But let's see how the quarter goes.
Sure, of course. Just talking a bit about approvals, and you mentioned Godrej Madison Avenue. So keen to know what the response has been so far. But having said that, when you mention approvals, have the approvals issues been ironed out, or are these ongoing? And which areas are you seeing these issues in geographically?
Typically in real estate, there is a series of approvals that you need to take to hit the market for launch, which is building plan approvals, fire approvals, and then RERA approval. Just oversimplifying it. And this is typically a business where you go to different government departments, take take approval. So nothing really specific to a year or a quarter. It's a characteristic of the business and the industry that we operate. Now on Godrej Madison Avenue, this is a project which we bought in, there were two land parcels we bought in Hyderabad. This is one of those land parcels. This is in Kokapet micro market, very exciting micro market because it's slightly on the premium side of the market. The potential or revenue of this project is between 12 to 1300 crores. Let's see how much we can sell at the launch stage itself. But the entire USP of the project is mostly on getting sort of a newer sort of a lifestyle on the Manhattan side. That's the name of the branding as well. So yeah, I mean, just from a USP point of view, value that we've done and got some great architect partners, I think we've been able to create a very unique product. And while I was personally conservative in terms of how the initial response was, but I was just in Hyderabad last week, and I was pretty amazed to see some fantastic response of customers. We built a very solid team in the city and got some very strong leaders into driving the performance of the region. So yeah, reasonably confident it will hit out of the park. And similarly, we have other launches planned in all different geographies as well.
Yeah, any insight you can give us into exactly that, Mr. Pandey? Which geographies are you looking at and any key launches that we can track?
So one is, one of the launches that got spilled over from last quarter is a project named Godrej Riverine. It's in Sectoral Noida. It's the heart of Noida, very dominant end user market. And again, we're hitting the market as we speak, and some initial response is very exciting. So I think this will be a reasonable probability of a blockbuster launch. Then we're launching something in Golf Course Road. It's in the heart of Golf Course Road. So very excited about that project as well. In Mumbai, we have a series of launches across various micro markets. So you would see us reasonably present in most micro market with either a large activation or large launch per se. In Indore, we have an aspiration to launch a plotted development. In Kolkata, there's a good probability of launching a plotted development. In Pune, we have something as a new phase opening in Hinjewadi. So very strong demand. We've been seeing it at micro market. In fact, we launched a project just last quarter by the name of Evergreen Square, and that today is Pune's highest selling project ever. So we look forward to repeating that success in this new launch. And coming down on south, apart from Madison Avenue, which is in Hyderabad, we're launching something even in North Bangalore. If everything works as per our plan, it's a huge land parcel we own, which is like a 66-acre parcel opportunity, and we will hopefully launch one large phase of that. So yeah, I mean, very robust spread of it. If we get most of it, I think we'll meet the guidance. If we get all of it, we'll meet the guidance.
Okay, that's putting it very clearly. Now, Gaurav, I'm speaking with you just days ahead of the monetary policy. We've crossed the budget. We've seen the push for affordable housing as well as discretionary spends. How are you looking at all of these developments? And if we have a rate cut in the offing, will it be a sweetener for the kind of demand you've been seeing in the space?
That's a great question. Finally, real estate you buy because what's the faith of end consumers on the long-term job prospects for themselves, their own increments. That's why you take a housing loan to buy a property, right? And this is actually depend on economic growth model. And I would say that government, for whatever conservatism people had last year, I think government has taken very significant, very radical steps in the latest budget, especially if you look at from a consumption side, very massive movement on, and a very bold step on the tax change for individual taxpayers up to 12 lakhs. I think this will create a huge sort of a cycle for consumption-based industries, and employees of such industries will be buyers for us. The second megatrend I would say is infrastructure spending. If they can get it front-ended of the next year, the domino impact it will do from job creation for many more sectors is going to be pretty massive. On the monetary side, I think it's a combination of liquidity and repo rate. But it's like frankly anybody's guess. My best guess is that we're looking at where the inflation stands right now and some uncertainties in the world and the opportunity that government and maybe the Reserve Bank may likewise from enhancing the growth potential, which was slowing a bit towards last year. I think 25 basis cut seems a very reasonable probability. And low probability, even 50 basis cut, very low probability, but I won't be surprised, to be very frank, but 25 basis cut seems likely, and there could be some tinkering on the CRR or the SLR side. So liquidity or repo rate is a reasonable certainty, but if that doesn't even happen, I don't see that being a dampener, but if that does happen, I think it'll just be superly perfectly timed from a great fiscal side and this. And last but not the least, I'm a student of economics, so I believe that long-term potential is the most important thing for sustained demand or any economic growth model. I think the fact that government is putting so much of emphasis on fiscal prudence in spite of easy hacks, I think that's the right way to go. So without compromising on infrastructure, giving great consumption boost through tax cut, but at the same time not losing the angle of fiscal prudence. I think it's a very rare story that you get to see in most economies. So I think we are in a very unique position. I think real estate will be a beneficiary as an outcome of the economy, is what I feel.
So that's the management of Godrej Properties, though the stock has been trading under pressure. Let's welcome in Sameer Dalal from Natvarlal and Sons and Stockbrokers. Sameer, good afternoon and welcome to the show. I'm sure you heard what the management had to say on the back of numbers. Optically, if you see, there is strength specifically with regards to where the top line and bottom line go, but it seems that the street is not really happy. What's your view?
I think the street probably earlier had overvalued the stock on the basis of certain expectations that they had of growth that would continue endlessly. So what we are seeing is a bit of the correction in the valuation. So like you said, the results were good. The company has very clearly guided that they will be able to meet their targets for the current financial year. They have a few delayed projects which will probably get launched. I mean, I can't explain it better than what the management explained it. So where I factor in is where do we stand when it comes to valuations. On the valuation basis, even after this correction, I would say the stock continues to trade at a bit of a high valuation multiple. Also, what we got to look at is the fact that there is a bit of slowdown in sales that is happening in the real estate space. We are seeing it happening, and that I think is being factored in. So the growth for next year needs to be seen how it pans out, what guidance the management gives for next year. They also feel it's a little early. For us, we would assume that they would try to, at least given the land bank that they have and given the projects that they're planning, be able to grow by 10 to 15% on the sales targets that they have. And if we assume growth in profitability because of certain benefits that could come their way of 20%, then the stock continues to trade at about 33 or 34 times earnings. And that is not cheap in any which way, because there's always a bit of risk involved in this kind of a business. Because what happens is I sell my project based on what the current price of construction, blah, blah, blah is. And any increase in commodity prices hurts me negatively because my sale is fixed at a particular price. So from that angle, I think we're seeing a correction, not from the fact that they've not met their targets or they're not doing well. It's just the valuation, and that's the only take I can say. So corrections closer to 2,000 are great buying opportunities from a long-term perspective in Godrej.
Got the view, Sameer. And let's move on to our first theme of the day, which is defense companies. Now, Azad Engineering as well as Apollo Microsystems have come out with a rather upbeat Q3 earnings. My colleague Anushi joins us with more. Anushi, what led to the beat for both these companies?
Right, Puneet. So if you look at Apollo Microsystem, very strong set of numbers that we are looking at. In fact, the companies have about a 63% of a revenue growth, but the margins have increased to, EBITDA, that have increased to 58%, leading the margin has remained more or less in the flat region of 25.6% versus 26.3% last year, and net profit seeing about a 84% of a jump. Now, do note that the company had cited for a stronger revenue growth for the fiscal, which was in the range of 45 to 45% for the fiscal, but considering the last 3 quarters, the revenue growth that the numbers that the company has come out with, this guidance in comparison to that seems on the more on the conservative side. Now, the company is also aiming for turning into the 1,000 crore company by FY27. So the 40 to 45% of the uptick that we are seeing in the terms of revenue is expected to continue in the next 2 quarters, next 2 upcoming fiscals as well. Margin target for the companies are in the range of 22 to 24% and healthy. And the order book, if we see in the first half, that stood at roughly around 163 crore. So not a lot of orders were there, but the company was very optimistic that they'll close FY25 order book on a very strong note. And this is with the help of defense PSU companies as well as private defense companies. So they're expecting orders from both of these sides. So Apollo Microsystems, strong set of numbers. Now coming to Azad Engineering, we've seen a 35% of an uptick in terms of where the revenue is. The company has guided for a 25 to 30% of a growth in FY25. So already company is working on a strong footing, and there are expectations of company exceeding the guidance for Azad, in terms of revenue for this year as well, EBITDA has seen about a 31% of an uptake, while margins have remained at 35.5% as compared to 36.7%, and net profit seeing about a 42% of a jump. There were multiple order wins that we've seen in the third quarter. These order wins were from Siemens, GE Vernova and Arabelle, for example, which has led to the surge in the order book to 6,000 crore as well, as per what Investec noticing. So overall, two set of healthy numbers that we're looking in the defense space.
Well, thanks for that, Anushi. But another key theme that's in focus is the oil and gas sector as a whole, and we're now joined by Mr. Prabal Sen, Senior Research Analyst of Indian oil and gas sector of ICICI Securities. Mr. Sen, thank you so much for joining us today, and for waiting by as well. I just wanted to start with your outlook on the Q3 earnings of some of these major players. BPCL, HPCL have come out with their earnings. How do you see earnings specifically, and then we'll get into the sector. But what is your analysis of the first numbers that have come in for these companies?
So I think this quarter has obviously been a mixed bag. If I look at OMCs, on the one hand, on a YOY basis, obviously the earnings looked pretty decent. But on a quarter-on-quarter basis, obviously the impact of much lower GRMs, as well as a decline in blended retail margins, plus the accumulation of LPG losses, all of them weighed a little bit on the earnings. But really, I think in the gas space, the picture was completely different. The deallocation of APM gas for the priority segment in successive cuts over October and November obviously weighed pretty heavily on the numbers. You saw pretty sharp margin declines across the board for the three companies. So in that sense, obviously it has been a little bit of a muted quarter, but really I think the investor focus pretty quickly has shifted to what can happen over Q4, and there I guess the prospects definitely look a little bit better. GRMs have improved, even though marginally from the lows that they hit by the end of the third quarter, albeit they are still pretty low at between $1.5 to $2. I'm talking about Singapore margins. But with crude having actually stabilized, the specter of inventory losses might not actually be as significant. Plus, marketing margins have obviously gone up as crude prices have again moderated to a certain extent. So retail fuel margins have once again, improved a little bit. So to that extent, there is also a small probability, even though the budget didn't have a provision, but the oil minister came out and stated afterwards that there could still be compensation provided towards at least a part of the LPG losses that have accumulated through an off-budget provision, similar to what was done in FY23. So you put all that together, at least the OMCs definitely look at a more optimistic, situation for Q4. Similarly, for the CGDs, the fact that in January, about 18 to 20% of the cut that was put in place over October and November was reinstated to a certain extent, and LNG prices have then softened as the winter season has got over, both in terms of spot LNG prices and because of the decline in crude prices. You've got term LNG prices that have also softened a bit because they're obviously linked to Brent crude. So Q3 probably was weak, wasn't the greatest of quarters, I would say, but I think prospects for Q4, at least at the margin, look definitely stronger than they did even about a couple of weeks ago. So that's probably how we are looking at it.
Right. Probably multiple points that you've mentioned right now, from the impact of Singapore GRMs to the way earnings have panned out, and lastly with regards to no LPG compensation, which in turn would come through. However, taking the current scenario into consideration and the kind of losses that have mounted, and if you have to look at FY25 as a whole, are you expecting the profitability to be hit, and if yes, to what extent?
Well, there's no question that FY25 profitability will be much lower. FY24, if you remember, was actually record earnings specifically for the OMCs, given the huge trend that they saw in GRMs, and marketing margins were also at a fairly decent levels. So to that extent, definitely FY25 would see a decline. But having said that, it's basically about what the earnings would be with relevance to or relative to what the street is looking at. And there, as I said, I think Q4 might still spring a little bit of a surprise, because as of now, our sense would be that, given the disappointment that the budget didn't have a specific provision for it, there could have been a little bit of cuts across the board in terms of earnings expectations. So if that happens, that can be a positive surprise.
So Prabal, are we saying that the pain will continue in FY25, but the setup with regards to 26 and 27 is absolutely set to improve, though the crude oil prices, the upside will remain capped.
No, I think with respect to the crude oil prices, what you're looking at right now, the only bullish trigger, if I can really look at it, is if the geopolitical risk premium really starts to rise over the next 6 to 12 months. If you look at what the physical market is telling you, prospects for demand growth in crude oil actually look pretty moderate compared to the supply increase that can come through. And I'm not just talking about the OPEC plus supply cuts being unwinded from April onwards, assuming that they stick to this current schedule, but it's also because you've got new supply sources coming up all the time. You've got Guyana, which could become a major supply source. You've got Argentinian crude, which is starting to pick up. We recently had news that, from a slightly longer term perspective, Iraq, after probably a decade of stagnation, is putting in place investment plans to increase its crude production from the current, I think, 3 million barrels or to almost 7 million barrels a day. BP has just announced a decade-long $25 billion capex plan to reinvest in the Iraq, Kirkuk, and some of the other fields. So there is supply that is available, and when you contrast that with the fact that demand for fossil fuels continues to see downward pressures across the developed world and even in China, I think from a pricing perspective, India being a price taker can actually benefit as long as crude remains in a narrow range or is basically at a range of between $70 to $80, which is what looks to be the case. So I would be optimistic from a retail margin perspective. And at the same time, however, if crude remains in a relatively narrow range, your GRMs also tend to settle down or normalize at a level of somewhere in the $4 to $5 range. Where I'm talking again about Singapore benchmarks, which is pretty decent to support earnings growth for some of these companies. So that's basically how we are looking at it at this point of time.
Got that, Mr. Sen, and you didn't make a few important points. GRM to be stable, and India could benefit from what's happening in the global market as well as because we have done previously been benefited from as we did in the Russian oil. My just one question was on how are you seeing the current regime change in the United States and with new tariffs coming in on oil from Canada, from Mexico as well as from China. Any outlook that you have? How big of a contribution or how much focus should we put on the export markets as a whole?
Yeah, I think commenting on the US tariffs is a little bit difficult right now. The only thing I would say is, historically, when you have had these kinds of tariff wars, is probably too extreme a word, but this kind of a tariff dispute and uncertainty about what the global trade situation is going to be, that almost always has a negative impact on overall crude demand. So that was my limited point, that you have limited triggers that are there as far as crude demand growth is concerned, while supply could yet remain comfortable. Even if you factor in the efforts by the developed nations or NATO, including US, to stifle Russian and Iranian crude, even then, you have the OPEC plus supply cuts that are being unwinded to a certain extent from April, and you've got additional supply sources. So the physical market, I think, remains probably balanced or weights slightly in favor of supply, which is probably a positive, from both marketing margins and steady GRM perspective for Indian players. That was my limited point.
So Prabal, all in all, a FCF recovery could be expected in FY26. That's a question. And if that is so, between the three, if you're talking about HPCL, which is actually moving closer to a capex completion, so the FCF is at an inflection point. You have a BPCL, which is probably below, the valuations are below historical mean. And you have an IOCL, which has clearly underperformed the other OMCs. So the risk reward over there is appealing, right? Where would your bets be in pecking order then?
No, I think you summed it up nicely. HPCL, BPCL and IOCL in that order. IOCL, I agree that valuations are probably lower than what they should be. But having said that, IOCL still has a very significant capex program coming up, while at the same time, its refineries continue to remain a little bit vulnerable, because if you look at the complexity profile of the overall refining portfolio of all the three companies, HPCL is the one that stands out at this point of time, with the improvement in Vizag coming through and the residual upgrade project also likely to be commissioned in the next 6 months, and the addition of petrochemical capacity. at the Vizag expand or the Rajasthan refinery expansion project also coming through by the end of next calendar year, or this calendar year rather. So their portfolio, I think, continues to get more complex, and their business mix, I think, continues to become more balanced, with the capex cycle already over to the extent of maybe about 60-70% of what they had planned. So I think from a balance sheet perspective, they probably appear much better. And if earnings uptake actually does come through, or as a result of slightly improving margin scenario, I do believe HPCL stands out as probably the most preferred pick. BPCL after that, primarily because it has a fairly resilient refining portfolio compared to the other two players, and even with the capex coming through, it still manages to keep a pretty strong balance sheet over the next couple of years.
Right. So clearly HPCL, BPCL and IOC in the pecking order. That's what Prabal is looking at as well. Thank you so much for joining us on the show. But let's quickly slip into a short break. We still have Samir with us. We will be asking questions and taking his calls as well. Please stay tuned.
चला चला पटकन पटकन.
Hello and welcome to NDTV Profit.
The blessings of Ma Lakshmi that Prime Minister spoke about, will they shine on the middle class and the taxpayer?
The market will not be disappointed.
Finance Minister Nirmala Sitharaman with the Bahi Khata, they're getting ready to go in and present the budget.
I present the budget for 25-26 that there will be no income tax payable up to income of 12 lakh rupees.
ये बजट जो है बहुत ही RRR है. इसका मतलब ये हुआ कि रिफॉर्मिस्ट भी है, रिस्पॉन्सिबल भी है और रिवॉल्यूशनरी भी है.
जब मैं था तब हरी नहीं, जब हरी है मैं ना ही, प्रेम गली अति साकरी जामे दो न समाए.
This is another level. This is another level.
This is how a special Saturday session should end.
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Sources tell NDTV Profit that budget is expected to propose the draft of the new income tax bill. In fact, the draft bill is expected to find a mention in the FM speech on February 1st.
I also propose to introduce the new income tax bill next week.
They're looking at, how to sort of reduce the number of slabs which is there in custom, which is like 12 or 13 slab, and how to bring it down to 5 or 6.
As a part of comprehensive review of customs rate structure announced in July 2024 budget, I propose to 1. Remove 7 tariff rates. This is over and above the 7 tariff rates removed in 23-24 budget. After this, there will be only 8 remaining tariff rates, including 0 rate.
Sources telling telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects.
Government is considering to increase the custom duty on the imported finished goods ranging from consumer electronics to medical devices.
And to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20%.
Welcome back to Profit Buzzers, but let me go across to Samir first and also bring in Brijesh Ale, Retail Research of IDBI Cap. Welcome to the show, Brijesh. Samir, let me come across to you first on these OMCs because, you know, we did see a lot of price action across IOC, HPCL, BPCL. Any kind of view that you have on these counters?
So we do have a view, but we are not in favor of investing in these counters because there's too many regulations that you have to go through. Now, of course, we are in a scenario where the US wants, Donald Trump has said that he wants to bring petroleum prices down, crude prices down. So that is a definite benefit for these companies because what it does is allows them to probably make some profitability on their retail sales. But you also got to realize that, at the end of the day, if the prices fall too much, and they don't cut prices and make excess profitability, even though they made losses in the past, they don't pass on some of these price cuts. It kind of is a negative view towards the government, and India always has some election or the other going on, so the government will force some of these companies to pass on the benefits. So they may not be able to benefit as much as we like, as much as we see that the refining margins could get better and other things could get better. We think too many regulations, over-regulations, government intervention, sentiment of the public for the government from election perspective, none of these bode well for these companies, and we stayed away from investing in them. There are other opportunities where in the market you can make steady, continuous returns. So why not take that? Why invest in HPBP IOC?
Got the view, Samir. Brijesh, anything on the charts for either of these counters for you?
Yeah, hi, good afternoon. So nothing too much on the chart because if you see the weekly and the monthly trade setup, and even from the short-term perspective, they are sliding lower and lower. And maybe some bounce can be there, but that cannot be any opportunity to take the long bets. So it would be like past kind of a situation. Somebody's having a position can hold on to a long, but then trade setups are not visible.
Right, so that's with regards to where oil marketing companies go. But moving on to the healthcare theme, a whole host of companies that have reported numbers. You have Metropolis, which has actually seen a double-digit revenue growth. JB Chemicals, in fact, from the chemical space, has seen a strong growth in the CDMO segment. And you have Global Health, double-digit revenue and profit growth yet again. My colleague Varsha joins in with the details as to what has worked for all these companies. Though two stocks are up in trade, one is trading under pressure. Varsha, over to you.
Thank you, Hiral. So let me start with Metropolis. Very good set of numbers. Though it did missed estimates, but overall good set of numbers. The revenue growth was led by increased contribution from True Health and specialty segments. Now True Health grew 25% year on year, which increased its contribution from 14% to 17%, and the B2C revenue grew 15%, which contributes 55% to the overall revenue, and B2B grew 10% overall. And if I were to talk about the con call highlights, they've maintained their revenue growth guidance of 13 to 15% for FY25, and even in Q4 they're expecting almost 13% growth. There was a volume impact in acute segment, which is a seasonal. So Q3 is normally seasonal quarter when it comes to acute segment, and they're actively pursuing inorganic opportunities in North India. And the acquisition of Core Diagnostics, which they recently did, will be margin dilutive as per the company. Next on my list is JB Chemicals and Pharmaceuticals, wherein The revenue growth that you're seeing is on the back of domestic business, which grew 22%, contributes 59% of revenue. But international business grew only 4%. But the highlighting point is the CDMO business, which grew 33% year on year. And Q4 FY25, the order book for CDMO is strong as of for Q4 FY25. And the domestic and CDMO business constitutes almost 70% to the overall revenue. Last on my list is global health, where in good set of numbers, the revenue growth was led by growth in patient volumes and higher contribution from developing hospitals. The occupancy stands at around 64%, while ARPOB, that is average revenue per occupied bed, grew only 1.2% year on year. But they've added 34 beds across facilities, which has increased the total additions to 219 beds, and they've announced expansion into Ranchi with 110 bed hospital.
Thanks, Vaisha, for getting us the details. In fact, we also spoke to the management of Metropolis. Let's quickly listen into what they had to say.
Yes, I mean, if you look at the overall results, we have clocked about 11% revenue growth and a 15% margin growth. YTD basis, if you look at 3-quarter performance, we have done 12.5%. And we should see a similar trend or a better trend in Q4 as well. So we should come closer to the, the guidance that we have given, by the time we close this year.
Right, so that's the management. Brijesh, coming to you, let's pull up all the 3 names. Metropolis, JB Chemicals, as well as Global Health. Where are you seeing value?
Purely from the charts point of view, I think Metropolis, there can be an opportunity because recently there was a very good correction, and then after this, even I think after the numbers have come, the stock has seen a higher kind of a structure. So maybe a possible bonds close to 1915, 2000 can be on charts. So yeah, somebody wants to take a long bet with yesterday's low as a stop loss is, I think there is an opportunity in Metropolis. JB Chemical and Pharma, the structure is very weak. The weekly time frame suggests there can be a further damage in this counter. So I would be taking a avoid. I won't take any fresh bets on this counter. Coming to global health, today there has been a good spike. The volumes are coming in. 1150 is a small trigger. If it sustains and we have very good closing of 1150, then I think the directional trend of this global health will be positive and it can go back to 1350, 1400 levels. So Metropolis and global health are the 2 stocks where somebody wants to take a long bet can initiate their trade.
Got a few, Brijesh, but time to take a look at Adani Wilbur. My colleague Mahima spoke to the MD and CEO of the company about the growth prospects ahead. Listen into a slice of the conversation.
First and foremost, let's understand that the urban middle class was surely under financial stress, and for several reasons, but then basically they were downgrading on consumption, premium brands were not getting picked up, and surely we could see that in the urban middle class. We are in basic kitchen essentials, hence the degree of impact is much lower in our case because every consumer wants to buy sugar, oil, rice, flour and all that. But still we have seen that people did downgrade or people did consume less. Now, the one is the inflation that has been hitting them. Second, in edible oil, particularly after the duty hike of 22% on 14th of September, the entire edible oil basket went up by almost 35 to 40 rupees a litre. And hence, for a consumer who buys 5 litres a month, surely that was a big money going out of her budget. Now, this discussion was being done by many of the FMCG companies that the urban middle class and that consumption is leading to somewhere reduction in overall growth. And everybody was thinking about what the budget will do. Normally, to put more money in the hands of the consumers, one would say they would cut tax and all that. But this was a very big move, I would say, that straight up to 12 lakhs per annum, if you earn, there is no tax. So that, honestly, the trade or industry or companies like us, we did not expect to that extent. Now, what does all this mean? This means that what tax deduction happens every month from my salary, that will reduce, and that once it reduces, then I have now the option where to spend it. Now, consumers generally would first spend in food. And basic foods are more important, branded foods are important, and hence we as a company feel that kitchen essentials, particularly our products range, pulses, wheat flour, poha, suji, and all that things, consumers would love to buy their own brand, and people will come out and do that. After consumption is over, they can then think of buying any other products, but then obviously food is most important.
Let's focus on the consumption stocks now because they are reacting on the back of their Q3 numbers. It hasn't been a good quarter for some of these counters, but Titan, Asian Paints is the commentary has been something to watch out for, as well as Nestle. Mahima joins us to tell us what worked and what didn't for companies in the consumption space. Mahima.
So I'll start with Titan. While the numbers looked good, the studded mix also improved, but the management commentary coming in is kind of the reason why the stock is seeing the fall. First of all, the first highlight from the con call was that the dilution in margins could take place in studded due to unprecedented rise in gold prices, which is why we're seeing the downtick in stock. And they've said that jewelry EBIT margins on a standalone basis will remain in the guided range of 11 to 11.5%. But after that, when Ajay Chawla was asked, he said that 11% is the stopping point after which the margins won't fall. In terms of prioritizing growth over margins, management has said that they'll definitely prioritize growth. And there have been developments in US that have kind of created noise around the gold prices, is what the management said. The first 3 weeks of January went well, but the 4th week of January saw this. And it's difficult to predict how Q4 will go because of the rising gold prices. And in terms of the gold on lease rates, they have gone up due to US tariff announcements, and supply and demand will kind of determine how gold lease prices go up going forward. Lab grown diamonds, they've said that they've not seen an impact in the studded mix, but the management also said that they will identify certain markets where lab grown diamond demand is really picking up and keep a close track of that as well. The next one is Nestle. Nestle has given a guidance that their out of home consumption is expected to double by 2030, and contribution to sales for new products is expected at 10%. In terms of outlook, food inflation continues to hurt consumption, high prices persist on select agri commodities, and slowdown in growth is something that they've been seeing and will continue going forward as well. Rural is outpacing urban, which has been the story in the past 2 quarters as well. Growth metrics is now shifting from its current curve to a more favorable trajectory ahead, is what the management said. The next is Asian Paints. Asian Paints has given a pretty bearish commentary, which is why we're seeing the downtick in the stock. Volume growth was at 1.6%, but value growth for them this time was negative 1.7%. They've said that they saw weak festive demand and slowdown in urban centers, and what they've said is that going forward, price hikes hangover will be carried forward in Q4 as well. Stress in urban areas to continue going forward is what the management has said, and rural is however expected to continue to recover gradually. They expect some softening in the raw material prices, and their EBITDA margin guidance is maintained at 18 to 20%. Some shuffling of markets with respect to the competition coming in has happened, but it has not affected much and it's not significant. However, he also mentioned, Amit Singhal also mentioned that Grasim has scaled up in terms of touch points, but they are yet to see the impact in terms of value proposition. And they've given a guidance that they aim to have a single digit volume growth going forward as well. So this is the overall roundup of what happened with Nestle, Asian Paints as well as Titan.
Well, thanks for that, Mahima. Sameer, let me come across to you for all these consumption stocks. We did see a lot of them in pressure and trade today. Any view that you have on some of these counters? Asian Paints, Nestle, Adani Wilmar also, we did see the management bite as well. Anything on these counters that you have? Any view?
We are positive on Titan. Yes, valuations are rich, but we believe the growth opportunity for the jewelry business is still very, very large. At the moment, Titan has been saying that they're not looking to enter the lab-grown business, but eventually I believe they will probably make that move. They are making certain investments. If you read through the annual report, you'll see there, and through commentary, they are making certain investments in the lab-grown space. So we believe that in the near future, maybe in the next 6 months, you will see some splash coming in from there, and that probably could be a positive trigger for the stock. We also believe that, their carrot lane business will see a good amount of traction. They're expanding their reach quite well. They work on lower cost, low ticket size products. We believe that opportunity will scale up. Yes, there is some amount of margin pressure right now, but at the end of the day, that will neutralize. And as the market formalizes in the gold and the jewelry business, where you see a bigger shift happening from the unorganized to the organized, and you see brands like Tanishq and Zoya and the various others that they have scale up, I think the growth for this company could be quite good. The operating leverages are quite strong. They're working through the franchisee model, which is capex requirements are quite low. So we think Titan is a good investment from a 3-year perspective. In the near term, it may see a bit of headwinds, but over long term, once the growth happens, the stock will probably move up. Asian Paints, not as positive from the near term for the simple reason that, look, competition is stiff, because of which they're not going to be able to expand margins at will, which they used to do in the past, and which very clearly reflects in the stock price. We believe that this difficult period for them, or this high competitive space, could probably persist for another year and a half, before which, the larger players get their share of the market, and then there's some amount of consolidation in the industry. We already know that AkzoNobel is up for grabs. So maybe that consolidation will probably ease up a bit, and pricing will start getting better. But yes, pressure point is going to remain. Valuations were rich, they've corrected, but they could probably remain in this range for some time. Nestle, we believe the urban growth will start seeing a pickup. So you've seen a decent correction in the price. Valuations yet not very attractive, but then Nestle has never traded at very attractive valuations. They've always traded at premiums. So if we believe the urban side is going to recover, we think Nestle would be one of the beneficiaries. FMCG will definitely.
So Nestle is what we should be watching out for as well. Thanks, Samir. Thank you so much for joining us on the show and sharing your views. But let's shift focus to the power sector, two stocks, Torrent Power, Tata Power. Both of them have reported numbers. My colleague Mihika is with us to tell us more in terms of what's happening, because both levels, the profits have beat street estimates, but you have a Tata Power which has been trading under pressure. Mika, over to you.
Yeah, we'll talk about Tata Power first. Revenue has been missed, EBITDA and profit beat. You saw net profit gain 8%, something that helped the earnings for Tata Power, where revenue growth was driven by the transmission and distribution segment, and margins were held by a stock and trade uptick, and bottom line was aided by 35% lower expenses. But in terms of your street views, there's not been very positive. We have BofA and Tata Power maintained and underperformed. They've cut the target price to 350 rupees. The earnings were missed on their estimates because of lower other income from JV profits. We also have CLSA on Tata Power, which has maintained the underperformed rating with a target price cut from 350 to 363. There was a surprise loss at Tata Projects and weak renewable energy independent power producer business, and they've maintained the underperformed rating despite the recent fall. And then lastly, we come to Torrent Power, where we've talked about EBITDA in lines and profit have beat estimates. The revenue uptick was muted. EBITDA was up 6% and net profit was up 32%. The muted top line growth was because of a 10.5% fall in the generational segment sales and flat revenue on the other segments, and EBITDA uptick was because of a 40% annual decrease in fuel costs and no cost of material consumed in this year versus a 90 crore item expense a year ago.
Mika, Brijesh, two stocks, Torrent Power, Tata Power. What is more compelling from a buy perspective? Brijesh, you're on mute.
Yeah, so if I need to compare, then Tata Power is something which can be seen from the support point of view. I do believe the stock is currently trading in a downtrend, so maybe probably it might come close to 350, 330 level. That would be the range where it has got support, and there can be some pullback rally. And this rally may maximum go back to 400, 410. So that's an opportunity from 350 to 400. So this 50 points range can be a trading opportunity in Tata Power.
Right, so that's with regards to where power companies go. Thank you, Brijesh, so much for joining us on the show and sharing the views. But clearly, from a markets perspective, an interesting move specifically that we're seeing in the broader markets in today's session. A lot of stock-specific action as well. In fact, Paytm has been one of the stocks that is on our radar as well. The commentary that has come in today's day, the stock is also trading at the day's highest levels. With that, you have Abbott on the back of earnings is in focus, gains of around 2.5%. decent growth in terms of the top line. Profits have seen a growth of around 16% at 361 crores. So lots more focus on the other side. But with that, it's a wrap on this edition. A thank you from Puneet and myself. Please stay tuned to NDTV Profit.
चला चला पटकन पटकन. Hello and welcome to NDTV Profit.
The blessings of Ma Lakshmi that Prime Minister spoke about, will they shine on the middle class and the taxpayer?
The market will not be disappointed.
Finance Minister Nirmala Sitharaman with the Bahi Khata, they're getting ready to go in and present the budget.
I present the budget for 25-26 that there will be no income tax payable up to income of 12 lakh rupees.
ये बजट जो है बहुत ही आर है. इसका मतलब ये हुआ कि रिफॉर्मिस्ट भी है, रिस्पॉन्सिबल भी है और रिवॉल्यूशनरी भी है.
जब मैं था तब हरि नहीं, जब हरि है मैं नाही. प्रेम गली अति साकरी, जामे दो न समाए.
This is another level. This is another level.
This is how a special Saturday session should end.
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Sources tell NDTV Profit that budget is expected to propose the draft of the new income tax bill. In fact, the draft bill is expected to find a mention in the FM speech on February 1st.
I also propose to introduce the new income tax bill next week.
They're looking at, how to sort of reduce the number of slabs which is there in custom, which is like 12 or 13 slab, and how to bring it down to 5 or 6.
As a part of comprehensive review of customs rate structure announced in July 2024 budget, I propose to 1. Remove 7 tariff rates. This is over and above the 7 tariff rates removed in 23-24 budget. After this, there will be only 8 remaining tariff rates, including zero rate.
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects.
Is considering to increase the custom duty on the imported finished goods ranging from consumer electronics to medical devices.
And to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20%.
entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crore.
Hello and welcome. You're watching Top Trades on NDTV Profit with me, Somit Sarkar, and my co-anchor Mihika. Well, Mihika, the benchmark index continues to remain flat, but it's the broader market, the Nifty Mid Cap and the Nifty Small Cap index, which have been gaining in trade.
Yeah, that's right. The Nifty 50, it's trading flat with a positive bias, up about 0.05%. When you look at the breadth of the entire market, well, you have 1,589 advances against 495 declines. If you look at the Nifty 50 specifically, something that's gaining well is in Apollo Hospitals, up almost 3% in trade right now, followed by Hindalco and an ONGC and BPCL, those counters all up over 2%. Something that's not doing so well is Asian Paints. It gained around 4% after its Q3 numbers yesterday, but after the con call and more commentary coming in, the stock is now under pressure, down about 3%. This is followed by more consumption names like a Titan, a Nestle, and ITC, all seeing cuts of 1.5% to 2.5%. But like Somit rightly said, it's the broader markets that are clearly outperforming. You have the Nifty Small Cap 250 that is gaining 1.6% right now. When you look at your 182 advances on the small cap index versus 61 declines, Motilal Oswal, the top gainer in the Nifty Small Cap, it's up over 13% right now, followed by a Jubilant Pharmova, which is gaining 10%. We also have strength in counters like Ajay Balaji, Global Health, and KFin Technologies, all gaining over 7%. Something that's not doing so well is Fine Organics on the back of its Q3 numbers, down about 5.5%, followed by a Soba, which is due to post its earnings tomorrow. We also have some weakness in something like a Sirma, SGS, and a Honasa Consumer, seeing cuts of 3 to 4%. And lastly, when you look at the sectoral gainers, something that is doing well is a Nifty Media and a Nifty Metal. Nifty Metal up about 1.6%. You're seeing some strong gains from something like a Hindustan Zinc, up almost 7% right now, followed by Hindustan Copper, Hindalco, all gaining over 2%. A sector that's not doing so well in today's day of trade is the Nifty Realty. It's down about 1.4%. The losses are led by Soba, seeing cuts of 5%. We also have Phoenix Mills, Godrej Properties, and Prestige, under pressure. But with that, let me welcome our guest for today, and that's Mahesh Ahuja from Hensec Securities. Welcome to the show, Mahesh. But before, Somit, I want to ask you, you have Vahan data coming in, and you have the city gas distributors in focus. What can you tell us about that?
Well, in fact, IGL is one of the top gainers when it comes to the FNO that we have been looking at. So this Vahan data that has come in indicates a clear capacity addition that we have been seeing, not capacity addition, vehicle addition that we have been seeing when it comes to CNG cars, and this is across all the state-owned city gas distribution areas, in fact all the areas that they cover. Now if you look at the India level number, the CNG registrations have increased by nearly 34% on a YY basis, which means that the CNG penetration has increased to 19% from 16% earlier. Now if you look at Gujarat Gas, the registration in their geographical areas has increased by nearly 33%. For IGL, the registrations have increased by nearly 30%, and for Mahanagar Gas, the registrations have increased by nearly 43%. Now, usually if you look at January month data is seasonally a strong month, but what analysts are indicating here is that even if you factor in this seasonality, then also the numbers that have come in for the CNG registrations, they are very strong. In fact, on a month-on-month basis, we are seeing a jump of nearly 80% for the CNG vehicle registration. Now, this is also keeping in mind the fact that there were price hikes taken by Mahanagar Gas and Gujarat Gas to factor in the lower APM gas allocation. So factoring in this price hike also, we have seen strong CNG registration numbers, which means that the street has absorbed in the price hike and volume growth would continue
for the city gas distribution companies. Now, do remember that Gujarat Gas and Mahanagar Gas had already taken a price hike post the lower APM gas allocation, but IGL is yet to take a price hike. They had taken price hike in the non-Delhi region, but Delhi is the most important region for them because it contributes nearly 70% to the total volumes for the company. So a price hike in the Delhi region would be could lead to very meaningful upside for IGL, given the fact that that is a main region for IGL. And in past they had delayed this price hike because of elections, but now as election is getting over in the Delhi region, street is expecting that a price hike could come in very soon. Mahesh, how are you looking at the city gas distribution companies? Do you think that the worst is now behind and things might look good for them going forward?
Definitely, the things due to elections and things are not very much look attractive. But now, as you already explained, now the things are in line, and I think all the city gas distribution companies can get some higher from these levels. Specifically, if we talk IGL, then we can see 260 to 275 odd level in upcoming time, slow and staggered way. So I think data is also good, and for upcoming time, we are optimistic for some upside in these sectors. Meanwhile, MGL also looking good for 1,550 to 1,600 level. So IGL and MGL looking good in this sector particular.
Got it. The next stock that we have in focus is Asian Paints. It was in focus yesterday, focus today, but for opposite stock performance. But we did, after the company reported their earnings, we had a conversation with Amit Singhal, the MD and CEO of Asian Paints, on what he's looking forward to from the upcoming quarters. Do listen in.
Overall, this year has been very, very different from so many years, more because of, I think, the overall demand conditions have been fairly muted. We've not seen possibly a year like that, in the last 2 decades or so to that extent. And therefore, what we feel is that it's not something which is just a competitive effect or it's happening because of any other big structural change. I think it's just the overall consumption in terms of which is there. Some possibly consumption trends have been very different to that extent. As we kind of look forward, I think it will take some time before the demand really comes back in its full form and shape to that extent. And therefore, I think going ahead, possibly, I think the areas of projects, industrial would kind of still go much better than the core retail home segment in terms of what we see to that extent. And looking at this, possibly, I think it will take a couple of quarters before we start really seeing much better demand conditions in terms of going forward.
It's a cautiously optimistic outlook from Asian Paints, but Mahesh, I'll come to you. I mean, the stock has taken a beaten down about 22% in the past 1 year. Your views on Asian Paints?
Definitely, we have earlier also talked about the Asian Paints. We are optimistic for 2-3 quarter. From upcoming 2-3 quarter, we can see demand upside cycle in this sector also. From current perspective, if you see in changes in income tax slab, that can also help in demand further. So I think we are in lower consolidation zone. We can see 2,250 odd level. If any pressure could come and if any data not came good, then. But from 2 to 3 quarter, we are optimistic for demand should be neutralized and we can see some upside from that level. So we are optimistic for 2-3 quarter, and after that things can be normalized in the Asian Paint also.
Well, another consumption stock that is in focus is Titan. That also reported its Q3 numbers, which was below the street estimate. But management over the call mentioned that they are focusing more on margins over growth. So let's listen into what the management had to say.
See, the challenge that we have is our main business, which is 80% plus, continues to grow at this rate. And therefore, because of its share being so high and it continuing to grow at, if I add the global part of jewelry, which is Tanishq outside India, the growth rate is even more. And therefore, any emerging business has to grow at many times that for the needle to move on its share. So that's a generic problem with the nature of the portfolio that we have. Having said that, certainly we need to do rather better on the emerging business growth. And while there is a certain perspective of why Taneira appears not to have done so well in quarter 3, because there was a buy and sell channel called L3, which did very well in quarter 3 of FY24, and we have contained the expansion of the network in order to consolidate and grow at a same store level. So this angle is depressing the actual performance of Taneira in the current quarter. Not that it is satisfying by itself, but it is better than what it appears. We need to do a lot of better work. We haven't got our act right, honestly, on getting enough customers to come to the stores of Taneira. Even though when they come in, they're bowled over by what Taneira has to offer. So it's our challenge and task to get lots more people to become aware of what Taneira is. Work has begun, and we are hoping to see results in the next few months.
Mahesh, coming to you, how are you reading into Titan numbers? Their strategy of focusing more on margins over growth, would that be the right way to go ahead?
No, I think the margin could expand due to gold inventory also. So I think numbers are not in line for Titan. For time being, we can see margin, some more margin expansion due to gold price hike and other things. So I think their volume should need to increase in terms of if anyone focusing on growth, then their volume should be increased. So current perspective for Titan is not so much aggressive buying level, but in lower level we will look on Titan. I think 3,200 to 3,300 odd level where we are seeing some value buying on these levels. So current perspective, I think Titan number are not in line. It's below estimate, and for margin we are not so much convinced.
Okay. Before moving on, Mihika, how was the Power Grid con call? I guess they have again upgraded their guidance, capex guidance for FY25 and FY26.
Yes, they have amped up both the financial year guidances. We have the FY25 capex guidance, which has been raised to 23,000 crores versus 18,000 crores indicated at the end of Q2. We have FY26 capex, which has been guided in the range of 28 to 30,000 crores versus 25 to 30,000 crores earlier, and FY27 capex has been stated at 35,000 crores. In terms of the capex spent so far, well, 9-month FY25 capex stands at 17,600 crores, and capex of 19,480 crores is what the company has spent till January 2025, and 10,000 crores or more capex is expected to be capitalized in the remaining 2 months of FY25. We do have a strong project, but something that's on the flip side, the dividends of the company are likely to reduce because of the higher capex estimates. The second interim dividend stood at around 3.25 rupees, and year to date the FY25 dividends stand at 7.75, and the higher capex is likely to impact the dividends in FY25 to around rupees 9 versus 11.25 we saw in FY24. But lastly, we do have a strong project pipeline. Work in hands in Power Grid's books is 1.43 lakh crores in value. We have 29,000 crores of projects under process and 50,000 crores more coming in more coming under bidding. The total pipeline, when you include all of these numbers, comes to 1.76 lakh crores, and 1.1 lakh crore of these projects have a blended execution time period of 2 to 3 years. Mahesh, I'll come to you on this. Power Grid, we've seen capex getting amped up again. What are your views on the company and the way it's carrying out its work?
Yeah, definitely, increasing the capex is also positive for longer term for a company, but from shorter term perspective, we can see some more consolidation in 270 to 285 range. So I think some consolidation could be there, but longer term we are optimistic for much more upside. I think 25 to 35% upside in the stocks is pending. So from longer term view, yes, we are optimistic for upside, but in shorter term we can see some more consolidation here.
Got it. Up next, we have EV scooter maker Ola Electric, which is making its entry into electric motorcycles, and launched 5 variants of Roadster X Electric in the motorcycling segment. My colleague Haripriya is at the location and joins us with a walkthrough.
Ola has entered the motorcycle market in India with the launch of its new e-bike series called Roadster X. The company has launched 5 models of bikes in the Roadster X and the Roadster X Plus segment. The bike comes in multiple variants from 2.5 kilowatt per hour to 9.1 kilowatt per hour. This has the Bharat Cell 4680 and is built on Ola's Gen 3 platform. It has brake-by-wire technology with single ABS and Smart Move OS 5 features. The Roadster X has a range of 140 kilometers to 252 kilometers, and the Roadster X Plus has 252 kilometers to 500 kilometers. The top speed for all these vehicles range from 105 to 125 kilometers per hour, and these are priced across different models. It's priced from 90,000 to 1,70,000, and the delivery start by mid-March. This marks the official entry of an EV player in India's motorbike space with camera person Govind. This is Haripriya for NDTV Profit.
Well, that was Ola Electric's new motorcycle. Moving on, let's get in Varsha. A host of her stocks in a sector have been buzzing, be it Metropolis, Global Health, Fine Organics. Something or the other is either going wrong or either going right with your sector. Varsha, what's the news for these 3 stocks?
Yes, Amit. So basically all the 3 stocks are buzzing on the back of earnings. Let me start with Metropolis Healthcare. Wherein good set of numbers, but it did missed estimates. So let me start with the revenue growth, which was led by increased contribution from True Health and specialty segments. While True Health revenue grew 25% year on year, and increased contribution from 14% to 17%. B2C revenue grew 15%, contributed 55% to the overall revenue, while B2B grew 10% year on year. If I were to talk about the con call highlights, so they've maintained their revenue guidance of 13 to 15%. There was a volume impact in acute segment because Q3 is softer when it comes to acute segment, and that has impacted the overall volume for the company. And they are actively pursuing inorganic opportunities in North India. And the acquisition of Core Diagnostics, which they did recently, will be margin dilutive as per the management. Next on my list is Global Health, also called as Medanta, wherein if you see, so normally good set of numbers, the stock is up on the back of earnings. The revenue growth was led by growth in patient volumes and higher contribution from developing hospitals, and the occupancy, if you see, stands at around 64%. And if I were to talk about the average revenue per occupied bed, grew 1.2% year on year. And they've announced expansion into Ranchi with 110 bed hospital. That's a positive point. And they've added 34 bed across facilities, increasing total addition to 219 beds. Last on my list is Fine Organics, which is actually under pressure. The stock was down almost 5% on the back of earnings. Weak set of earnings. The highlighting point here is, if you see the margins, the margins have been around 19% versus 24-25% last year, which is a big drag when it comes to EBITDA margins, is because of the higher cost of raw material that the company has seen.
Thank you, Varsha, for giving us those key details. Mahesh, I'll come to you. Metropolis Healthcare, Global Health, Fine Organics. Any one of these 3 counters stand out?
Definitely, Global Health is also from looking good. They have we see their occupancy level that has been increased, and they are adding much more in expansion also. So Global Health is looking good from these levels also. I think stock has much more potential worth of 1,400 up to level. So I think Global Health could be picked from here if any dip come in stocks or in these levels. So Global Health is preferred in these 3.
Right, and when it comes to Angel One, they had come out with the updates for the Jan month. I guess the street is taking positive cues from the fact that they've been able to gain market share when it comes to the F&O segment. How's that counter looking like? It's one of the top F&O gainers in trade today.
I think the stock has beaten down already in from higher levels, so that is the reason for the reboundness of stock. But from number perspective, it's not so much attractive. But stock has beaten down from higher level so much, so reboundness is there, as we are seeing in whole market. Slightly reboundness, so reboundness is there, so some more upside potential in I think 2,900 to 2,950 zone could come in near term if market stabilize. So that the reason due to market is stabilization, not to numbers.
Right. So we're coming in with a breaking story at this point in time with respect to where the rupee is, 87.40 against the dollar. It's a significant drop. Once again, of course, we started this week with a sharp drop in the rupee, hitting record lows, crossing the 87 mark, and now we're reaching towards the midpoint of the 87-88 window. I have with me Mr. Kende. Mr. Deb, just wanted to ask you with respect to the current levels. Do you see any specific fundamental reason at all for the rupee's weakness, sir?
Hi, good afternoon. Well, this was a sudden move about an hour before, because since morning the rupee was trading around 87.11 to 87.15 levels. And off late it moved to 87.41. There were some reports coming in that there were huge weekly settlement in the NDF market, which had an expiry today, and that was quite a huge amount. So that had impacted the rupee to sudden fall from the 15, 16 level to 40 levels now. I guess there's some intervention just going on. It is holding around 40, but it's now trading around 42, 43. But I guess this 44, 45 should be the peak, because this is a one-off case. Every week there is an NDF settlement, but the volumes are not too big. Today's volume was very, very high. No idea what volume was, but that made the NDF to go weaker, and rupee interbank OTC also followed it. That's a one-off case. I don't think rupee will go much weak from here.
Are you seeing any RBI intervention at this point in time in the current market volumes?
Well, yeah, definitely RBI has been intervening, and as they rightly say that unwanted volatility should be avoided. I guess RBI is intervening through nationalized banks. But this may correct back today. But going forward, just one thing, we are having a meeting with our Prime Minister and Mr. Trump coming 12-13. And post that meeting, we will see a lot of movements of more a correction from this particular weakness of 87.40. We would see the weakness temporarily coming to an end. We will see a little bit of relief from the tariff fear which we have. Maybe this 87.45-50 could be a temporary high of the rupee.
Just to get a fair idea of what is exactly causing this. Now, you said that this was largely because of some deliveries in the NDF market, but broadly speaking, the dollar strengthening doesn't seem to be going away anywhere simply because of the way that international trade is placed at this point in time. But anything that is concerning you at all?
Well, the dollar index had touched close to 110 about a few days before, but then again it came back to 108. Dollar index was in the range of 104 to 108. I don't think dollar index has much to do, because till the Friday end, the rupee had closed at 83.65. And on Saturday morning, when Mr. Trump imposed tariffs for 48 hours, which was later removed on Monday, the CNY, which had also weakened to 7.31, it opened today at 7.28. So all other currencies corrected, including euro and others, but unfortunately rupee didn't correct. So I sincerely feel that the correction of the rupee is due any time. May not go to 85, but definitely it should move around 86.50, 86.70 level once again.
I was just looking at some of the data that our team here has presented. About dollar index is up about 1% since Jan 1. Comparatively, rupees fallen 2.2%. Are you seeing any? Are you making anything of the gap there?
Well, dollar index, which is normally a weighted average of the 6 currencies, out of which euro has a 57% weightage. But when you talk of tariffs coming in, and especially this thing started after 6-7 years when the first tariff was imposed in 2017. We've seen a lot of tariff war coming in that point of time for the first time, and now again we are watching it. So the present extra weakness of the rupee, which is about 1.5% more, is purely on that threat of tariff. And also Mr. Trump had announced that he is also looking into the BRICS country, where India is a part of that. Whether to put tariff or not. So that's a little bit of threat. But dollar index, 108 rupees should have been somewhere around 86.50. But this tariff threat has brought in 1 rupee more to 87.40-45 today. So as long as this tariff war continues, maybe we could see high volatility, but once it is being sealed properly for a couple of months, we will see some correction in the rupee coming in.
That to happen after the meeting between Donald Trump and Narendra Modi.
Absolutely.
Got that. All right, Mr. Dedi, thank you so much for joining us and taking time out to discuss this topic, sir.
Well,
all right.
Yeah, thank you, Rishi, for joining us and kind of giving the viewers the perspective on what's happening with the dollar rupee index. But before we wrap up on this edition of Profit Drop Trades, Ajax Engineering's IPO opens for subscription on February 10th, and my colleague Sajid spoke to the management on their use of proceeds and more. Do listen in.
Our journey began in 1992 when I had visited an exhibition in Munich, Bauma, looking for opportunities. The background is that the three founders of Ajax came from a construction equipment background with Larsen and Toubro. I found this equipment called a self-loading concrete mixer that seemed just right for the time. India was just opening up, liberalization had taken place, mechanization was just finding its feet, and in concreting it was virtually at a nascent stage. And I was of the belief that self-loading concrete mixer was just the right kind of equipment for India to take its mechanization story forward. And from that humble beginnings, we set up the operations and began to establish the concept around the country, which took a good 10 years. And from that time, it found traction. And from around 2009, it took off until now we have the pride of place in self-loading concrete mixer. Alongside, we also brought in the other products in the concreting space, and we today are a full complement of equipment for the concreting space.
चला चला पटकन पटकन. Hello and welcome to NDTV Profit.
The blessings of Ma Lakshmi that Prime Minister spoke about, will they shine on the middle class and the taxpayer?
The market will not be disappointed.
Finance Minister Nirmala Sitharaman with the Bahi Khata, they're getting ready to go in and present the budget.
I present the budget for 25-26 that there will be no income tax payable up to income of 12 lakh rupees.
ये बजट जो है बहुत ही RRR है. इसका मतलब ये हुआ कि रिफॉर्मिस्ट भी है, रिस्पॉन्सिबल भी है और रिवॉल्यूशनरी भी है.
जब मैं था तब हरी नहीं, जब हरी है मैं नाही. प्रेम गली अति साकरी, जामे दो न समाए.
This is another level. This is another level.
This is how a special Saturday session should end.
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Sources tell NDTV Profit that budget is expected to propose the draft of the new income tax bill. In fact, the draft bill is expected to find a mention in the FM speech on February 1st.
I also propose to introduce the new income tax bill next week.
all, they're looking at, how to sort of reduce the number of slabs which is there in custom, which is like 12 or 13 slab, and how to bring it down to 5 or 6.
As a part of comprehensive review of customs rate structure announced in July 2024 budget, I propose to 1. Remove 7 tariff rates. This is over and above the 7 tariff rates removed in 23-24 budget. After this, there will be only 8 remaining tariff rates, including 0 rate.
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects.
Is considering to increase the custom duty on the imported finished goods ranging from consumer electronics to medical devices.
And to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20%.
Entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this
Hello and welcome. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita. And a quick check on where we are, where markets are concerned. The Nifty 50 up around 0.1% thereabouts. We're sustaining above 23,700 at least for the moment. Let's look at the intraday chart. The Nifty Bank outperforming. Relatively stronger performance by the Nifty Bank today as well. We are seeing a chart which is largely range bound, right? Look at the day's lows, look at the day's highs. Within 100-point range, a very, very tight one, at least today on the Nifty. Let's look at the contributors as well. Far and few in terms of movers, big movers rather. HDFC Bank though contributing decently, and ITC slightly on the negative side, but outside of that, no big contributors present here, at least for the moment. Let's look at the heat map with regard to Nifty 50 counters. And there you go, a couple of stocks doing fairly well for themselves. And ONGC has been in the limelight for the last 2 to 3 trading sessions, so that one standing out in comparison. What's not doing well? Earnings. Nestle, Titan, Asian Paints, all 3 of those, and along with it, they've dragged the FMCG pack together. HUL, Britannia, Tata Consumer, ITC, those 2 languishing at the bottom of your screen. IT, well, it's been a mixed bag. HCL Tech down 1% thereabouts, but you have some movers in the IT space. Of Wipro, okay, slight positive bias, and so is an Infy and a Tech Mahindra. Flat to positive, at least on some of those. Outside of that, the heavyweights, HDFC doing okay, percent plus. Reliance absolutely flat, maybe a negative bias coming through on that one. Kotak, some bit of losses after yesterday's surge in trade. So that's how the Nifty is really stacking up. Some auto stocks will also be in focus. The Tata Motors doing well for itself, 1% higher. I also want to flag off Page Industries because just came out with numbers. Let's pull the stock up before I go to broader markets and also highlight the advanced decline. There you can see the sharp spike on the stock, 2.5% higher now. Margins getting sharply better from 18% to 23%, and therefore
profit after tax is up 34% despite revenues up just about 7%. And that's why that little bit of a spike. We'll monitor this one. But let's look at the advanced decline because the breadth of the market stands out for me today. 3:1 in favor of the advances. It's a strong breadth, very similar on the Nifty as well. But the broader markets are showing better trends than the Nifty 50. Let's look at this intraday as well, and we'll see that it's sustained pretty much through the course of the day. So it's a solid move where the broader markets are concerned. They've sustained that up move which we saw late in trade yesterday, and we're seeing that today as well. Let's pull up the Nifty mid-cap intraday and thereafter the small cap index as well. 1.1% higher on the Nifty mid-cap. The Nifty small cap as well doing well for itself, much better, 1.7%. So small cap is where a large part of that positive momentum seems to be sustaining. But on all three of the indices, you're seeing all three of them trade in a tight band for a large part of today, and that's a positive to a large extent. We have Shivangi Sarda joining us from MOFSL, and we also have Lancelot Dacuna joining us. Thank you, both of you, for joining us this afternoon. Now, I want to first take mandatory question on the technical front with you, Shivangi. What's the sense like at this point? We've seen a choppy few days of trade where we've seen the Nifty fall and thereafter bounce back. Today, a flattish move on the index, and I'll talk only about the index. We'll talk broader markets as well. But currently on the index and on the Nifty Bank, what's your take?
Hi, good afternoon. Thank you for having me. So we've seen that, the Nifty index has witnessed a comeback of the bulls in the last, 6 to 7 odd trading sessions, especially after the budget. We've seen that there has been a spectacular short covering move in the yesterday's session as well. Now, the remarkable point is that there has been a lot of unwinding of the call writers, which did, spike the put call ratio to 1.16. It's slightly lower at 1.07 right now, but still above 1, which clearly indicates that put writers are quite comfortable at this level. Now, today, there is a little bit of softness here. Now, index, is struggling near about 23,800 marks. But overall texture of the market is quite positive, and we're seeing recovery in most of the sectors, which is making the index ready for the psychological 24,000 marks. So buy on decline would continue here. Even India VIX is cooling off and supporting the bulls at this hour. And overall, we have seen that heavyweights are now contributing to major, part of the index movement. So even though Nifty is a little muted today, but Bank Nifty is outperforming. So, there is some part of Nifty which is holding on. So we're looking at 24,000 as the next level for Nifty with a support at 23,500 levels.
Okay. And not sure, Nifty Bank, Shivangi, what's the sense like?
So today's session, we've seen that Nifty Bank has been outperforming, of course, with an excellent short covering move in ICICI Bank and HDFC Bank earlier this week that we saw. Overall, Bank Nifty is holding about 50,000 marks, which is quite positive, and this will be like a make or break zone here for a psychological level, sentiment-wise. So 50,000 is what we're looking at as an important support here, because earlier it was unable to cross this level. Now, the smaller banking names are also now picking up strength, which should, hopefully add to the momentum here. Now, of course, we're stepping into a week and we are expecting the RBI outcome on Friday. So ahead of that, there will be a lot of volatility. Most of the things are already factored in, but there will, of course, be wild swings that we could expect. So one should definitely be hedged in any sort of trades in Bank Nifty, which will be my advice. But next, 51,000 and 51,250 is what we're looking at with a support of 50,000 level.
Okay. Lancelot, always good having you as well, CIO ValueX Wealth Connect LLP. Lancelot, quick question with regard to how you're viewing markets at this point. Have we, for the moment, hit a bottom, and now do you expect the bull run to continue? Or do you expect, or do you believe that there is reason for concern and you could still see some bit of correction from here?
So I think one has to look at this in sort of two different perspectives. One is the broader market and where valuations are placed for maybe different segments of the market. So if you look at the large cap space, valuations have corrected significantly. But on the other hand, some of the large cap companies have also not generated higher earnings growth, based on the results that have come out so far. Many of the corporates have in the large cap space have seen like muted earnings growth, and that will contribute to some re-rating in terms of the future. Maybe a quarter or two would be a better sense to see whether the earnings are continuing to grow, and this was basically a slowdown for a quarter or two. And if that was the case, then you would again see the momentum start to pick up in the large cap space. As far as the mid and small cap is concerned, while there has been a correction, the correction has not been significant enough for valuations to become attractive to start to deploy, monies in those spaces. Yes, there have been certain outperforming companies that have outperformed in terms of results, as well as in the outlook are looking better. So those companies will continue to drive, the prices higher. But most of the companies which we've seen so far in the mid and small cap space, earnings growth has also been a little bit stifled. And that could lead to a bit of concern that, one would not want to enter when the valuations are elevated, because in the next quarter, if there is a bit of a slowdown, you could see many of these companies getting re-rated. So it's going to be very stock specific price action for most of the companies going forward. And maybe the broad indices would be, in a range or relatively flat to negative, depending on which segment they are. So you could see a bit of a negative bias for the small and mid cap space. And maybe for the large cap space, there could be a positive bias because valuations have really become reasonable in those cases.
Okay. Shivangi, your picks for this afternoon?
So yes, before I get into the picks, I would just, like to add on to this as well. The FIIs have turned buyers, which has been a quite a sentiment change for the, market. And also the FIIs long short ratio, that is in the F&O segment, they have started short covering move from the last three sessions. The ratio had now tanked down to 10%, which is now nearly 16%. But overall, this has also caused, a shift in the change of the sentiment in the market overall in the last 7 to 8 trading sessions. Now, coming to my afternoon picks, first pick on my radar is CUB. Of course, banking is looking quite positive, and this will be a pick from my side, looking quite lucrative. Now, this stock has made a good bottom here. From the last 3 trading sessions, we are seeing a price volume surge as well. And on the longer time frame as well, we've been seeing that the supports are gradually shifting higher. This week has been exceptionally good for this one, and we're expecting a good up move here. So recommending a buy here with a target of 188 levels in CUB with a support of 175 zones. Now, the second pick is BSE, Bombay Stock Exchange. We've seen that, of course, exchange-related counters are in momentum today, be it MCX or BSE. All this platform-related counters are in buzz. There is a lot of sector tailwind as well. Now, this stock has been consistently doing well from the last 1 week. Volumes have been quite significant here. And even the kind of operational excellence that we've seen in the last 4 to 5 months has been quite remarkable for this company. So quite well placed, and the kind of retail participation that is increasing even after such a dull market. In the last quarter, we've seen that this sector has done quite well. So recommending a buy here with a target of 6,000 and a support of 5650 zones.
Okay. All right. So those are picks coming through for you. Some of those stocks really buzzing, and we'll continue to take views with regard to what to expect going forward. But, I want to welcome on board Gopal Jain, Managing Partner at Gaja Capital, talk to us about what trends he's seeing, of course, from a private equity perspective. But also, Gopal, will be great to understand what is it that has been the big pivot post the budget, according to you. What are you looking at differently post the budget?
Hi, happy to be on this show. I just want to remind you that private equity is a long-term asset class,
Sure.
and we look at things in 5, 7, 10-year time frames, and we don't necessarily pivot from year to year. I think there's been a reinforcement. I don't think there is a cause for pivot. I think there is a cause for reinforcement. I think the budget has taken a number of steps. It's a growth oriented budget while being a disciplined budget. And therefore, it reinforces confidence in the India growth story, in India's ability to remain the fastest growing large economy in the world. One of the big stories in emerging markets right now is the story of fiscal consolidation in India. It's possibly the most powerful tool of reform as to how the government controls its spending and spends in a controlled way. I think what we've seen on the personal taxation front is an extremely bold measure. I mean, how many budgets do you recall in which there was a reduction in tax rates? How many budgets do you recall in which policy has signaled the growing importance of India's middle class, right? And I think in some ways, I don't want to use dramatic terms, but this is, if you see the New India story, which starts from 1991, and I've had the privilege of watching it very closely over the last 34 years, this is the first budget which firmly and squarely places the spotlight on the importance of India's middle class, how the pendulum has swung and how now it is the sentiment of this middle class and the spending habits of this middle class, the savings habit of this middle class that is going to play such an important role in India's growth story.
Okay. What do you think from a consumer standpoint? Would the consumer be most focused on spending, given that you've got on average 50,000 rupees to 1.1 lakh rupees which are getting released to a large bunch of the middle class? Where do you think that they will spend?
That's difficult to say. I would say they will start with savings, right? Because household balance sheets are still being rebuilt. And household balance sheets were severely affected during COVID. So a lot of this is going to go into, some of it is going to go into savings. I think when it comes to consumption, the middle class is tantalizingly poised for discretionary consumption. But before that, there are increasing expenditures on education and education, housing, and healthcare, which allows the middle class to spend on these three. And coming to discretionary, there are some categories. Discretionary consumer is one of the powerful themes of India over the next 10 years. And this budget, in some ways, sets aside more rupees for the middle class to spend on discretionary consumer.
Okay. And Gopal, what's the sense like when it comes to, again, I know you suggested that as investors and as private equity, you all don't pivot too quickly. But if you see mega trends which have changed, budgets generally don't announce them, but there are times when you can see big changes with regard to trends in a budget. For example, the 2021 budget, huge focus on capex, right? You had, for example, railway, defense, all of those coming to the fore, infrastructure. Any change that you see in this budget at all from that perspective, from a government spend perspective, which could virtually drive up certain sectors, say a nuclear?
I'm going to come back to middle class taxation, but let's talk about nuclear.
Sure.
I think you're absolutely right. What has happened on the nuclear front, especially the civil liability part, is very welcome. Most of the gains from the India-US rapprochement in nuclear were given away by the 2010 Civil Liability Act. So I think addressing that is very important. Most people will not remember that we had a goal for 10,000 megawatts by 2000, and we are under 10,000 megawatts in 2025. So now the question is, can we be 100,000 megawatts in 2047? I think some part of it is done in this budget. The one that needs to be done is to solicit the private sector as a partner. Let us not forget that India's nuclear atomic journey actually started in partnership with the private sector. It was the Tata Group which initiated research in atomic energy, and there are many private sector groups that need to be partnered with. The private sector needs to be partnered with for this 100,000 megawatts to happen. Coming back to your point, what is the big shift from this budget? I think this budget is going to be remembered for the measures on personal taxation. For so many years, we've been talking about how corporate taxation, rates have been reset to a more reasonable level, and personal taxation rates need to be reset. Well, headline rates at the highest slabs still remain more or less where they are, but for the middle class, for a double income family to say that, listen, between 24 and 25.5 lakhs of income in a household is completely tax free. Could you have imagined that even 5 years ago? And for someone who's been around for a little longer than you have, it was unimaginable, right? When we came out of college, to say that 25.5 lakhs of income for a household would be considered as tax free.
Okay, all right. So those are views coming in from Gopal Jain of Gaja Capital. Thank you so much for joining us, sir, this afternoon and giving us all of that perspective. I want to also try and shift focus though and take Lancelot's views on some of these aspects. Lancelot, I know we've dissected the budget in a fair bit of detail and now we're on Wednesday. But how's the market playing this budget? Because what we saw is we saw a surge in consumption stocks, but we've seen an equally strong cool off. Are these good levels to enter some of the consumption names and play this 1 lakh crore rupees that has been freed up within the economy?
So, I think that initially when the announcement was made that we have, given up taxes of 1 lakh crores, the initial reaction was to go into and buy consumption stocks. But people have mentioned that it is not that everything is going to go into consumption. Some part will go into savings. Some part will go maybe into repayment of debt because personal balance sheets might be stressed and people will look at repaying debt, and probably some part will go into consumption. Again, consumption is a very broad term, so you break it down into the discretionary consumption. Then there's the consumer staples, which is basically your food, etc. And coupled with that, now we are seeing the results for this quarter clearly indicating that there has been a slowdown in consumption. And whichever companies have come out with their results, the outlook is that this particular situation is likely to continue for another quarter or more. And that is an area of concern because if your staples, consumer staples companies like your ITC, Nestle, Levers are all going to see a slowdown in volumes growth and which is likely to continue for a quarter or two, maybe till the monsoon, till you get a new monsoon, and till this impact of these lower tax rates begin to free up money in consumers' hands. It is a situation where the valuations that you're giving today are not immediately, they're not immediately cheap. So based on that, a lot of the stocks which had gone up on anticipation, that, consumption is doing very well, we are seeing a sell-off and they will get re-rated, post this quarterly numbers and maybe even post the next quarter numbers. You're going to see maybe a bit of re-rating happen in this sector. And thereafter, once you see the pickup happening, then people will start going back to, old PE multiples or higher PE multiples for this space. So I think given this intervening period, while you see this, the announcements in the budget and the results, they have contrary outlooks from the managements and it doesn't immediately flow. So we'll need to give it at least a quarter or two before you can safely say that yes, consumption is where one is going to be able to make money going forward in the next 12 to 24 months.
Okay. Shivangi, I want to take your view with regard to some stocks which are really flying in trade. Angel One, 361, 5 Paisa, IEX. Of course, largely in different sectors, but all of them absolutely on a tear today. Any of them standing out, and your views with regard to maybe one or two of them?
Definitely, of course, all the disclaimers and disclosures applied, all the brokerage related and the exchange related platforms are looking quite positive today, which is why BSE was one of my top picks as well. So now, of course, this space is, of course, looking quite positive, but I am restricted to, say anything further. But of course, one can expect a good up move here.
Okay, and any levels to look out for, especially with regard to where BSE is concerned or an Angel One is concerned?
Absolutely, BSE. I gave my targets. We are expecting around about 6,000 levels in BSE on an immediate basis. This stock is, both a trading and investment stock. It is a must-have. With the kind of increase in the retail participation that we've seen, and with the kind of awareness that is going on, with the regulators also improving their efficiencies, I think all these factors are playing in quite well for the entire sector, which is making these stocks poised upwards. So definitely, this one should be on radar.
Shifting focus though to consumption stocks, and we've been talking consumption pretty much for the last 15 minutes, but let's talk more near term. Over the last day or so, they're reacting because of Q3 numbers, at least some of them, and it's not been the best quarter for counters like a Titan, Asian Paints, Nestle. Mahima joins us to tell us what's gone wrong with some of these Nifty 50 names.
So I'll start with Titan. While the numbers looked good, the studded mix also improved, but the management commentary coming in is kind of the reason why the stock is seeing the fall. First of all, the first highlight from the con call was that the dilution in margins could take place in studded due to unprecedented rise in gold prices, which is why we're seeing the downtick in stock. And they've said that jewelry EBIT margins on a standalone basis will remain in the guided range of 11 to 11.5%. But after that, when Ajay Chawla was asked, he said that 11% is the stopping point after which the margins won't fall. In terms of prioritizing growth over margins, management has said that they'll definitely prioritize growth. And there have been developments in US that have kind of created noise around the gold prices, is what the management said. The first 3 weeks of January went well, but the 4th week of January saw this. And it's difficult to predict how Q4 will go because of the rising gold prices. And in terms of the gold on lease rates, they have gone up due to US tariff announcements, and supply and demand will kind of determine how gold lease prices go up going forward. Lab-grown diamonds, they've said that they've not seen an impact in the studded mix, but the management also said that they will identify certain markets where lab-grown diamond demand is really picking up and keep a close track of that as well. The next one is Nestle. Nestle has given a guidance that their out-of-home consumption is expected to double by 2030, and contribution to sales for new products is expected at 10%. In terms of outlook, food inflation continues to hurt consumption, high prices persist on select agri-commodities, and slowdown in growth is something that they've been seeing and will continue going forward as well. Rural is outpacing urban, which has been the story in the past 2 quarters as well. Growth metrics is now shifting from its current curve to a more favorable trajectory ahead, is what the management said. The next is Asian Paints. Asian Paints has given a pretty bearish commentary, which is why we're seeing the downtick in the stock. Volume growth was at 1.6%, but value growth for them this time was negative 1.7%. They've said that they saw weak festive demand and slowdown in urban centers, and what they've said is that going forward, price hikes hangover will be carried forward in Q4 as well. Stress in urban areas to continue going forward is what the management has said, and rural is however expected to continue to recover gradually. They expect some softening in the raw material prices, and their EBITDA margin guidance is maintained at 18 to 20%. Some shuffling of markets with respect to the competition coming in has happened, but it has not affected much and it's not significant. However, he also mentioned, Amit Singhal also mentioned that Grasim has scaled up in terms of touch points, but they are yet to see the impact in terms of value proposition. And they've given a guidance that they aim to have a single-digit volume growth going forward as well. So this is the overall roundup of what happened with Nestle, Asian Paints as well as Titan.
Well, extremely detailed. Thanks so much for that, Mahima. And, I'm also going to take this chance to thank Shivangi as well as Lancelot for joining us this afternoon. Thank you so much. both of you for joining us and giving us all of those views. But before we slip into a break, let's hear a view coming from the management of Asian Paints as well as Titan. They're talking about what led to the muted growth in Q3 and if there is any hope for a pickup thereafter. Listen in.
Overall, this year has been very, very different from so many years, more because of, I think, the overall demand conditions have been fairly muted. We've not seen possibly a year like that, in the last 2 decades or so to that extent. And therefore, what we feel is that it's not something which is just a competitive effect or it's happening because of any other big structural change. I think it's just the overall consumption in terms of which is there. Some possibly consumption trends have been very different to that extent. As we kind of look forward, I think it will take some time before the demand really comes back in its full form and shape to that extent. And therefore, I think going ahead, possibly, I think the areas of projects, industrial would kind of still go much better than the core retail home segment in terms of what we see to that extent. And looking at this, possibly, I think it will take a couple of quarters before we start really seeing much better demand conditions in terms of going forward.
See, the challenge that we have is our main business, which is 80% plus, continues to grow at this rate. And therefore, because of its share being so high and it continuing to grow at, if I add the global part of jewelry, which is Tanishq outside India, the growth rate is even more. And therefore, any emerging business has to grow at many times that for the needle to move on its share. So that's a generic problem with the nature of the portfolio that we have. Having said that, certainly we need to do rather better on the emerging business growth. And while there is a certain perspective of why Taneira appears not to have done so well in Q3, because there was a buy and sell channel called L3, which did very well in Q3 of FY24, and we have contained the expansion of the network in order to consolidate and grow at a same store level. So this angle is depressing the actual performance of Taneira in the current quarter. Not that it is satisfying by itself, but it is better than what it appears. We need to do a lot of better work. We haven't got our act right, honestly, on getting enough customers to come to the stores of Taneira. Even though when they come in, they're bowled over by what Taneira has to offer. So it's our challenge and task to get lots more people to become aware of what Taneira is. Work has begun, and we are hoping to see results in the next few months.
चला पटकन पटकन. Hello and welcome to NDTV Profit.
The blessings of Ma Lakshmi that Prime Minister spoke about, will they shine on the middle class and the taxpayer?
The market will not be disappointed.
Finance Minister Nirmala Sitharaman with the Bahi Khata, they're getting ready to go in and present the budget.
I present the budget for 25-26 that there will be no income tax payable up to income of 12 lakh rupees.
ये बजट जो है बहुत ही आर है. इसका मतलब ये हुआ कि रिफॉर्मिस्ट भी है, रिस्पॉन्सिबल भी है और रिवॉल्यूशनरी भी है.
जब मैं था तब हरि नहीं, जब हरि है मैं नाही, प्रेम गली अति साकरी, जामे दो न समाए.
This is another level. This is
how a special Saturday session should end.
regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Sources tells NDTV Profit that budget is expected to propose the draft of the new income tax bill. In fact, the draft bill is expected to find a mention in the FM speech on February 1st.
I also propose to introduce the new income tax bill next week.
They're looking at, how to sort of reduce the number of slabs which is there in custom, which is like 12 or 13 slab, and how to bring it down to 5 or 6.
As a part of comprehensive review of customs rate structure announced in July 2024 budget, I propose to 1. Remove 7 tariff rates. This is over and above the 7 tariff rates removed in 23-24 budget. After this, there will be only 8 remaining tariff rates, including 0 rate.
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal.
Welcome back. You're watching India Market Close here on NDTV Profit. I'm Harsh Saida. With me is Agam Vakil. And Agam, there are a few stocks buzzing in trade, more in the broader markets than on the benchmark.
Yeah.
Any ones in particular you want to quickly highlight?
I want to talk about, trend is one of them. What's really happening here is that it's off days highs. Of course, this is ahead of earnings. The earnings are tomorrow. By the way, tomorrow is going to be yet another day where it's going to be very, very heavy in terms of earnings, not just from the consumption space, but also from pharma and the chemical space.
And banking, SBI.
Right, that's the big one that we are watching. Tomorrow is going to be, tomorrow and day after, going to be a day of days of trade, which there's a lot of volatility. Let's not forget Friday is where everyone's keeping an eye on the RBI, especially this time, where there could be a movement in rates. But, I'm not going to speculate too much on it because there's a lot of hope with respect to a possibility of a 25 basis points rate cut. But besides that, markets are, at least the benchmarks are flat and not too much happening otherwise. I reckon all the stocks, or rather most of the stocks that we're tracking right now are moving on the back of earnings, Harsh.
Yeah, absolutely. And of course, we'll try and get more perspective on some of the stocks which are buzzing in trade. But on to our new segment, Heard on the Street. NDTV Profit brings you all the chatter from dealing room. My colleague Somit Sarkar joins us daily on this segment. Somit, what are you finding today? What are you hearing about?
Well, the first stock on the list is Cyient. The stock is already up 4.5%. The potential buzz, or what dealers are indicating, is that the announcement related to the new CEO might come in anytime soon, and most likely the new CEO will be from the IT industry, someone from a bigger or a larger IT company is what the street is expecting. From the top 4 or the top 5 IT companies is what the street is expecting the new CEO to come in, and hence the stock is up 5% now in trade. So that is one stock that we need to watch out for. Apart from that, it's ITC. Active buying interest is something that we have been seeing, especially when it comes to DI and FI desk. Now, after the budget, we have seen a sharp run-up when it comes to ITC, because the major overhang that was there related to the tax on cigarette, that has now moved out. And post that, we have been seeing strong buying interest. There could be some profit booking in trade today, but from the HNI and retail side, but DIs and FIs are actively buying this counter. Now, if you also look at the chart, the long-term chart of ITC, it has been quite range-bound in the range of around 440 to 460. So we could see it moving up from this range bound that we have been seeing about the 460 level anytime soon is what the dealers are indicating. Then there is Enviro Infra. Now large HNIs have been seen accumulating this counter ahead of the numbers. Now we had seen a sharp fall in the share prices of Enviro Infra. In the last 4 months, it has fallen around, not last 4 months, in fact, since December, the stock has fallen around 33%. Valuations appear to be now cheap, so large HNIs have been accumulating this counter just ahead of the numbers. And lastly, it's Cummins. Now, since yesterday, if you look at Cummins' stock price, since the guidance was given by the global company, the stock has seen a sharp up move. In fact, from yesterday's low, it has jumped up nearly 10% odd. But what dealers are indicating now is that large HNIs have been selling this counter at higher levels. Now, do remember the company is supposed to report its numbers tomorrow, but the indication that has so far come in from the parent company is that it could be a good set of numbers because they have upped their guidance also, and positive commentary had come in. The stock had run up, but now large HNIs have been seeing that they have been selling this counter at the high levels.
Right, Soumya, thank you for all those stocks. And of course, two of these counters are going to stay in focus on account of earnings too. So one is ITC, of course, because they'll announce their earnings tomorrow. And well, let's not forget, among the others, we're also keeping an eye on Trent and many others that we are going to be expecting earnings to come through. So plenty to keep an eye on there. But on that note, let's get in. Well, Kush Bora, he's the founder of kushbora.com, and Dharmesh Kant, he's the head of equity research at Chola Securities, who joins us on the show. Good afternoon to both of you, and thanks for joining in. Kush, I'll start with you. It does seem like at least the benchmarks are holding up right now, even though we're not looking at a considerable surge, the kind that we saw yesterday. How are you viewing the Nifty and the Bank Nifty this afternoon?
Hi, Agam. First, very good afternoon. Hi, Dharmesh. I think we've been discussing these levels of 23,800 on the Nifty for a while now. I think Nifty is poised for 24,000 kind of a move as well. But I think not a bad idea to take money off the table partially. So what I'm suggesting on Nifty is a partial book profit. The reason for that is that we've seen a goodish bit of recovery. From the lows of 22,800 thereabouts, so about 1,000 point kind of a recovery on the Nifty already. We are seeing a lot of sectors participate, but ahead of a big event, which is perhaps touted to be just as big as the budget, in terms of its nature of criticality. I think it's not a bad idea to take some money off the table, just because if there is any minor disappointment or so, the indices might just slip and perhaps give you an opportunity to enter into once again. This holds true more so for Bank Nifty, which is actually doing rather well today for itself. I think all the expectations of a 25 basis point are factored in already. So even if you get that, I don't know if that will be enough to push the Bank Nifty higher. So only from an event perspective, I suggest a partial book profit on the Nifty and the Bank Nifty both. However, my view remains bullish, which is 24,000 kind of levels, as the next target on the Nifty, about 51,000, 51,500 on the Bank Nifty. But just before the event, you might just want to have a slightly light position going into the event.
Okay, I want to quickly highlight was on your screen, Thangamail. Stock is up 16% on the back of very, very strong numbers. Your revenue is up 26%. EBITDA up 63%. Margins have moved from 5.7 to 7.3%. On a YOY basis, net profit is up 72%. So very, very strong numbers. You can see the 15% spike on the stock. But, where Dharmesh is concerned, Dharmesh, I'm curious, what do you make of consumption? We're speaking about maybe 1 to 2 quarters out, more disposable income in the hands of the middle class. I want to try and get your sense on what's the best play, and at the same time try and couple it with some of the numbers that have come through. A Nestle, a Titan, and even the one which has come this afternoon, Page Industries. The margin uptick doesn't seem material where Page Industries is concerned. What is your thought? What's the view here that you're getting?
Yeah, good afternoon, Harsh. Good afternoon.
Good afternoon.
Kush and all our viewers. See, first of all, this tax benefit which has come is just 0.28% of GDP. So 1 lakh crore and 1 lakh in the hands of middle class taxpayer, if you are earning 25 lakhs and above, it does sound a bit, interesting. But this is hardly any money to boost consumption space. Plus the discretionary where this money will actually go, whether it will go to reduce your EMI or old debt burdens, or you are going to spend it on tourism, or you buy some mobile phone and all. This is all a wide speculation. Going by the number of all the consumption plays, so the volume growth is very anemic, and I don't see that recovering in next 2 quarters. So, and see, it's not a one-day shot you are getting. It would be translated over a period of 12 months. This money will come, and my own sense is rather, I mean, it should be very skewed kind of a spending if at all it happens, and it hardly will move a needle on the profitability and volume growth of FMCG players. So, to my mind, it was just a trade. I mean, a feel-good factor trade which has played out. And if you see the last 2 days of trading activity which has happened in all the consumer space, it's a selling which is happening out there. And precisely because when the analyst sits and extrapolate that on their Excel sheets, they are not finding any value moving, EPS upgrade. So that is the take on the consumption space. I mean, for savings part, it's okay, but nothing great about it.
Kush, it's a mixed market in general overall. Any trading ideas? We have about 45 minutes of trade left. What would you do at this point in time?
Sure, Agam. Two ideas, both of them on the long side. Today, the healthcare space seems to be buzzing. A couple of names in this, more than a couple of names in this space are actually doing rather well. The one that I have shortlisted or picked is KIMS, Krishna Institute of Medical Science. This stock has had a good run up over the last, 4 to 5 sessions. If you see today, also the volumes have seen an uptick, comfortably sustaining above its near-term averages. So I think from a near-term perspective, 670, 690 being your target, 630 is a stop loss. A long position can be considered. On the other hand, one of the picks has to be from the financial space, right? So, this is L&T Finance. Here too, we've seen a bit of a bump up about a month and a half ago. But the stocks zoomed, above the resistance levels of 146, 147 in the last 3 odd sessions. Right now, we're seeing a golden, crossover of the 20 and the 50-day moving average. So this momentum could continue at least up until Friday. So 156, 159 are the targets. 151 is where you place that stop loss.
Okay, interesting. So those are some names which Kush is constructive on. I want to quickly again switch focus. Ola Electric. Making an entry into the electric motorcycle market. They've launched 5 variants of the Roadster X Electric in the motorcycling segment. My colleague Haripriya was at the location and in fact is at the location and joins us with a walkthrough. Haripriya.
Ola has entered the motorcycle market in India with the launch of its new e-bike series called Roadster X. The company has launched 5 models of bikes in the Roadster X and the Roadster X Plus segment. The bike comes in multiple variants from 2.5 kilowatt per hour to 9.1 kilowatt per hour. This has the Bharat Cell 4680 and is built on Ola's Gen 3 platform. It has brake-by-wire technology with single ABS and Smart Move OS 5 features. The Roadster X has range of 140 kilometers to 252 kilometers, and the Roadster X Plus has 252 kilometers to 500 kilometers. The top speed for all these vehicles range from 105 to 125 kilometers per hour, and these are priced across different models. It's priced from 90,000 to 1,70,000, and the delivery start by mid-March. This marks the official entry of an EV player in India's motorbike space with camera person Govind. This is Haripriya for NDTV Profit.
Okay, well, exciting times for Ola Electric, certainly. And well, it's not exactly been the best of times since its listing for Ola Mobility. If you just, I'm actually looking at the way things are panning out. It's actually around the place where it listed at. and that's around 75 rupees per share. Since then, it had moved all the way and doubled up and moved up to 150 rupees per share, and then eventually it's corrected, and it is where it is right now. The question really is that is this a good time to look into something like an Ola Electric? So Dharmesh, this question is for you. One, your view on Ola Electric, and if there is an alternative in the two-wheeler space at this point in time.
Yeah, I mean, there has been too much volatility in Ola Electric based on the fundamentals which has been playing out for this company. The company has been aggressive in launches and aggressive in discounts being offered on their bike sales. So they are doing, and they're feeling the heat of the competition. I mean, it's not very easy, right, for them. To my mind, investors will have a serious look on Ola Electric only after, say, 1 year down the line. So they will like to see how the market share gain happens and how they are able to capture on the market share through the new launches. Because let's not forget there are other players who are also, gunning up very fast in the same space. Having regard to present context about how the things are playing out, and if RBI does oblige us with a rate cut, and this on the back of the tax benefit which is going to come through the budget, to my mind, entry-level segment will have a traction playing out, and this is also a marriage season and a bit of a festive season playing out. So next 2 quarters are good for OEM manufacturers, especially in the entry-level or two-wheeler side. There, I think Hero MotoCorp along with TVS Motor poses a good buy traction rather than a place like Ola Electric. So given a choice, we would be buying into Hero MotoCorp and TVS and not Ola Electric.
Okay, all right, gentlemen, stay on. We're going to have a quick conversation with the management of Symphony. We have Rupesh Shah joining us, Managing Director of Symphony Limited. Now, great having you here, sir. I want to first try and understand from you, how has the quarter gone by in your assessment? Because numbers look slightly muted at the outset.
No, you are right. So in terms of the top line, they are muted, almost flattish, whether on a standalone basis or for subsidiaries. That's number one. Secondly, even margin are also slightly muted. However, there is much beyond that. We have come out with 17 new models of air coolers, and towards them, as well as existing models, we have received excellent high amount of advances which remain unbilled as on 31st December, because production of new models were slated to start from some in December and for many others in January and February. So that billing will happen in March quarter, essentially spillover from December quarter to March quarter. But end to end, year as a whole, nothing to lose. The reason being, consumer sales happens during summer. This so is 100% advance sales to the our trade partners, and that too, new models are also margin accretive.
So, Mr. Shah, how does the fourth quarter look like considering a spillover effect? Because you're saying that some of the impact will come through then. What can we look forward to as far as the fourth quarter is concerned? One, and secondly, does that also mean that margins can improve in the fourth quarter?
As I said, of course, spillover and overall traction, especially for new models across the geographies and various trade channels, is very strong. And we at this point of time are very optimistic about the March quarter performance.
So where is it that you expect to close FY25? Do you expect a growth of 20% plus for the year FY25? Where should you look at the overall number?
So as per our IR policy, I cannot give any forward-looking statement, including estimates. However, we expect year as a whole to be quite decent one, and expect to register much better performance YOY.
So what about markets abroad? How are things shaping up there? What can you tell us about the possibility and contribution coming in from those geographies?
about bad news first. So about climate technology, Australia not really doing well. It is continuously incurring the losses. However, it's both the phase of transformation and transition is done, and with the launch of new models and converting into asset light, coupled with substantial reduction in CODB down the line, we expect to do it better. As far as IMCO Mexico as well as GSK China are concerned, they are doing extremely well. They have posted decent performance, and so is Brazil. And year as a whole also, all these three companies we expect continuously to deliver well.
And so what's the outlook with regard to consumption? Because the government has done its bit with regard to pushing spend. Putting more money in the hands of consumers. Do you expect that, or do you expect yourself to be one of the bigger beneficiaries of that spend, or do you expect the spend to be skewed elsewhere? You have a very good lens, and therefore it'll help your perspective.
True. So our product fortunately exactly fits into that pocket, and our class of consumers also fit into that pocket. So we expect that our product category should really benefit.
Okay, Mr. Shah, we leave it at that. Thank you so much for joining us and taking us through the quarter gone by, and as well as what we can expect going forward. Challenging quarter, but expecting a much better quarter coming in as far as Symphony is concerned in Q4. We'll be watching out for a handful of revenue elements coming in, which will be spilled over as per the management. But artificial intelligence is the talk of the town. My colleague Rishabh Bhatnagar had an exclusive conversation with Paytm's Vijay Shekhar Sharma on the opportunity in India. Listen in as we slip into a quick break. Back in just a bit.
It's very clear that AI and the big market of AI as consumer volume will be in India, and the enterprise technology capability of India are very good. So being a native English country for enough number of customers and enough number of enterprises, it becomes a very good market. So different startups, investors and entrepreneurs were trying to find out which value chain role is the offering that they should focus on.
So, any talks on now India is on its way to build its sovereign AI foundation model हम बना रहे हैं. DeepSeek ने एक चुनौती पेश की है. What is the sort of vision that now we have as a nation versus what OpenAI is also willing to contribute?
Yeah, I think OpenAI will contribute what I think there were wider discussions, so I would not talk about that. But इंडिया की अपॉर्चुनिटी है इनोवेशन एंड डिलीवरिंग स्केल इनोवेशन एट अ वेरी मिनिस्क्यूल कॉस्ट, एंड आई थिंक वीव सीन इट इन नंबर ऑफ स्पेसेस. सो कैन इंडिया बिल्ड a very low cost to customers, whether enterprise or consumers, a model that is as good as these models are, and that is the opportunity for India, I'd say right now.
Right. BSS, how excited is Paytm about AI, right? You have introduced AI in terms of customer service and customer support. That's basic level stuff. What are we seeing from Paytm coming in now?
I think there is no doubt about it that the amount of knowledge of the ecosystem that we carry, we can bring a more native financial system model, and that is something that we would delve into internally and figure out a right point when we can try doing it. So expect us to do a vertical industry work on AI. Let's say that.
चला पटकन पटकन.
Hello and welcome to NDTV Profit.
The blessings of Ma Lakshmi that Prime Minister spoke about, will they shine on the middle class and the taxpayer?
The market will not be disappointed.
Nirmala Sitharaman with the Bahi Khata. They're getting ready to go in and present the budget.
I present the budget for 25-26 that there will be no income tax payable up to income of 12 lakh rupees.
ये बजट जो है बहुत ही आर है। इसका मतलब ये हुआ कि रिफॉर्मिस्ट भी है, रिस्पॉन्सिबल भी है और रिवॉल्यूशनरी भी है।
जब मैं था तब हरी नहीं, जब हरी है मैं ना ही, प्रेम गली अति साकरी जामे दो न समाए।
This is another level. This is another level.
This is how a special Saturday session should end.
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Sources tell NDTV Profit that budget is expected to propose the draft of the new income tax bill. In fact, the draft bill is expected to find a mention in the FM speech on February 1st.
I also propose to introduce the new income tax bill next week.
All they're looking at, how to sort of reduce the number of slabs which is there in custom, which is like 12 or 13 slab, and how to bring it down to 5 or 6.
As a part of comprehensive review of customs rate structure announced in July 2024 budget, I propose to 1. Remove 7 tariff rates. This is over and above the 7 tariff rates removed in 23-24 budget. After this, there will be only 8 remaining tariff rates, including zero rate.
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects.
Is considering to increase the custom duty on
Welcome back. You're watching India Market Close here on NDTV Profit. Kush, want to quickly take your views on a couple of counters which are, are looking slightly volatile at this point. One is a Keynes Tech. It's fallen 4% from the day's high. The other one is Credit Access, which has just fallen off a cliff. I wonder what's happening in a couple of these counters, because Credit Access in particular has been buzzing for quite a bit. So just wanted your views.
Well, not too much wrong with Credit Access, at the moment. I mean, it might be slightly off the highs, but other than that, it looks on a fairly decent footing at the moment, if you ask me. The volumes are a little thin for my comfort, but that's to be expected ahead of an event. So if you have a long position, continue to hold that with a stop loss around the 1015 mark. But I wouldn't initiate a fresh position on this one. The scheme seems to be losing out. Now, as far as Keynes Tech goes, yes, I mean, the stock did attempt a revival or a recovery from around the 200-day moving average for the last 3 to 5 sessions, but has given way. The volumes have increased on the way down, which is to be expected. So I think here some more downside cannot be ruled out. I wouldn't be surprised seeing the stock slip to 40 to 50, perhaps even 4100 kind of levels before it hits that oversold territories and see some kind of a rebound.
Okay. All right, Kush. I want to also focus in on one story in particular. We have India level CNG registrations, which have gone up 34% YOY to 1.5 lakh vehicles. This is implying penetration increase from 16% last year to 19% now. Somi joining us with more perspective with regard to this metric. Stands out.
Well, as per the Vahan data, what we're understanding is that in the month of January, the state-owned city gas distribution companies, or the areas that is managed by state-owned city gas distribution companies, has seen a significant jump when it comes to CNG vehicles. Now, all over India, if you look at the number, has increased by nearly 34% on a YY basis, which implies that the CNG penetration has increased to nearly 19% of the 16% number that we had seen last year. Now, for Gujarat Gas, if you look at the CNG registration number has increased by nearly 30%. For IGL, it has increased by, for Gujarat Gas, it has increased by 33%, for IGL by around 30%, and for Mahanagar Gas, we have seen a strong jump of nearly 43% on a YY basis. Now, seasonally, if you look at this January month, it is usually a strong number that usually comes out, but what analysts are indicating is that even after factoring in this seasonality, this month, the number which has come in is pretty much strong. In fact, we also need to keep in mind that all the city gas distribution companies, except for IGL, had taken a price hike in CNG prices to factor in the lower APM gas allocation. So despite this price hike that has been taken, we are seeing a strong CNG adoption in the country, which means that the price hike has been completely absorbed without a volume hit, which is the most important part here, which means that volume growth would continue for the city gas distribution companies. Now, Gujarat Gas and Mahanagar Gas have already taken a price hike, while Indraprastha Gas is yet to take a price hike, at least in the Delhi region. Apart from the Delhi region, they had taken a price hike of around 3 to 4 rupees, but Delhi contributes the main volume for the company, which is nearly 70% of the volumes come in from Delhi. So they are yet to take a price hike in Delhi, and most likely this price hike could be announced post the election results come in. So keep an eye out for IGL, given the fact that price hike is yet to be announced, and CNG volume numbers are pretty much strong. So the company might take a price hike going forward.
Samit, hold that thought. We do want to talk about one of the other stories as well. But before I come back to you, I want Dharmesh's view on the city gas distribution sector at this point in time. Dharmesh, what are you making of the cues at the moment?
Agam, see, it's a utility play, and you don't have a choice as far as CNG gases are concerned, especially the domestic gas consumption. It is there. But the problem is with these distributors, because you don't know when government will come in, when they will lower the allocation of the gas prices, and there are many ifs and buts attached to the pricing of the product. So that comes to the fact that you cannot determine the profitability. So you can play the cycles in between. I mean, if the stock price is corrected and you are finding some value, you can just play a trade. But from here on, earlier than, 3 years, 4 years back, we used to think that it's a very good compounder for next 10, 12 years. Which is now under cloud with government intervention time and again. So that is one factor. Otherwise, it's a good play if you are having it in a portfolio for, say, longer duration, 10, 12 years kind of a portfolio play.
Okay. Well, that brings us to the other story that Samit had for us. And this time it's Goldman Sachs, which has also have a note on OMCs. Samit, what is that broking firm telling us?
Well, yes, Goldman Sachs has upgraded the entire OMC counter, be it IOCL, HPCL and BPCL. Now, the main crux behind this upgrade is, firstly, they are saying that the sharp fall in the share prices, that is factoring in completely the no LPG compensation that OMCs have not got, and apart from that, it is also factoring in the lower crude oil discounts that they are getting currently from Russia. So, the reason why Goldman Sachs has upgraded is because of the sharp fall in the share prices of all the three oil marketing companies. Apart from that, they are they're also saying that upside for crude oil prices is largely capped, and they're expecting crude oil to remain at around $75 per barrel level. And when it comes to gross refining margins, they're expecting gross refining margins to also remain stable. Apart from that, they're also saying that that there could be a sharp recovery in the free cash flow of the oil marketing companies in FY26, and as per the brokerage, that is the key driver for the share price. That could be the key driver for the share price going forward. Now, for IOCL, they have upgraded the rating to neutral from a sell rating and have hiked the target price marginally to around 110 rupees. They are saying that the stock has largely underperformed and risk reward appears to be balanced at this moment, hence a neutral rating. When it comes to BPCL, they have upgraded the rating to buy from neutral and have marginally cut the target price to 360. They are saying that the company, despite the capital expenditure that is expected to happen going forward, the company could generate around 10% of its free cash flow yield into FY26. And but when it comes to HPCL, it's not only an upgrade but also a target price hike of around 400 rupees from earlier target price of around 370, and they're expecting HPCL's EBITDA to grow at a CAGR of nearly 40% over FY25 to FY27. So largely this upgrade is on the back of the sharp fall that we have seen in the share prices of all the three oil marketing companies.
Okay, thanks so much for that, Soumit, for all of that perspective. Dharmesh, let me come to you with regard to OMCs. Want your quick take. First off, you've seen oil prices go up, some bit of pressure likely therefore on some of these OMCs, but is this a good time to accumulate some of these, or do you expect more pressure going forward?
More pressure going forward, not because of the oil prices going up, but because of the demand which is likely to slowly and gradually evaporate for the refined oil products. So it is the petroleum and diesel product, largely because we have seen the speed at which EV adoption is happening, and likely and in a year's time frame you will have also hydrogen coming into the play along with the natural gas. So too many alternate renewable energy sources are coming into play, which caps the volume growth trajectory for most of this refiner over a long period of time. Value wise, if you look at replacement cost basis, there's a huge value out there, but if the refiners themselves are not required, then where you will find ethanol blending part story played out for some time, but even I think that is also on the sunset side. So to my mind, it's a commodity cyclical play. It's a more of a trading play. Kush would be great. He is a great guy who would be recommending you when to buy and when to sell. But from an investment perspective, for long-term portfolio, it doesn't merit a case in your portfolio.
Okay. Kush, OMCs, but along with it, can I also club an ONGC and probably take your views? Any of these looking attractive to you?
First, thank you so much, Dharmesh, for those kind words. And this is where technicals and fundamentals marry. HPCL, IOC, BPCL, all avoid.
Okay, so, and what about ONGC, Kush?
ONGC, again, this has been in a broad range, and typically oil and gas sector hasn't really been a wealth spinner for a while, right? So if you see ONGC also, it's trading in that band of 270, where every time it moves towards that range, you see some sort of selling pressure on the downside. 245, 250 is the range. I wouldn't really play some of these names. Now we've got banking, IT, some of the other plays also coming in on the short side. Also, there are some plays coming up. Why would you want to play something which is not really giving you a directional play? That's specifically for ONGC. HPCL, BPCL, IOC, these are your typical short candidates, at every rise. So these are the stocks that you use in futures to hedge your portfolio. So I wouldn't really venture a long trade on these. Maybe some more rise, and there could be another shorting opportunity on some of these names.
Okay, well, time to get in Varsha, who's going to tell us about what Investec makes of Vijaya Diagnostics. It's an upgrade here, and that's possibly one of the reasons why it's also advancing by 7% right now. Varsha, what can you tell us?
Yes, thank you, Agam. So, yeah, the Investec has actually upgraded Vijaya Diagnostic to buy from hold. They've even hiked their target price to 1,265 from 660 earlier. Now, let's see what are the key reasons for that. One is Vijaya's organic growth has been accelerated to 20%, and also quick ramp up of new centers is one of the reasons why they've given, buy. And this is a massive outperformance over pathology players growing at a lower double digit. Investec believes that the Vijaya's strong net cash position of 2 billion places it well more in a good stance for acquisitions which it's going to do in the future. And the company has been expanding into new markets such as Pune, Kolkata, Bangalore, reducing the geographic concentration risk that the investors always worry about Vijaya Diagnostic. So now that risk is Vijaya is trying to mitigate. And lastly, the upgrade has been given as investors expect continued outperformance given the strong execution that the Vijaya has given.
All right, Varsha, thank you so much for getting us those updates on Vijaya Diagnostics. Again, Kush, I'm coming back to you on this one because we've seen a little bit of volume spurt as well today. Do you think that it could make a new high? Do you think it's on its way?
On its way, for sure, Agam. We were seeing a V-shaped kind of a recovery on this one, almost precisely from the 200-day moving average. In this move that it's made today, it's taken out some of the key resistance levels around the 1100 mark, also the key averages. So if you go by that simple analysis, also I think the stock's actually given you a breakout. We are seeing an uptick on the momentum indicators as well. So I think this rally could well continue. From a fresh position perspective, my targets on this one would be 1225. Once that is taken out, you're looking at a 1280 where the recent swing high is. Stop loss on the downside comes at the 1100 mark, which I said was a resistance, will now act as a support. So I think good breakout, volumes still picking up. So there could be a further bit of upside left in this one.
Okay. Dharmesh, we're going to have to let you go. So thanks so much for joining us. But before I do, actually, can I quickly take your views on a Vijaya Diagnostic and other diagnostic players as well? Very quickly.
Yeah, Harsh. I mean, see, this hospital healthcare chair is very, critical, and they are consistent compounder as far as earnings are concerned. For Vijaya Diagnostic, I think it's very expensive. I mean, 80, 90 kind of a PE multiple with 12-15% kind of a growth rate is not justifiable in this kind of a market. You have to be very conscious of the valuation of the companies which you are picking up. There, I think, hospital chain prefers a better bet. And there we have a good pick on the Narayana Hridayalaya. So if you come look at the ROE multiples of 29-30 kind of an ROE, almost double than that of any near competitor like Apollo Hospital with a PE multiple of 33-34, where others are trading at 50-60 PE multiples. So be value conscious what you are paying for your investments, but the space looks attractive to me, the entire space. So there the topic is Narayana.
All right, Dharmesh, thank you for joining us and giving us your views on the many discussions that we've had as far as markets today are concerned. But let's move on and talk about how markets are faring. And it does seem like the Nifty has gone into the green right now. Some selling returning to the benchmark indices, as is the case for the Nifty Bank. Well, it's still in the green. The Nifty Bank is still in the green. But there's a clear case of outperformance when it comes to the mid-cap and the small-cap indices. So it does seem like a handful of counters from the broader markets are continuing to see strength, driving these broader market indices higher as well, as has been the case of late. But let's talk about yet another brokerage call. And we have Mihika, who's joining us to tell us about what Motilal Oswal has made of Acme. Mika, over to you.
Yeah. So Motilal Oswal has actually initiated a buy rating on recently listed Acme Solar with a target price of 330 rupees. Now, it's on the basis of how the company is fueling for a greener tomorrow. It's a focused play on renewable energy generation is what the brokerage has to say. Now, it's modeling a strong 52% EBITDA compounded annual growth rate for the company over FY24 to FY27. And it's noted how 100% and 83% of Acme's FY26 and FY27 upcoming capacities are backed by power purchase agreements. Acme is also trading into complex projects which will help the company preserve mid to high teen internal rate of returns, which is a positive. EPC margin, debt financing and operating cash flow is what's expected to fund growth for the company. However, there are certain risks, delays in PPA signings and high competitive industry, but there is a valuation gap between Acme Solar and NTPC Green, which is expected to narrow, and there's limited downside risk from here on for the company.
It's very interesting, Mika. Thank you so much for joining us and giving us that perspective. Agam, when I was going through that note earlier today, it was showing how valuations within the green energy space are elevated.
Yes.
and how this one could well turn out to be a bargain buy. So 10% move today, but what Motilal is suggesting is a 50+% upside to yesterday's close, and therefore substantial move warranted. And even after that, they're penciling in nearly a 25%, at least 25% discount to NTPC Green's current valuation, and nearly a 30% discount to the average valuation that green power companies command, something like a Tata Power's subsidiary, etc. Or rather, that's broadly how analysts are valuing some of these companies, and therefore large margin of comfort is what really stood out for me. But what's it looking like on charts, Kush? I'm curious to know.
Rather limited data. Apart from whatever I have, I can tell you that the 230 to 240 mark is a bit of a supply zone. We've seen a big move, come in today. But if we don't see a follow through, then I'm afraid this rally might fizzle out. So wait for one more day, see if the 240 level is indeed taken out, because as I said, that appears to be a bit of a supply zone where the stock spent a goodish 15 sessions, unable to cross that band, and then actually fell through to 175 levels. 240, that's the level that I'm looking at. Once that is taken out, perhaps this uptrend could resume to much higher levels.
Okay, so wait and watch actually of sorts that Kush is recommending. But earlier in the morning, we also spoke to the MD and CEO of Tata Power, Dr. Praveer Sinha, who talked about how their FY30 guidance of achieving 2.5x of FY24 PAT will actually materialize. Let's listen in to what he had to say.
It's not only renewable will play a very, very important role, because nearly 60% of our capex goes there. But we will also be growing in our transmission business, in our distribution business, and in our pumped hydro and hydro business. The work in the pumped hydro has started. The work in the hydro plant in Bhutan has started last month itself. So I think we are very much on track, and I don't think there are many players in the sector who have been able to start the work at the speed at which we are going. The work on the second pumped hydro of 1800 megawatt will also start in this year. We are going through the process of various clearances. The work on the second hydro in Bhutan will also start in this year. So I think in terms of speed, we are possibly one of the fastest in this sector. And notwithstanding the fact that there are huge challenges sometimes in getting land and the evacuation and all that, which is not in our control. So I think we have a very strong pipeline, and what we have demonstrated in 21 quarters of consistent performance, you will continue to see that in future also, and much better and much higher increase in PAT and EBITDA numbers. So I think we have surprised everyone consistently, and we will continue to surprise in future too.
Okay, I guess it may not be a bad idea to take a technical view on Tata Power as well from Kush. Tata Power currently is at around 366, and I know that it's a relatively tougher time for a lot of these stocks to perhaps discern as to where the direction will be. But the other positive is that a majority of these stocks are now coming off their recently made lows. Kush, how would you address Tata Power? Is there some weakness still in store here?
There appears to be, Agam. The rebound that you've quite rightly mentioned, that some of these names are showing, including Tata Power, mind you, is actually from deeply oversold territories on the technical charts. The stock had actually gone all the way up until 500, close to there, those levels, and then dipped to 340. So quite a bit of selling, and rather aggressive one at that. So right now what you're seeing is some sort of a consolidation around these names. But again, the weakness persists because they're not able to take out some of the key technical levels, 375 being a very important resistance level for Tata Power. If that is taken out, then I think the near-term base formation and the recovery that you're seeing might actually extend to 390, perhaps even a 410 kind of a level in the near term. But if not, then it could just consolidate sideways. So given the lack of very clear directions and a lack of very clear trend on this one, I wouldn't recommend a fresh initiation. If you've got something, hold on. The stock is attempting a base formation. If that happens, as I said, 410 is perhaps the next level that the stock could hit.
Okay, so keep your eye out on Tata Power on the back of that. But you have a couple of companies which will come out with earnings tomorrow. Auto major, Hero, and you'll also have the largest bank in the country, SBI. And to give us a lowdown on what to expect, we have Vishy joining us as well as Puneet joining us. Puneet, let me go to you first. Hero, what do you expect?
Well, it's expected to be a weak or flattish quarter for something like in Hero MotoCorp. Roughly about a 6% revenue growth expected in this particular quarter at 10,234 crores, while the EBITDA is expected to rise by roughly 40 basis points to 14.4%. Profits are expected to rise by just 6% again to come in at 1136 crores, and that's led by flattish volume growth in this particular quarter. So volumes grew by 1% to come in at 14.6 lakh motorcycles in this particular quarter versus 14.59 in the same time last year. So it's going to be neck and neck. There is a lot of discounting that has happened in the 100cc space. That's what Bajaj Auto has said in its conference call. So, and Hero is the biggest player there. So it could have some margin pressure, something to watch out for as well. Apart from that, there was a very big announcement at the company that its CEO, Mr. Niranjan Gupta, had stepped down, at the end of this particular, actually in sometime in the first week of Feb. And that's not something that the market will take very nicely, because he has been associated with Hero since 2017 and was recently promoted to the CEO in May of 2023. And he was actively pursuing the premiumization strategy for something like in Hero MotoCorp. He recently showcased the 4 new launches as well at the Bharat Mobility Expo in January of 2025. So it's a bit of a shocker as to what led to that. So it's a lot more questions that need to be answered in this particular quarter. So watch out for Hero MotoCorp. The stock has corrected all the way from 6,000 levels to roughly 4,200. So something to watch out for in this particular quarter.
All right. So that's as far as Hero MotoCorp is concerned. What are we expecting from State Bank of India? We also have Vishy joining us to give us an update on that one. Vishy, over to you.
Right, Agam. So as far as State Bank of India is concerned, about a 7% rise on net profit year on year. That's widely the expectation. Apologies, 15% rise on the net profit year on year. About 16,500 crore. Quarter on quarter, it might dip a little. There was a one-off factor that is coming in between Q2 and Q3. So that's where you're seeing that net profit sequentially drop. However, net interest income is strong, 7%. Of course, SBI, because of its large base, is expected to report about 42,500 crore worth of net interest income. Gross NPA, again, significant improvement from 2.13 to 2.05. That is what the internal estimates at NDTV Profit suggest. Net NPA as well is likely to improve marginally, 0.53 to 0.5%. Advances and deposits growth both are looking strong. Advances about 12% and deposits are 9%. Remember that if you look at it purely from a percentage basis, SBI may not look that impressive. But considering the sheer base of State Bank of India, the 12% growth on advances is a significant number. What we will also watch out for, because this is Q3 numbers coming in, so there will be a fair idea of where Q4 will play out in the next couple of months. SBI management will be able to tell us what their expectations from the corporate credit growth is, because that is one of those things that is actually pushing SBI's advances growth for this year. Margins will be something that we'll closely watch out for, as well as asset quality, in case there is any kind of sudden movement. Because Q3 is typically where some more aggressive slippages show up for most banks. So we need to see what the largest bank in the country displays in terms of asset quality. Widely, numbers expected to be strong, but we'll find out tomorrow once the management comes out with the numbers.
Okay, thank you so much for that, Vishy. Now, before I take calls on Hero as well as SBI one day before numbers, let me take, Kush, let me take your closing strategy, BTST, STBT.
More of a positional trade, which is on Jindal drilling. The stock's seen a fair bit of volatility, mind you, so that's the caveat. But on the whole, the trend is actually on the way up on the back of very strong volumes. If you've seen the last month or so, the stock's actually run up from 680 all the way up until 980. It's already seen a bit of run up, but I think this move could continue for levels of 985, 1010, 935 being your stop loss.
Okay, all right. Kush, also, quick call with regard to some of the buzzers in trade today. And they've been doing pretty well, but one stock in particular I want to take your call on is BSE. Again, we've seen a bit of a spike on the stock today as well. How's it looking on charts? It's 5% higher as we speak.
Not bad at all, Harsh. Every decline in BSE is a buying opportunity, especially if it falls to the 50-day moving average. This is for those buffs or those viewers who actually don't mind doing a bit of technical analysis. So you'll see a very clear rebound from the 50-day moving average. Right now, it's on the way up, but if you have a positional view, 12 months, 18 months or higher, then this is one stock that you could accumulate. Even if this is a near-term trade that you're looking at, then for a recent swing high of 6150, once that is taken out the level of 6300, not a bad idea to accumulate BSE. Your stop loss for this one comes in at 5625.
Oh, okay. I'm going to also quickly, Kush, thanks for that call. Quickly take what to watch out for. One is you have the US balance of trade to look out for. You have the US PMI data which will come through, and you'll have US crude inventory, this weekly data in any case. So would want to see if there's a major move there. But outside of that, you'll have earnings to look out for. Bharti, Britannia, you'll have ITC and Trent outside of Hero and SBI, which we've just covered. So those are some stocks which should be on your radar for tomorrow, because you might see some moves on those. Last off, some corporate actions as well flashing on your screen, but we are out of time, so I'm going to quickly go across to Agam, who's standing by to wrap the show.
Okay, well, we are firstly, I'm going to thank Kush for joining us and taking us through his views as well, as usual. But on that note, we are going to move and talk about how markets have fared today. So when it comes to the Nifty, it is down by a little less than 0.25%. The Sensex is down by a little over, and the Bank Nifty is up by 0.25%. But a lot of that has seen selling in the last 1 hour of trade, maybe the last even half an hour of trade particularly. But let's talk about your heat map as far as the Nifty is concerned and give you a better picture of how things are panning out. Of course, so this is as far as your sectoral heat map goes. Media, small cap, metals and oil and gas doing well, along with energy, real estate, FMCG and consumer durables under pressure today. Let's talk about the Nifty heat map now and see where there's a pull and push coming through. So while we do have counters like Hindalco, NGC and Apollo Hospitals along with BPCL advancing in trade today, we've also seen a lot of weakness in Asian Paints and Titan, along with Nestle, of course, all from the consumption space, in fact, wilting under a tad bit of pressure. Asian Paints and Titan particularly reacting to earnings. Do remember that when it comes to the breadth for the Nifty 50, that has also turned for the worse. But let's also talk about the broader markets, Harsh. How are things looking there?
Well, yeah, the Nifty mid-cap and small-cap relatively doing better. They've outperformed the index today. Let's pull up the intraday charts on both of those. Agam, what's really standing out for me is it's a fairly tempered day of trade, and it's a fairly range-bound day of trade. And that's what really makes or feels good about today, because you've got lower volatility both on the broader end as well as on the index front. Let's look at the small cap index. Very similar kind of cues. The high and the low not too far apart at all, especially after that initial jolt at the start of the day. The first 15 minutes still trade settled. Thereafter, it's just been a flat line. So it's been a smooth ride for both of those indices, and outperforming the index. That's what really stood out for me. Last off, I'm going to look at the BSE 500 top gainers, top losers, because there were plenty of movers, frankly, in trade today. Symphony on the back of numbers. We spoke with management. You had a Thermax moving down 6%. Fine Organics came out with numbers. You also had a Godrej Properties down 4% on the back of news. When you're looking at global health, 11% move. Very, very strong in terms of numbers. Motilal Oswal and some of your capital market plays did very well in trade today, and along with it pulled together IEX as well. And Angel One was also up 6 to 7% and AFL did well on the back of numbers. Nippon Life 8.5%. Some bit of budget announcement also starting to get priced in, because savings related plays will also start to do well on the back of that 1 lakh crore stimulus pushed by the government. But with that, we're out of time. From Agam, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. Live coverage on the other side.
चला पटकन पटकन.
Hello and welcome to NDTV Profit.
The blessings of Ma Lakshmi that Prime Minister spoke about, will they shine on the middle class and the taxpayer?
The market will not be disappointed.
Finance Minister Nirmala Sitharaman with the Bahi Khata, they're getting ready to go in and present the budget.
I present the budget for 25-26 that there will be no income tax payable up to income of 12 lakh rupees.
ये बजट जो है बहुत ही आर है। इसका मतलब ये हुआ कि रिफॉर्मिस्ट भी है, रिस्पॉन्सिबल भी है और रिवॉल्यूशनरी भी है।
जब मैं था तब हरी नहीं, जब हरी है मैं नाही, प्रेम गली अति साकरी, जामे दो न समाए।
This is another level. This is another level.
This is how a special Saturday session should end.
The new tax regime for individual, in fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Sources tell NDTV Profit that budget is expected to propose the draft of the new income tax bill. In fact, the draft bill is expected to find a mention in the FM speech on February 1st.
I also propose to introduce the new income tax bill next week.
First of all, they're looking at, how to sort of reduce the number of...
Hello and welcome. You're watching Market Express and I'm Malika Mishra. Let's get straight into the show. Nifty Sensex trade largely flat with broader markets outperforming benchmarks, while Nifty mostly hovers around 23,700 levels. Sensex lingers at 78,300. Nifty mid cap 150 up 0.9% and Nifty small cap 250 rises close to 1.5%. Heavyweights like HDFC, ONGC and Hindalco add to the gains. FMCG players like ITC, Titan and HUL put pressure on the indices. Most sectors trade in the green with Nifty Media, Oil and Gas, Energy, Metal and PSUs leading the bulls. On the other hand, Nifty Realty and FMCG fall over 1.5%. Advanced decline ratio remains skewed in favor of the gainers, with close to 3/4 of the stocks advancing in trade today. InfoEdge reports a 60.6% YOY increase in net profit to 243 crore rupees from 151 crore rupees earlier. Revenue grows 15.2% YOY to 722 crore rupees from 627 crore rupees. EBITDA rises 34% YOY to 272 crore rupees with margins expanding to 37.6% from 32.3% earlier. Page Industries reports a 34.3% YOY increase in net profit to 205 crore rupees, which was earlier 152 crore rupees. Revenue rises 7.1% YOY to 1,313 crore rupees from 1,226 crore rupees. EBITDA grows 33.6% YOY to 303 crore with margins improving to 23% from 18.5%. The company declares a third interim dividend of 150 rupees per share. Apollo Microsystems sees strong Q3 results. Consolidated profit jumps 83.5% to 18.3 crore rupees on a yearly basis. Consolidated revenue rises 62.5% to 148 crore. EBITDA grows 58.1% to 37.9 crore rupees with a margin of 25.6%. FY25 guidance may be surpassed. Company aims for 1,000 crore revenue by FY27. EBITDA margins expected to be in the range of 22 to 24%. Healthy order growth from defense, PSUs and private firms expected. Large order book anticipated by end of FY25. Tata Power reports a 5.05% revenue increase, reaching 15,391 crore rupees. EBITDA rises 38.68% to 3,352.54 crore rupees. Net profit grows 8.15% to 1,030.7 crore rupees. Revenue growth is driven by transmission and distribution. Margins benefit from stock in trade uptick and lower taxes. Total operational capacity stands at 15.56 gigawatts with over 10 gigawatt of clean energy under construction. Solar manufacturing revenue hits 1,300 crore. 4 gigawatt cell line in Tamil Nadu is fully operational. Transmission projects expect significant growth this calendar year. Now, Titan's Q3 results show steady performance. Jewelry margins are back to 11%. Studded jewelry grows by 21%. Revenue increases 25.24% to 17,740 crore rupees, matching estimates. However, EBITDA is slightly lower at 1,674 crore rupees, and net profit misses the mark by 0.56%, coming in at 1,047 crore rupees. Margins are at 9.43% versus the estimated 9.8%. Overall, strong revenue growth, but minor shortfalls in margins and profits. Now, during their Q3 earnings call, Titan discusses the outlook and shares that margin dilution in studded jewelry might occur due to rising gold prices. They expect EBIT margins to remain within the guided range of 11 to 11.5%. This quarter, only one new store opened. New buyers constitute 48% of customers, while repeat customers make up 52%. Going below 11% margins for jewelry is not an option for now. Titan prioritizes growth over margin expansion. Now, on to some brokerage call of the day. Motilal Oswal initiates a buy on Acme Solar with a target price of 330 rupees. The company focuses on renewable energy, projecting a 52% EBITDA CAGR from FY24 to FY27. Most upcoming capacities for FY26, FY27 are backed by PPAS. Growth will be funded by EPC margins, debt refinancing, and operating cash flow. According to the brokerage firm, delays in PPA signing and high competition are key risks for the company. They expect the valuation gap with NTPC Green to narrow with limited downside risk. Now, CLSA maintains an underperformed rating for Tata Power, adjusting the target price to 350 rupees from 363 rupees earlier. Q3 shows a surprise loss at Tata Projects and a weak renewable energy independent power producer business. Now, the only bright spot is the RE-EPC business, which benefits from India's solar module import ban and a decline in cell prices. Despite the recent fall, the brokerage firm maintains an underperformed rating despite the recent fall. Now, BofA maintains an underperformed rating for Tata Power, cutting the target price to 350 rupees from 363 rupees earlier. Q3 earnings miss expectations due to lower other income and joint venture profits. There has been delays in solar capacity addition in comparison to the targets. T&D execution is on track. The brokerage firm remains cautious on PSP cap adds. Now, Goldman Sachs upgrades ratings for IOC, HPCL and BPCL. IOCL is upgraded to neutral with a target price of 110 rupees. BPCL is upgraded to buy with a target price of 360 rupees. HPCL is upgraded to a buy with a target price of 400 rupees. The brokerage firm is bullish on OMCs and expects OMCs to set up improving for FY26, FY27. Crude oil price upside remains capped. They expect FCF recovery in FY26. Happiest Minds Q3 misses estimates. The revenue of the company is up 1.8% at 530 crore rupees. EBIT is up 6.1% at 72.9 crore rupees. The company, in a conversation with NDTV Profit, says that the 30% constant currency might be difficult to achieve. The BFS segment will help in accelerating the company's revenue. The company is close to 30 to 35% revenue forecast and have made investments in the generative AI business space. Now, moving on to the next story in mind is Asian Paints maintains double-digit volume growth guidance for the decorative business. Talking about the company's Q3 and way going forward, the management says that the company has seen weak festive demand and slowdown in urban centers. However, the retail expansion continues with 1.69 lakh outlets, price hikes of 1.2% to continue even in Q4. Urban areas remain under stress, but rural recovery is ongoing. The company also expects some softening in raw material and expects double-digit growth in B2B in the future. Morgan Stanley maintains an underweight rating on Asian Paints with a target price of 2,126 crore rupees. The firm highlights worst demand conditions since 1997 and anticipates competitive dynamics to impact medium-term growth of Asian Paints. Now, viewers, on to an NDTV Profit exclusive. The Indian government may liberalize foreign exchange rules for the non-debt instruments such as equity, mutual funds and real estate. The move could potentially offer more operational and administrative flexibility, simplifying the process for foreign investors. The government is considering reclassifying FDIs to FPIs post-listing, offering more flexibility to them. Changes to FEMA regulations are expected within 6 months. Excited to see the government get involved in AI is the word coming in from Gaurav Munjal, the CEO of Unacademy. In an exclusive conversation, he says that India should definitely win the application layer of AI. He says that India is also building the AR Learn app. He says that Indian founders in the US is also building AI products. India is going to be a big AI market, says Paytm CEO Vijay Shekhar Sharma in an exclusive conversation with NDTV Profit. He says that founders and developers are figuring out which part of the AI value chain they will tap. He says that India's opportunity is to deliver AI on scale at a minimal cost. The Telecom Regulatory Authority of India, TRAI, approves the auction of spectrum in the 3740 GHz band for the upcoming spectrum auctions. 3000 MHz of spectrum is available in each of the 22 circles. This brings the total cost of spectrum that is open for auction to about 17,940 crore rupees. TRAI suggests the Department of Telecommunications auction the spectrum for a 20-year period. However, TRAI recommends not auctioning the 42.5 to 43.5 GHz band due to the lack of supporting device ecosystem. Ola Electric is making an entry into the electric motorcycle market, launches 5 variants of Roadster X Electric in the motorcycling segment. This comes after the company unveiled its latest Gen 3 S1 electric scooter range on January 31st. The new Roadster X comes with 2.5, 3.5 and 4.5 kilowatt-hour battery options. Ongoing Delhi elections witnessed 33.1% voter turnout. Up till 1 p.m. today, a total of 669 candidates are contesting for 70 seats, with Delhi set for a fierce triangular contest between AAP, the BJP and the Congress. Over 13,700 stations have been deployed, counting to take place on the 8th of February. President Draupadi Murmu cast her vote in Delhi elections. She voted at a polling booth inside the Rashtrapati Bhavan complex at around 9 a.m. this morning. A total of 70 seats to be contested in the capital region. Prime Minister Narendra Modi takes holy dip at the Mahakumbh in Prayagraj. He also took a boat ride from Rail Ghat to Triveni Sangam along with Chief Minister Yogi Adityanath. The Mahakumbh Mela that commenced on 13 January will continue till the 26th of February. It is one of the world's largest spiritual gathering, attracting devotees from all across the globe. Now, on to a big international update. US President Donald Trump proposes to take over Gaza Strip and do a good job at rebuilding the war-stricken area. He says the only reason Palestinians want to go back to Gaza is because they have no other alternative, and that US will own it, dismantle unexploded bombs, and create economic development. Meanwhile, in a joint press conference with Trump, Israeli Prime Minister Benjamin Netanyahu calls him the greatest friend Israel has ever had in the White House. Further leveraging the camaraderie, he highlights 3 goals: destroying Hamas's military, releasing Israeli hostages, and ensuring Gaza no longer poses a threat to Israel. And following the Trump-Netanyahu meeting, the US president makes yet another exit from a global body, and this time it's the UN Human Rights. He announces to halt funding to the UN agency helping Palestinian refugees. He also calls for a review of America's involvement in UNESCO and funding for the United Nations. He reasons the move on grounds of wild funding disparities among different countries. 11 people killed in school campus shooting in Sweden. Prime Minister Ulf Kristersson describes the incident as the worst mass shooting in Swedish history. Although the police says the motive is still unclear, it has ruled out anything ideological. The place of crime was an education center that is mainly attended by people who haven't finished the primary or secondary education. Indian spinner Varun Chakravarti joins the ODI squad for the series against England thanks to his stellar performance in the T20 internationals. Varun is already in Nagpur with the squad getting up for the first ODI to be held tomorrow. In the recent T20 international series, he claimed the highest wicket taker spot with 14 wickets. His average was 9.86 and his economy rate was 7.66. Rashid Khan makes history as the highest wicket taker in the T20 cricket game. The Afghanistan wrist spinner, just 26, surpassed Dwayne Bravo's tally of 631 wickets when he bowled Dunith out during the SA20 qualifier 1 against PAARL Royals. Ed Sheeran performs in Chennai tonight as part of his 6-city Indian tour. The tour started in Pune last week. NDTV has learned that A.R. Rahman will join him with a surprise act. Ahead of the concert, Ed Sheeran met Rahman and his son A.R. Amin. They shared a joint post posing together. Telugu cinema continues to set new benchmarks as Pushpa 2. The Rule garners massive attention on Netflix within days of its digital debut. Directed by Sukumar and featuring Allu Arjun in the lead role, the sequel has amassed 5.8 million views in just 4 days, securing a dominant position on the streaming platform. Deva starring Shahid Kapoor and Pooja Hed sees a steady dip in box office figures on day 5. The Roshan Andrews directed film collects 2.35 crore rupees. With this, the total box office collection now stands at 24.25 crore rupees. In an exclusive interview NDTV had with Bill Gates, he highlighted how India's government is benefiting from impressive talent in the tech industry and shared his view on India's agriculture sector. Listen in to that exclusive conversation.
You know, it was my life. And, you know, I knew the customers enjoyed it. You know, we were listening to them and adding features for them. And, you know, so it would have been ironic if, you know, we hadn't been able to continue.
Everything you do or you did at that stage was with the vision of the computer becoming smaller, becoming less expensive, and the evolution of the chip actually expanding greatly. Things wouldn't be the same had that not happened, right?
That's right. I mean, if Moore's law, this exponential improvement, hadn't continued, then you can't do graphics interface and Windows and and they have to make the computer faster. They have to make the storage much better, you know, called hard disks, and they have to make the communications better, all this optic fiber stuff. So there's people performing miracles that allow software today to, you know, be gigantic and you know, way. It would be too slow without that improvement.
Yeah. And in terms of the goal of Microsoft, and you're right, in terms of what you wanted to do, Paul and I were totally aligned on the vision to create the leading PC software maker. The goal was like a prize we could glimpse on the other side of a river, but it was clear to me by the end of '76 that the ambition to be the first to get there, to be the fastest, to build the best, is what drove you, right? Why was speed so important? Were there other competitors?
Well, at first there weren't, because we were significant in the first, and the other companies that came along, they would write one piece of software, like a word processor or an early spreadsheet. Our concept was very horizontal. We were going to be the best at hiring software people. We're going to write the best software tools for debugging, and we are going to write every kind of software for this personal computer. You know, spreadsheets, databases, you know, every computer language. And actually, it's all these single point competitors literally for over a decade until Google comes along.
Yeah.
And although they start with search, they very quickly morph to just hire lots of smart people and do lots of software. And so they were the first where they thought about being a software factory.
Yeah.
There were some fine companies, you know, products like VisCorp with a spreadsheet, Lotus with 123, you know, WordPerfect, WordPro, most of these names, you know, a lot of people haven't heard of nowadays. But there were a lot of very good single product software companies, but we were able to outrun them. And my sense of, you know, let's not slow down probably helped us stay ahead and, you know, even take those single product categories and take a leading position.
Did you ever visualize a scenario back in the late 70s that we'd be in an era of AI sometime in the future?
Yes, the question of what can software do that humans can't and what can humans do that software can't? Anybody who works on this stuff, even before I'm born, Alan Turing raises the question of will computers be able to fool humans by talking in a very deep way? And so this idea of, okay, can you translate? Can you look at a picture and recognize it? Can you listen to a stream of speech and recognize it? There were lots of people working on that, but the progress was embarrassingly slow until about 12 years ago, when this neural net technique that had sort of been toiling in obscurity, but when the scale of computation allowed people like Hinton and others to bring this, then we start to make more progress than was expected. And then now, we still don't have reading and writing, but then these large language models that, you know, when I finally see, it's only about 3 years ago still, when I finally see GPT-4, I'm just blown away because I've been thinking, hey, it's still going to take a while. And I consider that demo with Sam Altman, Greg Brockman, the OpenAI people, as impactful to me in terms of what's coming as my sitting at Xerox PARC, which had one of the first graphical interface machines, and an amazing person that I later hired, Charles Simoni, showing me how he had done a graphics word processor. So AI, you know, has always been the obsession, and now it's really happening.
Is there anything that worries you about AI? I ask that specifically because there are coders and software professionals who've interacted with AI and claim to have discovered sentience. Now, others would say, look, a machine can't have sentience. But how smart is the machine getting when it responds in a way which you and I might say, you know, that was an emotional response?
There's no upper bound to how good AI can get. And so AI is both extremely promising to help us in education and healthcare and scientific discovery. I mean, it's mind-blowing how good it's going to be and how it's going to help us. But that is also scary because since it's happening very quickly, you know, within one generation, and we don't think there's any upper limit. Now, people look at it today and say, yes, some of the things it does are very clever, but isn't it still sometimes also very stupid? And that's right, it is. We haven't solved some of the error making, and that's what the big focus is on now. Even, you know, very recently, OpenAI with an approach called O3 is starting to get rid of some of that. Will we solve all that error stuff in the next year? Will that take 5 years? I don't know, but it'll get solved. And so, yes, I am concerned that AI, even though it lets us do so much more, we're going to have to take and shape it in a positive way, make sure that criminals aren't using it, or how, you know, make sure it doesn't get used in weapons in a way that triggers wars. This is a tricky piece of technology, even though there's no stopping it.
And legislation obviously is key.
It is. I mean,
who legislates?
Of course, that'll be country by country. And, like with nuclear weapons, ideally we get countries cooperating with each other, to understand, okay, what should the limits be and how do the good guys stay?
Well, with that, it's a wrap on this edition of Market Express, but do stay tuned to NDTV Profit for more news and updates.
चला चला पटकन पटकन
Hello and welcome to NDTV Profit.
The blessings of Ma Lakshmi that Prime Minister spoke about, will they shine on the middle class and the taxpayer?
The market will not be disappointed.
Finance Minister Nirmala Sitharaman with the Bahi Khata, they're getting ready to go in and present the budget.
I present the budget for 25-26 that there will be no income tax payable up to income of 12 lakh rupees.
ये बजट जो है बहुत ही RRR है। इसका मतलब ये हुआ कि रिफॉर्मिस्ट भी है, रिस्पॉन्सिबल भी है और रिवॉल्यूशनरी भी है।
जब मैं था तब हरी नहीं, जब हरी है मैं नाही, प्रेम गली अति साकरी, जामे दो न समाए।
This is another level. This is another level.
This is how a special Saturday session should end.
The new tax regime for individual, in fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Sources tell NDTV Profit that budget is expected to propose the draft of the new income tax bill. In fact, the draft bill is expected to find a mention in the FM speech on February 1st.
I also propose to introduce the new income tax bill next week.
Nifty Sensex erased all the early gains to end lower. Auto, FMCG and realty dragged, while media, metal and PSU banks added to some gains. India is the second largest market for OpenAI, says OpenAI chief Sam Altman in Delhi during last leg of his APAC tour. Adds that India should be doing everything within the AI stack. Reserve Bank of India's Monetary Policy Committee begins today. This is the first MPC meeting after the appointment of Governor Sanjay Malhotra. A rate cut is highly expected by economists. Political battle in Delhi reaches peak intensity after high-octane campaigns filled with barbs, blame games and AI spoofs. The national capital goes into polls but sees disappointing voter turnout of 46% as of 3 p.m. Ola Electric makes an entry into the electric motorcycle segment, launches 5 variants of Roadster X Electric in the motorcycling market. In a move to possible woo foreign investors, Indian government may liberalize foreign exchange rules for non-debt instruments such as equity mutual funds and real estate. This is an NDTV Profit exclusive. Finance Ministry directs officers to strictly avoid ChatGPT, DeepSeek and other AI models on office devices, flagging data risk concerns. Hello and welcome. This is Profit 360 on NDTV Profit and I'm your host Himakshi Bahuguna. Along the next half an hour, we'll bring you the latest on the markets as well as national and international news. So viewers, benchmarks end in red with Sensex closing below 78,300 and Nifty below 23,700. Auto, FMCG, Realty dragged the markets while media, metal and PSU banks emerged victorious. Harsh joins in with the complete market roundup for the day.
Well, so the Nifty 50 index was down around 1/5%, but if you look at the intraday chart on the Nifty 50 index, you largely see it being a range-bound kind of day on the index per se. So we were fairly range-bound in that sense. We fell a little bit right towards the fag end of the session, but outside of that, it was a very, very range-bound market on the Nifty as well as in broader markets. So let's pull up the advanced decline. And you'll see that the breadth was largely positive pretty much through the day. Didn't really suggest that the Nifty actually fell 1/5%, but when you're looking at the broader markets, they did far better, and therefore you saw very steady breadth through the day. And in fact, even in the broader markets, within the mid-cap as well as the small-cap indices, they've done fairly well. They were fairly steady pretty much through the day. 0.7% higher on the Nifty mid-cap, 1.6% higher on the Nifty small-cap. So a sharp outperformance that we saw in broader markets. And that's what was at play. Let's look at the heat map on the Nifty, and what we will make of that is that bottom layer of stocks, and within that you'll see 6 to 7 names within the FMCG basket. The bottom 3, Nestle, Titan, Asian Paints, came out with numbers. All 3 in that sense had a negative reaction where the stock price was concerned, and they dragged along with them Tata Consumer, HUL and Britannia as well. ITC too languished right up at the bottom among the bottom 10 stocks of the day. What seemed to have done well though was a mixed bag. Hindalco, ONGC has done well over the last 2 to 3 days, and some amount of OMCs. BPCL along with it, HPCL, IOCL, all of which did fairly well on the back of a constructive note, and we've had a slew of them coming over the last few days along with ONGC. So all of those also did fairly well for themselves. Last off, I want to look at sectors, couple of them which did well, and among the broader markets, media, PSU basket did fairly well, metals did well as well. You saw energy basket also perform well. What didn't do well was realty within the broader markets, and no surprises that FMCG made it to one of the worst performing sectors of the day. Last off, the BSE 500 top gainers, top losers dominated by news, but those are some big losers, 8.5% on Symphony. Outside of that, there were some gainers as well, which did fairly well in trade. Again, most of them on the back of either earnings or news.
Thanks, Harsh, for that market check. Now, OpenAI CEO, Sam Altman emphasized India's crucial role in global AI landscape, asserting that the country should be among the leaders in the AI revolution. During a fireside chat with IT Minister Ashwini Vaishnav, Altman underscores India's growing AI ecosystem, including advancements in chip development, AI models, and many more. Let's listen in to that snippet of that chat.
Our Prime Minister always says that we must democratize technology. So we are very much focused on democratizing technology, as in making technology accessible to everybody, as in making the development opportunities available to a very large number of startups and ecosystem researchers, simultaneously, in our case, in the India AI mission, we'll be working on all the 3 layers. At the chip design level, having our own GPU, at the foundational level, and we'll collaborate very actively with OpenAI, and at the application layer. Of course, we are creating certain very good data sets, which will be used for training the models in Indian context, in terms of its language, the cultural nuances, the regional nuances within the country, all that stuff that's very complex. So for that will require a very good, well-curated data sets which can be used for training. So in a sense, we are working on the entire spectrum at this point of time, and we want to be very rapid adopters. Our country has been quick adapter of technology with the Digital India, as all of us know. We are one of those countries which have digitalized transactions and day-to-day living in a very big way. So we would like to take lead in that.
Absolutely. And, within OpenAI, we've been launching models and features at a, absolutely incredible speed and, leading to a lot of steep uptake on even adoption within OpenAI. I'm really curious, Sam, when you were here last time, you said, there are some things that India should be doing and we are uniquely placed to contribute. And, this is your sort of last stop in the APAC leg of the multiple country tour that you're doing. What is it that we can really do which we're not thinking and not doing enough of?
I really want to echo the comments about the full stack approach. India is an incredibly important market for AI in general, for OpenAI in particular. It's our second biggest market. Tripled users here in the last year, but mostly seeing what people in India are building with AI at all levels of the stack, chips, models, all of the incredible applications. So I think India should be doing everything. I think India should be one of the leaders of the AI revolution. It's really quite amazing to see what the country has done and embraced the technology and building, again, the entire stack of things on top of it.
Viewers, for context, OpenAI CEO Sam Altman is in Delhi today, marking the final stop of his APAC tour. Apart from Union Minister Ashwini Vaishnaw, founders, policy makers and key stakeholders are also present at the event to discuss India's evolving AI landscape. Later today, Altman is scheduled to meet Prime Minister Narendra Modi. The discussion will revolve around AI advancements and India's role in the global AI ecosystem. Now, on the sidelines of the same event, my colleague Rishabh Bhatnagar spoke with Gaurav Munjal of Unacademy, Vijay Shekhar Sharma of Paytm, and Kunal Behel of Titan Capital regarding their views on India emerging as an AI hub and the opportunities that lie ahead for the country.
I'm really excited to see the government get involved in AI. In fact, the steps the government is also taking to encourage more people to build foundational models is great. And I think Sam being in India, I saw the developer community, they were super happy. Yeah. I think India should definitely win the apps layer, application layer. I think we have great talent. I met a bunch of founders who are building AI education apps. We, in fact, are building our AI own education app called AI-Learn, which we launched for the US market, which is one of our fastest growing products. So I think we should definitely win the entire application layer.
It's very clear that AI and the big market of AI as consumer volume will be in India, and the enterprise technology capability of India are very good. So being a native English country for enough number of customers and enough number of enterprises, it becomes a very good market. So different startups, investors and entrepreneurs were trying to find out which value chain role is the offering that they should focus on.
So any talks on now India is on its way to build its sovereign AI foundation model हम बना रहे हैं, DeepSeek ने एक चुनौती पेश की है. What is the sort of vision that now we have as a nation versus what OpenAI is also willing to contribute?
Yeah, I think OpenAI will contribute what I think there were wider discussions, so I would not talk about that. But India की opportunity है innovation and delivering scale innovation at a very minuscule cost, and I think we've seen it in a number of spaces. So can India build a very low cost to customers, whether enterprise or consumers, a model that is as good as these models are, and that is the opportunity for India, I'd say right now.
Right. BSS, how excited is Paytm about AI, right? You have introduced AI in terms of customer service and customer support. That's basic level stuff. What are we seeing from Paytm coming in now?
I think there is no doubt about it that the amount of knowledge of the ecosystem that we carry, we can bring a more native financial system model, and that is something that we would delve into internally and figure out a right point when we can try doing it. So expect us to do a vertical industry work on AI. Let's say that.
At least all the closed-door comments were around their excitement and their enthusiasm for the Indian market and how they want to work more closely with the Indian startup ecosystem.
Right. Kunal, it's been sort of established that India will be the use case capital of the world for AI. Are we seeing progress beyond just the use case capital? Are we seeing progress in the foundational layer as well?
Yeah, absolutely. I think you've heard the minister talk about it as well. The government's making a big push. There are a lot of startups who are working on it. But this is not either or. We can work on the foundational models and we can also build world-class applications that sit on top of the foundational models. So as a startup ecosystem with such a wide aperture, we should be doing both.
Viewers, RBI's Monetary Policy Committee meet has begun today. The RBI Governor Sanjay Malhotra will announce the committee's decision once the meeting ends on February 7. My colleague Pallavi joins in with a detailed preview of the upcoming MPC meet. Pallavi, over to you.
Right, like you mentioned, this is actually the first meeting of the MPC post the appointment of RBI Governor Sanjay Malhotra. It's also the first one after the redesignation of Rajeshwar Rao in the Monetary Policy Department, and it's the second one for the new external members. Now, the expectation is broadly that of a rate cut of the 42 economists polled by Bloomberg. All except about 6 expect the MPC to cut rates by 25 basis points. That is the general expectation, but economists haven't entirely ruled out a 50 basis points cut as well, though that is extremely unlikely. Now, what's changed from the last MPC to this one? Let's take a quick look. First up, of course, inflation that has moderated it's moderated to 5.2%. in December. That's from 5.5% in November. In fact, in October, inflation was the highest in 14 months, and it was in excess of the RBI's tolerance band. Food and beverage inflation also encouragingly has eased to 7.7%. That's from 8.2% in November, and this was led by lower vegetable prices. Now, next up, liquidity continues to remain in deficit, but we did see what was seen as a stealth rate cut. The central bank did announce several measures late in January, such as the purchase of open market operations, longer tenure variable rate repo auctions, interventions in the foreign exchange market, all measures expected to boost liquidity. What we're also going to be watching out for is the MPC's commentary on growth. We did see the first advance estimates put out by the government pegging growth at 6.4% for the full fiscal year. Now, this is the slowest pace of growth in 4 years. And it is definitely a step down from the 7+% that we had seen in FY24. In fact, growth in FY24 was fairly solid at 8.2%. Now, the second half of the ongoing fiscal was expected to see some uptick, but high-frequency indicators continue to show mixed trends. What we're also going to be watching out for is the commentary on rupee. We've continued to see the rupee depreciate to fresh lows, and that's, of course, led by all of the action taking place in the US since the US President Donald Trump took over. What's important is how the RBI intends to intervene going forward. We've already seen some panic as importers rushed in to book dollars, thus increasing demand. All of these factors aside, the onus broadly for stimulating growth does appear to be on the RBI.
Right, Pallavi. Thank you for taking us through those details there. Now, viewers, the Finance Ministry has directed its officers not to use or download any AI tools and apps in office computers as it possesses data theft risk. This move comes after Australia and Italy have put a curb on China's DeepSeek due to data safety concerns. Now, the political battle in Delhi has reached its peak intensity. The national capital has gone to polls but saw a disappointing voter turnout of 46.6% as of 3 p.m. A total of 669 candidates are contesting for 70 seats, with Delhi set for a fierce triangular contest between Aam Aadmi Party, the BJP and the Congress. NDTV's Tanushka joins us live to discuss the election scenario. Tanushka, over to you.
Well, you know, the elections here in Delhi, definitely, as you mentioned, the voter turnout is lesser. The voters are silent as well, as in, you know, when we're talking to them, they aren't being very vocal about their issues. I'm currently, you know, at what may be called the heart of Delhi, Chandni Chowk, wherein it's also a tourist hub. It's also very important economic space with respect to the Traders Association. And this time round, all three parties, be the Aam Aadmi Party, the BJP, the Congress, all three have focused a lot on women voters with their women-specific schemes. And as you can see also around me here in the queue, there are a lot of women voters here queued up. It's in the afternoon, it's past 4 at this point, and one doesn't expect a lot of crowd pouring in the afternoon. But still, in this area in Chandni Chowk, which is known as the Haveli Haider Kuli, a lot of women voters are here. Let us see if we can get talking to some of them. Ma'am, आप हमें अपना नाम बताएं. Anita. Ma'am, ऐसे क्या मुद्दे हैं? What issues do you have in mind that you have come today, you know, to cast your vote? क्या बोलूं? What issues, you know, like what, जैसे यहाँ पे हम देख रहे हैं लो हैंगिंग तार है कितने सारे, पोल्यूशन का इशू हो गया.
ऐसा ही है.
10 साल हो गए इसलिए, तो क्या चाहते हो आप?
किस मोदी
बदलाव चाहते हो? आप बताएं हमें, what are some issues in your mind? Right, okay. So like I said, you know, earlier, the women voters at large, you know, in Delhi at this point are not talking a lot. The issues remain the same on their minds, of course. And the battle in Delhi definitely is a triangular one. It's a high-octane battle as well. There's a New Delhi constituency which is seeing Sandeep Dixit from the Congress, Parvesh Verma from the BJP, and of course, former Chief Minister of Delhi, Arvind Kejriwal. Then in the Chandni Chowk constituency, we have Mudit Agarwal, who's, you know, son of veteran JP Agarwal, who contested from the Congress on this seat in the Lok Sabha elections as well. And this seat is a legacy seat. So the battle here is also between Satish Jain from the BJP and Punardeep Singh Saini, who is the son of Prahlad Singh Saini from the Aam Aadmi Party, who's held this seat for the past 2 terms. In fact, 8 terms. He's only lost once, that is to Alka Lamba in 2015. Otherwise, you know, the Aam Aadmi Party is looking for a hat-trick in this seat, or well, say a hat-trick in the entirety of the capital as well.
Absolutely. Now let's see what's there for Delhi. Ola Electric is making an entry into the electric motorcycle market. Launches 5 variants of Roadster X electric in the motorcycling segment. My colleague Haripriya is at the location and joins us with a walkthrough.
Ola has entered the motorcycle market in India with the launch of its new e-bike series called Roadster X. The company has launched 5 models of bikes in the Roadster X and the Roadster X Plus segment. The bike comes in multiple variants from 2.5 kilowatt per hour to 9.1 kilowatt per hour. This has the Bharat Cell 4680 and is built on Ola's Gen 3 platform. It has brake-by-wire technology with single ABS and Smart Move OS 5 features. The Roadster X has range of 140 kilometers to 252 kilometers, and the Roadster X Plus has 252 kilometers to 500 kilometers. The top speed for all these vehicles range from 105 to 125 kilometers per hour, and these are priced across different models. It's priced from 90,000 to 1,70,000, and the delivery start by mid-March. This marks the official entry of an EV player in India's motorbike space. With camera person Govind, this is Haripriya for NDTV Profit.
Now on to an NDTV Profit exclusive. The Indian government may liberalize foreign exchange rules for the non-debt instruments such as equity, mutual funds and real estate. The move could potentially offer more operational and administrative flexibility, simplifying the process for foreign investors. Government sources told NDTV Profit. Shrimi joins in with more details.
With an intent to provide greater flexibility and boost foreign capital flows in India, government is, looking at liberalizing laws for foreign exchange in the non-debt instrument like equities, mutual funds, and real estate. What we've been given to understand that government is kind of looking at the possibility of whether foreign direct investment could be reclassified to foreign portfolio investment if the company is getting listed. At present, there is no such, framework where the FDI can, transition to FPI in case of companies getting listed in future. So that possibility government is sort of exploring and considering. In fact, there are a lot of discussion happening in terms of easing the operational and the administrative compliance issue which foreign investors face at this point of time. So in a nutshell, the government is sort of trying to, make the entire framework in a way which could help sort of foreign investor to enter into Indian market, both in listed and unlisted space. Remember, in November, RBI has already put out, operational framework where they kind of allow FPIs to convert into FDIs if the ownership is exceeding 10%. So in line with that, government is looking at to replica the same thing with the FDIs as well. And the government is of view that they have been relaxing the rules of Forex since July 2024, where we have seen some teething issue with related to cross-border swaps and in fact overseas investment, and that have been eased. And in line with that and with the similar intent, they are looking to further ease the Forex rules in another 6 months, and we would see some legislative changes there in the Foreign Exchange Management Act.
Thanks, Shrimi, for getting us those exclusive details there. Now, viewers, Prime Minister Narendra Modi has visited the Mahakumbh Mela. He took a holy dip at Prayagraj Sangam today. He is accompanied by Uttar Pradesh's Chief Minister Yogi Adityanath. The Prime Minister also took a boat ride from Arel Ghat to Triveni Sangam. He has further put out a statement on platform X stating that he feels blessed to be at the Mahakumbh in Prayagraj, and the Snan at the Sangam is a moment of divine connection. The Mahakumbh will continue until Mahashivratri on February 26. Many politicians, including Union Home Minister Amit Shah and Defence Minister Rajnath Singh, have visited the grand festival. Now, US wants to take over Gaza Strip and provide citizens who are living under a rubble with stable jobs and rebuilt buildings. This is what President Trump had to say after his meet with Israeli Prime Minister Benjamin Netanyahu. Trump also doubled down on his call for Palestinians to move out of the war-battered territory to Middle Eastern countries like Egypt and Jordan. He further mentioned how US will take responsibility for dismantling unexploded bombs and other weapons on the site. Well, that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
चला चला पटकन पटकन.
Hello and welcome to NDTV Profit.
The blessings of Ma Lakshmi that Prime Minister spoke about, will they shine on the middle class and the taxpayer?
The market will not be disappointed.
Finance Minister Nirmala Sitharaman with the Bahi Khata, they're getting ready to go in and present the budget.
I present the budget for 25-26 that there will be no income tax payable up to income of 12 lakh rupees.
ये बजट जो है बहुत ही आर है। इसका मतलब ये हुआ कि रिफॉर्मिस्ट भी है, रिस्पॉन्सिबल भी है और रिवॉल्यूशनरी भी है।
जब मैं था तब हरी नहीं, जब हरी है मैं नाही, प्रेम गली अति साकरी, जामे दो न समाए।
This is another level. This is another level.
This is how a special Saturday session should end.
The new tax regime for individual, in fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Sources tell NDTV Profit that budget is expected to propose the draft of the new income tax bill. In fact, the draft bill is expected to find a mention in the FM speech on February 1st.
I also propose to introduce the new income tax bill next week.
All they're looking at, how to sort of reduce the number of slabs which is there in custom, which is like 12 or 13 slab, and how to bring it down to 5 or 6.
As a part of comprehensive review of customs rate structure announced in July 2024 budget, I propose to 1. Remove 7 tariff rates. This is over and above the 7 tariff rates removed in 23-24 budget. After this, there will be only 8 remaining tariff rates, including 0 rate.
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects.
Is considering to increase the custom duty on the imported finished goods ranging from consumer electronics to medical devices.
And to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20%.
This entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Hello and welcome to KYC, a show designed to give regular investors powerful, actionable insights into fundamentals of a single NSE-listed company every single day. Today, we are talking about Happiest Minds. This is an IT company that has been in focus, of course, on the back of earnings, but in general, we thought it'd be a good idea to take a look at this particular mid-cap IT company, which has, of course, been around for a few years now. What does Happiest Minds do? Well, it is an IT consulting and digital transformation company, and it actually looks at digital transformation. By that, we mean they help businesses modernize their technology and processes, and they often use cloud computing, data analytics, as well as AI. Moreover, it does IT consulting. It does get a good amount of its revenues from consulting as far as IT is concerned. In terms of the technology solutions that it provides, a lot of that will include something like application development and maintenance, cloud services, data analytics, cybersecurity, infrastructure management as well. In fact, in simpler terms, Happiest Minds helps companies use technology to improve their operations better and serve their customers and grow their business. So let's take a look at how the split of business comes through. Majority of its revenues comes from product and digital engineering, about half of, in fact, the revenues coming in. The digital business solutions will contribute to a little over another quarter, nearly a third actually. Infra management and others also contribute to the balance of the business. With that, let's take a look at the metrics that we usually address. And, as usual, we do take a look at the income statement, the balance sheet, return ratios based on the income statement and the balance sheet. We talk about the cash flows as well. And moving beyond just the financial statements, we also take a look at the shareholding pattern, how the stock has done, what the street is making of it, and of course, valuations at the moment. But to take us through a lot of these insights, I am also joined by Rucha, who's going to help us to wade through this whole process. So, Rucha, welcome to the show. Let's talk about the income statement. What are your observations here?
Definitely, Agam. Thank you so much. Revenue is at about 1,600 crore rupees for FY24, posting a 3-year CAGR of about 28%. This is not a bad number. EBIT margin over here is at 21% as of FY24, posting a 13% 3-year CAGR. So what we can see over here is that that revenue 20% CAGR is not really translated to the 13% CAGR, whereas net profit over here is at 15% CAGR over the last 3 years. So not bad numbers, but disappointment in terms of revenue translating into margin is why we've given this one a neutral rating.
All right, so neutral as far as your income statement is concerned. While Rucha has mentioned that it has seen strong revenue growth, we are looking at operational metrics in terms of profitability to be not the best. In fact, for a company of this size, we've seen better profit metrics. So let's move on and talk about the balance sheet. Of course, this one is on a very strong footing. But, as is the case, usually IT companies have a pretty good balance sheet because of, very many reasons. But the shareholder equity stands at around 30 crores. It has a gross debt of around a little less than 1,100 crores. But as against that, the company also has cash reserves of around 1,260 odd crores. So all in all, it's a debt-free company. And because of the fact that it has such a large cash reserve, again, it's something that, works in favor of the company moving in, which is why we'll give this one a thumbs up. But how are cash flows looking, Rucha?
Yes, so Agam, as you rightly mentioned, generally IT companies are cash-rich companies, and so is the case with Happiest Minds as well. The cash flow from operations stands at about 190 crore rupees as of FY24. And if we look at the kind of conversion ratio, 65% of EBITDA converting into cash flow is what we can see. So not a bad number in terms of cash, hence we've given a thumbs up. But what are the return ratios looking like, Agam?
So return ratios do look good. It's an IT company. Naturally, your return on equity and return on capital will be over 20%. And in terms of Capital Minds, it's no different. The only issue here is that the return ratios are on the decline. So from 31% back in FY22. These return ratios are coming off considerably now at 22%. If it goes below the mark of 20%, then that's when, it could be a little bit of an issue. But for now, considering, well, we have a relatively steady steam, as long as the return ratios are not below 21%, that's going to, of course, be a positive. But let's move on and talk about the other aspects as well. And if we actually move beyond the financial statements, we can perhaps also take a look at how things are panning out as far as shareholding is concerned. So let's pull that up too. And in fact, Rucha can take us through that.
You're right, Agam. So promoter and promoter group holding, as we can see over here, is 44%. So around 54% of free float is not a bad number. But you're like splitting that into FIs and DIs. FIs currently hold about 5.3%. As we can see, the pink color mark over here is the FI ratio, and around 6% is for domestic institutions. So not bit of a positive surprise over here, but 54% free float is not a negative as well. So we've overall given this one a neutral rating.
Right. Well, so neutral rating for, the shareholding pattern for the company. And at the moment, we're looking at promoter holding at around 44%, which may not necessarily be the highest as compared to many of the other IT companies. But let's talk about street credentials. And in terms of the kind of returns that we've seen for Happiest Minds, it's not been the best. And I'll tell you why. What's really happened through this course correction over the last 4 months is that the IT sector in general has held its own. But as against that, we're seeing Happiest Minds correct 8%. And in fact, in the last 1 year, we've seen a correction of around 17%. So in terms of price action, it's not been a favorable one. One might argue that, at that point in time, valuations were looking very, very, heady. Which is why we've seen a little bit of correction. That said, in terms of returns, not the best. So we'll give this one a thumbs down. But let's talk about street coverage then, Rucha. What is the street looking like?
So definitely, Agam, in terms of analyst recommendations on Bloomberg, there are 4 buy calls, 2 hold calls, and none sell calls. And the consensus target price implies a return potential of about 14%. But mind you, this recommendation is before the kind of third quarter update which analysts might come by tomorrow. So this is, this kind of bullish stance from analysts does not include the third quarter earnings. So that's a heads up over here. So overall, a thumbs up with 14% positive return potential, even after the company has underperformed in last 6 to 12 months. But naturally, valuation will be one of the issues which most of the companies in this kind of market are facing. So let's pull that up. And we see that Happiest Minds is trading at around 34 times its FY26 consensus EPS. This one is slightly on a higher bar. But if you look at the peers, we have both the sides. We have an Emphasis trading lower than 33.5% at around 28 times. 33.5 times. Coforge trading at 40 times. So largely Happiest Minds is in the middle of the acceptable valuation band, not very expensive, not very cheap. Hence we've given this one a neutral rating.
Okay, so there's an interesting thing out here about the valuations for Emphasis as well as Coforge. Firstly, in terms of public shareholding for Emphasis, it's only about 4% in terms of outstanding. Well, if you look at promoter holding, FI holding, DIIs, all of them taken together, well over 95% has been held just by promoters as well as FIs and DIs. That's as far as Emphasis is concerned. And for Coforge, if you look at how things are panning out, again, the free float won't be much if you consider the way things are panning out between FIs and DIIs. In fact, about less than 10% is held by the public at large. The balance, 90% is held by FIs and DIIs. The reason why I want to make a mention of this is that there is a scarcity premium both in case of Emphasis as well as Coforge, which is why there could be a little bit of a fluctuation with respect to price to earnings, a slightly higher price to earnings being assigned to them. On the other hand, if you look at Happiest Minds, 43% is out there with the shareholding, with the public. So that's where you're not going to have as much a scarcity premium. So clearly, that's the reason why we're looking at a discount. Of course, the other aspect that comes into play will also be the expected growth here on, which is why you'll see those price to earnings valuations at this point in time. Let's talk about the overall, picture in terms of your overall ratings for this particular company and take a look at how things have fared as far as all the parameters that we wanted to address have come through. So it's been, a neutral stance for income statement, but a thumbs up for balance sheet, cash flows, as well as return ratios. And moving on, we have a thumbs down for street credentials, but besides that, a thumbs up for street coverage, valuations, picture, and shareholding, looking at a neutral stance. Moving on, the total rating, that means that comes down to around 5.5 out of 8. That's as far as Happiest Minds is concerned. But let's, before we get the management in, let's consider a little bit or in terms of a handful of other factors that we want to address. And in the medium-term guidance, Rucha, what can you tell us here?
Yeah, Agam. So this is the medium-term guidance in terms of constant currency revenue growth. The company mentioned about 30 to 35% of constant currency revenue growth guidance in the second quarter. But when we had a conversation with the management this morning, they said that 30% would likely be a little difficult kind of range to achieve, and hence they would likely settle at around 27 to 28, which largely what they are currently at. In terms of EBITDA guidance, they have guided about 20 to 22%, including other income. So this kind of stance is what they largely say. Now, let's talk about what kind of third quarter earnings did they report yesterday. In terms of revenue, it was up about 2%. Margin came in at 13.7% versus 13.2%, slightly below estimates. But if you can have a look at the stock is currently tanking about 1.4% down. So this clearly says that the third quarter earnings were not up to the expectations of the street. Moving on to constant currency growth registered this year, well, 28% year-on-year growth is what they have achieved in this quarter. Another important update which I want to highlight is the kind of acquisition that Happiest Minds had announced in April last year, that is April 2024. They had announced acquisition of PureSoft Technologies for a consideration of 779 crore rupees. Now, PureSoft Technologies is a digital engineering and transformation services solutions provider. The kind of synergies that Happiest Minds is likely to achieve is in the space of BFSI, banking and financial services, from which currently Happiest Minds gains a majority of its revenue. And another segment in which they are looking forward to have their more footprints is the healthcare sector. Healthcare sector largely posted kind of muted growth this time, but the management is likely seeing green shoots over here as well. And of course, BFSI is growing not only for Happiest Minds but for other IT companies as well. And lastly, well, in terms of geographical presence synergies, the company will get nearshore presence in Mexico, Singapore, Malaysia and Africa. So a lot of things in terms of inorganic expansion is what these guys are doing, Agam.
All right. Well, thanks for that, Rucha. And, in fact, let's get across to the management. My colleague Hira spoke to the management of the company, Happiest Minds, about their quarter gone by, and of course, the growth ahead. Listen in.
We have shown a year-over-year growth of about 28%. In rupee terms, it's about close to 30%. And in dollar terms, constant currency, about close to 1%. So yes, the street may have been expecting slightly better numbers on the constant currency growth, which we have shown at about 1%. But the fact of the matter is here, this time we had a fair bit of furloughs and holidays hitting us this quarter. After the acquisitions, we have grown deeper into BFSI as a segment, and we are seeing that BFSI has pretty weak Q3, or the October, November, December quarter tends to be weak given the way the holiday structures, the statutory leaves and those things happen. So we are coming to grips with that, but despite all of that, we took some revenue enhancement measures and we've been able to grow at about 1% in dollar terms. All the other metrics of EBITDA or be it operating margin, we have performed ahead of what typical expectations were, and EBITDA number is at 22.1% for the 9-month period, which is ahead of the guidance that we gave for 20 to 22%. So in all, revenue for the 9-month period and for the 3-month period, we are very close to the forecast that we had given to the market, which was 30 to 35%, and then we subsequently corrected saying 30% is what we are going to target, and we are reasonably close to that. Next quarter, looking a little into the next quarter, we have closed this acquisition of customers and customer relationships of GADS Technologies in the Middle East market. We are looking to consolidate that, and that's almost 100% BFSI and infrastructure application services, application maintenance business. We are looking to grow into those accounts, cross-sell, upsell, and consolidate that starting immediately, almost immediately, because some of them are our existing customers, and we also have a reasonably good presence in the Middle East. So the consolidation benefits should see trickling in quite early. So we are looking at that and the organic growth in Q4 put together, trying to, the attempt will be to make sure that we try to reach the 30% number or hit that to the extent possible.
Right. That's an interesting one, because in the previous quarter as well, when we were looking at the 30 to 35% year-on-year constant currency growth for FY25, the ask rate in terms of the second half of FY25 was around 5.2%, right? This quarter, if you see in terms of the number, it's still on the lower side. Do you think you will be able to make up for that number, even to achieve the 30% guidance?
Yeah, so that we did two things. One is we tempered the 30 to 35 to 30% because, we thought we will be able to consolidate the acquired companies from the beginning of the quarter. For various reasons, it slipped and we could only get about 40 days of revenues from both companies. And that's a significant number. So taking that into account, we said, let's not go too far away from what we have said, but let's keep 30 as the guideline number, the forecast number, because I was very clear that not to use the word guidance, maybe semantics, but I was sure that we should, these numbers have to come together, and it was too early. But we said we'll now try to achieve the 30% number. Compared to the 30% number, we are at about 25%. And if you look at it, Q2 and Q3, both these quarters, we have done 28% QOQ. So yes, we have missed the 30% by about 2%. And the attempt is to make sure that we try to cover up for the gap to the best extent possible. But in transparency, I think touching 30 may be slightly difficult, but we will be there in terms of 27-28% in constant currency.
Right. And in terms of the EBITDA guidance, I mean, it's 20 to 22% with other income. Current one, we are at around 21.7. It was interesting to see how in the previous quarter we were somewhere in that 28-29% kind of a range. Did this quarter actually see any impact on the back of wage hikes in the leadership team? Because that was something that we were watching out for.
I would take the reference of the previous year. We were at about 24.2% in the same quarter. 9-month period, 24.7. You bring out a very interesting point. One is, we have made investments into generative AI, GBS business, which is at about 24 crores, running at about 26 to 30% utilization. So I have said this in the last quarter itself, that in the first half of the year, we have made investments of about 1.5 million, approximately about 1.5 million. If you consider that similar kind of an investment going into Q3, it would be about 2 to 2.25 million. You add the new sales engine that we have added. That's something that we did, and that's an additional cost of about close to $250,000. The verticalization of the business, while it's supposed to give us a lot of impetus, it also adds some bit of costs. But keeping that aside, and the investment that we have to make into Artha Banking to make sure that it makes sense for the Indian markets and the other US markets that where we are going to take it into, we have made close to $2.5 to $2.6 million of investments in the financials up to the 9-month period of FY25. And just for that, and we are back to the 23-24% EBITDA, Hiral. So it is investments that we are making. It's a startup. GBS is a startup within Happiest Minds. Artha Banking is the non-linear growth platform that we have acquired from Pure Software, and we are taking to new markets. The new sales engine is an overlay cost that we have taken to go deeper into existing relationships and get those new customers into which we can sell our services and offerings. So these investments take a little bit of time, but from a P&L standpoint, you can't defray these costs and match them with the revenues. we are getting hit on that account. That plus the compensation increase, which has been fairer than most of the other peers and market participants, has had an impact on our financials.
Okay, so with regards to segments that will lead you to achieve your guidance, what are you banking on? Because CV as a segment has been slightly muted, not only for you, but across the industry, right? People have been banking on the BFSI space right now. What is going to be your strategy?
Just look at our performance in Q3 as well, Hiral. You'll see that BFSI has really led the way. And so I would say that, and given the leverage we get from pure software Aureus, the capabilities, the customer base, and the Artha banking platform, I would say BFSI would be an area that we would be looking at to really help us accelerate our revenues. Another vertical or segment that has really come up well in the last year and a half is healthcare. We started reporting healthcare just a year back. And if you see, it's already around 14-15% of our revenues. And if you see on a year-on-year basis, we've demonstrated pretty good growth. A lot of interesting trends in this segment around bioinformatics, around newer type of medical devices, confluence of software and hardware in terms of various types of medical devices. And these are areas that, and overlay of analytics. So these are areas that are of strength to us. You know, we have hardware practice, we have a very strong analytics AI practice, and healthcare vertical. That I would say is the second vertical that we would be looking at. And high tech, we're beginning to see some signs of, at least for us, if you see again, high tech has done well. And I think, you know, some of the strategies that we've been implementing of also targeting well-funded late-stage companies along with the larger tech players is beginning to show some dividends. So I would say these are three segments that we will be looking at helping us out during the quarter and probably into next year as well.
And with regards to the 500 crores that you did raise in July 2023 via QIP, how is the utilization on that front? Has it been for the acquisitions as well as on the Gen AI side? And if so, what's the kind of ramp-up plan that you have, and are you expecting large deals there?
The 500 crores that we had raised was for a combination of acquisition and meeting certain working capital and other requirements. So we are on target to meet those utilization targets set for us. But overall cash standpoint, we have deployed close to 800 crores in the acquisitions that we have made and the earnouts of the previous acquisitions. We are close to what 700 to 800 crores have been deployed. Despite that kind of an outflow, we still continue to carry about free cash balance of upwards of 500 crores. This I'm netting off, some of the overdrafts and received loans. But we are carrying about 500 crores in our books. That's a reasonable amount of cash balance for a company of our size. That's what we believe. But we should be able to, manage smaller acquisitions like the recent one which we did of the gas business in Middle East. Those are possible from our cash chest as well as our internal accruals. But if we want to do larger ones and acquisitions of, let's say, more than $50 million in size, we will have to look at options to raise capital or debt to fund those.
Okay, so from here on, growth will be driven inorganically or organically?
We drive. We don't split our growth on the basis of organic and inorganic. It's the strategy is to add capabilities, competencies. Like we said, we have added to our verticals through the last 4 acquisitions. Pure Software was largely, BFSI, healthcare, high tech. Aureus was largely BFSI and healthcare, whereas Macmillan was into edutech, and the most recent one, which we disclosed of consolidation of the Middle East business, is into BFSI and infrastructure business. So if you look at it, it's both fuel for further growth and consolidation of our existing capabilities and ability to sell it to those new customers. So, without Splitting it, it will be a combination of both organic and inorganic.
Okay.
Well, that was the management of Happiest Minds telling us about the quarter gone by and what kind of growth we can expect going forward. But on that note, it's a wrap on this edition of KYC. Stay tuned to NDTV Profit.
चला चला पटकन पटकन.
Hello and welcome to NDTV Profit.
The blessings of Ma Lakshmi that Prime Minister spoke about, will they shine on the middle class and the taxpayer?
The market will not be disappointed.
Finance Minister Nirmala Sitharaman with the Bahi Khata, they're getting ready to go in and present the budget.
I present the budget for 25-26 that there will be no income tax payable up to income of 12 lakh rupees.
ये बजट जो है बहुत ही RRR है. इसका मतलब ये हुआ कि रिफॉर्मिस्ट भी है, रिस्पॉन्सिबल भी है और रिवॉल्यूशनरी भी है.
जब मैं था तब हरी नहीं, जब हरी है मैं नाही. प्रेम गली अति साकरी, जामे दो न समाए.
This is another level. This is another level.
This is how a special Saturday session should end.
The new tax regime for individual, in fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Sources tell NDTV Profit that budget is expected to propose the draft of the new income tax bill. In fact, the draft bill is expected to find a mention in the FM speech on February 1st.
I also propose to introduce the new income tax bill next week.
All they're looking at, how to sort of reduce the number of slabs which is there in custom, which is like 12 or 13 slab, and how to bring it down to 5 or 6.
As a part of comprehensive review of customs rate structure announced in July 2024 budget, I propose to 1. Remove 7 tariff rates. This is over and above the 7 tariff rates removed in 23-24 budget. After this, there will be only 8 remaining tariff rates, including 0 rate.
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects.
Is considering to increase the custom duty on the imported finished goods ranging from consumer electronics to medical devices.
And to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20%.
entire special package and measures are kind of
Hi, thanks so much for tuning in. My name is Alex Matthew and we're talking about Your Money Matters on NDTV Profit because we understand that your money matters. Now, I was speaking to a young investor in the newsroom, 25 years old, and they've just started investing. Maybe about 7 months back, they've started SIPs. And what they were saying or asking was very interesting because they said, Alex, I've been investing diligently for the last 7 months, but then my SIPs are losing money. I'm not making money. What should I do? Should I stop my SIPs? And I thought that this was a very important question to address on the show because so many of you will have started SIPs over the course of the last few months, and because market conditions have not been very favorable, it's possible that you are losing money at this juncture. What should your response be? And why is it that people say that you should keep your SIPs going? To talk about this, I'm joined by Vijay Mantri, who is an investment expert and who's seen many of these cycles and who is the best person placed to give you the advice that you need. Vijay, thanks so much as always for taking the time.
Thank you very much, Alex, and thank you very much for inviting.
No, so let's start with that. And I think it's always interesting when you speak to people who've just started their investment journey because the insights that you get from them are always useful to take into account. First of all, are you surprised by that question? That my SIP is not doing much, it's not, in fact, it's losing money. Should I stop it right now?
No, I'm not at all surprised because this is what we are witnessing. And a few days back, I tweeted that for SIP, December discontinuation or stoppage numbers are looking bad, but January number would look much worse. And that would lead many people to figuring out what they should be doing. And perhaps Feb, March may look bad. So this is a natural phenomena. And that is why the need of hand-holding is needed. It's just not the question of knowledge. It is the ability to execute. And execution when things don't go as per your expectation. So in SIP, we have seen multiple times the SIP has not delivered return, be it right now or be it in 2020 or 2008 or year 2000. We have enough data to prove that actually when the NAV drops and SIP don't show return, then many investors discontinue their SIP and perhaps at the wrong time.
Some people who are hearing this will be saying, Vijay ji, kya bol rahe ho? 26,459 crore ka gross SIP inflow hai December mein. How are you saying that cancellation is more? Can you explain why you're saying that?
So, very interestingly, if you look at total new SIP registered in the month of December, and you look at total SIP which got discontinued, the ratio is 80% plus. It means that of all the total new SIP which has come, the SIP which has discontinued is more than 80%. So this is a very worrying number. And net addition to total SIPs, new SIP were more than 50 lakh. But net addition is just below 10 lakh number of SIP. There's a one way to look at it. Another way to look at it is that total number of cancellation, how much they are as a percentage of total outstanding SIP. Even that number is more than 4% right now. It is generally happen around 2%, but right now it is 4%. So it is a phase of the market where, you know, we have gone through this phase multiple times. And there's a very natural progression of investor when they don't see return on the portfolio to look at whether they should continue or discontinue their SIP. So I think we'll perhaps answer this question in next 10-15 minutes.
In fact, let's talk about these two instances because when I discussed this with you, you said that there are two instances where it can be spelled out with data why discontinuing an SIP is not the best idea. In fact, it's the worst idea. And you can actually get a lot of benefits by continuing it when the chips are down. Let's start with the first instance. You've shared data with me about the Aditya Birla Sun Life Digital India Fund, which was launched on the 1st of March 2000. And you've given me data for an SIP of 10,000 rupees per month. Can you take me through the numbers and why is it that you chose this?
So first of all, let me clarify, this fund was not launched by Aditya Birla or Sun Life Mutual Fund. It was launched by Alliance, and at that time the fund was called Alliance New Millennium. And Aditya Birla Mutual Fund bought this fund much later. So this fund was launched in 1999. The fund NAV went up to the extent of 18 rupees. Then the fund's NAV dropped to 2 rupees. So almost like 85% kind of drawdown or correction in the NAV. We are talking about a fund and a category where we have seen both boom and bust. So we're talking about year 2000, we're talking about sectoral fund, we're talking about IT fund. So if you look at Birla Sun Life Digital Fund, the NAV on 1st March 2000 was like 15 rupees 72 paisa, around that number. And after 20th month on 1st October 2001, funds NAV dropped from 15 rupees plus to below 3 rupees. So in a 20-month period, the fund NAV dropped more than 80%. So your 2 lakh rupees, we invested 10,000 rupees per month. In a 20-month, you invested 2 lakh rupees and the value is 80,000 plus. So the NAV has dropped more than 80%, but the SIP number has dropped around 56, 57%. That is a number the viewer will see on the screen. But you didn't worry, you continue to keep investing in your SIP. By the time 44th month, the fund NAV start going up from 2 rupees 45 paisa to more than 5 rupees. So at 44th month, that is October 2023, you already invested 4,44,000 rupees in 44 months. But your value of portfolio has gone up substantially from 4,40,000 to much higher number. And what we have seen, your starting NAV was 15 rupees 75 paisa. And in October 2003, when your SIP total portfolio value went into positive territory, the NAV of that particular fund is still below 6 rupees. So what does it mean that? The NAV from the top is still down significantly, but you are 12% plus in your SIP portfolio. Because in SIP, you kept investing when the NAV was down. And when NAV goes down, most of us focus only on NAV. But the flip side of that is when NAV goes down, the number of units goes up substantially. Even in this illustration, if you see, when NAV was 15 rupees 72 paisa, you got certain number of units. When NAV went down to 2 rupees 45 paisa, the NAV corrected more than 80%. But the number of units which you went up acquiring at 2 rupees 45 paisa has gone up more than 6 times. So that is the power of accumulating when the units are values lower, because you end up acquiring more and more units. And please consider these are two kind of worker. The NAV shows the productivity of the worker, and the unit shows number of worker. So when SIP NAV goes down, the productivity goes down, but the number of workers goes up. And when the NAV start increasing, the number of workers already went up because you bought at lower level, and the productivity goes up. With the NAV goes up, you end up creating more wealth for yourself. So this is, we have seen in one of the worst drawdown we have seen, one of the worst drawdown we've seen in a sectoral fund in a boom and bust scenario. And if you continue to SIP journey, even in that fund, so from 1st March 2020 till 1st January 2025, there were around 200 and around 290 months. You invested approximately 30 lakh rupees, and the value of portfolio is more than 3 crore 84 lakh rupees. So your portfolio is up 13, 14 times. So that is the value of investing, is staying disciplined and buying more units when the NAV is down.
Yeah, in fact, you would have hit that 1 crore mark in Feb of 2020, or maybe a little bit before that. And what a beautiful figure this is, and what a beautiful story as well, right? But what it also shows me...
And Alex, just one more important thing I would like to highlight. Suppose you see the starting NAV is 1572, and the NAV on 1st January 2025 is more than 180 rupees. So there's a 12 to 13 time growth in NAV. So suppose somebody invested this 30 lakh rupees on 1st March year 2000, the value would have been around 1 crore, around same number, 3 crore 60 lakh, 3 crore 70 lakh rupees. But somebody done the same amount through SIP over a last 25, 24, 25 years, then the portfolio value is same. And the average investment period has been not 25 year, but 12 and a half year, because you're investing 10,000 rupees every month. That is the power of SIP. When the NAV is down, you end up acquiring more units, so your average cost went down substantially.
In fact, this is exactly what plays out in the Taurus Infrastructure Fund that you've also shared with us. 1st of Jan 2008, the NAV is 17.5. You've again talked about a 10,000 rupee SIP, at which point in the first year you've accumulated 570 units, which I'm just running through this because both of them have a similar story. 1st of December 2008, when the financial crisis is hit and the infrastructure story in India starts seeing cracks, you have the NAV falling to 5.2. It fell to further 5.02 in March 2009. And in each of those instances, like Vijay said, as the NAV starts falling, you're accumulating more units because your SIP is the same. And here, Vijay, in both of these instances, we're talking about keeping an SIP stable at 10,000 rupees per month. We're not even talking about a step-up SIP, which is even more powerful, which allows you to accumulate more units. But the most important point, according to me, in both these instances, is the power of time. If you give it enough time, you're able to navigate cycles and make the best of both, right? So why is it, according to you, most important to give it time?
Time, see, the time will reduce the volatility completely. So though I haven't shared the detail with you, but I've just running through the number. So I'll just give a very simple illustration. HDFC Flexi Cap Fund. That fund got launched 30 years back. If somebody picked the lowest NAV of that fund in every month, or somebody who picked the highest NAV of that fund in every month, then somebody did SIP on the 1st of every month. The person who bought at the highest NAV, their XIRR is 21.1%. Person who bought on 1st of every month, the XIRR is 21.3%. Person who bought on the lowest NAV of every month, the XIRR is 21.5%. So hardly any difference. The difference of 21% compounding happened 30 years. If you do similar thing, forget about every month. Suppose the same 1,20,000 rupees, which you do 10,000 rupees per month over a 12 month, 1,20,000 you invested on the highest NAV of every financial year, or highest NAV of lowest NAV of every financial year. Then somebody who bought at the lowest NAV of every financial year, their XIRR is 20.3%. Somebody who bought at the lowest NAV every year, their XIRR is 22.2%. And somebody who did 10,000 with SIP is 21.3%. So timing doesn't matter. The 20% magic happened because of the holding period is 30 years. And particularly in that fund has also seen NAV falling more than 10% every 6 months, more than 20% almost every year, more than 30% every 3 to 4 years, and more than 50% at least 3 times in last 30 years. And after that, this fund has created this kind of wealth. So if anybody is investing in equity and doesn't want to see volatility and downside risk on the portfolio, perhaps I'm fear they're not able to accumulate wealth.
Yeah, and this is not the asset class for them, because if they only want to see a linear move upward, then fixed income is what you look for, because ultimately an equity market is going to give you periods of downturn. It's not a singular move upwards. But just to drive home the point, okay, we're talking about periods of underperformance and outperformance for schemes and for categories. But at some point, Vijay, we also have to admit that maybe certain strategies and maybe certain fund managers are not pulling their weight, right? So if it is a case of significant underperformance, at that point, obviously you're talking about switching an SIP and you're not stopping an SIP. When do you take that call that this scheme or this fund manager is not working for me? When do I switch?
So there are 2 ways to look at it, and I think you need to give minimum 3 to 5 year period to judge a fund manager. Number one, is that fund manager over a 3 to 5 year period able to outperform the benchmark? If the answer is yes, you don't need to change anything. If the fund manager is able to deliver above average return than the category average, you don't need to change anything. If the fund manager is delivering return which is below category average and also performing the underlying benchmark, then definitely you need to take money out and go to a better fund with more consistent investment performance. But just do not look at the fund deliver with the highest return in last 1 or last 2 or last 3 years. I have seen many investors either going by the highest rated fund by some rating agencies or the fund which deliver highest return in last 1 to 2, 3 years. And why I'm saying highest rated fund by rating agencies? Because these rating agencies do rate the fund, but none of them tell back to investor what is the investment performance of fund which they've rated 1 year back, 3 years back, 5 years back, or 10 years back. There's no look back of their track record. Though they judge the track record of fund manager, but there's very ironic, there's no look back at their own track record.
It's an interesting point that you make, Vijay, and certainly something to think about. Thank you so much, as always, for joining me, and insightful conversation as always.
My pleasure, Alex.
All right, so this should help you understand why you should not stop your systematic investment plan into an equity mutual fund scheme. Now, the second leg of this conversation today is what I like to call Wellness Wednesday. And you're probably wondering why we're talking about this on a personal finance show. And the answer is very simple. We tell you how to make money through the week, but we also want you to stay both mentally as well as physically healthy. Because what's the point if you're not mentally and physically healthy? What's the point of all the money? Today, I'd like to talk about a prevailing trend, something that a lot of young people are complaining about, and that is work stress, work anxiety. Is there a difference between the two? How do you learn? How do you understand if you are experiencing it? And what should your response be? I'm joined today by Shreya Manoth, who is a clinical psychologist. Shreya, thanks so much for taking the time, and appreciate it. Let's talk about this. Are more people coming to you now, young working professionals, are they coming to you and saying that they have work anxiety? And how do you understand, as a psychologist, whether this is being experienced?
Right. So definitely there's been an increase in the number of individuals, especially, the younger population, wherein they come in, they report of experiencing stress and anxiety. Some of them are experiencing symptoms of burnout. And there are some telltale signs of anxiety, stress, and burnout at the workplace. Although sometimes we might just kind of, brush it off for just a daily happening. Now, when we're talking about how do we identify individuals if they're having anxiety or stress at the workplace, there are several symptoms that one can observe, right? Let's begin by talking about some mental or emotional symptoms that an individual might be experiencing. Say, for example, worrying a lot, having a lot of racing thoughts, ruminating over things, feeling helpless or hopeless, not feeling motivated enough to do work. These could be some of the mental and emotional signs that one is experiencing, stress or anxiety at the workplace. There could be some physical symptoms that an individual might experience. Say, for example, rapid heart rate, rapid or shallow breathing, palpitations, which sometimes go uncontrolled for an individual. There could be sweaty palms. There could be a startled reflex reaction that we see in individuals. There are different kinds of body aches that suddenly start developing. And the third category of symptoms that help us identify stress or anxiety at the workplace will include behavioral symptoms, right? Feeling less interested in things that you were interested in, changes in sleep pattern, changes in appetite, not feeling like completing the daily tasks in the same level of, efficiency and, functioning that you would in general. So these are some of the symptoms that help us identify if an individual might be experiencing stress or anxiety. at the workplace. This is for the individual to understand themselves, but for further information, it's always nice to go to a professional or seek out some advice to be sure.
So I find that some of the psychosomatic responses to stress and to anxiety that you pointed out are quite common. And so therefore, if you are having a recurring headache, for example, how do you differentiate? That's the thing, right? How do you understand that the root cause of this is stress at the workplace, or it's anxiety at the workplace? Is there something that you can suggest that people can think about?
Yeah, this is really interesting, what you're asking, because recurring headaches could mean several things, right? So the first step is to always rule out for any physical causal factor that is there. We try to check if there's something that's causing this particular psychosomatic symptom. And when we figure that there's nothing that's physically like going on in the body is when we try to also think about anxiety or stress. Now, particularly talking about workplace anxiety, it's very important for us to understand that anxiety can be of several kinds. There can be generalized anxiety, there can be social anxiety, there can be illness anxiety. Now, talking about workplace anxiety, it's very important for us to understand that there are some factors that can help us understand if my anxiety and stress is specific to the workplace. Say, for example, I feel fine on my off days. I'm doing absolutely fine. There are no headaches. There are no psychosomatic symptoms. I'm functioning pretty fine. Number two, it could also be that, say, for example, I'm working from Monday to Friday. So there is this intense sense of panic, anxiety, overwhelmed feeling, increase in my physical symptoms as the weekend is approaching. Because there is so much exhaustion that is there for an individual that they are not able to understand what to do on the weekend. Number three, we start noticing some behavioral changes also, wherein interacting with individuals, say for example at the workplace, might feel a little draining sometimes when we're experiencing some of the stressors, which has nothing to do with the individuals per se, but this is my reduced bandwidth at this point in time, right? But when I'm interacting with others outside of the workplace, it can just be very normal functioning. So sometimes we're able to like differentiate when these symptoms are particularly there with respect to work and they're not there in general. So I think that can help individuals understand if this is specific to the workplace or if this is something more physical or more generalized.
This is a very important conversation, Shreya, to have, because if I think about it and if I speak to an older generation perhaps, they will say that they probably experienced this, but they never gave it too much thought. The fact that we're talking about this now is that people are becoming much more aware of the implications that this might have related to, say, blood pressure or related to hypertension and various other things that can have knock-on effects. So how do you solve this? How do you work towards either mitigating it or avoiding it altogether? Meditation, do you sleep better? Do you watch the food that you're eating? Does exercise help? All of these things.
Yeah, everything that you mentioned helps, right? So that's really nice that you mentioned them already. But I think the first and most important thing that individuals must focus on is identifying the causes of the stress, the causes or the stressors for their anxiety or, feeling of overwhelm at the workplace. Now, these stressors could be internal or external. Say, for example, internally, it could be something to do with the person's personality. It could be something to do with their way of working, their habits, their value system, right? That could be contributing or increasing their sense of anxiety at the workplace. It could also be external. Say, for example, the nature of work, the deadlines, the expectations, conflicts at the workplace, inability to set boundaries. There are different external factors that can be there too. So once an individual is able to identify these, it's very important that then they start working towards it, either on an individual level or with some support. Number two, like you very correctly pointed out about the lifestyle changes, sleep, nutrition, having a good daily intake of water, focusing on activities or spending more time doing activities that bring you joy. These are very, very effective in changing one's mood in general, which obviously has like a good impact on the workspace as well. Number three, it's very important, and I think this is one of the most important things that individuals can also try to, inculcate is this is to do with setting boundaries and prioritizing things, right? Knowing how you want to go about a day really helps us organize everything and have like a clear set of expectations from ourselves, which helps us not feel as overwhelmed during or at the end of the day. then there is also an option to always seek out help and support, either from like a mentor or your manager, somebody you can trust, somebody you look up to, right? Or there's always therapy. You can reach out to a professional.
No doubt, and I'm glad
Apart
that
from
we're
which,
speaking. I'm glad that we're speaking about this, Shreya, today, because ultimately, I think the first step that a lot of people can take is to think about it and whether or not they might be experiencing it, and that, in a sense, might be the first solution that they can start working on. So, thank you so much for joining me today and for having this conversation. And you've certainly given me food for thought as well.
I'm glad. It was really my pleasure to be here. Thank you so much for bringing this relevant topic up.
Absolutely.
Thank you.
All right, and that brings us to the end of this edition of Your Money Matters. It's been an absolute pleasure bringing it to you. Do stay tuned. Lots more coming up on NDTV Profit.
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
चला चला पटकन पटकन.
Hello and welcome to NDTV Profit.
The blessings of Ma Lakshmi that Prime Minister spoke about, will they shine on the middle class and the taxpayer?
The market will not be disappointed.
Finance Minister Nirmala Sitharaman with the Bahi Khata, they're getting ready to go in and present the budget.
I present the budget for 25-26 that there will be no income tax payable up to income of 12 lakh rupees.
ये बजट जो है बहुत ही RRR है. इसका मतलब ये हुआ कि रिफॉर्मिस्ट भी है, रिस्पॉन्सिबल भी है और रिवॉल्यूशनरी भी है.
जब मैं था तब हरी नहीं, जब हरी है मैं नाही. प्रेम गली अति साकरी, जामे दो न समाए.
This is another level. This is another level.
This is how a special Saturday session should end.
Sources tells NDTV Profit that budget is expected to propose the draft of the new income tax bill. In fact, the draft bill is expected to find a mention in the FM speech on February 1st.
I also propose to introduce the new income tax bill next week.
I'm really looking forward to diving into this very, very exciting conversation. And so I'd like to start with you. You know, with OpenAI obviously, rapidly scaling, and, recent report says that it'll contribute about 14% to the global GDP by about 2030. You obviously set the India AI mission charter out for what our path will be, or what India's path will be. I'm really curious to know, what do you feel are the 2-3 real opportunities that you want to focus on for the next 5 years?
So listen, our Prime Minister always says that we must democratize technology. So we are very much focused on democratizing technology, as in making technology accessible to everybody, as in making the development opportunities available to a very large number of startups and ecosystem researchers. Simultaneously, in our case, in the India AI mission, we'll be working on all the 3 layers. at the chip design level, having our own GPU at the foundational level, and we'll collaborate very actively with OpenAI, and at the application layer. Of course, we are creating certain very good data sets, which will be used for training the models in Indian context, in terms of its language, the cultural nuances, the regional nuances within the country, all that stuff that's very complex. So for that will require a very good, well-curated data sets which can be used for training. So in a sense, we are working on the entire spectrum at this point of time, and we want to be very rapid adopters. Our country has been quick adapter of technology with the Digital India, as all of us know. We are one of those countries which have digitalized transactions and day-to-day living in a very big way. So we would like to take lead in that.
Absolutely, and within OpenAI, we've been launching models and features at a absolutely incredible speed, and leading to a lot of steep uptake on even adoption within OpenAI. I'm really curious, Sam, when you were here last time, you said, there are some things that India should be doing, and we are uniquely placed to contribute. And, this is your sort of last stop in the APAC leg of the multiple country tour that you're doing. What is it that we can really do which we're not thinking and not doing enough of?
I really want to echo the comments about the full stack approach. India is an incredibly important market for AI in general, for OpenAI in particular. It's our second biggest market, tripled users here in the last year, but mostly seeing what people in India are building with AI at all levels of the stack, chips, models, all of the incredible applications. So I think India should be doing everything. I think India should be one of the leaders of the AI revolution. It's really quite amazing to see what the country has done and embraced the technology and building, again, the entire stack of things on top of it.
And also with the recent developments, do you have a different view around the cost of building foundational models?
Yeah. So first off, if that's a reference to a comment I made here a few years ago about the cost, I think that was taken out of context. That was a very specific time when there was a certain scaling thing where I thought, it was gonna, and I still think to stay on that frontier of pre-trained models is expensive. But one of the most exciting things that's happened to me since, that I think has happened in the industry since, is we're now in a world where we made incredible progress with distillation. We learned a lot how to do small models, and these reasoning models in particular can be, it's not cheap, it's still expensive to train them, but it's doable. And I think that's going to lead to an explosion of really great creativity, and India should be a leader there, of course. There's two sort of different ways you can look at the costs of models. So to stay at the frontier, we believe those costs will continue to rise on this exponential curve, but also the returns to increasing intelligence are exponential in terms of the economic value, the scientific value that you can create. So, we're doing this big Stargate project, and that's going to go like this. On the other side of it, the cost for a given unit of intelligence 1 year later seems to fall by about 10x. Moore's law was a 2x every 18 months for the number of transistors on a chip, and that changed the world if you waited a few decades. But what's happening with the reduction in cost in AI models is extraordinary. Now, I don't think it means that the world's going to need any less AI hardware, because you bring the cost down and just the people are going to use it for a lot more things. The total number of dollars will go up. But, that's a really exciting thing happening.
That's wonderful to hear, and I think there's a lot of excitement here, which is why, so I'd like to come to you. You recently announced that India should be building foundational models, and it's a very complex process. And I was just wondering, how are you thinking about the surprises and the serendipity that's going to come from a lot of the diversity that we have here and the complexity of just India? And so, how do you feel that the foundational models that India is planning to build is going to be unique and serve a unique purpose to the world?
Listen, lots of innovation is happening. As Sam said, every year it's 10x reduction in the cost of intelligence. That kind of innovation can come from anywhere in the world. Why shouldn't it come from India? That's the point. Sure. And our young entrepreneurs, our startups, our researchers, they are really, really focused on getting that next level of innovation, which will reduce the cost, See, our country sent a mission to the moon at a fraction of the cost that many other countries did, right? Why can't we do a model which will be a fraction of the cost that many other countries do? So yes, innovation will bring that cost down. We think that that kind of thing will come out in this process.
Absolutely, and just the diversity that we have here. I think at OpenAI often we say that if you can solve for India, often you can solve for the world as well. Because if you're able to take care of the breadth that we have and be able to solve for the last mile, often you can very much do that. And also you've spoken extensively about the the excitement that you have around building on application layers. And since we have developers and startups in the room, I think this could be a great space or a great platform for you to share. What do you really think are areas that they should really be thinking about, and also not only supporting on the application layer, but also your adoption just within the government? How are you really looking at that AI adoption within the government?
That's a good question. We have been using multiple AI applications within so many different departments, so many wings of the government, and I think that can really help us solve these population scale problems, because most of the problems we face, Sam, are problems where you have to look at a multiple of billion, so which is like very common. So then how do we solve these population scale problems? That's where our focus, of course, is on all the three layers, and within the applications in healthcare, in education, in agriculture, in weather forecasting, in disaster management, in transportation, multiple different things we are working. And I request the entire startup community to come up with very unique solutions, and we'll be open. We are very soon starting a kind of open competition for it, open empanelment competition kind of thing. So that will be huge. So many problems can be solved, and why don't we use this latest technology that we have for solving these problems, right? You guys are good with that? Would love to do.
Some more energy, guys. Come on. Amazing. Just building on that, Sam, I'd like to come to you, talking about population scale problems, as the minister said. Again, India is very well placed for that, and our mission really is, artificial general intelligence for all of humanity. And so I'm really curious to understand from you, how can the models and the tools that we are constantly releasing play that equalizer role and be able to really fulfill in healthcare, education, at really significant ways?
Finally, for the first time, I think the models that are on the near-term horizon, the models that we'll release in the coming months, are over the threshold of being good enough to really address these problems. And now people just have to go build the solutions. So you already see, and you see this actually a lot with deep research in the last couple of days. People say it did this amazing thing for diagnosing a disease or helping me with my research to, try to cure a disease. Education, you've already seen now with previous models where people say it did amazing tutoring results. So I think the underlying innate technology is just right on the threshold, and we'll get there with the next models. But now people have got to go off and build all these services. So someone in this room hopefully will figure out what the AI tutor of the future looks like, and that'll be a population scale thing, and it'll think what that would do if every kid on Earth, this year got an AI tutor that was provided like a better education, or helped to provide a better education than anybody could get last year. Think what it would mean if we could have like an AI medical diagnosis system that was better than anyone could get last year. Think what it could mean if scientists could go cure every disease faster. And so, we've been waiting for this moment for a long time. I think we're gonna deliver something that can help with it, and now people have to go build with it.
Absolutely, and I think the recent launch of the research was just incredible, right? And I think everyone's been tracking it closely. We want to be able to use it. Do you have any advice specifically if we were to use that to solve, very complex problems like cancer and large diseases that we suffer? Do you have any sort of guidance on what's the right way to start experimenting?
So we're very much still in the research assistant phase of this. This can help someone review the existing literature and find some connections, but this is not an innovator yet. This is, I don't think we're yet at the technological level where any of us should expect these models to go cure cancer on their own. We will get there, I think.
Yes.
But for now, this can help researchers be much more productive in what they do.
Absolutely. I also just want to ask you, what would India has an aspiration to have a voice and be in, the top global countries contributing towards AI. What do you think, what is your advice, as we think about and as we have so on stage, what do you think we should do to really have that global voice that we want to be and leaders actually in India?
I mean, it seems to me like it's working.
Yeah.
I'm not sure you need to do anything differently.
That's already a compliment to what Sir is already doing and getting out. I also want to ask you, Sir, a quick question. You must be using AI in your daily life, and I'm not going to ask you what is your favorite platform because that we already know. But I'm very curious to know how is OpenAI models adding efficiency and productivity to you in your daily life?
Bad question to ask. On this platform, obviously, I'll say it's very good. No, of course, jokes apart, OpenAI really makes life significantly easier. Writing notes, getting all that stuff out, it becomes very easy. And I was just curious, what would your research project mean for quite a lot of people? And how can we make that transition smoother? How can we make more difference in their lives, as we were discussing just before coming to the stage? As in the large number of people who do a little bit of basic research and bring out reports.
So this is a very unscientific guess, but my vibes-based guess is that deep research can do a single-digit percentage of all of the economically valuable tasks in the world and almost none of the complete jobs. But that's okay, because you can just use it to be more efficient. So if you are a scientist trying to cure some disease, deep research is surely not going to go cure that disease on its own. But if you can farm out the tasks that took you a lot of time but were lower value, if you can say, help me with this literature review, help me figure out how to order these supplies, help me figure out what steps I need for this experiment, and you learn to work that way, maybe you can be twice as efficient. And if you can double the efficiency of every scientist on Earth with the tool we have today, which I believe might be possible. It's not going to do the really brilliant insights, but if it can take away a lot of the lower level work, it's going to take the world a while to get used to that. I think people have compared the launch of deep research to the launch of ChatGPT, so we had chatbots and now we go to these agents, and it's like a magical thing. You're like, oh, I didn't think AI could go do this thing for me. I didn't think I could go do a multi-day task, and now I can. But it took a while for the world to figure out how to use ChatGPT. Not that long, like months, not years. And I think it's going to take months, not years, to figure out how people become really productive with deep research.
Yeah.
Security is another concern, and also there are concerns about national security. Sam, what do you think? How should we be working on these items?
He's taking my job now.
I think these models are on the precipice of being incredible at software engineering, and that'll be great for a lot of things. I think software engineering by the end of 2025 looks very different than software engineering at the beginning of 2025 does. But it will have huge impacts, good and bad, for cybersecurity, and we've got to get ahead on the good.
For sure. No, sir, please.
That's what that guy is saying, time's up. I just wanted to make the best use of every second that I have with you, Sam. And thanks a lot for coming to India. We are super excited that you have come here. And really, this entire team, entire startup community is so excited, so supercharged. But guys, I cannot see that energy. Show it, man. Come on. That's the way. That's our India today, right?
Thank you very much for having me today, and really excited to do a lot more together.
Yeah, absolutely. Looking forward, sir. Thank you so much for all the ideas. And I think this is the right room to start. And we have a lot to cover, so we are going to get on with it. And with OpenAI right there to support the developers, the ecosystem, the government, we'd love to do more together. And hopefully next year when Sam is here, we'll have already many of these partnerships in place. So looking forward. Thank you, Sam.
Thank you.
Thank you, Minister.
Thank you.
बजट भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था
चला चला पटकान पटकान।
Hello and welcome to NDTV Profit.
The blessings of Ma Lakshmi that Prime Minister spoke about, will they shine on the middle class and the taxpayer?
The market will not be disappointed.
Finance Minister Nirmala Sitharaman with the Bahi Khata, they're getting ready to go in and present the budget.
I present the budget for 25-26 that there will be no income tax payable up to income of 12 lakh rupees.
ये बजट जो है बहुत ही आर है। इसका मतलब ये हुआ कि रिफॉर्मिस्ट भी है, रिस्पॉन्सिबल भी है और रिवॉल्यूशनरी भी है।
Philanthropist Bill Gates has had a huge impact on the lives of millions across the world. As the co-founder of Microsoft, he's in a sense defined what personal computing has been for all of us. The vision that he had of the personal computer way back in the 70s and its evolution and the transformation of Microsoft has been fundamental in terms of tech, in terms of IT, in terms of the entire sector. And it's time now for Mr. Gates to pen his thoughts down, which is why he's come out with this. This is the first of 3 books. It's called Source Code, My Beginnings, and it's my great privilege to be over here in Palm Springs, in California, to speak about this. Thank you, and I'm delighted to be over here, fly all the way across the world, and I've had a chance to really go through this book. It's very, very interesting.
Thank you.
One of the primary themes which I found throughout the book has to do with your own intensity. The fact that you've always been driven. I mean, we know that as a fact, but we perhaps didn't know about the extent to which you were focused. And you write, for example, and I quote, "Like one of those watertight hatches on a submarine, I could shut out the rest of the world. Driven by the sense of responsibility I felt for Microsoft, I had closed the hatch door and locked the wheel. No girlfriend, no hobbies. My social life centered around Paul, Rick, and the people we worked with. It was the one way I knew to stay ahead." Could you tell us about how your focus ultimately resulted in you being the Bill Gates we know today?
Well, part of my makeup, even from a young age, was that if something was fascinated, I could really dig in on it. So, you know, learning to play cards with my grandmother, having books read to me, reading books, and mathematics early on fascinated me, and so I went into depth. But then I took that to a new level when I started Microsoft, because I knew, you know, there'd be other people trying to do software, and I decided, no, I'm going to make sure we stay ahead. I was always kind of worried somebody else would do well. And so during my 20s, I was really monomaniacal, not only using that ability to focus, but kind of making sure that software was the only thing that I focused on.
But you did this even when during school, when you had access to timeshare computers, and that was a huge headache for you. You used to get out of your house, sneak out of your house, get to places and use computers, get in trouble, and figure out a way of using computers again, and then program to your heart's content. Later on, you went, 36 odd hours on one occasion without sleeping. You just kept writing code. Was that fun for you, or was it towards a pursuit?
No, it's super fun. When you write software, you get feedback. You can see, does it come up with the right answer? Does it run as fast as it should? And I was lucky enough to be exposed, starting with the terminal when I'm 13 at the Lakeside High School, the private school I'm lucky enough that my parents sent me to, that there we're just writing what are kind of simple, basic programs, tic-tac-toe, Monopoly. It's only later that I do a payroll program, a scheduling program, and then some very complex software by my senior of high school. But I'm given a chance to write, and then various people tell me, okay, that's really good, or that's not good enough. And so I had thousands of hours of it, and I loved it because it had this sense of correctness, of purity, that you immediately know, did you have it right?
So I had a Commodore 64 growing up, and you did work with Commodore as well at a certain stage. But it's fascinating to know that some of the code written for the first personal computer was stuff that you did yourself. Could you tell us a little bit about that? Because the historical significance is immense.
Yeah, so the first Microsoft product is called a basic interpreter. These machines work at a very low level, so-called machine code, which takes many, many instructions to do even something quite simple. And so you wouldn't want to ask all of the buyers to learn machine code. And so this basic interpreter takes it up to a much higher level. So you can say, print 10 divided by 2, or have a loop where you're accumulating numbers, or draw a graph. And so this basic interpreter made the Altair, this first personal kit computer, made it into something that at least hobbyists then could try out game programs, or even, particularly as we got disks connected up, more like accounting or payroll programs. And so computing was going from being, these super expensive machines that only big companies had, to something that at least small companies and even individuals would have. But it took this basic. Now, we didn't define ourselves as just the basic interpreter company. We always knew we'd be writing lots of software. But that was the product that generates our early revenues and allows us to hire a lot more people and do a lot more software.
When talking about your own personal focus, I found one of the most interesting parts about how you actually sort of start speaking about what you say would today have been diagnosed as being the autism spectrum. And to use your own words, if I were growing up today, I probably would be diagnosed on the autism spectrum. In the time of my childhood, the fact that some people's brains process information differently from others can't widely be understood. When did you realize that your brain, you function differently in a more intense manner?
Well, I knew there was something different. I give the example that they asked us in 6th grade to write a report, and I picked a small United States state called Delaware. I ended up turning in a 200-page report, and the other kids were turning in 5 to 10-page reports. And I was kind of embarrassed. Wow, did I go nuts over this thing? And teachers were always a little confounded at where I was so capable and also yet so distracted. I literally had teachers at one stage say to me, we should skip you ahead 1 or 2 grades, or a teacher say, no, we should hold you back so you can be more mature. And I certainly, my social skills, particularly with people my own age, other than a few nerdy boys like me, were very slow to develop. And so I had, the advantages of kind of that intense focus, but some of the deficits as well. And, it befuddled my parents and teachers a little bit. And I was very lucky that, going to this private school, I was able to shape that capability into a strength.
Was it difficult for you to decide to write about potentially having been on the autism spectrum?
Well, I thought it was, maybe helpful to people now who get that diagnosis. Sometimes having a diagnosis is helpful to people because they can learn more about other people. It also, can be pejorative, and I worry, that would hold somebody back. I didn't have that, even though my parents, to deal with that I was causing a bit of tension, pushing back on them, they sent me to a therapist. It was never that he had some word. He was just, hey, you're wasting your time. Your parents are on your side. You're confused. And over a period of a year, he actually succeeded in convincing me that I was, picking the wrong battles to try and push back to them. But it was never about a diagnosis. He gave me some IQ tests and told me that my mental style might be a positive thing. So it's a different world now. Kids are not allowed to go out and hike quite in an open-ended way, or to sneak out and try to find computing time. So I had parents that set good examples, had good values, but gave me free rein and sent me to this really great school.
Did you grow out of what you believe you were in on the autism spectrum? Do you believe that as you grew up, you matured more, you changed, you physiologically changed, your interests grew, new relationships happened, that perhaps you weren't the same way as you were when you were growing up?
Well, I think those tendencies are always there. I mean, I still love to take a 500-page book and go off and read it and try and fit it in.
सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RR।
चला चला पटकान पटकान।
You're watching The Big Question. I'm Tamanna Inamdar. We're talking about Delhi elections today. The political battle has never been more intense. After a high-octane campaign filled with barbs, blame games and AI spoofs, the first big election of the year is upon us, and the stakes couldn't be higher. While a resurgent BJP is trying to make a comeback after a 27-year hiatus in the national capital, so is the Congress, which is eager to reclaim its lost ground. But it is the Aam Aadmi Party and Arvind Kejriwal for whom the Delhi dangal is a do-or-die battle. The question on everyone's mind is that can Aam Aadmi Party script victory for a fourth consecutive election? With Kejriwal's arrest in the Delhi excise policy scam, along with other top leaders of his party like Manish Sisodia, Aam Aadmi Party's image of a corruption-free alternative has been dealt with a severe blow. These elections will also be a litmus test for Kejriwal as he battles corruption charges, faces anti-incumbency after being in power for 2 straight terms, and I would go as far as to say it's an existential battle for Aam Aadmi Party, as Delhi is now a stronghold and any defeat would dent the party's national ambitions. On the other hand, the BJP is looking to break a 27-year hiatus. It's a prestige battle for the BJP and Prime Minister Modi, as the party hopes to win the national capital, having won it only once in 1993, despite consecutive wins in the Lok Sabha elections, all 7 seats, in fact, in the last election. In an effort to counter the Aam Aadmi Party, the BJP has pulled out all stops to woo voters and has announced a host of freebies ranging from cash sops for women, free scooters for the youth, among other things. It's also promised to continue all schemes started by the Aam Aadmi Party, including that of free water and electricity. For the Congress, the elections is an attempt to regain their past glory. The party has almost been wiped out from the capital's political scene. Its vote share slipped to 4.3% in the 2020 assembly results. So the big question that we're asking today, which way will the Delhi voters swing, and can Modi trump Kejriwal in Delhi? To speak on this, I'm joined today by Aarti Jairath, political analyst. I'm speaking today with Amitabh Tiwari, political strategist, and Sanjay Kumar, professor of CSDS. Welcome to all of you, and thank you so much for joining us on The Big Question. So a couple of things that we're doing here, and to tell our viewers as well, we are not taking into consideration exit polls while having this conversation, simply because we don't know what these polls will say. We don't know whether these polls are going to be right or not. We're looking at the question of Delhi in the context of the national picture and how crucial it is for the key participants. It's also a mood of the nation in a sense, isn't it? Let me start with Aarti Jairath on this point. Why Delhi is watched so crucially, despite it not being a big contributor to seats in the Lok Sabha. It's not going to make or break things for the government at the center, but it's important because it's giving you a sense of what India is feeling, isn't it?
In a way, yes. Delhi is a kind of microcosm of India because it attracts migrants from all over, north, south, east, and west. So from being a traditionally a Bania, city, which then got overrun by refugees from Pakistan and became a predominantly Punjabi city. Today, it's full of people from UP, Bihar, all over South India and other parts of the country. So therefore, it is a microcosm of India. And yes, it does reflect, I think, in some sense, the mood of the nation. But remember that if, I don't think you can extrapolate from the Delhi results, you can extrapolate into national politics from the Delhi results. Because as we've seen in the last two elections, while Delhi voted overwhelmingly for Aam Aadmi Party in the assembly elections, the people of Delhi voted overwhelmingly for the BJP in the national polls. So, I think it would be wrong to really extrapolate this and make and draw conclusions for national politics. Whereas, yes, it is a crucial battle. I think you summed it up very well at the beginning. What are the stakes for all the political players here? And so now let's see what Delhi decides.
Let's see what Delhi decides, and it's crucial battle for all players, more crucial for one side than the other. Amitabh Tiwari, I opened by saying that, of course, prestige for the BJP, and the Prime Minister has been front and center of the campaign this time. Many people, when they saw the budget announcements, looked at it in the context of Delhi, even though everyone in those tax brackets is rejoicing. But on the other hand, for Mr. Kejriwal, it's a question of political survival.
Yeah, essentially, of course, it's a battle for survival for AAP, prestige for the BJP and relevance for the Congress party. See, the Aam Aadmi Party has become a national party by starting a base in Delhi. So Delhi is the place which has provided it a base, and it has given it a face also. In terms of it has been able to implement or showcase its famed Delhi model of governance from the state. And riding on the Delhi model of governance, it was able to spread its wings and win Punjab as well. So Aam Aadmi Party is one of the only, it is a national party today, but it is only one of the only parties other than BJP and Congress party, which is not tied to any regionalism. So its existence or its creation was not bound by any regional sort of a movement. It was created out of an anti-corruption movement. So what it does is that theoretically, it has the capacity and capability to spread its wings across the country. The leader, which is Arvind Kejriwal, speaks in Hindi, and Hindi is understood by more than 50% of the population. So in a way, and he has good oratory skills also. So in a way, the party has the ability to spread its wings nationally, whereas other regional parties and leaders like Mamata Banerjee or a Stalin or a Revant Reddy or a Naveen Patnaik were tied to their perimeter of the states because of regional considerations and the language barrier. So that is why it is Aam Aadmi Party is also a party which is seen as a threat by the BJP, because after Congress party, if any party can give it a national level competition, it is the Aam Aadmi Party. So
can I counter that and I ask, is it really, if this theory was abounding, was it not proven time and again with what we've been seeing in the Lok Sabha, the attempts of the Aam Aadmi Party to go beyond Delhi and then get stuck at Punjab? Is it really the next big counter as a possible national level opposition to the BJP?
It is, because there is no other party which has or which is in power in two states except for Aam Aadmi Party, Congress and the BJP. And its ability to spread its wings outside is high because of the language quotient,
which I'm referring to, and because it is not tied to any regional dynamics. It's not born out of a regional movement. It's born out of an anti-corruption movement. Of course, it is just a 10-year-old party in that sense, a 12-year-old party, correct? So from a long-term perspective, with the decline of the Congress party, there is a vacuum in the opposition space, and Aam Aadmi Party is well positioned to occupy that space. However, if it loses, as you are saying, then the core of the Aam Aadmi Party, the core philosophy of the Aam Aadmi Party, out of which it was born, which is the anti-corruption plank, then comes into question. And then people will start questioning whether Aam Aadmi Party is like any other arm party. Correct? And that is what the BJP is trying to establish or give a message through this election, that Aam Aadmi Party is like any other party. And then what happens is that the Aam Aadmi Party would have to go back to the drawing board.
Right.
And
No, so I'm not saying that any side will lose. Just to clarify there to what you said, Amitabh, I don't know who will lose or who will win. We'll have to wait
I'm
and
also
see.
not saying, I'm saying if that happens.
No, if it
then-
does. As the stakes are high, and who are they higher for was the question. Sanjay Kumar, let me come to you with that point. This is, and obviously as a prestige issue, obviously BJP wants to win Delhi, a huge upside, but the downside for the BJP is not as much as for the Aam Aadmi Party if there is a loss.
Tamanna, I agree. Suppose BJP loses this election, yes, it will be another loss for BJP. It will be a kind of a setback for BJP because they have put in a lot of effort. They want to, defeat Aam Aadmi Party in the city of Delhi. But from Aam Aadmi Party's perspective, I think it's far more crucial for Aam Aadmi Party because a defeat in Delhi would mean a huge challenge for the existence of the party. Yes, party will still be in power in Punjab, but I think if Aam Aadmi Party gets defeated, we might see some defections. We have already seen some of the MLAs who were not given ticket, who were denied ticket. They shifted to BJP just before election. But if Aam Aadmi Party loses this election, not in a position to retain power in Delhi, we will see more defection. We might see more defections in the party. So it is about the existence of Aam Aadmi Party, the basic survival of Aam Aadmi Party, and that is why it is more crucial for Aam Aadmi Party than BJP.
Let's look at the other point of it. What really are the BJP's chances? And I'm not referring to polls, pre, post, anything, just basis on what we've heard and seen. And I'm coming to Sanjay Kumar first with this question. The IT relief that was announced recently in the budget, a large middle class section in Delhi. Is the free electricity, free bijli, free pani, free healthcare, free education pitch still working in Aam Aadmi Party's favor? Does BJP have a real chance, an upper hand this time?
Does BJP has a real chance? Yes, BJP has a real chance. I'm now doubting that the BJP doesn't have a chance. But when you are referring to, on one side, raising the slab of the IT, income tax in order to woo the middle class, and the free bijli and pani, I think Delhi's politics is slightly different from state politics of other states. Delhi politics is sharply divided in terms of class character. If we look at the Delhi voters in terms of four classes, the poor class, lower class, middle class, and the upper class. The poor class and the lower class have voted for Aam Aadmi Party in a huge way in 2020 and 2015. I think my own sense is that they're still standing behind Aam Aadmi Party in a very solid manner. There is a disenchantment among Aam Aadmi Party among the middle class voters, and that was even before the announcement was made in the budget. So I don't see budget announcement as a big game changer because Aam Aadmi Party was already not very popular among the middle classes. Middle classes were getting disenchanted, especially after the corruptions of allegations, the charges of corruption. So I think it will make an impact, but it is not going to be the sole game changer if at all BJP wins this election.
Okay, so not the sole game changer. Perhaps that's why from end to end you've had the schemes focused on women. You've had the schemes and the BJP saying we'll continue the schemes that the Aam Aadmi Party has put out, and then this middle class sweetener as well. But I'm wondering, and Aarti Jairat, this question to you, does the woman voter hold the key once again? Competing promises for the women voters in the form of direct benefit transfers from all parties in the fray.
Well, Tamanna, I think Delhi is one of the few places where actually the male-female ratio is in favor of the males. So the number of women voters is actually less in Delhi than in some other parts of the country. Having said that, women have voted largely in favor of Arvind Kejriwal. He has a fairly strong appeal amongst women. And, you remember he's one of the first people to have introduced the free bus rides for women, which was a huge hit for particularly for the, lower middle class, lower class women who come, working, who kind of sweep and swab the homes of the rich in Delhi. But because the women do not outnumber men, I don't know whether women can actually swing the vote the way they have in Madhya Pradesh, where we saw it in a very big way, where the women actually swung the vote. Or even in Bihar, where we have seen women voting in huge numbers for Nitish Kumar and have swung, the election in favor of Nitish Kumar. I don't know whether that will happen here. But, one thing I will say, I mean, look, I've been living in Delhi now for about almost 50 years, and I have seen lots and lots of elections. And, I would like to say one thing as far as if we look at BJP versus AAP. The BJP has a fairly solid middle-class constituency, which has been pretty much unwavering in support of the party. I think the lowest percentage the BJP ever scored in Delhi was 29%, and the highest it scored was somewhere like 36, 37%. So it's sort of in that band of, of votes. The problem with the BJP is that it is unable to cross from the middle class down to the lower classes. And the only leader who was able to do that really was Madan Lal Khurana, who worked very hard amongst the JJ colonies, the slums, the unauthorized colonies, and helped the BJP win the first ever Delhi Assembly election in 1993. After Madan Lal Khurana, they have not had a single leader who has gone beyond the urban middle classes to actually the lower class voters. And I mean, look at it. It's been in opposition now for 27 years. In these 27 years, I mean, Madan Lal Khurana, I remember, because I was a young reporter at that time, he used to hold demonstrations almost every month about water, about electricity, about roads, about this, that, the other. He would be out on the streets. I have not seen the BJP in the last 20 years of being in opposition hold a single demonstration.
That's a great point, Aarti. It leads to the question about who is the face for the BJP in opposition to Kejriwal. And of course, they got the big guns out, right? Prime Minister Modi, the big winning factor for the BJP in elections. Is that going to be enough?
So, I mean, if we go back to 2013, 2014, when Aam Aadmi Party made its debut, and so did Narendra Modi in national politics, the refrain in Delhi always was "Upar Modi, Niche Kejriwal," and somehow I don't think that refrain has changed very much. I think that is why we have seen in every national election the BJP has won on the strength of Modi's popularity. And people feel that people in Delhi, that is, feel that he is the right person to be the prime minister. But for the state of Delhi, I think people look at other options. And the BJP has not been able to throw up a good state leader since Madan Lal Khurana. They tried a bit with Harshvardhan, but then they, crippled him so quickly that poor man really never got a chance to try to fill Khurana's shoes. And the Congress had Sheila Dikshit, but after Sheila Dikshit, they've just, again, not been able to produce anybody to match her stature, her popularity. And that is where Aam Aadmi Party really scores big, because they've got Arvind Kejriwal.
They have the face. So very quickly, before we wrap this conversation, Amitabh, I'm going to come to you. What is the one big factor that will determine which way the verdict goes? And of course, we're all kite flying at this point, so that in place. But in your view, from what you've seen through the campaign, what do you think is that one big factor?
Yeah, I would still say that it is the middle class voter which will decide who is going to win the election. See, what happens in Delhi is that even though BJP gets the middle class voters nationally in Lok Sabha and Vidhan Sabha elections to a large extent, wherever it is strong, in Delhi, the middle class or a majority of the middle class votes for the Aam Aadmi Party in Vidhan Sabha elections. In 2020, as per CSDS data, I think it was 53% for AAP and 39% for BJP. So if you look at the lead of the Aam Aadmi Party, from where it is coming, that 14-15% lead, it is 6 to 7% from the middle class and 8 to 9% from the poor and socioeconomic class, lower socioeconomic class. That vote is a bit sticky. See, sticky votes or loyal votes do not decide elections. It is the floating voter largely or the swing voter which decides elections. Now, this 6 to 7% lead which the Aam Aadmi Party is getting due to a higher support from the middle class in Vidhan Sabha elections, if the BJP is able to make dent in this, or if there is a sufficient dent or a significant dent because of this anti-corruption, a dent in the image of the anti-corruption plank, this Liquorgate allegations, this Sheesh Mahal controversy, and lately the income tax relief for the middle class. See, up to 12 lakh if the income is free or there is no tax liability, 90% of the tax filers show income below 12 lakhs. So that it means that it impacts everybody in almost everybody in Delhi. And unlike other states where the poor and the lower socioeconomic class population is also fairly high, in Delhi what happens is that the middle class population is also fairly high. It's almost 1.5 times the national average. So the way they swing, because they swing between BJP and Aam Aadmi Party from Lok Sabha to Vidhan Sabha election. 50% of the middle class voted for BJP in Lok Sabha election.
So you think the BJP has a strong chance this time?
It has a strong chance. The Aam Aadmi Party is on a back foot.
Okay.
In this election.
Okay, that encapsulates it perfectly. Last few minutes of the show, and I'm going to spend it talking about your views, not just as political analysts. I want to talk about, and Sanjay Kumar, I'll come to you on this first. I'm going to talk to you about an issue which I think for anyone who lives in Delhi should be very, very crucial. There is a startup founder called Brian Johnson who came recently to India for an interview, and he did the interview in Bombay, not in Delhi. He left the interview midway and then put out a long post about how the air in India is so unhealthy, it's killing people. Why is it not a big issue? I'm talking to all of you at a time of election where people's voices are heard. Sanjay Kumar, do you think the question of air pollution in Delhi has been given enough importance in this election?
No, not at all. Why only in this election? If we talk about even the previous election, it's not that the air pollution has become very severe only during last 2 or 3 years. It has been there for the last 8-10 years, at least, maybe more than that. But not only in this election, even in the earlier election, this is an issue which is discussed very loudly when there is a pollution. It is mostly in the month of November, December. Once the weather air clears to some extent, then this issue is not on the minds of the people. It's not on the minds of the leader. So it is not an issue of discussion. It is not an electoral issue in India at all.
It's unfortunate. That's why I want to bring it up. Aarti Jairath, you are out and out someone from Delhi. I mean, why is this issue not a concern for anyone who's voting? Instead of tweeting in November, this is where this question should be raised right now.
Well, Tamanna, I mean, please come to Delhi, and if you see the problems we have, the problems are not just air pollution. Yes, air is very bad, but we also have problems of garbage, the mountains of garbage everywhere, including the rich posh colonies. Just outside the gates of every rich posh colony, you will find mountains of plastic bags, garbage, this, that. Okay? We have problems of water. We have problems of bad roads. Every time it rains...
I don't deny. People will say that's for the MCD election.
No, but we're talking about local elections, right?
Yes.
You know, I mean, roads are not just MCDs. Roads are Delhi government, PWD. You know, garbage was one of Kejriwal's big promises during the MCD elections. He's done nothing about it, you know, ever since they won the MCD poll. So, you know, the problem is that the difficulties and the, you know, quality of life in Delhi has deteriorated on so many counts that pollution, you know, because it's sort of largely seasonal as well, it kind of comes and goes. So when it's at its peak, we get very agitated, and then it subsides when summer comes in and we forget about it and start complaining about the heat and the electricity instead. And let me tell you, I mean, you talk about why isn't pollution a big issue. Yesterday in the Prime Minister's speech, when he was talking about listing all the things that his government has done, he did mention pollution. And what did he say his government has done on pollution? They have added to the fleet of electric buses, of which I don't know how many thousand they're going to give Delhi. But that's all. I mean, you know, pollution needs to be tackled. And, you know, from so many angles, on so many levels, just providing electric buses is not going to make the air quality better. It's
But it needs to be front and center. The only simple reason I brought this up is, I mean, looking back, it's astonishing it's not a bigger issue. And I agree that there's so much more, but why is this not up there? Anyway, on that note, thank you so much. I'm out of time. Thank you so much to all of you for joining in, and we hope for our viewers we've given a sort of well-rounded take on why Delhi matters and what to expect. Of course, the rest will be seen when the results are actually out. That's all the time we have on Big Question today. Thank you so much for joining us.
चला चला पटकन पटकन.
Hello and welcome to NDTV Profit.
The blessings of Ma Lakshmi that Prime Minister spoke about, will they shine on the middle class and the taxpayer?
The market will not be disappointed.
Finance Minister Nirmala Sitharaman with the Bahi Khata, they're getting ready to go in and present the budget.
I present the budget for 25-26 that there will be no income tax payable up to income of 12 lakh rupees.
ये बजट जो है बहुत ही आर है. इसका मतलब ये हुआ कि रिफॉर्मिस्ट भी है, रिस्पॉन्सिबल भी है और रिवॉल्यूशनरी भी है.
जब मैं था तब हरी नहीं, जब हरी है मैं ना ही. प्रेम गली अति साकरी, जामे दो न समाए.
This is another level. This is another level.
This is how a special Saturday session should end.
The new tax regime for individual, in fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Sources tell NDTV Profit that budget is expected to propose the draft of the new income tax bill. In fact, the draft bill is expected to find a mention in the FM speech on February 1st.
I also propose to introduce the new income tax bill next week.
First of all, they're looking at, how to sort of reduce the number of slabs which is there in custom, which is like 12 or 13 slab, and how to bring it down to 5 or 6.
As a part of comprehensive review of customs rate structure announced in July 2024 budget, I propose to 1. Remove 7 tariff rates. This is over and above the 7 tariff rates removed in 23-24 budget. After this,
Hello and welcome to KYC, show designed to give regular investors powerful, actionable insights into fundamentals of a single NSE-listed company every single day. Today, we are talking about Happiest Minds. This is an IT company that has been in focus, of course, on the back of earnings. But in general, we thought it would be a good idea to take a look at this particular mid-cap IT company, which has, of course, been around for a few years now. What does Happiest Minds do? Well, it is an IT consulting and digital transformation company, and it actually looks at digital transformation. By that, we mean they help businesses modernize their technology and processes, and they often use cloud computing, data analytics, as well as AI. Moreover, it does IT consulting. It does get a good amount of its revenues from consulting as far as IT is concerned. In terms of the technology solutions that it provides, a lot of that will include something like application development and maintenance, cloud services, data analytics, cybersecurity, infrastructure management as well. In fact, in simpler terms, Happiest Minds helps companies use technology to improve their operations better and serve their customers and grow their business. So let's take a look at how the split of business comes through. Majority of its revenues comes from product and digital engineering, about half of, in fact, the revenues coming in. The digital business solutions will contribute to a little over another quarter, nearly a third actually. Infra management and others also contribute to the balance of the business. With that, let's take a look at the metrics that we usually address. And, as usual, we do take a look at the income statement, the balance sheet, return ratios based on the income statement and the balance sheet. We talk about the cash flows as well. And moving beyond just the financial statements, we also take a look at the shareholding pattern, how the stock has done, what the street is making of it, and of course, valuations at the moment. But to take us through a lot of these insights, I am also joined by Rucha, who's going to help us to wade through this whole process. So, Rucha, welcome to the show. Let's talk about the income statement. What are your observations here?
Definitely, Agam, thank you so much. Revenue is at about 1,600 crore rupees for FY24, posting a 3-year CAGR of about 28%. This is not a bad number. EBIT margin over here is at 21% as of FY24, posting a 13% 3-year CAGR. So what we can see over here is that that revenue 20% CAGR is not really translated to the 13% CAGR, whereas net profit over here is at 15% CAGR over the last 3 years. So not bad numbers, but disappointment in terms of revenue translating into margin is why we've given this one a neutral rating.
All right, so neutral as far as your income statement is concerned. While Rucha has mentioned that it has seen strong revenue growth, we are looking at operational metrics in terms of profitability to be not the best. In fact, for a company of this size, we've seen better profit metrics. So let's move on and talk about the balance sheet. Of course, this one is on a very strong footing. But, as is the case, usually IT companies have a pretty good balance sheet because of, very many reasons. But the shareholder equity stands at around 30 crores. It has a gross debt of around a little less than 1,100 crores. But as against that, the company also has cash reserves of around 1,260 odd crores. So all in all, it's a debt-free company. And because of the fact that it has such a large cash reserve, again, it's something that, it works in favor of the company moving in, which is why we'll give this one a thumbs up. But how are cash flows looking, Rucha?
Yes, so Agam, as you rightly mentioned, generally IT companies are cash-rich companies, and so is the case with Happiest Minds as well. The cash flow from operations stands at about 190 crore rupees as of FY24. And if we look at the kind of conversion ratio, 65% of EBITDA converting into cash flow is what we can see. So not a bad number in terms of cash, hence we've given a thumbs up. But what are the return ratios looking like, Agam?
So return ratios do look good. It's an IT company. Naturally, your return on equity and return on capital will be over 20%. And in terms of Capital Minds, it's no different. The only issue here is that the return ratios are on the decline. So from 31% back in FY22. These return ratios are coming off considerably now at 22%. If it goes below the mark of 20%, then that's when, well, it could be a little bit of an issue. But for now, considering, we have a relatively steady steam, as long as the return ratios are not below 21%, that's going to, of course, be a positive. But let's move on and talk about the other aspects as well. And if we actually move beyond the financial statements, we can perhaps also take a look at how things are panning out as far as shareholding is concerned. So let's pull that up too. In fact, Rucha can take us through that.
You're right, Agam. So promoter and promoter group holding, as we can see over here, is 44%. So around 54% of free float is not a bad number. But you're like splitting that into FIs and DIs. FIs currently hold about 5.3%. As we can see, the pink color mark over here is the FI ratio, and around 6% is for domestic institutions. So not bit of a positive surprise over here, but 54% free float is not a negative as well. So we've overall given this one a neutral rating.
Right. So neutral rating for, the shareholding pattern for the company. And at the moment, we're looking at promoter holding at around 44%, which may not necessarily be the highest as compared to many of the other IT companies. But let's talk about street credentials. And in terms of the kind of returns that we've seen for Happiest Minds, it's not been the best. And I'll tell you why. What's really happened through this course correction over the last 4 months is that the IT sector in general has held its own. But as against that, we're seeing Happiest Minds correct 8%. And in fact, in the last 1 year, we've seen a correction of around 17%. So in terms of price action, it's not been a favorable one. One might argue that, at that point in time, valuations were looking very, very, heady. Which is why we've seen a little bit of correction. That said, in terms of returns, not the best. So we'll give this one a thumbs down. But let's talk about street coverage then, Rucha. What is the street looking like?
So definitely, Agam, in terms of analyst recommendations on Bloomberg, there are 4 buy calls, 2 hold calls, and none sell calls. And the consensus target price implies a return potential of about 14%. But mind you, this recommendation is before the kind of third quarter update which analysts might come by tomorrow. So this is, this kind of bullish stance from analysts does not include the third quarter earnings. So that's a heads up over here. So overall, a thumbs up with 14% positive return potential, even after the company has underperformed in last 6 to 12 months. But naturally, valuation will be one of the issues which most of the companies in this kind of market are facing. So let's pull that up. And we see that Happiest Minds is trading at around 34 times its FY26 consensus EPS. This one is slightly on a higher bar. But if you look at the peers, we have both the sides. We have an Emphasis trading lower than 33.5% at around 28 times. 33.5 times. Coforge trading at 40 times. So largely, Happiest Minds is in the middle of the acceptable valuation band. Not very expensive, not very cheap. Hence, we've given this one a neutral rating.
Okay, so there's an interesting thing out here about the valuations for Emphasis as well as Coforge. Firstly, in terms of public shareholding for Emphasis, it's only about 4% in terms of outstanding. Well, if you look at promoter holding, FI holding, DIIs, all of them taken together, well over 90